God morgen.
Og da
Setter du i mørk nå her, eller?
telefon, så.
Hva sa du da? Bare...
Jeg satt i en telefon.
Ah,
Jeg er så jævla hupende.
har du fått i nok vann?
Nei, det har jeg ikke gjort, garantert.
Ja, bare hiv i seg en liter, så hjelper det på.
Kanskje ikke... Sånn! Fy faen for et merkelig marked, altså.
Ja, det var bra jeg tar det, ikke det? For jeg har ikke suttet med så inne på siderill og alt annet. Å, helvete, Dagsen åpner noe ned i hvert fall.
Ja, men jeg gidder ikke trade. Vet du hva? Hver dag har jeg gått short, og så har jeg bare holdt shorten min, for jeg har liksom ikke gitt meg, jeg har vært litt grådig. Men jeg skal trade litt annerledes nå. Nå skal jeg gi faen i hvilken vei jeg skal bare trade. Men det er så lite volum også, så jeg får liksom ikke trade sånn som det liker å trade.
Nei, men det har jo helt elendig volum hele siste uka. Alle setter jo bare short.
Ja, det går liksom ikke an å trade på det.
Net inflows tallied up to 3.5 billion Swiss francs. That was hit by a stronger franc. Less than the last 2 months of 2022.
Det går jo opp hver dag.
And also short of analyst forecasts.
Det går opp hver dag.
Ja, det har gått opp hver dag. Jeg har vært short hver dag, og hver dag så har jeg fått den i trynet når jeg har vært short. Men jeg har sittet lenge da, har ikke tradet. Jeg har ikke tradet en dag.
Ja, jeg kan i ny topp igjen i går, Dagsen.
Ja, jeg har gått opp hver dag.
Krupa has pledged to clarify the bank's identity throughout a new strategy, which will be unveiled later.
Dette er første dagen hvor det faktisk faller.
Stock is up and is outperforming the broader market, 0.5% in the green. Silicon Valley Bank's new owner, First Citizens, is suing HSBC for poaching more than 40 employees from the failed bank. The $1 billion
Nasdaq hadde en liten korreksjon.
San Francisco court accuses HSBC of engineering a quote
Det er jo ingenting.
trade
Wow,
secrets
I'm-
and SVB's top bankers, several of whom
Nei,
were
bare
failing to
0,2%.
HSBC acquired SVB's UK arm
Så
for
vidt, det er helt
£21
flatt.
in March. This after First Citizens stepped in to save SVB,
Ja, det er sånn det er.
purchasing up to
Ja.
$500 million in SVB stock. And as you can see,
Hvis du kjøper på dip hver dag nå, så gjør du penger.
and Hong Kong both trading weaker today. Steve.
Right, very easy interview for the guest now because I
Ja.
completely agree with what he's
Jeg er spent på hvordan det blir å påvirke psykologien i markedet i dag, med at de ennå ikke har en ny dag hvor de ikke har kommet noen plass i det der jævla gjeldstakforhandlingene sine.
Ja, det skal opp sikkert. Se, den går opp igjen.
It's looking at interest rates, it's looking at policy risk, but actually it's failing to do that thing which it fails to do so many times, and that is look beyond the current crisis to the next crisis. And I think you
Du
think
åpner ned hver dag, og så går det opp.
recession is going to be perhaps a little bit sharper, or certainly the fears over an economic slowdown will be sharper than the market's anticipating.
Det kan se ut som det er at det begynner å konsolidere da, i og med at det ikke faller, for det er veldig rart at det faller jo ikke i det hele tatt her.
Ja. 85% set short i Dagsen etter moment.
86 i går.
Ja.
Se på det der.
Men hvor mye volum er det vi snakker nå egentlig på det her
Det
bevegelsen?
var ned 40% for 3 dager siden, så det er jo ikke noe volum i det hele tatt. Jeg kan ikke trade dette markedet her. Det blir alt for lite for meg, så jeg driver og stedet på Forex nå.
Ja, euro, USD og...
Jeg kan ikke trade på så rolig bevegelse, så choppy og det sånn.
Ja, i valuta kommer det jo alltid til å være volum. Sånn er det bare. Så lenge du ikke velger et jævla neandertalerpar som trailer med stein.
Men hvis du ser her nå, ikke sant, se så chop, det er bare sånn, nå er det på åpning på børsen, det kommer til å tørke ut i dag.
Dr. Potings junior.
Det er noe gærent med den der, jeg får ikke logget meg på den der,
But in a way, the market might get it sort of right. But in our view,
Du får jo faktisk sånn 1000 views og sånn på voldsen dine. Det litt artig.
or as you say,
På hva?
you know, there is no
På
recession.
voldsen dine,
Inflation
altså
fails to come down in any meaningful way.
klipsen fra dagen før på Twitch-streamen din.
Bifurcated outcome.
Men da ser jeg, det liksom, se på greiene der.
Andre, we do have a pulse check coming later on in the form of PMIs, the
Opp,
survey data.
du åpnet ned, og så går det opp. Det sånn hver dag.
And here Europe are waiting on some data as well. That is
Da tør ikke jeg handle, altså.
What we've seen in recent months is that manufacturing has been underwhelming, and that's reflected too in the Chinese numbers we're getting. What happens as a turning point for manufacturing from here? Because if we're looking at more rate hikes, doesn't it just undermine already weak activity in the manufacturing sector?
Se hvor tregt det går.
That surveys in general, PMIs, ISM, and a bunch of other surveys have been a little bit all over the place over the past year or so. And that comes from...
Just take us back to COVID times, right?
Exactly.
Er det noen spesielle news I dag du har sett på I morgenmailen?
Surveys are failing to capture the state of
Nei, ikke noe spesielt, bare at det nervøsitet, liksom.
in the economy. And in the case of manufacturing, probably they're overstating the weakness in the economy. But that's simply because we were coming from...
ASX-futuren hadde jo knalldag I går I opp 6 poeng.
in the lockdown phase. That now is being undone, but it doesn't mean that manufacturing is in the deep recession that the numbers would suggest. Now, if there
bra
were
på
a
hvert fall.
turnaround in manufacturing, then of course that would be a very positive development. And we're monitoring that very, very carefully because of
Men
course...
hvordan marked det egentlig som benefit nå av all spekken rundt USA sin gjeldssituasjon, obligasjonene der? Blir det da statsobligasjoner I andre land?
Jeg ser ikke chatten min, den bare står og loader hos meg. Har du chat, eller?
Nei, du Twitchen din av.
Ja, på her.
Ja, nei, til meg du på Discord, men du avlogget på...
Det noe gærent her, tror jeg.
Ja, hvis du prøver å lukke Twitchen din, og så åpner du Twitchen på nytt, så ikke restart PS-en eller noe, så jeg bare prøver å lukke.
Opps, aktiviteter på akkurat nå. Alle sendingene og opptak vil bli stoppet. Ok?
Ja.
Yes, that's rapidly being depleted because if you look at real wages, they've been negative
Og er du live?
all along. So, yes,
Nei, se, da går det opp igjen.
but not as fast as inflation. Some people argue that inflation numbers are understating the severity of the price increases out there. And that's probably...
Jeg lurer på, jeg skal bare hitte fra langt siden av, bare for moro selv. Jeg kan ikke, altså det går bare opp på den der debt-ceiling.
Sufficiently, and once...
Ja, du long jo oddsene dine favør når vi taker på 85% that's short.
Ja, faktisk.
Then you would start to see some weakness in services too.
Rumour going around that we liked you as a guest. That's what the producer's saying. So can you stay till after the break? Because we've got more questions for you. Because I personally want to ask about credit, and I don't know what Karen wants to ask you, but she's looking like she's got a tough one for you. Andrea, we'll see you after the break. But also after that break, we've got Anna Botin will join us.
Men jeg ikke trader sånn her, ass.
Over at Santander. All that to come.
Den sitter her, gjør jeg for det. Dumme meg.
Men da får du sette og se litt på bevegelsene I noen valutapar eller noe sånt da.
Ja, jeg tenker jeg skal gjøre det på.
CNBC.com in Spanish is here.
El Dow Jones subió más de 430 puntos.
Market news, personal finance, and money stories that matter en español. Visit cnbc.com/espanol now.
Your dinner party was a hit. Your dishwasher.
Det litt samme feelingen som I oktober I fjor.
Routine is giving laundry a try.
Ja, rett for det smalt til helvete. Null volum I påvente av ganske store ting, og da det jo faktisk snakk om at det kanskje ikke blir rentepause heller, så det sånn. Det markedet nervøst. Porteføljen de åpnet var sikkert opp som faen I dag.
Hva sa du?
Altså, porteføljen de åpnet vel sikkert opp som bare det I dag.
Ja.
To 50% off at aquasana.com.
Den jo designet for å gå greit. Men
We're not quite sure where we're heading. While the world of stocks and investments may be up and down, time has shown that your
Endelig tatt euroen her.
Create your dream edition. Add more outdoor entertainment space. Build a space to build your memories.
Tobias, han gjør ingenting akkurat nå.
American craftsman. 4 seasons. The choice is yours because that's what freedom is all about.
Do you have a
Ja,
box
jeg
of
er ingen
videotapes, film reels, or photos that are degrading? Legacy Box professionally converts them to DVDs, thumb drive, or the cloud. Legacy Box is simple and safe, with over 1 million satisfied customers. Visit legacybox.com.
The American spirit.
Det er artig at yuan, altså kinesiske valutaen, yuan driver og styrker seg såpass mot dollaren på grunn av usikkerheten.
Det virker som alt dreier seg om gjeldsstaker.
Ja, men er det rart? Altså, hva i faen er det som blir å skje med obligasjonsmarkedet hvis USA default på gjelda si? Da er det jo så krise.
Se, Daxen går opp igjen.
Ja, lang hadde vi ikke.
Nei, jeg sa jeg skulle gjort det, men jeg tør ikke gjøre det.
Nei, jeg skal se han på et litt mer interessant nivå, så blir jeg jo også oppkjørt.
Oi, se! I helvete. Det er på grunn av lite volum at det der går.
Ja, for nå slo han ut alle de som folk skulle snu over lang. Tall fra Frankrike nå og Tyskland om 15 minutter.
Live shot of London there. Andrea Gentili is staying with us, head of strategy and CEO of research at TS Lombard. Keeping us company as we've got.
Ja, tyske PMI-tall kommer i dag. New home sales, EU PMI composite.
This has dropped to 52.8 points in May. The forecast was for 54, so well and truly missed the 54 with that 52.8 number. The final number in April was also much higher at 54.6.
Så om et kvarter kommer tyske PMI, og om 45 minutter kommer Eurozone PMI, bare så du vet det.
Okay.
Så det kan jo også forklare hvorfor det ligger litt flatt.
It is a tad above the forecast for 46,
Når det kommer tall.
and it is also crucially above the April final number of 45.6. For the composite, if I put these two numbers together for you, that is down to 51.4 points in May. It is under forecast of 52, and it is under the April number, the final number 52.4. So the interesting line here is around the services number. So Andrea, if I can
Laurie
we
Logan.
were just talking before about whether we could see some movement on the manufacturing side and on the services side. We are seeing that in France now. What is it telling you?
Well, it's telling us that revenge summer was last year. Clearly, people have spent a lot of money because it was the first opportunity they had. They would love to do it this year again, but everyone's reading that's in the headlines. You know, everything has become way more expensive. And as I said, in the meantime, those funds have been depleted, so the available money to be spent has come down.
We don't just put a little caveat in here that this was pension reform protest. I mean, we saw the scenes where part of France was on fire at times, at night time in particular. Was some of that perhaps just impacting the services side?
It is definitely possible. So a big part of services is, of course, everything that's leisure related. So restaurants and other services like that will have been impacted by the protests, no doubt.
Ja.
Let's get into asset allocation. There's a big arrow. I'm slightly colorblind. I think it's a green arrow.
Frister å gå lang.
Overweight.
Ja, ja.
IG and high yield as well.
Jeg er enig med både deg og en trader, altså når du får det på et litt høyere nivå igjen, så frister går short.
Especially high yield, but certainly also in IG.
Very good question. So on investment grade, we've got a very high conviction view. We think it's the right asset class for these uncertain times. As I said before,
Euroen detter nå inn i det value-zona mi igjen.
but we're expecting the recession to happen earlier than consensus expects.
Faen, det er ganske mye volum faktisk i valutaen, sånn.
Ja, men jeg tror det er der det går nå, for det er ikke noe på indeksen her.
Because of course the recession will start showing up in their performance pretty soon and sooner than the market.
Kult trading view, når det skjer noe sånn spesielt på volum, og sånne her på enkle plasser, det kommer news relatert til det enkelte valutaparet.
Nå kjøpte jeg på gevinst ute. Sånn.
Halla!
we might well be wrong. With recessions, it's the non-linearity that kicks in, that accelerates a process that looks very gradual to begin with, and then it happens all of a sudden. So it's impossible to extrapolate the recent trends, which have been weak, into a precise recession timing. And because of that uncertainty, we think that credit, which is a combination of
Noen her inne som vet om Lori Logan fra Fed, om hun har stemmerett I Federal Reserve.
Block on alternatives. Is that property or is it something else?
Well, sadly, alternatives comprises of many different things which don't necessarily go together. There is property there, and we are underweight, so we think that there is still downside to come in the property sector. There's metals, there's energy, on which we are underweight as well because of the recession, of course. But then there is gold, for example, precious metals, on which we are overweight. So that aggregate number doesn't fully capture the spectrum of views we got there. But basically, we are short interest-sensitive assets, real estate, growth-sensitive assets, industrial metals and energy, but overweight precious metals, which are defensives, of course.
On the equity side, can I bring up pricing power? Because through the earnings season, we've still seen corporates trying to maintain margins. Even if they've had volumes declining, they've still been stretching out those price increases. That comes to an end at some point, and as we just looked at the PMI data today and the moving pieces around manufacturing and services, it feels like we are just months away from some sort of assumption that we cut the price to protect volumes. I mean, that's traditional management strategy. When does it happen? How does it impact margins in your view?
Well, it's happening, as you said. Margins have come off for 4 consecutive quarters now, maybe 5, if I'm not mistaken, in the United States. But they've come off levels never seen before. So if you look at where they are now, they're still at the top end of the range that was the norm before the latest spike in margins. So margins are still very healthy, but they continue pressure. And as I said before, wages have been growing they've actually been contracting in real terms. So the purchasing power of is limited to a degree. So companies will try and pass even more price increases on consumers, but they're starting to feel some backlash, some reaction to that.
So what does that mean in terms of positioning around various
Samurai, du har trade med 200 kontrakter nå I Dagsen. For at det skal særlig penger. Du høres ut som han Joachim her før han smalt på 700 000 bommen. Eller var det 2000 kontrakter da?
Jeg?
Ja.
Når jeg havnet på det meste?
Ja.
Men det tradet, jeg hadde 800 kontrakter.
800, ja.
Obviously, COVID changed the view of what was a defensive because of the lack of travel, but it's back as a defensive, is it?
Exactly, yeah. So those are the sectors to be in.
You are positive on the equity story in Germany and in Italy. Both those markets have had really, really big rallies as well. Is there a possibility you could be changing that stance at any stage on the back of those rallies, or are you just going to ride the momentum?
Well, we've been positive on Europe for a long time, and it's been about which countries should we be in, and that.
Men det som jeg sier at jeg tror det bare bedre å ta alt fra langsiden til markedet snur, for det har jo ikke snudd. Det har ikke snudd på noen av nyhetene. Det har ikke snudd på noen ting, faktisk.
Samurai, jeg tror du misforstår litt. Altså, Joachim gjør 3000 på en dag med 1-2 kontrakter. Da gjør du...
På 2 timer, hvis jeg trader da.
Ja, når du går inn med 200 kontrakter, så eksponerer du deg for faen meg hvor mange millioner det du eksponerer deg for. Det jo noe, 36 millioner eller noe sånt, eksponerer deg for indeksen.
Just a quick call on the FX side. Caution to the wind. You've thrown that away.
Når jeg handlet for sånn 50-100 kontrakter, så dro jeg rundt 30 og 50 rapper om dagen. Det var det jeg gjorde I helt til jeg tok og tømte kontoen på 3 minutter. På Fed. Det? Faen, altså, jeg har lyst til å gå lang her.
Ja, så 32 mil, 1 krone per pip, det 1 Feil tikk, fullstendig tikk i en dollar.
Faen, altså. Jeg visste jeg skulle ha blongen. Jeg visste jeg skulle ha blongen.
Probably going to be quite resilient because, of course, during a recession you do get the sort of safe haven bid, but in the near term, the growth differential.
Det kommer an på om han trader på om som har tradet på TD 365 da.
Ja, han gjør det.
The euro is very limited anyway, so we're quite constructive on it as well.
Ja, det som Prosecco sier, 1-4 minutter. Ja, det
Kraftig breakoutsen, så helt mulig.
Ja, du kan ikke scalpe her, altså. Du må kjøre på bevegelsen. Men faen, ass, jeg skjønner ikke hvorfor ikke jeg longas da. Jeg visste det skulle opp. Ja. Ja. Her har du litt motstand da.
Little bit of an underwhelming performance versus analyst forecasts. BT, this is a story we're watching closely. The biggest shareholder there, Patrick Drahi, has acquired a further 650 million shares in the British telco.
Da gjør det mening hvis du har det inne.
24.5%. Last year, the British government investigated the French-Israeli business mogul's position in BT, but determined it was not a security concern. BT shares have fallen in the last few days after its results showed pressure on free cash flows, and as the company announced 55,000...
Hvor mange kontrakter har du med spillerom nå egentlig, Kim, etter den regelen vi har, eller regnestykket?
Jeg har ikke gjort noen ting, jeg har bare med en kontrakt.
Coming up on the show, we're going to speak to Santander Executive Chair Anna Botín on the sidelines of the
Jeg klarer ikke trade på så lite volum.
Breakfast with the most interesting people in the world.
It's a privilege to get to talk to them every day.
It's more entertaining than any other morning show, but you actually might get some useful information.
Å se på Dagsen på 1 timers traden, det faen at det flyr seg i hjel. Han har gått fra 17. mai til 19. mai, så gikk Dagsen 3,3%.
Ja, det har bare gått. Den går jo ikke ned. Den går opp hver dag. Og nå kommer det tall, og hvis de tallene er dårlige, så kommer det til å bli tolket som blir ikke dårligere. Så går det opp på det også.
Han er jo ned 1% nå da fra ATH.
Ja, men 1% fra all time high, det er jo helt pissvilt. Det er derfor alle er short. Det er jo helt kaos. Men man skal nok bare kjøpe på dip frem til du kommer ned. For det som i hvert fall jeg gjør nå, det er jo ikke bra i det hele tatt. For nå driver jeg timer shorten, og det skal du egentlig ikke gjøre.
Get the most dynamic sand wedge and a no questions asked 30-day money back guarantee.
Nei, da husker jeg man kan si. Det hadde ikke vært så ville rente for å være short, så hadde jeg støttet short fra... så hadde jeg støttet short fra all time high. Det var alt for dyrt på rente.
Jeg gjorde jo det. Jeg fikk en tryne på natta.
For han gikk i ny all time high, eller?
Ja, over natta. Han går høyere om natta og varsler ut, så han gjør det hver dag. Vi ser natt også på futurene.
Jeg er enig med deg, Shader. Jeg skal følge med på short-prosenten hver jævla dag.
Hva skal Dags? Den skal opp til det først faller. Jeg tror ikke på at fallene er sånn. Jeg tror ikke det kommer før... Jeg tror ikke det kommer før markedet faktisk kommer, holdt jeg på å si.
And the people behind the business. When the market's closed, we're going to dive into those important stories from Wall Street to K Street and Main Street. The markets may close. Your money never stops.
Last Call is really about spotting tomorrow's opportunities tonight.
Brian Sullivan hosts Last Call, weeknights 7 Eastern, CNBC.
Welcome back to Squawkbox. President Biden hails a productive meeting with the House Speaker Kevin McCarthy at the White House as negotiators race to secure a debt ceiling deal before June 1st.
We want to be able to come to an agreement. We both agree on the areas that we know there's disagreement on, but I think it was productive in the professionalism, the honesty with one another, and the desire to try to find common ground.
The Federal Reserve's Neil Kashkari tells CNBC he is open to either hiking or indeed skipping in June, but that investors shouldn't expect a cut anytime soon.
Markets seem very optimistic that rates are going to fall. Now, I think that they believe that inflation is going to fall, and then we're going to be able to respond to that. I hope they're right, but nobody should be confused about our commitment to getting inflation back down to 2%.
French business activity cooling in May to its slowest pace in 4 months, despite the manufacturing sector faring slightly better than expected. We'll get a read on the German economy next. Flash PMI is due out in 55 seconds' time. Julius Baer sinking though, 7.5% lower now at the bottom of the stock 600, reporting a modest improvement in assets under management. And net inflows in the first 4 months of the year, calling it a challenging period for the Swiss banking group.
Oi, Dagsen på 16,265, 16,260. Rundt det området, da er jeg lyst til å slå. Nå kom tallene.
We are data watching here in Europe today. The market has been fairly weak as we've got, again, big concerns still around the debt ceiling as we take a look at global equities. But the other big factor here has been monetary policy. The market's closely looking at some of the clues from the forward-looking data, the survey data that we're getting today. That's in the United States, but it's also here in Europe. And we've had French numbers that are showing us some movement first up in manufacturing to the upside, although still contracting. And we've had services showing some weakness. Germany just joining the party. This is the HCOB May Flash Composite PMI. It is still expanding, 54.3 versus 54.2 also at that headline level. It is a fraction higher than the previous month. Now diving into the components, the Flash Services PMI is at 57.8. Again, this is higher than the 56 clocked up in April.
57,8, forrige var 56,00, men det står jo faen ikke hva som var...
Ventet var 55.
Hæ?
Ventet var 55.
Ja, da kom den litt høyere da.
Europe, it is Germany, it is German manufacturing, industrial activity. That is a weak print we're getting today. Eurodollar is declining.
Det kommer i hvert fall ned på det. Hæ? Det kommer i hvert fall ned på det.
Jeg shorta litt nå her.
Europe's banking sector has outperformed the US this year amid concerns over the American regional banking sector. European Banking Authority chairperson Manuel Camper told Karen and myself the higher rates environment has boosted valuations.
Men jeg burde egentlig ta gevinsten og gjøre det om igjen.
Ja, for jeg kommer sikkert snu over long igjen snart.
Ja, jeg kommer til å sprette rett opp igjen, smalt annet. Tatt den nå. Nå er jævla fin trede faktisk. Ok, så jeg går long igjen da.
Ja, jeg er long. Jeg tok den.
Jeg også. Er det penger allerede? Ta gevinst ute nå.
Jeg tok av helt på bunnen.
Det er så teit. Du kan bare kjøpe Dagsen hver dag. Jeg er så jævla mot, ass. Jeg får bare gå long, jeg da. På hver dipp. Prosecco har gjort det hver dag. Han må ha tjent en bøttepøyer. Jeg har vært pissper. Og hver gang jeg shorter og dekker meg, så går Prosecco long. Konsekvent går long.
Jeg tror du gjør en kula på den her Prosecco.
Er du gæren? Det er eneste riktige. Jeg tror ikke du skal tenke makro nå helt tatt. Du skal tenke på bevegelsene. Ja.
Nei, jeg tenker på long entry-en til han Prosecco på euro-dollar. Jeg så den var ganske overselt.
Connecting there with Anna on the line, so we might just check in with her and make sure that the comms are okay. But I think we are now looking at the washout from the financial crisis that we've had stateside, or the banking crisis, the latest issues that have been with one bank that was dominant in technology, stretching to other banks that haven't also managed their maturity curve, the loan profile that they've had on the books with higher interest rates, and that stretched across here to Europe with Credit Suisse showing us skeleton after skeleton, the consolidation we had there, and the question is how that impacts Europe. So let me just pose that question again to Anna. Anna was pointing out that it's been some distance now between the last financial crisis. Then we've seen regulators concerned about complacency settling in here in Europe, but you're also concerned about the stepped up regulation we could be facing on the back of the banking crisis in recent weeks. What concerns do you have about fresh regulation?
Du ikke har hatt den så tidlig.
But,
I think you're doing brilliantly, by the way.
I just keep chatting to myself.
They're great questions, and you know what? I reckon you're going to get a third chance of asking exactly the same question. Look, I hear what Anna Bottin's saying about regulation. At the moment here in Europe, we do not appear to have anywhere near the same ramifications of crisis from the various banks in the United States. The mid and lower tier banks as well look like we don't have the problematic area there, whereas, let's face it, the SIBs, everyone's pouring over the systemically important banks globally and making sure that they are ring-fenced. The problem in the United States has come, of course, from those medium-sized banks.
Men går det an å få
to the interest rate hikes because they've had inefficient.
Har du sjekket hva spreaden er på euro-USD, for eksempel, på
The second question I have as well is where is the
På TV?
rising momentum
Snakker du til
for
meg, eller?
interbanking in Europe as well? We have a lot of banks.
Nei.
We still have thousands of banks across here in Europe as well. We
Jo,
don't
men
have
jo.
cross-border
Hva
consolidation.
det faen var det
We
var?
don't have the same access to capital that US institutions have as well. So are we destined to be in the slow lane until we get some form of capital markets union
Nå
and
skal vi videre opp, ser det ut som.
union as well? And that's the question I raised with Mr. Camper earlier.
We do have consolidation.
IC Markets er jo Forex dritbra trade i Prosecco, det er jeg helt enig i.
Rather than a voluntary basis, and obviously I'm talking about Switzerland. In terms of what banking regulation means, if we get more of it,
Jeg er lomma,
it means locking up more
Det
capital.
tar
So
gevinsten.
that means there are just fewer resources to lend out to the real economy, which means we get a further slowdown taking place. And I'll just bring up the transmission mechanism. You may not have heard that for a while. That was something we spoke about a lot under the Mario Draghi days when he was running the ECB. Whether there was a problem in terms of what was available, how that got out to the real economy,
gevinst.
and monetary policy worked in the mix as well. And I think if we're going down the route of more regulation, we
Jeg kan
start to
ikke
go
helt
back to some
skjønne
of the
hvorfor det skal
initial
gå opp, men jeg bare kjøper det.
do we
Hvor er det
have
sånn? Man bare tredje.
smooth transmission of money across to various parts of the economy that need it at this stage? So that is a factor. The other
Gikk
point
inn en-
too, of course, is
tar
around
gevinsten.
the complexity around compliance if we have more regulation. Now, apparently the
Third time
team,
lucky, they
third
always
time
say.
lucky, that the team says that Anna is good, and I hope Anna is good. Good morning to you, Anna. I think the viewers have heard the question, but I'm going to pose it to you again. There at IIF,
Ja.
that you have been talking and warning against more regulation.
Skal vi se om han klarer å bryte her nivået igjen og på oppsida, eller om han skal til turen her før han bryter opp.
Ja, jeg startet bitte litt av han, og så går jeg longe som går videre oppover.
Yes, good morning. The first point is that what is happening and will continue to affect the world is that we are now in an era of normalization of rates. We had abnormal rates. There's a lot of capital invested in areas that will now not be as profitable, and that is going to continue to create
Faggevinst ute på shorten.
volatility. But
Jeg er 100
this is
faen
not
ikke det.
2008. What has happened it's not a systemic, it's
Man
a
kan droppe
crisis,
litt
it's not
mer
a
der.
banking crisis. It's been specific banks that were badly managed, where the issues are well known,
Nå er
mismatches,
shortet,
liquidity
tar
issues, and
gevinst
so on.
ut
And so
straks.
the key point is, what is it we
Ute
need
fortsatt short.
from banks once we have trebled, multiplied by 3 the capital in the banking system? We have a resilient banking system. The regulated banks are in a very strong position. And so what we need is a fundamental rethink of what do we want banks to be in the new economy, in a world that needs growth. And finding that balance is really
short down.
important. Between being prudent, and we're not saying that we should go back on that, but also...
Ja, jeg merker jeg er ikke helt på, ass. Du er oppe eller noe.
This is really the key
Åh.
point that we're making here at the IIF.
And it is a great opportunity.
Ja, det er så små bevegelser der
The
oppe.
smaller banks, the regional banks, given what Spain itself also witnessed in recent years, it was the smaller lenders that had a problem
Der,
with debts
kom igjen nå.
last time in the
Der,
European
oi, nå
financial
traff jeg
crisis. Why is it so relevant to keep some of these names and to ensure that names like Santander don't just get bigger
Ta ut
and bigger
gevinst
as deposits
der,
flow to
ute.
your bank at the expense of the smaller lenders?
Well, I mean,
Short term,
Europe
yeah.
and the US are very different banking markets. In 2008, the biggest bank in the US and the biggest bank in Europe were worth the same. Today, the biggest bank in the US is worth what the top 9 or 10 banks in Europe, because among other things, we've had less growth. You mentioned Spain. In Spain, the banks actually saved the savings banks, which were intervened. They were not run in the same way. So it's really important that banks have the scale to compete in today's economy.
Vi har støtte på 18. mai-nivået, egentlig. Eller på flere nivåer fra 18. mai, akkurat der vi driver og holder på nå.
In Europe, we need to get banking union.
Det var nice å se den helt ned på 16.089 igjen, når han først skulle bytte litt ned.
To be able to support our customers and our economies.
Ute, takk.
And I believe that is really
Gjør man
important
litt redd.
in the digital economy, so we can invest in technology and really take advantage of the big
Ser du på long eller ser du på short nå?
Jeg shorter, tok gevinst, og så vurderer jeg å gå på nytt, og så går jeg long litt lenger her nå. Jeg bare tar bevegelsen. Han har støttet her nå, han må bryte her nå, og så går han rett
and
opp.
to be able to accompany them.
Anna, you'll find us sympathetic here around this test to those 2 points about CMU and banking union. Why is it then our
Ser du?
political
Nå tar han.
masters keep kicking both
Du tar den
into
long.
the long grass?
Ja,
And
jeg
actually,
vurderer
the future of banking union has
Nei,
been delayed
ikke.
actually by current events rather than enhanced by it. Who's to blame here, Anna?
Well, it's not an easy thing getting 27 countries to agree. No, we commissioned a study at the EBF that I was heading until last month, where we looked into these issues. What is it we need to get higher growth in Europe? And there's many things that can happen. Capital markets and banking union are important. We need to agree on deposit insurance, for example. How is that going to work across Europe? But there's many other things that are not as difficult, not as politically difficult, like harmonizing taxes and other regulatory issues that are different across 27 countries. Bankruptcy laws, for example. But in this study that I mentioned, there is one thing that we could do in Europe to have higher growth, which is securitization. The securitization market in Europe is 6% the size
Ta
of the
gevinst
American
ute, på
market.
longen.
Banks are no
Ja,
longer
det
the
tok
best
han.
holders
Ja, det tok han.
of credit
Jeg
in
bare
many
trener.
cases.
Men
We
det er
can
lite,
make- we
bitte
can
lite,
help
det er
our
ikke mye å hente
customers
da.
raise that capital and then place it with other funds.
Nei, men det blir jo en dollar her, $2 der, $3 der. Det blir jo litt, da.
Ja.
Capital markets
Jeg sjekket nå for å se om han klarer å bryte toppen, hvis ikke han gjør det, så går jeg short.
higher growth.
Han kan bryte opp her.
Changing the subject on a little bit as well about the
Sånn
profitability of
teknisk.
banks. It was very good speaking
Vi sier
to
faen i
Jørgen
fundet.
earlier on about the fact that we don't necessarily need less banks, we just need more profitable banks as well. Is Europe stuck? And I take on board your most recent figures where I think your return on tangible equity was somewhere in the region of 14.4%. In fact, I know it was because I'm looking at it here. But there is a lot of banks in Europe where the return on equity, return on tangible equity, is just not cutting it in terms of profitability when you look at their cost of capital as well. How do we solve this problem, Anna?
Well, we need, as I said, we need a fundamental rethink of
We need a fundamental
regulation.
rethink.
And the European Commission has said that regulation is one of the tools to promote a more innovative and productive economy.
Gjør det?
So I think we're on that track. What we
Nei,
need is to
jeg liker ikke helt den kanalen ligger nå.
facts. One is that
Det er ikke sånn hver dag.
US and Europe. So the
Ja, men sånn
the best
Jeg vil ha den opp på et litt høyere nivå før jeg er komfortabel med å gå short. Samtidig så er det litt sånn her å longe av noen han så vidt ligger på noen form for støtte.
banks in the US.
Det er sånn,
However, if you look at the cost of equity, we have a much higher cost of equity, much lower multiples. Why?
Nei, jeg tar meg. Jeg bare går ned alle veier.
As a system, less profitable. Santander has a 14%, and we've said 15%.
Nå har jeg tjent penger også, så kan det være sånn.
Equity, because 60% of our business is in the Americas, because we have growth. And this is something which...
Er du enig med Samurai? Han sier faen, eller han som ikke liker nivået vi ligger i akkurat nå?
Altså, det er midt mellom nowhere da. Enten så bryter han opp eller ned.
Ja. Ja, det er det som er, og jeg hater å trade i det. Jeg har enten lyst til å være i nærheten av en klar breakout.
Du kan få breakout nå, liksom. Nei.
That is by nature
Ja, men den kommer så ut av ingenting. Hvis du ser på litt lengre timeframe, så er det sånn skikkelig ingenmannsland-nivå her nå.
Det har det vært hver dag. Det er ny topp hver dag.
But we also need
Han skal jo på topp, da må vi ganske høyt opp igjen. Der er jo noe 117, nei, mer enn det. Men faen med 200 poeng under den nye toppen.
Har du sett Nasdaq nå, eller?
Nasdaq går så kul, da.
Ja, fy faen, altså. I går også.
Det er veldig mye optimisme i Nasdaqen etter earningsen til alle de store.
Ja, det er akkurat det her. De 10 store.
Ja, de 10 store utgjør jo også 60% av hele Nasdaqen, eller noe sånt her. Sjukt. Så det der er litt sånn her vanskelig greier, for hvis de 10 store gjør det bra, og de 90 andre går det til helvete med, blir de 10 store enn å klare å holde oppe indeksen?
Det er det som er spørsmålet. Jeg ber som et helvete. Jeg er så bearish.
Bearish. Berit. Berit. Medan vi går på 14 milliarder i går og pumpa 3%.
Ja, kan du forklare meg logikken med det?
Nei, Meta sa lommepenger.
Ja, men kan du forklare meg logikken med det? Når et selskap blåser ut 13 milliarder kroner, liksom, kan du forklare meg hvorfor den går opp? Hva får folk til å kjøpe det, liksom? Hvorfor kjøper man da når de liksom... Jeg skjønner ikke. Hallo?
Again, to have a fundamental rethink on regulation, not just banking regulation, regulation in general. And this just makes it even more urgent.
And I guess one regulation that you're not happy about, as ever, like a lot of bankers, is the windfall tax that this
government... Ja, det ligger til det spør en til. For hvis han har svart noe, så vet du ikke det. Han har null kontroll. Han ser at han har kontroll, men han har faen ikke kontroll.
6 months time to the national elections as well in Spain, of course. I'm talking
Ja,
about.
der kan du bare si det. Nå sier du at det er det verste support jeg har sett for oss å le.
For both the banking sector and indeed for Europe.
So banks have been part of the solution during COVID. We remain part of the solution.
Ja, men jeg vet det. Han er roten til den greiene.
Of the 2022 results,
ja, men det er sånn de sier helt
pre-tax at Santander, 1/3 went to taxes.
Ja, bare si det til han.
1/3 went to shareholders, 1/3 went to lending, i.e. to growing our capital. There is one country in Europe where out of every euro we make, we pay 60 cents to the government.
Kan du ikke falle til helvete da?
Taxes, corporate tax, deposit tax, revenue tax,
dividend
tax, and so on. So we do need to unlock the private sector's capacity to fund investment.
Da er du bearish når du setter lån, og så har du lyst til at det skal dette helvete.
Ja, jeg vil jo det. Jeg vil jo så godt til helvete. Jeg kjøper bare nå for det markedet er fucka.
Håper Prosecco setter seg ut på toppen der i stedet på Euro-USD. Da gjør han en fin en, men samtidig så lå det jo an til at han kan gå helt opp til 1,08.
Ser ganske bearish ut da.
Bearish?
Ja, den bevegelsen her ser ikke sånn jævla bullish ut.
Nei, ser ut som han sliter litt, men det er jo Tyskland, så når det ser bearish ut, så skal det opp. Og når det ser bullish ut, så skal det ned.
I don't think many viewers know. Santander is one of the, if not the biggest.
Litt av problemet da, som er sånn short squeeze, hvis det er 85% som er short nå, så har ikke de penger til å døtte videre ned, liksom.
Nei. Dags er bare å gå long og lukke, ja. Ja, jeg tror faktisk du tjener på, hvis du går long i dagsen, så setter du heller og følger med på short-prosenten i dagsen, så gjør det bedre enn om du sitter og ser på grafen teknisk.
Jeg må pisse. Pisse.
At Santander Group. I almost missed Karen asking the same question. Right, coming up on the show, more and more companies are expected to jump on the AI bandwagon despite concerns about the impact on the future of work. More on this after the break.
viciously.
Right now on CNBC Make It, how much money does it take to be considered middle class in 20 major U.S. cities? Find out on CNBCMakeIt.com.
Your dinner party was a hit. Your dishwasher took a hit. Your teen is giving laundry a try. Your dryer left you hung out to dry. Date night with the crush. Your toilet won't flush. Luckily, American Home Shield is there to fix or replace covered appliances and home systems to help you stay on course and budget. Protect what you don't expect. Visit ahs.com and get a free quote today.
We've been spending a lot more time than ever at home these days. Maybe now you've just noticed cold air coming in from a couple windows, which means you're losing heat in the winter, losing cooling in the summer, losing money. Now is the time for new windows and patio doors from Renewal by Andersen. And right now, when you buy one window...
Ja, det ikke Dachsen nå når han lang, at ikke Dachsen gikk ned til 1200 poeng nå, mens han jo pest, det jo helt utrolig.
And no interest for 12 months.
1-800-203-7194. If you have diabetes, you know managing your blood sugar is critical, but finger sticks are painful and inconvenient.
J-Pal has you by the balls.
A continuous glucose monitor provides blood sugar readings without uncomfortable finger sticks and alerts you to potentially harmful spikes or low readings in your blood sugar levels. They work with over 500 private insurers to get your device at little or no cost to you. Call 888-710-0742.
The American spirit. Inherently competitive. Always driven with an appetite to succeed. Perseverance is paramount. Knowledge essential.
Good morning, everybody. Welcome to Squawk Box here on CNBC.
That's what drives us. It's in our DNA to provide the information you need to propel your dreams forward.
CNBC. Live ambitiously.
Yes or no? Yes or no? I just want a yes or no.
Think about it and say yes or no to me.
It's binary, yes or no. This is your moment. You decide. This is a yes or no. It's your decision. Yes or no. Say yes or no, and then it's done. You're going to have to make a decision.
You get this shot once.
What would you like to do? You ready?
This is their moment. Their one moment on the carpet.
Shark Tank, Sunday through Thursday starting 8 Eastern. CNBC.
Ser du på Eurojepi på short-sida eller long-sida nå, Fredrik?
More than 75% of companies are expected to adopt technologies connected to artificial intelligence within the next 5 years.
Johnson har jo sikkert en blære på 4 liter, så det tar seg tid det der.
Report, half of companies expected to create job growth, whilst a quarter seeing it triggering job losses. Andrea Principe is a professor at Lewis University, says the wider adoption of artificial intelligence calls for a new approach to the world of work. Andrea, lovely to see you. Look, I love technology, and I've studied this from when I studied the Industrial Revolution in 18th century Britain onwards. Well, and historically, every time we've worried about technology destroying jobs, actually more jobs have been created. So I get that. That's my premise for what I'm about to say next. But is this the first time that a new technology in history can actually change that equation and actually will create far less jobs rather than more jobs?
I think it's a big
question. Jeg regner med du ser på Eurojepi på short-sida på euro, med tanke på nivået den er på. Uten at jeg... Nei, der ser jeg en reversal opp til ny topp, kanskje. Short-siden, ja. Nice.
That's for sure. But we may be in a new frame to understand what is going to happen. So the industrial, the series of revolution that we've been exposed to did create new jobs and actually destroyed old ones. This one is actually creating
Jeg orsker ikke å trade på det her nivået. Det her så sidelengs ingenmannsland uten noe form for fundamental å satse på. Jeg vil enten ha han opp 150 poeng før jeg vurderer å trade han.
Å faen, det var jo skikkelig penger her,
Ja, altså, hvor stor blæra di, eller? Det ikke mange som bruker 5 minutter på PES.
Nei, men jeg fikk jo måtte snakke med Snake.
Pessa på snekkeren.
Nei, jeg måtte vise helvete, det var skikkelig penger. Ja.
Han kommer opp igjen her nå. Uansett.
It's really a revolutionary change that does require a revolutionary mindset, to be honest. With a focus on human beings.
Det så typisk meg, ass. Det trader, så ble jeg borte.
Ja.
Jeg har 3 snekkere her, som jeg må være fast på.
Hvorfor må du passe på snekkere? Ja, er de ikke
Hvis de-
fagfolk?
Jo, men hvis de går på timer, så skjønner jeg det.
Hva sa
Hvis de går på timer, så skjønner du det.
Ja.
Når de er mer opptatt av å røyke, da er det litt vanskelig å få ting gjort.
Ja, det er derfor de må gå på provisjon.
And this, of course, I express all my bias being an educator. Every single learning part, educational part, starting from primary school up to university, must have some kind of
6 minutter tar spilt på hva vi får der.
And this actually, that's a big issue, because we've seen that technology is moving ahead very fast. It's been accelerating every single process, or a lot of processes, including, think of smart working, for instance. But the educational sector is still lagging behind in terms of content, but also in terms of methods. And that's the big, it's not a question here, is actually understanding.
Hvordan gikk den andre samtalen du skulle ha med han der fyren i går?
Jeg har ikke snakket med noen eller?
Hva sa dere?
Jeg har ikke snakket med noen eller? Han som fikk pengene, ikke sant?
Ja.
Men han har bare fått pengene, og så skal jeg få svar i løpet av et par dager. Det er flere kontoer.
Ja, du skal ha 10 stykker eller noe sånt.
Totalt.
There's a lot of talking. We're a lot in this, for instance, in academics, in academia. Now we've been talking about.
Euro-Germany må først PMI i mai 2029. Den skal jeg fortelle at det er gode tall besøk som jobb som snekker. Vet du hva, trader, den som forteller deg at det der er gode tall og har handlet på den, han har tjent mer penger enn oss i Dagsen de siste månedene, så det
Even in terms, even because, as I
Men det er
mentioned
pen.
early on,
Hva sier du?
Toggevinst ute.
sectors are moving ahead quickly. The educational sector is still
Hva
lagging
er
behind.
ute?
That's a problem, because even we should
Nei.
acknowledge.
Nei, jeg har ikke tjent penger. Jeg har tjent penger hver dag på hus på Dagsen, og så har jeg tatt alle pengene på USA. Hver dag.
Og så går jeg tilbake til i fjor, så tappte du alt jeg hadde på Dagsen, og så tjente du på USA. Ja.
Men nå kommer jeg bare til å scoute, sånn som jeg har gjort nå, det er det jeg er best på. Å sitte og så time dette fallet, tror jeg ikke er så smart.
Uansett, altså. Bra jobba, Prosecco.
Men Prosecco gjør det helt riktig, han er med flowen, han gir faen om det er dårlig tål eller bra tål. Det er akkurat sånn det skal gjøres. Shorta akkurat nå. Ta gevinst hvert øyeblikk. Ute, ta gevinst. Faen, og jeg er bra. Jeg har gjort 1, 2, 3, 4, 5, 6, 7, 8, 9 transaksjoner. 10, 11, 12 og 1 tapp. Kun på grunn av jeg gir fullstendig faen i reklame.
Let's go, Rod.
Man, an app to fix my oven.
Yep.
Skal Dax lenger ned. Det ser sånn ut, men den går jo opp på hver gang vi sier det da. Så det er jo... Jeg kjøper på dipper her hele tiden. Det er det eneste som har vært riktig i dag i hvert fall.
An all-new home repair and maintenance app. Download today.
If you don't have a good dental plan, or if your employer doesn't offer dental benefits, this is the deal you're looking for. Get the Carefree Dental Card, and for just $15.95 a month, you can see the dentist anytime and pay a whole lot less.
On my first visit, I saved $650. We used to pay full price at the dentist. Boy, was that dumb. We just saved $705.
Call the number on your screen and request your Carefree Dental Card free. We'll send your card and complete
Tok en liten high-risk short her.
no obligation today.
Jeg tok en liten high-risk short.
Ja, jeg tror det skal opp, men det kan falle liksom. Ja, det gikk den opp.
Call during this TV offer and will also include free vision benefits and free prescription drug benefits too. See for yourself why Carefree is the best deal in dental. Call now.
Call the number on your screen and use the code STARTFREE to get your Carefree dental card and free plan information. Don't wait. Call now.
You may want to attend college.
But you have a full-time job and kids that need your full-time attention.
How can you possibly attend college?
You learn online at South University.
Earn your degree while you still earn a paycheck.
Take care of your future while you take care of your children.
Earn your degree any hour, any day, from anywhere.
And the credit transfer policies also make it easier to return to college.
Earn your degree online from instructors who go way beyond the classroom to help their students change their lives.
And help their students change the lives of their children.
Learn online at South University.
Call 1-800-207-0456. College is a road to your destination.
And every journey begins with a starting point.
Start from South University online.
The convenience of taking classes where you want.
The flexibility of taking classes when you want.
Men hvor løk er folk? Det kom nettopp en siste han der politimannen som, eller kollegaen min som skjøt han der i Levangen i desember i fjor. Han er blitt siktet for drap nå.
Kollegaen din?
Ja. Men da tror jeg ikke folk skjønner en dritt, fordi at du blir... Altså, hvis jeg hadde skutt noen i tjeneste, så hadde jeg fått mistenkt sikta-status uansett, fordi at det er da du får rettighetene, altså mest rettigheter. Altså,
ja, du må bli siktet for å få rettighetene til å få advokat.
Ja, blant annet. Nei, du kan jo være mistenkt, og det kommer an på voldsgraden, men sånn sin her saken så er det anvendt tvangsmidler mot han, selvsagt. Og da har han jo fått status som sikta, og rettighetene deretter.
Era of normalization of rates. We had abnormal rates. There's a lot of capital invested in areas that will now not be as profitable, and that is going to continue to create, volatility.
Julius Baer sinks to the bottom of the Stock 600 after reporting a modest improvement in assets under management and net flows in the first 4 months of the year, calling it a challenging period for Swiss banking.
Good morning and a very warm welcome to Street Signs. We're going to kick off the show with some fresh Eurozone flash PMIs for the month of May, just crossing the wires now. So the composite flash number for the month of May has come in at 53.3. That is down from 54.1 in April. The expectation was 53.3, so it looks as though that is in line with the forecast. Now, in terms of the breakdown between services and manufacturing, as for the month of May, looks like it's going to continue. The manufacturing PMI has come in at 44.6. That is down, a deceleration from the 45.8 reported in April. So slipping further into contraction territory. The services sector, meanwhile, that PMI has come in at 55.9, firmly in expansion territory, but also marking a slowdown from what we saw in April. So those are the headlines in
Skytinga I Lavangen 9. desember, som det var 2 kollegaer av meg som var på et psykiatrioppdrag, hvor en person i en hjullaster kjørte ned bilen og holdt på å spille med ene kollegaen min, mens den andre kom seg ut og heldigvis hadde våpen på hofta.
Såpass, jeg hadde skutt meg selv det.
Ja, altså først kom kollegaen, ene kollegaen min kom seg ut, og da på det tidspunktet var jeg generelt bevæpnet, så da hadde han stått på hofta, og rett etterpå kommer hjullasteren kjørende og tipper over inn i bilen. Hjullaster på 20 tonn, så tipper politibilen og sender gaflene ned etter andre kollegaen som sitter klemt fast i bilen.
Du har jo ikke så mye valg, da.
Nei, så har du det forbannet fjottene på Stortinget. Han kunne ha brukt annet maktmiddel. Jeg skal sprenge opp med batongen og begynne å slå på vinduet, liksom. Kongsberg-saken, hva faen har det med? Hva skulle gjort om man hadde et våpen på hofta da? Det der blir helt feil sak å sammenligne som det. Det er to helt forskjellige situasjoner uten noe form for sammenheng med våpenet.
Halla Bonisen.
Kongsberg-saken var ikke en livstruende hendelse for noen parter, selv om jeg er veldig spent på å høre hvordan informasjonsgrunnlag man hadde på den der nissen som var slått etter hvert.
Services growth eased sharply from April and came in well short of
Det
expectations.
ganske bullshitter nå, altså.
Manufacturing picked up on the month, but
Ja, men Samurai, hvis du går til angrep på en bevæpnet betjent, da det noe annet som har gått av til våpenet. Men i denne situasjonen, eller du hadde aldri havnet i den situasjonen der, i utgangspunktet med våpenet. Hvis du hadde våpenet på hofta, velger jeg å trene, velger jeg å tro i hvert fall. Med den treningen vi har, vi går jo ikke inn i sånne konfrontasjoner med våpen på hofta.
Jeg vurderer å gå long her, altså, for det ser ganske...
Sånn, skjedde jo ikke en dritt på talen, så.
Men det går jo ikke ned, så why the fuck not, liksom. Future henter seg igjen også. Det ser greit ut, altså.
PMI-en kom på 53,3 poeng. Industriaktiviteten er skuffende lav, men økt aktivitet i tjenestesektoren.
But in addition to that, there's a downturn in global trade flows that we've been signaling for quite some time.
Det virker ikke som noe som på dette her ned.
That's a symptom of a broader global malaise, but also exacerbating all of this is a shift to inventory destocking.
Og det er jo egentlig ikke så rart, hvis alle er short.
Altså når PMI-en er 44,6, det er jo... Skyt og greiene, det er jo så lite vekst i Tyskland. Hvorfor rør ikke Tyskland seg på det her?
Det er vel at alle er short, da.
Alle har sett lastet til pipa allerede.
Jeg har aldri sett sånn bevegelse før.
Looking into the detail of these surveys, there's
Jeg går long, jeg gir faen.
potentially encouraging for the European Central Bank. You know that supply chains and lower energy prices mean that input costs for factories fell at the fastest pace in over 75 years.
Short etterpå. Ja, men altså, jeg gir faen.
ECB has been pushing through are working.
Wow, jeg klikket til den, men jeg fikk ikke lov å gå dom.
Big cooling of inflationary pressures in manufacturing.
Jeg er long nå.
Supply chains are
altså gikk jeg glipp av den der, for at TD-en min klikket. Nisse.
Ta gevinst ute.
So that's taken pressure out of supply chains, taken those inflationary pressures. You've got lower energy
costs. Men du får nye sjanser, den går opp hele tiden, så det er greit.
And they're passing those lower costs on to customers.
Så tok jeg litt med short der også. For å se om det er rett.
At the steepest rate since September 2020.
På den bevegelsen her. Ja, her er penger på short nå.
Service sector, it's a complete reversal of what we're seeing in manufacturing. Their companies are struggling to service demand. There's no surplus supply in services.
Fuck me, jeg må stikke, for jeg skal hente lister. Nå er jeg short her oppe, la oss håpe at det blir bra.
Nei, du kom deg ut før du stekk. Tape, drit i, du skal ikke være borte når du sitter i en trade lenger.
Nå er jeg penger nå.
Ja, da tar du pengene, så kommer du deg til helvete ut. Du skal ikke sitte i noe trade mens du skal få hente liste, for da vet du hva som skjer.
So the ECB is going to be thinking, right, so we've got a lot of commodity see price pressures
skjønner
coming
hva?
down. That normally feeds through into the service sector.
Nei, det går opp.
The big question, therefore, is how long is this surge in demand for services going to persist for? Because if this is something that there's a lot of pent-up
Har det en
money
mulighet til å
from
komme ut, så
households
kommer
that's
det,
going to
gutt.
sustain this through to the end of the year, then it's going to keep ratcheting up those service sector prices, and meaning CPI inflation is going to be sticky. Or is this all going to fade away? Is this a little boom that we've got here, post-pandemic spending that's going to fade away as the reality hits, the cost of living crisis and so forth? This is what we don't know yet. This is what we've got to be watching for the data to come forward, and that's what the ECB are going to be front of mind about.
Good morning. We
Det var en fin tre, da. Fytti
data,
faen.
of course, a whole lot as it
Ja,
continues to,
nå er du
to
ute.
flesh out exactly
Nå kan du fære
what
handleliste.
the state of the economy
Ute,
currently looks like. Supply chains clearly not healing in this sense in many ways, and this will push through to the expansion for manufacturers, producer price
Sånn, ja.
inflation as
Frank,
well.
da kan du fære handleliste. Da går det bra.
Takk skal du ha.
Increasing likelihood
Ja.
of a more, shall we say, difficult recession.
But so
Fy
the
faen.
overall picture
Snakker om,
now
altså. Her er man litt barnevakt til
the
tider.
numbers so far for the second quarter, you're looking at Eurozone
Jeg lover deg,
GDP
nå
growth
blir han
of
sikkert å gå opp mot ny topp også
0.5%,
etter hvert, sier han så short.
depending on
Så det
obviously
er
what
bare
happens
bra
next
han
month.
kommer seg ut.
If you get another strong number, it's going to be a good quarter. But further out,
Snekkeren
there
sitter
is this
tredje, ja.
drag from manufacturing that will inevitably feed through to services. A lot of service sector activity is highly correlated with manufacturing.
Ja, Snekkeren har gått long nå, han.
It's a big question of just how long is this sort of household surge in spend going to last for? And we
Nei,
think with the
akkurat den
hiking
sonen han er i
interest
nå,
rates that we've had,
så
with the cost of living
ser det
still
ut som
remaining
han
very
kan,
elevated,
hvis han klarer å bygge seg
and
opp
the
her,
savings
da begynner vi å
gradually being
komme på et litt
eroded,
sånn sunnere nivå
we're in
for
for a
å
weak spell as we go
faktisk
into
trade.
next year.
Men
But it's the imminent recession risks certainly seem to have faded.
jeg har to kompiser som er snekkere. Jeg kan ringe og høre han. Han gikk long på tallene.
Upturn in service sector activity, but we just don't know how long that's going to last for.
Yeah, and it lasting that long then could, I mean, has maintained
Sure,
a sense of
no,
resilience in this
det
economy.
kan ta ring og høre.
You know, again, it's about how long that resilience kind of lasts for, right? Is this perhaps beyond just monetary policy now?
Is it beyond monetary policy? Well, obviously, if households are showing this resilience, there is scope for some fiscal policy to be tightened. There's a lot of stimulus in the form of the energy subsidies. That's falling out of the system now. So again, this is another reason why we think that the big surge we've got in the household sector will lose some momentum as we go through the year. I think that's a natural thing that's going to happen. And we're already seeing, if you look at the future expectations indices from these surveys, they've come down. They're down now below their long run averages. So sentiment about the year ahead is starting to wane. If you look at the new business inflows, especially in France, they're starting to cool as well. So there's a near stalling of new orders growth.
Noen av snekkerne har vel svar. De har vel ei koma etter å ha sett så bra i tall. Sett på long hele gjengen.
There are signs that this upturn is losing some momentum and it could fade as we go through the middle of the year. I think that's the most likely scenario, but we've been surprised before by this resilience of consumers. But I think the odds are you're going to see this cooling quite nicely, and that's going to please the ECB.
Chris, at the start of our conversation, you alluded to weakness in global trade as one of the key drivers for the weakness in the manufacturing sector. To what extent is that down to momentum in China fading?
China's obviously playing a big part of that, but it's more a symptom of the whole global inventory cycle moving. So and this is evident across from the Americas, Europe and Asia. There's this unwinding of excess inventories. So whereas you had this big buildup of inventories, factories struggling to get supplies, bought everything they could, anything that was available, they stocked up on during the pandemic, built new warehouses. That is all unwinding now, acting as this big global drag. So again, the other question is how long is this going to play out for? It should probably play out for another few months, but that then of course means that you could see some
Ikke lyst til å bryte opp, ikke lyst til å bryte ned, han bare står fast.
As that inventory cycle starts to move in the other direction and firms start to rebuild stocks. So service sector looks like it will lose momentum as we go through the year. May, as we go through the second year, starts to turn around again. But that's what the big.
Det ikke YC-greier når du fikser Dr. Botox-syner før du kan legge inn penger der. Know your customer, du må verifisere med førerkort og regning og noe piss.
At S&P Global Market
Men det må skal du få laget uansett. Jeg ville ikke ha tradet på Nordnet, for å si det mildt.
That's as the pair wrangled over how to raise the country's borrowing limit before a June 1st deadline. Now, the two remained at odds, but vowed to keep negotiating as they met at the White House for more than an hour Monday evening in their first face-to-face meeting since February. Now, in a statement issued after the meeting, Biden acknowledged areas of disagreement, but said a default is off the table. U.S. House Speaker Kevin McCarthy also expressed optimism a deal could be reached within the next 10 days.
I felt we had a productive discussion. We don't have an agreement yet, but I did feel the discussion was productive in areas that we have differences of opinion. We're going to have the staffs continue to get back together and work on some of the things that we had talked about.
Now, in a new letter to Congress, Treasury Secretary Janet Yellen reiterated her warning that it was, quote, highly likely her department would run out of cash to cover its debts by early June if Congress doesn't find a compromise to either raise or suspend the debt limit. Let's get a check on markets. Yesterday, we saw the three U.S. major indices and little change. The tech-heavy NASDAQ did gain about 0.5%. The S&P essentially closed flat, though, and the Dow Jones pulled back about 0.4%. The cautious optimism is certainly circulating around that debt ceiling deal, but of course it remains to be seen whether we will get a final agreement. We also had some hawkish Fed commentary driving the market narrative yesterday. So let me take you to Treasuries on that note. We saw U.S. Treasuries come under pressure yesterday on the back of this hawkish commentary. We also saw Fed rate expectations dialed up on the back of this commentary. So here's a picture of where things stand now. The U.S. 10-year is higher on the day to 3.72%. The 2-year is trading around 4.36%. Here's what we learned. St. Louis Fed President James Bullard, he is a non-voting member, bear in mind. He said that the Federal Reserve may need to hike rates by another 50 basis points this year in order to
Ja, det frister litt til det, men
His comments come as
jeg
some
sett.
policymakers signal support for a pause. With Minneapolis Fed President Neil Kashkari, this was the kicker.
Ja, får man en
Telling
raket.
CNBC He's open to keeping
Ja.
rates on hold.
Jeg tror ikke han nå like høyt som Elon Musk sin, men det nå.
End of the hiking cycle.
I think right now it's a close call either way versus raising another time in June or skipping. Some of my colleagues have talked about skipping.
Jeg
Important to me
100% enig med Trader. De nivåene her er jo bare bøtte kjedelig og superrisiko, for det er en stor nyhet eller en makrohendelse som sender det bang i begge retninger nå.
in July potentially, and so that's the most important thing to me is that we're not taking it off the table.
So we've had this sort of reshaping of the Fed narrative in the last 24 hours on the back of those comments from Kashkari that if we do see a pause at the June meeting, it could be interpreted as skipping a rate hike. So not necessarily an end to the rate hiking cycle. So that was why we saw a repricing of Fed rate expectations yesterday. In terms of dollar trade this morning, we are seeing the dollar gain versus sterling and the euro. Sterling is now down below 124. We're at 123.97. We'll see if today's flash PMIs for the UK do anything to change the direction of travel for sterling, which has been on a downward trajectory. The euro is trading around 107.96, so also pretty weak recent low versus the greenback. In terms of oil markets, we are keeping a close eye
Faen,
on
jeg får
them
vondt i
around
sjæl
the
av å se
ceiling
på
tops.
Nasdaqen nå, altså.
The WTI price is down about 0.25% this morning, $71.87 a barrel. Brent is also trading about 0.25% lower. As for U.S. futures, here's the picture for Wall Street at this hour. Similar to Europe, we are looking at a mixed picture. We've got the Dow Jones and the S&P looking to open slightly lower, the NASDAQ slightly higher, but no major moves. Actually, so yeah, a fairly muted start indicated at this stage from those U.S. futures.
Coming up on the show, TikTok strikes back, suing the US's state that's trying to ban the app. More on that just ahead. Plus, a mega fine for Meta as the social media giant goes head-to-head with the EU over data protection rules. We'll have more after the break.
Introducing the all-new Black Wolf Sonic Scrubber. The charcoal-infused silicone bristles are soft, massaging, and exfoliate with vibrations. It is designed to reach your back, lather your legs, and anywhere else. Get 20% off now at GetSonicScrubber.com.
This mango hint water tastes just like mango.
How can water taste just like fruit?
How can our feet look just like our hands?
Ja, du kan ta en liten bet på den. Kjipt å få den i trynet, men det er gøy å gamme litt en gang iblant.
Customers get 45% off on our top flavors at drinkhint.com, including our new exclusive online flavor, coconut. Just $1 per bottle. And if you order now, we'll ship it right to your door for free.
Did he just say there's coconut hint?
Hint. Water with a touch of true fruit flavor.
These bills are crazy.
She has no idea she's sitting on a gold mine.
Well, she doesn't know that if she owns a life insurance policy of $100,000 or more, she can sell all or part of it to Coventry for cash, even a term policy.
Even a term policy?
Even a term policy!
Find out if you're sitting on a gold mine. Call Coventry Direct today at 800-476-0100 or visit CoventryDirect.com.
What if we live to 100? I don't want to outlive our money. I keep eating all these chia seeds. I could live to be 100.
We work at Empower. Even if we do live to 100, we don't have to worry.
Not worried.
Take control of your financial future to empower what's next. We've been spending a lot more time than ever at home these days. So maybe now you've just noticed cold air coming in from a couple windows, or that your patio door isn't closing fully, which means you're losing heat in the winter, losing cooling in the summer, losing money all year long. And that means now is the time for new windows and patio doors from Renewal by Andersen. Most installations are usually done in just one day. Renewal by Andersen windows and doors can help lower your heating bills and air conditioning bills with their most energy efficient glass available. Only their windows are made with Fibrex material, proven to be 2 times stronger than vinyl. And they're backed by a 20-year warranty. And right now, when you buy one window or door, get one at 40% off. Plus, there's no money down, no payments for 12 months, and no interest for 12 months. So call right now.
1-800-203-7162. 1-800-203-7162.
Your next best investment starts with CNBC Pro, the ultimate investing playbook. Scan this code or go to cnbc.com/pro for an exclusive offer now.
Welcome back to Street Signs then. So we've been taking a look at this market picture. Yesterday, just marginally managing to get some gains out of the market then across Europe. Today, not so much. We are down around 0.25 percentage point, and if the Stock 600 does continue this way today, it will actually break what is a 3-day winning streak for it. Then you do have the likes of LVMH going down more than 2% today, even Julius Baer, which we'll unpack as well in just a moment or two. Taking a look at some of the markets themselves, then we saw the FTSE 100 as well see some gains today. If it was to drop off today, it would follow on the Stock 600 having then its first negative session in around 3. But a general sense of negativity across the board then, as we see. Even the FTSE MIB actually had its worst day yesterday since earlier this month, around the 2nd of May, in fact. So yesterday was its second worst day. Today, still down around 0.25 percentage point there thus far. That is the picture. When one takes a look at some of the sectors, then the likes of the telecoms have actually fared quite well, and that is on the back of news out of Altus UK, who are the telecoms investment group, right? They've decided to increase their stake in BT to 25%. That's from 18% then, as they feel that they've seen that cost-cutting drive come through from BT, and it does offer them enough to kind of go back into the share just a little bit. So you see the telecoms up around 0.25% there. So BT taking up some gains. Also, that share price up around 1.5% as well. Mondi up around 1%, having outperformed the market yesterday, also managing some gains today. On the other side, you also have RS Group, which has declined over 4%. Now, Julius Baer's first quarter results did show a slight rise in net money inflows and assets under management at the start of the year. Net inflows totaling 3.5 billion Swiss francs. That's hit by a stronger franc. That's less than in the last 2 months of 2022, also falling short of analysts' forecasts. Now, assets under management did rise just 1% from the end of last year.
Well, here's an interesting story that's taking some spotlight stateside. TikTok has sued the U.S. state of Montana after it passed a law banning the social media platform, citing fears over Chinese government access to data. TikTok says the law violates its First Amendment rights, is preempted by federal law, and breaks constitutional rules on interstate commerce. Under the law, planned to come into effect next year, TikTok and app stores hosting the platform could be fined up to $10,000 a day for not complying with the ban.
Now, Meta has been handed a record €1.2 billion fine for not complying with EU privacy rules over transfers of data to the United States. Now, the European Data Protection Board said the fine was warranted because of, quote, systemic, repetitive and continuous transfers, taking Meta's total fines from Ireland's Data Protection Commission to over €2.5 billion. Meta says it will appeal the decision. Arjun joining us for this discussion. Then, Arjun, it's not the first time, as we're kind of getting a sense as well. Surely one would have thought maybe an even steeper punishment should even have been in place, because it is continuous and repetitive.
Well, look, this has been a decade-long story, Arabilia, and it started in 2013 when we had revelations by the whistleblower Edward Snowden regarding alleged U.S. surveillance practices from the NSA and some of its other agencies as well. Following that, we had a case here from an Austrian privacy campaigner called Max Schrems, who effectively said any data transferred between the EU and the US was not safe, because in the US the safeguards weren't in place to protect that data. So then the EU and the US had these legal mechanisms in place to allow data transfer between the EU and the US. The latest one of that was called Privacy Shield. That was struck down in 2020 by the European Court of Justice, who effectively said similar argument that EU user data going to the US was not subject to stringent enough data privacy laws. So after that, Facebook was using a different mechanism to transfer data between the EU and the US. And what the Irish Data Protection Commission said, who were in charge of this case, effectively these did not address the fundamental rights and risks that were present in that original court decision as well. And so that's why they've come to the decision of a €1.2 billion fine. They've also told Meta to suspend future data transfers and within 6 months to cease processing and storage of EU data in the US. That's how we've got to this place. And really the difficulty here for Meta is there is still no legal framework in place between the EU and the US for transfer of data between the EU and the US, which is integral to Meta's business.
Well, we know Meta is appealing the decision and the fine, so we'll get you on for further coverage, I'm sure. We're going to take a quick break now. When we come back, we're going to have the latest UK flash PMI numbers. Do stay with us.
Nope.
Constant Contact delivers the marketing tools your small business needs to keep up, excel, and grow. Constant Contact, helping the small stand tall.
The Sonic Scrubber by Black Wolf. 6,000 RPMs of charcoal-infused silicone cleaning power when you shower.
It feels like a massage.
The silicone bristles are gentle on my face. And with the handle, I can reach my back, my legs. I can even use it on my toes.
It's got a 3-hour USB charge. I love a long shower.
There are 4 different vibration modes to clean and exfoliate everywhere.
The Sonic Scrubber by Black Wolf. Get 20% off now at GetSonicScrubber.com.
How can you sleep on such a firm setting?
Good. Mine is almost the same as yours.
Almost. Just another word for not as good as mine.
Save 50% on the Sleep Number Limited Edition Smart Bed, plus special financing and free home delivery when you add any base. Only at Sleep Number.
Ah, that That's where I left my Hint Plus.
Lenny, the Hint Plus was delicious.
And packed with vitamins. Hint Plus has more vitamin C than a real clementine.
New Hint Plus, true fruit flavor plus a boost of vitamins.
Did he just call vitamins vitamins?
For a limited time, new customers get over 45% off at drinkhint.com. That's 36 bottles of immunity-boosting Hint Plus for just $36. Only $1 per bottle. Hint Plus, true fruit flavor plus a boost of vitamins.
I love shopping The RealReal. Gucci,
Louis Vuitton,
Prada,
Hermes,
Dior,
Rolex,
Burberry, Saint Laurent.
Luxury brands up to 90% off retail.
thousands of new arrivals daily.
The RealReal.
Shop now and get 20% off at therealreal.com. Terms apply.
A third kid? What if she likes playing golf? It's expensive. We're outlawing golf. Wait, can I still play?
Since we work with Empower, we don't have to worry about planning for a third kid. You can still play golf. Sometimes.
Take control of your financial future to empower what's next.
When we started selling my health products online, our shipping process was painfully slow. Then we found ShipStation. Now we're shipping out orders 5 times faster, and we're saving a ton.
Go to shipstation.com/TV and get 2 months free.
CNBC. Live ambitiously.
The latest debt ceiling developments, what it means for the market and the Fed, plus breaking results from Lowe's, Reaction, and Outlook. Squawk Clock, 6 Eastern.
Welcome to Street Signs. I'm Arabile Kumete.
And I'm Juliana Tattlebaum. These are your headlines.
Eurozone business growth remains solid in May and services pick up across Germany while French composite activity cools to its slowest pace in 4 months. We'll bring you the latest reading on UK PMIs. That's out in just a bit. President Biden hails a productive meeting with House Speaker Kevin McCarthy as the White House as negotiators race to secure a debt ceiling deal before June the 1st.
We want to be able to come to an agreement. We both agree on the areas that we know there's disagreement on, but I think it was productive in the professionalism, the honesty with one another, and the desire to try to find common ground.
The Federal Reserve's Neil Kashkari toes the line between hiking or pausing in June as the executive chair of Santander tells CNBC adjustments in rates will continue to create volatility.
We are now in an era of normalization of rates. We had abnormal rates. There's a lot of capital invested in areas that will now not be as profitable, and that is going to continue to create, volatility.
And Julius Baer sinks to the bottom of the Stock 600 after reporting a modest improvement in assets under management and net inflows in the first 4 months of the year, calling it a challenging period for Swiss banking.
So we've been continuing to take a look at some PMI data then today across Europe and really taking note now of the UK's flash PMI numbers which have come out, all looking fairly downbeat when one takes a look at the composite number, which now stands at 53.9 for the month of May versus that 54.9 in April. The consensus was also for 54.6, so that's dropped off to still in positive territory, but still dropping off from the 54 point. To look at the manufacturing number, also dropping off. That's in contractionary territory then, 46.9 for manufacturing versus the 47.8 which was then recorded in the month of April. Even on your services front, you're seeing that also dip below the previous month's number of 55.9, which is what it was in April. Now 55.1 is the flash services PMI number. So downbeat across the board when it comes to the UK's manufacturing and services number, that composite data, 53.9 overall. So weakness and perhaps some worry for the BOE here.
Similar story to what we're seeing in the Eurozone with the weakness in manufacturing. Chris Williamson, who we just spoke to earlier in the program on the back of the Eurozone numbers, has raised an interesting comment around the growth we're seeing in the services sector in the UK. He says this growth spurt is driving renewed inflationary pressures, exactly what the BOE does not want to hear, as service providers struggle to meet demand and hence not only offer higher wages to attract staff, but also find themselves able to charge more for their services. So a really tricky dynamic that they are seeing. On the one hand, positive momentum in terms of growth in services, but on the other hand, that is obviously a negative for inflationary pressures. In terms of sterling, we are trading markedly lower versus the greenback, down about 0.4% versus the dollar 123.84. So that's the picture for the UK. We're going to do a bit of a deep dive on what's going on in the UK. So let me highlight for you what the IMF has now said. It expects the UK to avoid a recession with growth of 0.4% this year. However, the fund says it sees inflation remaining above the Bank of England's 2% target until the middle of 2025, with higher than expected price pressures and wage setting posing a major short to medium term risk, right in line with what we're seeing in this PMI data, Arabile.
Yeah, certainly the case. Now, the UK's finances are faring far worse than expected, with ONS data for last month showing the second highest April borrowing since records began. Energy price support payments and a near 50% jump in debt interest saw borrowing surge to more than £25 billion for the month, just over 99% of GDP. Now, Britain is among the countries least confident that inflation will fall to regular levels this year, according to Ipsos Mori, with 6 in 10 people surveyed saying they believe it will take at least 12 months for prices to stabilize. Benjamin Toms is the director for European banks at RBC Capital Markets. Benjamin, thank you so much for the time. Appreciate it. I mean, some of that data could certainly be a little bit worrisome, right? CPI to stay higher for longer. BOE can't certainly be happy with that. Is this now just becoming a more difficult situation for them and they're kind of stuck between a rock and a hard place and just going to have to keep increasing rates?
I think it's important to rewind slightly and think about where we were in November. If we compare now to then, actually the macro is in a much better place.
Probably September too.
And exactly, and for UK banks particularly, they model their macro assumptions quite conservatively, and they made those assumptions at the full year. So I think there's plenty of scope for the UK banks to kind of keep their impairments low, and asset quality remains fairly benign. As to the rates outlook, there is the possibility here that rates are going to have to go higher. And from a bank's perspective, what you'd be worried about in that situation, one is your cost of, is your asset quality. Do impairments start going up as interest rates go higher? And secondly, you'd be looking at your cost bases. Cost bases for UK banks are made of about 50% of wages. If inflation stays high, there's a risk we might have to do top-ups at the half year, and that will mean pressure on banks' cost lines, and that's where we might see a miss on consensus if inflation stays high.
But is that the best way to reduce the vulnerabilities that are perhaps still in this market, considering that we are still in a hiking cycle? Is that the best way then to ensure that the vulnerabilities don't rear up as they have done in the United States, for example?
I think banks generally expect there's at least 1 or 2 more rate rises still to come. I think everyone wants to see inflation fall back down to more normalised levels. There is a risk that you could increase the amount of non-performing loans in the sector. But I think it's probably necessary in order to get that inflation back down. But let's see what happens with energy cost price pressure.
Interesting that you point to the UK banks just being well positioned right now, and you look back at earnings which just completed over the last couple of weeks, and there were really no nasty surprises out of the UK banks. To what extent is that because they were so well prepared and had already taken the measures to prepare for an increase in impairments and setting aside money in case things deteriorated versus things actually being much better than expected?
I think there are a couple of things to weigh up here. So firstly, the banks were quite conservative coming into the year. That helps with your impairment line. Secondly, they'd negotiated with unions, so that helps keep in a fixed cost on your cost base. Let's see whether that has to adjust later in the year. And thirdly, if we think about net interest margin, we're at a stage at the moment where there are some pressures on net interest margin, deposit betas going up, mortgage spread compression, but you've also got this underlying tailwind from the structural hedge which is coming through. And investors at the moment are weighing up those 3 things. The other side of this as well is in terms of regulation. You've had a situation in the US with regional banks struggling, volatility there, and directionally probably regulation in the US is going to have to increase. When you look in the UK, we were relatively untouched by that whole situation. Silicon Valley Bank UK was dealt with very swiftly over a weekend, and regulation here is also starting out from a much higher base. So when you weigh those 2 things up, the UK is much better placed.
Where do you stand on the outlook for NIMs in the UK when you do net out those effects you just talked about, the structural tailwinds you have on the one side versus the fact that banks are going to be under increasing pressure to raise deposit rates to keep customers?
I think you actually can split by different banks. So some banks will have slightly larger structural hedges, which reprice slightly quicker. For them, the direction of travel is probably that net interest margins slowly increase through this year. For other banks where their structural hedge isn't quite so a large tailwind, probably directionally you've got a little bit of a lumpy trajectory this year, and let's see what happens into next year around deposit betas.
What about the mortgage market? 3/4 of the mortgage market in the UK, mortgage customers hold fixed rate mortgages. We know from the Bank of England that a great majority of those haven't yet been affected by these higher interest rates. To what extent is that a concern for the banks moving forward, if not at the end of this year, certainly in 2024?
Yeah, on our numbers, we think about 60% of fixed rate mortgages haven't yet rolled over. So there's a big number of customers yet to see those high rates. Rates are better than they were post the budget towards the end of last year, so that will be helpful. And whilst unemployment stays low in the UK, that will also be an important factor to help those customers kind of afford those new mortgages. It will be a defining feature over the next kind of 12 months. Those customers roll over. But remember, the amount of deposits in the system is much higher. Customers are generally a bit more liquid than they were. And actually, the mortgage market has been vastly more resilient than we had expected coming into this year. And that's because the first-time buyer market has held up reasonably well. Those buyers, rather than shying away from the mortgage market, actually what they've done is they've continued to buy properties because rents have gone up so much. We were talking about rental inflation running at kind of into the low teens. So those customers are still buying mortgages.
Stuck between a rock and a hard place, I'd say, when you think about being a potential renter or buyer in the UK. Benjamin, thank you so much for being with us. Great to hear your views. Benjamin Toms, Director, European Banks at RBC Capital Markets. Now, sticking with the banking sector, more than 230 claims against Swiss banking regulator FINMA have now been received by a Swiss court. The actions involve 2,500 claimants after the regulator's decision to fully write down Credit Suisse AT1 bonds and prioritize equity holders. Europe's banking sector has outperformed the U.S. this year amid concerns over the American regional banking sector. European Banking Authority chairperson Jose Manuel Campa told CNBC the higher rate environment has boosted valuations but could be a double-edged sword.
Interest margins have been increasing over the last year, and that has been across the board, and that's why I think we have seen improvements in the return on equity that we just discussed before, and that's good for banks' profitability. But as interest rates filter into the economy, that interest rate increase likely will have an impact on asset valuations and on economic activity. And if economic activity deteriorates, that will be bad for credit quality, something that we have not seen yet. So at the end, that might have an impact on banks' profitability as well. So our outlook going forward is that banks need to be prudent, and particularly in assessing the credit quality of their credit portfolios as we see the interest rates filtering through the economy, and in particular, again, in those sectors that are highly leveraged and more sensitive to the interest rate increase.
Now, Santander Executive Chair Anna Bodden told CNBC the banking sector is prepared for any challenges caused by higher rates.
We are now in an era of normalization of rates. We had abnormal rates. There's a lot of capital invested in areas that will now not be as profitable, and that is going to continue to create, volatility. But the important point is that this is not 2008. What has happened it's not a systemic crisis. It's not a banking crisis. It's been specific banks that were badly managed, where the issues are well known, mismatches, liquidity issues, and so on. And so the key point is, what is it we need from banks once we have trebled, multiplied by 3 the capital in the banking system? We have a resilient banking system. The regulated banks are in a very strong position. And so what we need is a fundamental rethink of what do we want banks to be in the new economy, in a world that needs growth. And finding that balance is really important between being prudent, and we're not saying that we should go back on that, but also being able to finance growth. And this is really the key point that we're making here at the IIF.
And it is a great opportunity to talk to you about the smaller banks, the regional banks, given what Spain itself also witnessed in recent years. It was the smaller lenders that had a problem with debts last time in the European financial crisis. Why is it so relevant to keep some of these names and to ensure that names like Santander don't just get bigger and bigger as deposits flow to your bank at the expense of the smaller lenders?
Well, I mean, Europe and the U.S. are very different banking markets. In 2008, the biggest bank in the U.S. and the biggest bank in Europe were worth the same. Today, the biggest bank in the U.S. is worth what the top 9 or 10 banks in Europe, because, among other things, we've had less growth. You mentioned Spain. In Spain, the banks actually saved the savings banks, which were intervened. They were not run in the same way. So it's really important that banks have the scale to compete in today's economy. There's very high levels of capital, of supervision, also not just regulation, but supervision. And this is important to be able to compete in a global economy. In Europe, we need to get banking union, we need capital markets union to be able to get that scale that we need to be able to support our customers and our economies.
UK Chancellor Jeremy Hunt will meet food manufacturers today in a bid to get them to ease pressure on household budgets as food inflation hits its highest level in more than 45 years. But explicit targeted action on prices won't feature on the agenda, unlike in France, where retailers agreed to cap food prices.
Well, speaking of food prices, soaring pasta prices in Italy have prompted crisis meetings at the heart of government after the cost of the Italian staple surged by more than twice CPI in both March and April. Now, this story, Erbile, is certainly attention-grabbing, but it's not something to joke about. I mean, pasta is a staple of the Italian diet, and we're talking about price increases of nearly 18%, 17.5% in March, 16.5% in April. That's a pretty bruising price hike if you were eating pasta multiple times a week. And in terms of why, allegedly it's because producers are now selling the pasta that they made using inputs when prices were very high. So when raw material costs, when wheat prices were super high, there's obviously a lag to when that pasta comes to market. And it takes a long time for the decline in those raw material costs to actually feed through to lower prices.
Yeah, and I mean, the International Pasta Organization even saying that, Italians consume, the average Italian consumes 23 kilograms of pasta a year. I mean, that kind of tells you how necessary, of course, it is, and how the price of things like wheat and just pasta overall then becomes so important and critical to that economy. Pasta dishes in restaurants rising 6.1% across the board year on year. I mean, that's a clear sign of how high prices are. Just for a side note as well then, Juliana, I actually have a pasta namesake dish.
Oh, do tell.
Believe it or not, it's always been there. It was just named specifically for me. It's just the arrabbiata.
Oh, well, it'll set you back some if you try to get it now.
Yeah, definitely will.
I'm jealous you've got a pasta namesake dish.
We'll try and find you one, right? A Giuliatelli or something. We'll
I'm
make
into
a plan. We'll make a plan.
Well, we'll see if those lower wheat prices do ultimately feed through to lower pasta prices. It does take time, and as we've talked about in many different economies, price hikes tend to be really sticky. Yeah. They tend to rise pretty easily and then stay there. They don't come down as easily as they go up. We have an article about this on our website. Do visit it, cnbc.com. As you can see there, pasta prices have surged, prompting crisis meetings in Italy and calls for a strike. Coming up on the show, Jamie Dimon says he's not going anywhere, not yet at least. We'll discuss the latest on America's biggest bank next.
This mango hint water tastes just like mango.
How can water taste just like fruit?
How can our feet look just like our hands? How can our feet look just like our hands?
For a limited time, new customers get 45% off on our top flavors at drinkhint.com, including our new exclusive online flavor, coconut, just $1 per bottle. And if you order now, we'll ship it right to your door for free.
Did he just say there's coconut hint?
Hint. Water with a touch of true fruit flavor.
Your back is filthy, and you can't even reach it.
Introducing the all-new Black Wolf Sonic Scrubber. Just press to experience sonic vibrations for an unparalleled deep clean. With its attachable telescopic handle, it is designed to reach your back, lather your legs, and anywhere else. The charcoal-infused silicone bristles are soft, massaging, and exfoliate with vibrations. Should I mention that it feels really good? This feels really good. Get 20% off now at GetSonicScrubber.com.
Meet Carrie and Sherry. They started Off-Road Vixens, an apparel company for women who ride.
We wanted to create something that wasn't flowers and butterflies and pink.
Their business got traction, and they needed financing to expand.
We talked to our local bank. They told us that we didn't have a chance.
Enter smartbizloans.com. We found them a bank which got them an SBA loan with a great rate, and we made the process easy. We've helped over 230,000 small businesses get over $9 billion in funding.
Without SmartBiz, we probably wouldn't have gotten a loan.
Apply today at smartbizloans.com.
If you don't have a good dental plan, or if your employer doesn't offer dental benefits, this is the deal you're looking for. Get the Carefree Dental Card, and for just $15.95 a month, you can see the dentist anytime and pay a whole lot less.
On my first visit, I saved $650.
We used to pay full price at the dentist. Boy, was that dumb. We just saved $705.
Call the number on your screen and request your Carefree Dental Card free. We'll send your card and complete details at no cost and no obligation today. Unlike other dental plans, there's no activation fee with Carefree Dental, so call now to get your card at no cost today. Call during this TV offer, and we'll also include free vision benefits and free prescription drug benefits too. See for yourself why Carefree is the best deal in dental. Call now.
Call the number on your screen and use the code STARTFREE to get your Carefree Dental Card and free plan information. Don't wait. Call now.
My dream is to talk to people, real people, about stocks. We created a club to do it.
Join Jim Cramer and the CNBC Investing Club. Scan this code or go to cnbc.com/investing club for an exclusive offer now.
Well, we're now a couple of hours into the European trading session, or just about, and it's shaping up to be a fairly downbeat start to trade. We've got the CAC 40 in France down about 0.9%. FTSE MIB over in Italy down 0.33%. Also a bit of red on the board for the Xetra DAX, the Swiss market, and the Spanish market. A couple of big movers to the downside. You've got Julius Baer trading at the bottom of the Stoxx 600 after a slower than expected start to the year. Vivendi also at the bottom of the Stoxx 600 after a filing showed a big share sell down. So two big movers to the downside. One patch of green on the board, though. FTSE 100 here in the UK is up 8 basis points. Something to do, perhaps, with the pound. Let's take a look at how sterling is trading this morning. That inverse relationship front and center. Sterling is down 1/3% versus the dollar. We have bounced off the lows, though. We were trading below 124. There we are again, 123.99. This sell-off was underway before the UK flash PMIs and then continued thereafter. The services sector missing on the PMI front. But we are still in expansion territory. Outside of the UK, the euro is holding fairly steady versus the dollar right now, about 108. So again, we bounced off the low as well. In terms of bond markets, let's take a look at where yields stand in Europe. Yesterday, outside of Greece, which saw bond yields fall on the back of the elections, yields rose across Europe. Now this morning, we've got yields moving higher once again. The German 10-year Bund is trading around 2.48% or so. 10-year Gilts also trading higher, a yield of about 4.1%. Italian BTP is trading around 4.34%. In Treasury markets, this morning we've got some action in T-bills once again. The one-month T-bill yield hitting a fresh record high. It's up 25 basis points on the day to 5.888% as investors continue to watch all the twists and turns around the debt ceiling, and that one-month T-bill has seen the brunt of the volatility around those debt ceiling talks. Now, in terms of, and just this is a picture of all the Treasury bills, the short end of the Treasury curve. And there you have on your screen U.S. futures. We've got the NASDAQ looking to open just marginally higher. The S&P and the Dow, though, looking at a pullback this morning when trade begins as investors continue to keep an eye on those debt ceiling talks and also look out for a U.S. flash PMI, new home sales for April, as well as the Richmond Fed's manufacturing index for the month of May.
Now, Minneapolis Fed President Neel Kashkari says he's open to holding rates next month, but warned it might not mean the end of the Fed's hiking cycle. Now, Kashkari is seen as one of the most hawkish members of the FOMC, and he is one of the 11 current members who will vote at next month's policy meeting. There have been signs of mixed views on the committee in recent weeks. Fed Governor Michelle Bowman said further tightening is likely appropriate if inflation stays high, while Chairman Jerome Powell said tighter credit conditions could reduce the need to hike rates. On the more dovish end of the spectrum, that Vice Chair Philip Jefferson said it's too soon to judge the impact of tighter policy, while Chicago Fed President Stan Goolsbee told CNBC his vote to support last month's hike was, quote, a close call. Now, JP Morgan CEO Jamie Dimon says that markets should be ready for higher rates.
You're already seeing credit tighten up because, the easiest way for a bank to retain capital is not to make the next loan. So I think you are going to see that. And I think everyone should be prepared for rates going higher from here. That if 5% is not enough in Fed funds, and I've been advising this to clients and banks, you should be prepared for 6, 7.
JP Morgan has announced plans to increase its investment expenses to $15.7 billion in 2023 and focus on hiring, marketing, and technology. The U.S. bank also confirmed net interest income is expected to rise by $3 billion following its acquisition of the failed First Republic Bank. CNBC's Leslie Picker has more from JP Morgan's Investor Day.
Dimon going straight to Q&A at the firm's Investor Day yesterday, urging the audience to be prepared for higher rates and tighter credit.
You're already seeing credit tighten up because, the easiest way for a bank to retain capital is not to make the next loan. So I think you are going to see that. And I think everyone should be prepared for rates going higher from here. That if 5% is not enough in Fed funds, and I've been advising this to clients and banks, you should be prepared for 6, 7.
Dimon says there will be a credit cycle, predicting it to, quote, be normal and, quote, will probably be real estate. He also spoke a bit about the impact of more stringent capital rules and monetary policy.
We haven't been through quantitative tightening. So we really don't know what's going to happen to deposits at all. And that's why I've been quite concerned about that. I'm probably more concerned about quantitative tightening than almost anybody in this room. We've never had QE before. We've never had QT before. It just started.
Succession was a key topic at the end of the Q&A. When asked how much longer he plans to be CEO, he chuckled 3.5 more years, a nod to the stock option bonus he got in 2021. He added that when he lacks intensity he brings to the CEO position, he should leave. For CNBC Business News, I'm Leslie Picker.
Well, Erbile, it's always interesting to hear what Jamie Dimon has to say. And you and I talked about the big topics in focus yesterday. On succession, he, smooth as ever, effectively deflecting the question, as we heard there, saying that I can't do this forever. I know that, but my intensity is the same. I think when I don't have that kind of intensity, I should leave. 67 years old, pretty extraordinary that he still got that intensity.
Yeah, I mean, he did throw about 3.5 years, which is bandied about because the last time he had spoken about 5-year period, which would get him to around 70 years old as well. So it would be interesting, around 20 years that he would then have been doing this exactly. I think overall very interesting to kind of note that level of intensity, yes, but where he also sees things kind of going. He has, of course, been very important in the recent crisis too that we saw in that banking crisis, and also then expecting interest rates to go a whole lot higher from here, or maybe just a little higher as well from here. Very interesting notes. And I think obviously the market kind of listens to that.
They certainly do, and I think it will be interesting to see whether the market really listens to his warning about commercial real estate and the potential that has to trigger another leg of this banking crisis. It's certainly a hot spot for the small lenders, the regional lenders in the U.S., which are overexposed to commercial real estate. Let's take a look at European markets. Here's the picture. You've got red for the most part in Europe. CAC 40 down about 1%. The FTSE 100 is trading higher on the back in part of the weak pound, which is trading lower this morning as UK PMIs miss on the services side, and also some signs that we could be seeing further inflationary pressures building in that sector as the services sector struggles to meet demand. And a picture of U.S. futures will leave you with a look. There you have it. Muted start indicated for trade stateside. All eyes on those debt ceiling talks. That is it for Street Signs. I'm Juliana Tattlebaum.
And I'm Arabile Comete. Worldwide Exchange is up next.
What if you could whiten your teeth by simply brushing your teeth?
Now you can with Smile Actives, the teeth whitening breakthrough that safely gets your teeth white and keeps them white every day just by brushing your teeth.
I never thought that whitening my teeth could be so easy. I just put the gel on the brush, the toothpaste on it, brush, and I can see my white teeth.
Simply add Smile Actives to any toothpaste, and our patented PolyClean technology activates into a powerful microfoam that penetrates into the enamel surface to safely lift and remove stains.
You need a simple way to whiten your teeth. Without strips, without trays, without going to the dentist. And it was about time that a product was developed that you would be able to do that with just brushing.
And now, Smile Actives is even better with new Pro Whitening Gel with 33% greater whitening power, clinically shown to whiten teeth faster, up to 8 shades. 100% of users saw whiter teeth. On food stains, coffee and wine stains, even on veneers, crowns, and dentures.
I eat the blueberries, I drink the coffee, and I know that Smile Actives will keep my teeth white every day.
If you could use something so easy like Smile Actives to take yellow teeth to white teeth, why wouldn't you?
Why spend hundreds of dollars for whitening treatments at the dentist when now you can whiten your teeth with new Smile Actives Pro Whitening Gel every time you brush your teeth? Call or go to smileactives.com and for a limited time get new Pro Whitening Gel for just $24.95. Order in the next 5 minutes and buy one get one absolutely free for just $24.95. That's 2 for 1 and save 58%. We'll even include free shipping. Get your teeth whiter guaranteed or return it within 60 days for your money back.
I smile every day now.
The difference is literally night and day.
So now I'm always smiling, always choosing, because now my teeth are much whiter.
This offer is not available in stores, so call or click now before the special buy one get one free offer goes away.
If you have diabetes, you know managing your blood sugar is critical to preventing heart disease, kidney failure, and even blindness. But finger sticks are painful and inconvenient. Now you can leave them behind forever. If you administer insulin daily or use an insulin pump, you may qualify for a continuous glucose monitor, the latest in diabetes technology. A continuous glucose monitor provides blood sugar readings without uncomfortable finger sticks and alerts you in real time to potentially harmful spikes or dangerous low readings in your blood sugar levels. Join the more than 1 million Americans who have trusted U.S. Med to help manage their health. They work with over 500 private insurers and Medicare to get your device at little or no cost to you, including free priority shipping. Call 888-710-0554. That's 888-710-0554.
Let's say they do create some digital superintelligence. Well, who's in control?
Artificial intelligence is going to create a productivity boom that we've only seen a few times in the last 75 years.
I feel, yes, it's moving fast, but moving fast in the right direction, where humans are more in control.
We're doing everything we can to make sure we're ready for autonomous when it comes. You might be surprised that it comes over the next couple of years a little faster than you think.
It is 5 a.m. here at CNBC Global Headquarters, and here is your 5 at 5. We begin with a productive progress. New optimism out of Washington following the latest round of debt-ceiling talks between President Biden and House Speaker McCarthy. However, still no deal. On Wall Street, recession warning signs growing louder and doing something for the first time in 4 decades. And speaking of red flags, while the bullish trend in big tech, it may be coming to an end. Plus, the streaming wars heating up this morning, courtesy of David Zaslav. Much more on that coming up later. And then later on the show, activists circling around a new name, urging a sale and sending one stock surging ahead of the open. It is Tuesday, May 23rd, 2023, and you're watching Worldwide Exchange right here on CNBC. Good morning. Welcome to Worldwide Exchange. I'm Frank Holland. Thank you for starting your day with us. Let's kick off the hour with a check on U.S. stock futures. After a bit of a mixed session for stocks yesterday, that saw the NASDAQ close at its highest level since August of 2020. This morning, bit of a muted picture, however. The NASDAQ up fractionally, the S&P and the Dow Jones both down fractionally at this hour. We're also checking the bond market. We have seen some movement in the bond market as we get closer and closer to that so-called X date. We've seen the yield on the 10-year benchmark creep up over the month, but certainly over the last 2 days, now at 3.72. We're also seeing the same story when it comes to the 2-year note at 4.36. We're going to talk much more about the inverted yield curve a little bit later in the show. We're also looking at energy, specifically oil, as we do every single morning. Let's begin with WTI, the U.S. benchmark, basically at 71.80, down just about 1/3%. Brent crude, the international benchmark, basically at 75.75, also down 1/3%. Natural gas, seeing even more movement there. It was a big day for natural gas yesterday. This morning, down 0.5%. We're also watching crypto, as we always do. This market trades around the clock. You got to remember that. Looking at Bitcoin this morning, still below that 30,000 mark. That seems to be key for the digital currency. Basically at 27,300 this morning, up almost 2%. Ether still below 2,000. Again, a key level for that digital currency, up over 2%. All right, now for a check on the early trade over in Europe. Our Arabile Gumede, he's standing by in our London newsroom with much more on the action overseas. Arabile.
Yeah, good morning. Frank, I haven't spoken to you in a while. Unfortunately, I join you when the market has gone pretty red today, unfortunately. Across the board, most of the counters have really headed into some negative territory, with even the likes of the SMI in Switzerland and the CAC 40 more than 1% down as well then today. Only the FTSE 100 managing some gains then as well. Of course, the US's debt ceiling talk still in the markets, a certain purview as well. You've also got PMI numbers coming out across the board then today. It does seem like a two-pace economy still exists within between most of Europe at this point in time, but the UK all across that board really down. The manufacturing number, services sector, as well as the composite PMI number all headed lower. Inflationary impacts there bound to be quite heavy as well. When one takes a look at the gainers and losers as well, the stocks that we have seen kind of go down. The likes of Mondi have managed to pick up around 1% though, having outperformed the market yesterday, continuing that swing. Even BAT managing some gains as well today. But really, one really to focus on has been Julius Baer, whose first quarter results showed a slight rise in net money inflows and assets under management at the start of the year. Net inflows even totaling 3.5 billion Swiss francs. So certainly a lot to worry about perhaps for that company. For now, more than 7% lost for that company at present. Frank?
Arabile, by the way, great to see you too, man. We got to keep this bromance going over finance, Wall Street, the international markets. Always great to see you, Arabile Gumede, live in our London newsroom, killing it on that wall, man. All right, now to the latest developments around the debt ceiling talks. President Biden and Speaker McCarthy unable to strike a deal during their latest meeting yesterday afternoon. The two men meeting for about 90 minutes. The Speaker offering a hopeful tone on the talks with just over a week to go until the X date when the U.S. could run out of cash. NBC's Bree Jackson joins us now from Washington with much more. Bree, good morning.
Good morning, Frank. Well, Monday's meeting at the White House ended without a concrete deal, but both sides say that they are working towards an agreement. Meanwhile, the Treasury Secretary is again warning of the severe consequences of a default.
That our debt is too large.
Different meeting, same outcome. No deal on raising the debt limit this morning following a high-stakes talk between President Biden and House Speaker Kevin McCarthy. Both called the one-on-one discussion productive.
We only talked about where our differences were. We talked about items that, ideas to find that. So we're asking the staff to get back and run through those ideas to see if we could come to an agreement.
President Biden expressed optimism even before the meeting started.
We still have some disagreements, but I think we may be able to get where we have to go.
Negotiation teams held late-night talks on Capitol Hill where divisions over spending cuts remain.
It was very important that we spend less money next year than we're spending this year. That was imperative to us.
President Biden has offered House Republicans is to freeze spending at current fiscal year levels. And the extreme MAGA Republicans have rejected.
In a letter to congressional leadership, Treasury Secretary Janet Yellen doubled down on the June 1st deadline, warning a default could cause severe hardship to American families. Across the country, there's a growing sense of frustration.
They'll make it happen. Otherwise, they won't be in office come the next time it comes for elections.
With Social Security checks and other benefits hanging in the balance, there's increasing pressure on federal leaders to act. And as part of negotiations, House Speaker Kevin McCarthy says that new tax revenues and military spending cuts are off the table. Frank?
So, Bree, a lot of focus on what the House Speaker had to say. Did the president have anything to say after that meeting?
So, Frank, President Biden did not speak with reporters after the meeting. He did send out a statement saying that both he and Kevin McCarthy, the House Speaker, agreed that the only way to move forward is with a good faith bipartisan agreement. So negotiators will be back at the table again over the next couple of days.
All right, our Bree Jackson live in D.C. Bree, great to see you as always. All right, turning back to Wall Street, a recession indicator flashing signals of a potential downturn now for the longest stretch in more than 40 years. So take a look at this. The spread between the 2-year and the 10-year Treasury notes, they've been inverted since July of last year. That's more than 220 consecutive trading days, marking the longest streak for an inverted yield curve since 1980. For more on this, let's bring in Ivory Johnson, founder of Delancey Wealth Management and a member of the CNBC Financial Advisory Council. Ivory, always great to see you.
Good to see you, Frank.
All right, so we were just kind of showing the inverted yield curve. We're going to put it up one more time. We've been talking about this for months. As we just mentioned, 220 trading days, so all the way since July of last year. So in your mind, is it still a recession indicator, or has it been going on so long that maybe it's not giving us the same signals it once did?
No, I still think it's recessionary. It's just showing you that the growth prospects aren't there, and that's reflected in the rates for the 10-year being less than the 2-year. It's sort of a strange conundrum because on one hand, we have all this bad economic data, not just the yield curve, but you've had earnings growth decidedly negative. GDP growth was 12% 2 years ago. Now it's less than 1%. And yet the market still keeps marching higher. And I think now it's time to really focus in on your process and stick to your guiding principles. I suspect that if you got 17 at the blackjack table and you drew a 4, that didn't mean you made a good decision. You just got lucky. And I think if you look at GDP growth and inflation decelerating, you want to own things that will protect you in that environment. And if you've owned gold and things of that nature, you've actually protected yourself on the downside when the market was going lower last year without giving away much in terms of capital appreciation on the upside.
All right, let's talk a little bit more about that downside, especially when it comes to downside protection for portfolios. You're looking at commodities for downside protection, at least in the near term. So I want to ask you, why commodities instead of tech? Tech's booming.
Right. So actually, commodities have actually been negative because there's no growth. And you saw that last week. I mean, last month, oil and corn and soybeans are down sometimes almost by 10%. So commodities won't protect you in this environment. Tech has done well. I'll remind people that, if you look at the NASDAQ earnings growth is down almost 10%. It's still 16% below where you could have bought it at the cycle highs. And it's also the growth has been very concentrated.
Wait, but Ivory, I want to jump in for a second. But you're really bullish on gold, which is a commodity.
Yeah, gold, but gold is more a store of value. It's a safe haven. So that's why I've been bullish on gold. If you're really aggressive, you can buy gold miners. And then for conservative investors, money markets are paying you 4.5%. With little volatility. So I'd make the distinction between gold and, the oil and natural gas and soybean and corn.
But gold is a way to protect the portfolio, you believe, in the near term at least?
I certainly believe so. It certainly protected us over the last year or so. Again, it's seen as a safe haven, a store of value, if you will. And so anytime you see growth and inflation decelerate, historically, you get a better chance of outperforming the market.
All right. But if we get a deal, do you get out of gold? And if you do, what do you get into when you get out of gold?
Yeah, I think you get out of gold when you see the GDP and inflation accelerate, so you're going from bad to good, which would be great. I don't think the debt ceiling is going to impact gold because our economy will still be in the same place. The debt, if the debt ceiling doesn't, if we default on our debt, that's a whole nother.
That is a whole nother thing. That is a whole nother thing.
But fixing it isn't going to change things.
Yeah, we got to leave the conversation there. Ivory Johnson, always great to see you. Thank you very much.
All right, thank you.
All right, a lot more to come here on Worldwide Exchange, including the one word that investors have to know today. But first, it's not TV, and starting today, it's not even HBO Max. A look at the new streaming service set to hit the app stores, plus what activists want to see from Yelp that's sending shares of that stock surging in the pre-market. And then later, our Jim Cramer on the debt ceiling talks and why Wall Street may be over it even before a deal is done. We have a very busy hour still ahead when Worldwide Exchange returns. Stay with us.
Every single day, businesses everywhere are asking the exact same question.
Is it possible?
Well, with Comcast Business, it is.
Is it possible to help keep our online platform safe from cyber threats?
So we can better protect our customer data?
Oh yeah, absolutely. What else you got?
Can we use predictive monitoring to address operations issues?
Before they even exist?
We can help with that.
Can we provide healthcare virtually anywhere?
We can help with that too. Even out here. You, sir, something on your mind?
Is it possible to survey foot traffic across all of our locations?
With Wi-Fi analytics? Easy. Order for Nina.
Can I teleport our guests to their rooms?
Technically, no.
Or power thousands of mobile check-ins while thousands of other guests check out?
Now that we can do. With the advanced connectivity and intelligence of global secure networking from Comcast Business. It's not just possible, it's happening.
My dream is to talk to people, real people, about stocks. We created a club to do it.
Join Jim Cramer and the CNBC Investing Club. Scan this code or go to cnbc.com/investing club for an exclusive offer now.
June 15th, join CNBC's Financial Advisor Summit. Hear from top advisors and market experts on creative risk solutions, potential buying opportunities, tools to generate consistent returns. Register now at cnbcevents.com/FA.
Create an amazing
Hello.
with Fiverr. You'll need your web developer, UX writer, and Amy, a Fiverr freelance graphic designer with dozens of 5-star reviews who will join your team from her favorite coffee shop. Don't forget to tip. Expand your team with a Fiverr freelancer.
It's so nice you guys could stop by.
Har du gjort något här då?
Amazing. We really need new floors, but kids and the dog. These are waterproof and scratch resistant from LL Flooring. But Gary's so tight with the budget. It's actually a lot less than we thought.
This is nice.
It's time to love your floors. Lumber Liquidators is now LL Flooring. Our experts make it simple to find the right floor at the best price, guaranteed. LL Flooring.
Develop a gorgeous app with Fiverr. You'll need your product manager, QA engineer, and Omar, a Fiverr freelance product designer with an
Gör man här eller sitter man bara och
who
säger?
will join your team from home. Smart and cozy. Expand your team with a Fiverr freelancer.
All right, welcome back to Worldwide Exchange. The latest development in the streaming wars. Warner Brothers Discovery launches its combined streaming service of HBO Max and Discovery Plus, simply titled Max. Like its predecessor, Max offers several subscription tiers: Max Ad Lite, Max Ad Free, and Max Ultimate Ad Free, ranging in price, download capabilities, and video quality. And it's not just Warner Brothers. Paramount announcing it will combine Paramount Plus with Showtime next month. The move comes with increased prices for subscribers and rebranding original content as Paramount Plus with Showtime. Joining me now to discuss, Matthew Harrigan, Senior Equity Analyst at The Benchmark Company. Matthew, great to have you here.
Thank you.
All right, so we're seeing some rebranding, we're seeing some content combinations, I guess you might want to call it. What does this all tell us about the state of the streaming service, and are we still seeing the streaming wars?
Well, I think streaming is unquestionably the primary conduit for delivering, video content, versus linear. I think that Max is in an excellent, position given the portfolio of content, the originals, the movies, kids, increasingly, sports and news over a period of time, although that's fairly nascent. So yes, there is a streaming war, but I think that they're coming from a very good position given the brand name of HBO and the other content that they have.
All right, let's talk a little bit more about Warner Brothers Discovery. You actually are very bullish on the stock. You have the second highest price target on the street at $26. Right now it's trading at about $12 a share. So give us a sense, the combination, the slate of movies and shows it has coming up, the potential to have sports, specifically the NBA. How does that shape your thoughts about this company and the streaming service?
Well, I think this is a great, risk-reward balance. We picked it up last year after it had already, basically imploded. I think you've got the protection of a double-digit, free cash flow yield. Lots of progress on the cost control being orchestrated, and really one of the premier bouquets of content in Hollywood, both in terms of the libraries and in terms of the active production pipeline. Clearly, hits. The Last of Us, House of the Dragon, etc. So I think they're in a good position, and I think that HBO was really and Max, the other businesses, the legacy Turner businesses were mismanaged for quite a number of years. So it's really a matter of restoring the luster as opposed to doing something from a standing start. So I think they're in an excellent position, and they're clearly going to be one of the prime players, no pun intended, relative to Amazon over a period of time.
Well, you mentioned Turner. Obviously, there's Turner Sports, which has the NBA. They're a really great studio show inside the NBA that a lot of people have really identified with the league. It's just really a flagship show. So the potential for this service to have the NBA, is that a possible game changer? Because you also mentioned some of the shows, House of Dragon, there's the Flash movie coming up. There's some other hits that are in the pipeline.
Well, I think the NBA, along with college basketball, NHL, et cetera, is really important to Turner Sports and the overall programming posture over there. Zaslav, the CEO, has gone back and forth on the absolute intent to have the HBO have the NBA, but I think it's incredibly important. You've seen how good the games this year, the conference finals have been.
Ja, det går ju på med
Close relationship between
slow motion.
Turner and needless to say, and NBA TV. I mean, they're housed in the same studio. Clearly, the personality. I mean, somebody could post, let's say, Charlie Barkley and Ernie and all that. But those personalities are unquestionably important to the identity of the NBA. So I think it's a very symbiotic, partnership. Clearly you've got some big wallets out there. I think what really saves you is kind of the dissolution of some of the RSNs and the possibility of having just more games available. So it's possible that they have the NBA and some other streaming services would as well. So I think to some extent everyone could live, happily ever after under that circumstance.
Right. Matthew Harrigan, price target of $26 for Warner Brothers Discovery. Great to have you here.
Thank you.
All right, now turn into a news alert we need to tell you about. EU antitrust regulators have dropped their investigation into the Alliance for Open Media's video licensing policy. So just kind of spell this out. Members of that alliance include Google, Amazon, Apple, and Meta. So the European Commission have been looking at a possible anti-competitive behavior related to the license terms of the AOM's new streaming software. So here's a look at how those different companies are trading in the pre-market after this decision. Looking at Alphabet, Meta, and Apple all down fractionally, Amazon up fractionally. Not sure if this decision is definitely impacting those companies, but again, EU antitrust regulators, they've dropped their investigation into the Alliance for Open Media's video licensing policy. The companies on your screen, these big tech companies, are in that alliance: Alphabet, Amazon, Meta, and Apple. All right, coming up here on Worldwide Exchange. Forget buying low. Your big money movers and Kathy Wood's latest big bet, plus why the bullish trend in big tech, it may be coming to an end. Much more Worldwide Exchange coming back right after this.
What if we live to 100? I don't want to outlive our money. I keep eating all these chia seeds. I could live to be 100.
We work at Empower. Even if we do live to 100, we don't have to worry.
Not worried.
Take control of your financial future to empower what's next.
Let New Age products transform your garage into an area of your home
you
can be proud of. Modular steel cabinets let you pick and choose the storage solutions garage organized. With overhead racks and shelving, slat wall, workstations, and floors that let you create a showroom garage to call your own. Designed for DIY installation. All you need is one weekend to take your garage to unbelievable. Visit us at newageproducts.com.
We've all tried fitness fads that never seem to work out. Instead, blend workouts into your life.
Index forut. Kjøp eller utbytte på. Hvis du skal ha for noe.
With hundreds of free low-impact workouts to keep you motivated and
Jeg hadde bare kastet det ut, og så hadde jeg forut, og så hadde jeg ventet til etter sommeren. Det ikke noe volum nå helt tatt, så det kan gå over her. Men maken dritt.
How can you be sure you're getting the right deal?
Det ikke noe lurt med det. Hvis du har bra pengene dine. Det 14 år opp til.
For the right used car, just say, show me the Carfax value. You'll get the most
accurate price. Det lurt, det ikke noe lurt med det.
Accident history. Shop at the all-new Carfax.com.
Det kun trading og finans.
And make way for pre-chopped and pre-portioned ingredients.
Bare det.
Hit the road hard to follow recipes.
Og så går stappen nå, går det bedre nå, eller?
Peace out, pile of dishes, and welcome easy cleanup.
Ja, åssen da?
Well, hello there,
Hvordan
Home
da?
Chef. Home Chef oven-ready meals. Pre-chopped and pre-portioned recipes without the prep or mess. Get 18 free meals when you sign up at homechef.com. Home Chef. Delicious meat simple.
My hair started thinning in my early 20s. I'm genetically predisposed, so we created Nutrafol. Nutrafol is the #1 dermatologist-recommended hair growth supplement. It's never too late to improve your hair health. Get started at Nutrafol.com/man.
Welcome back to Worldwide Exchange, CNBC's inaugural CEO Council Summit convening on the West Coast this week. Leaders, not only in business and finance, but also in culture, sports, and academia, they're coming together to tackle the most pressing issues that CEOs face today. Top executives exchanging ideas with a new generation of leaders as debates rage over the nation's finances, an AI revolution, and a dangerous escalation in U.S.-China tensions. Squawk on the Street and Mad Money, they're live with exclusive interviews. For more, visit cnbc.com/CEO. From day one of the summit yesterday, Nike CEO John Donahoe sat down with CNBC's Sarah Eisen. Nike's position
Ja, men kutte deg ut når du var eier.
global company, a pillar of that conversation.
We believe global trade is a good thing. We believe consumers benefit from that around the world. We believe that helps employees around the world. We believe that, frankly, can almost help promote peace and understanding. The business has to step up when the political institutions are in the state they're in today. And so we're committed to being a global company, whether that be in China, whether that be in other markets. And yes, there's risk. I think decoupling would be disastrous economically between the U.S. and China, or China and the European Union. If you really look at the trade flows, both ways, they play a mutually valuable role. And so, again, we believe in global trade, and we'll continue to try to do everything we can to support that.
And we'll have much more from our CEO Council Summit later on in the day. But time now for your big money.
Og så har han prioritert seg før deg, ikke sant?
We begin with Kathy Wood adding approximately $4 million worth of Palantir stock across multiple funds yesterday, including the ARK Innovation ETF, the ARK FinTech ETF, and the ARK Next Generation ETF. The moves as Palantir rallies up more than 50% since just before the company reported earnings earlier this month, where they both a quarter of GAAP profitability and a massive potential revenue uptick related to AI. That stock is already
Er det ført som lån, da?
2-week high. Shares are up fractionally this morning. Shares of Zoom Video also ticking higher after the company posted ticking lower this morning, down 1/3% after the company reported better than expected results for fiscal Q1, including a revenue increase of 3%, and issued a strong Q2 outlook. Zoom CEO saying the results reflect enterprise growth and stabilizing online revenue, following a 9% increase in the company's enterprise customer base. Zoom's CFO will have more on those results coming up, and a first on CNBC interview at 8:40 a.m. Eastern on Squawk Box. And activist investors, TCS Capital Management has reportedly built up.
Men det har ingenting, det kan man ikke gjøre.
TCS is urging the company to
Det to helt skjellige
options, including a sale. The Wall Street Journal says TCS ranks among Yelp's 5 biggest.
Ja, men det to helt skjellige forhold. Du kan ikke ta fra et hit til et annet. Det ikke lov.
Yelp could be sold for at least $70 a share, or more than double the current stock price. Looking at shares of Yelp this morning, up more than 13%. All right, straight ahead, a war on two fronts. What TikTok is doing to try to ease national security concerns while it gets set for a legal fight in Montana.
Hva sa du?
Diamond's top concern when it comes to the regional banking sector. It's all coming up when Worldwide Exchange returns.
Hva sitter du med da? Hva sitter du med da?
It starts with a grill, but it becomes so much more.
Ja, men hva med den der steingreiene? Man går ikke det ganske greit da? Folk dauer jo som fluer.
But an everyday getaway right in your backyard. New Age makes it possible with beautiful all-weather cabinetry, grills, and appliances that transform your backyard into a complete outdoor kitchen. Visit newageproducts.com to book a free design consultation and create the space you've always wanted.
With Allegra,
Jeg vet jo du var med å bygge opp sjappa, så ble det stort sånn som det.
2 times faster than Claritin, and unlike Zyrtec, it won't make us drowsy, so you can live your great.
Ja, men han kan jo svare på de spørsmålene der.
To relieve itching and reduce hives for 24 hours.
Nei, du går dundre underskudd. Det er et par, tre, fire, forstår jeg faktisk.
What it means for the market and the Fed, plus breaking results from Lowe's, Reaction, and Outlook. Squawk Box, 6 Eastern. Today, CEOs convene for CNBC's Premier Council Summit. Exclusive one-on-ones with Apple's Eddie Q and Nike's John Donahoe, plus a deep dive into the world of AI. CEO Council Summit. Coverage all day today, CNBC.
Ja, det er dumt å gjøre business med sånne mennesker, for det biter deg ræva, før eller siden. Se på det som en erfaring rikere. Jeg har jobbet med flere sånne mennesker. Siste surre hun har jobbet med, jeg vet ikke, du aner ikke, fytti helvete. Enkelte mennesker, de, for å si det sånn da, arv er ikke det samme som opptjente midler. Ja, fytti helvete, ass. Nei, men det er bra du kom ut av det nå, så du kan starte på nytt. Du har jo helt råd på salg, så det bør ikke være et problem i det hele tatt. Hvor mye har du i fondet?
And that includes your finances. Rocket Money finds and gets rid of sneaky subscriptions, lowers bills, and puts you back in control of your money. Download Rocket Money to help your finances today.
Det er jo ingenting, da.
It is just before 5:30 a.m. in the New York City area, and we are just getting started here on Worldwide Exchange. Here is what's still on deck. President Biden and Speaker McCarthy's stalemate over the debt ceiling. It continues after the leaders' latest sit-down fails to produce a deal. We are live in Washington with the latest.
Ja, men han er jo bare, det er faren hans som er kongen her, altså. Det er ikke noe lurt med det. Ja, sønnen er bare jævla hyggelig, men det er ikke der, det er nok faren som er top G, for å si det sånn. Ja. Han andre tror jeg er litt mer glad i biler og moro. Nei, ikke det hele tatt faktisk. Der er ikke jeg, altså.
Welcome back to Worldwide Exchange. Thanks for starting your morning with us. Let's pick up the half an hour with the check on U.S. stock futures. After a mixed session for stocks yesterday, this saw the Nasdaq close at its highest level since August.
Nei, men det er det jeg er god på. Ta oss og kom når du vil, da. Velkommen når som helst. Nå driver jeg og snekker deg, så nå kan faktisk komme hit og sitte i en sofa. Sist gang så satt man på gulvet, så det går fint. Det gjør ikke ha det.
XLK ETF, you can see right here, it's up just about 27% year to date, but as our CNBC data team points out, that run, it could be coming to an end with new technical signals showing the ETF is now in overbought territory with a relative strength index indicator of 70.8. That is just above the threshold of 70. Our data team has 21 of the 66 components of the XOK also have an RSI above 70. That includes two of the big gainers this year. We're talking Microsoft and Alphabet. You see Microsoft up 34% this year, Alphabet up over 40%. All right, time now for a check on this morning's top stories, including TikTok taking action over one state's recent ban of the social media app. Silvana Henao, she's here with those details. Silvana, good morning.
Hey, Frank, good morning. Yeah, so TikTok officially suing Montana's Attorney General to try and stop that state's ban of the app. Lawyers for the China-based company argue the ban violates the First Amendment, adding the national security threat raised by Montana in its new law is not something state officials can attempt to regulate. TikTok is seeking to have the law, which has not gone into effect yet, overturned. Meanwhile, TikTok will reportedly soon give Oracle full access to key data for the social media app. According to Bloomberg, that will include source code, algorithm, and content moderation material in a push to ease national security concerns. Meanwhile, JP Morgan Chase CEO Jamie Dimon out with a new warning on potential fresh risks to the banking sector. Speaking at the bank's Investor Day yesterday, Dimon said that commercial real estate is the area most likely to cause problems for some lenders. And Oracle co-founder Larry Ellison is looking to put his money behind newly announced 2024 GOP presidential candidate Tim Scott. Sources tell CNBC that Ellison has donated at least $30 million to a super PAC supporting the South Carolina senator since the 2022 midterms and plans to at least double that amount. Ellison attended Scott's campaign announcement yesterday, with the senator praising Ellison at the event, calling him one of my mentors. Frank?
All right, Savannah Hanel, thank you very much. All right, turning back to the debt ceiling talks and all the developments around that. President Biden and Speaker McCarthy failing to reach a deal following their roughly 90-minute sit-down at the White House yesterday afternoon. But Speaker McCarthy calling the meeting productive, with just over a week left to avoid a potential debt default. Our Kayla Tausche joins us now from Washington. Kayla, good morning. What are the two sides saying following that one-on-one conversation?
Well, Frank, good morning. Negotiators met again late last night to try to build on the positive momentum established by President Biden and House Speaker Kevin McCarthy. On the phone on Sunday, McCarthy, who despite reaching no deal, both of the attendees said the meeting was productive. President Biden, for his part, said there are areas of disagreement, but that the two reiterated once again that default is off the table and the only way to move forward is in good faith toward a bipartisan agreement. McCarthy, speaking to reporters after the meeting, said that he thought that there was room to improve.
I actually believe at the end of the day we can come to an agreement. So that's why we're together. Why it was productive today, not giving progress, we only talked about where our differences were. We talked about items that, ideas to find that. So we're asking the staff to get back and run through those ideas to see if we could come to an agreement.
Now, the two sides are arriving at some common ground, sources tell CNBC and NBC News, namely unlocking up to $60 billion in unspent COVID aid and reducing payments to drug companies by negotiating even more drugs under Medicare. That, the White House estimates, could
Ja. Jeg kom ikke inn først. Jeg ville, men jeg kom ikke inn.
Frank, it's not the $4.5 trillion that Republicans are looking for, but it's a start, and it keeps the talks moving, and we will see what staff-level negotiators can continue to hammer out today after meeting again late last night.
Yeah, a lot of talk about the staff meeting behind the scenes. So, Kayla, I want to run this by you. Goldman Sachs putting the odds of a deal getting done this week at 30%. The bank says it's far more likely we'll see something complete by early next month. What's your sense of these negotiations? What are your sources telling you? What do you see?
Well, certainly getting full legislative text of a deal takes a long time, and it takes a pretty heavy lift. So reaching an agreement and then allowing for 3 to 5 days to get some of that text together is probably a reasonable assumption. It doesn't seem like that amount of time necessarily exists here, but I think it's important to hear that both sides committed to avoiding a default, because there are some stopgap measures that they could adopt if they feel that talks are progressing. They could, for instance, do a short-term debt limit increase of a month to 4 months to align with the September 30th government funding deadline. That's something that we've heard that some Biden administration officials believe might be the best case approach. As for now, they don't want to make it seem that they're not negotiating toward this deadline, because that certainly is the deadline that they're working toward. But they do have other levers that they can pull if they get close to that date. And neither side wants a default, but they don't quite have it together yet.
Yeah, I don't think anybody in America wants a default. Kayla Tausche, great reporting as always. I'm sure it's going to be a busy day for you.
Thank you.
All right, so far, the debt ceiling standoff, it does not appear to be rattling the stock market, as investors seem pretty confident a deal will be reached to avoid a default. The S&P 500 up 9% this year at its highest level since last August. The VIX has also stayed pretty calm, trading near its lowest level since late 2021. However, the bond market, especially the short end of the curve, is showing some signs of unease. The yield on the one-month T-bill spiking today to a record high. It's signaling traders are avoiding the underlying asset, given concerns over whether the U.S. can pay its bills after June 1st. Let's talk more about what may be needed to get a deal over the finish line with Jeanette Lowe, Director of Policy Research at Strategis. Jeanette, great to see you.
Great to see you.
All right, so we're highlighting the 1 month, trading pretty close to an all-time high, just above 5.8%. Pretty big risk premium when it comes to the 1 month. So does the sentiment reflect the reality in your mind?
Yeah, I mean, I think there's definitely the fact that we are pretty close to the X date. There definitely has to be some, some measures put into the market to have a little bit of fear about whether or not we are actually going to cross that X date. And, this is always a hard thing in Washington because we tend to go down to the wire. And so it does make it a little bit more difficult for people to know if there is a guarantee that the U.S. is actually going to find a debt ceiling deal and actually get it across the finish line. So I think that you are seeing some risk built in over just the near term as we kind of look ahead to this June 1st deadline. That, you know, our view is definitely that we think that the X date is what they are focused on right now. They're focused on the June 1st deadline, as Kayla mentioned. There are some options if they cannot get a deal by then. But I think in general, the players in the room are actually trying to make sure that we do get something done by June 1st.
All right, translate a little DC talk for us. On Sunday, we heard that President Biden and McCarthy had a productive call. This meeting was productive, but still no deal. And we hear the staff's working behind the scenes. Is productive code for something?
Productive definitely is at least constructive, and it's positive. So it does mean that we're seeing that they're actually making movement. You know, I think if you look at maybe a week or so ago, you saw them more talking from their corners. Now they're really getting into the weeds. They're actually talking about specific budget items that they can change, they can maneuver, and that's important. So from our standpoint, we continue to at least see progress. Obviously, there was that pause over the weekend on Friday when the negotiators kind of left the room and said they were going to take a pause. But then after that, you started to see McCarthy and Biden get back together, talking on the phone on Sunday, having the meeting last night. I'm sure they'll probably meet again today and over the next couple of days if that is needed. But I think the fact that we are actually getting into the weeds here shows that we are likely to get a deal. And I do think that because we are looking at that June 1st deadline as that X date, no one really wants to cross it because that would have a much bigger market impact. And so I think that they are working to make sure there's a deal ahead of them.
You know, a lot of confidence about a deal getting done. In fact, Goldman put out some research yesterday. It was before the meeting. That's important to note. But before the meeting, saying 30% chance of a deal this week, 70% chance of a deal by early June. So it seems there's a lot of confidence the deal will get done. But what about the U.S. credit rating? We haven't heard a lot from the credit rating agencies. What do you see as the outlook on that? Is it possible that the U.S. could be downgraded again as we were back in 2011?
So I think that there is that risk out there. We've actually been a little surprised by how quiet the credit rating agencies have been. I think, if you look back at 2011, though, you did have the S&P kind of give fair warning to some extent that they were looking at doing a downgrade on July 14th. That downgrade then happened after a debt ceiling deal was reached. But part of that was the fact that they felt that they needed more spending cuts to be included, and part of that was also on process. This time around, the debt ceiling fights are never enjoyable, and they're always a little bit gut-wrenching, but I do feel like the process this time is a little less toxic. But the closer we do get to June 1st, and if it looks like we're not going to be able to have a deal, I think there definitely is more risk that we could see something from the credit agencies.
All right, certainly something to watch. That would be a very big deal for the U.S. economy as well. Jeanette Lowe, great to have you here. Thank you.
Thank you so much.
All right, coming up here in Worldwide Exchange, we're going to go from Jeanette Lowe to Lowe's. Those results out in just about 20 minutes. Our next guest lays out the bull case and why it's no Home Depot. Worldwide Exchange. We are back in a moment.
As we age, movement means more than just a workout. It's how we stay active and involved with the people we love. QB makes it easy to add more movement to your day without changing your routine, even if you're recovering from injury. Its low-impact design is easy on the joints and can help you stay active and energized. Because more movement means more freedom, more fun, more you. Don't wait. Get 10% off at QB.com or call 833-MY-QB.
With Allegra, allergies don't hold us back. Allegra starts working 2 times faster than Claritin. And unlike Zyrtec, it won't make us drowsy. Allegra gives you the fastest, non-drowsy 24-hour allergy relief so you can live your greatness.
Home cooks, start your ovens. It's time to get dinner ready faster. With Home Chef's easy prep and no mess options, you're winning dinner when you cook with Home Chef. Get oven-ready meals done in 3, 2, 1. It's time to set the table and go eat. Delicious meets simple. Get 18 free meals at homechef.com.
If you just set out to build an electric car, that's all it will ever be. An electric car. But the Polestar 2 is something more. Every detail designed to be quietly distinctive. Polestar 2. The way electric cars should be. Visit Polestar.com to test drive and order today.
With Verizon, you can now get a private 5G network, so you can do more than connect your business. You can make it even smarter. Now ports can know where every piece of cargo is and where it's going.
Right on time.
Robots can predict breakdowns and order their own replacement parts.
Nice work.
And retailers can get ahead of the fashion trend of the day with a new line tomorrow. With a Verizon private 5G network, you can get more agility and security, giving you more control of your business. We call this enterprise intelligence, from the network America relies on.
All right, welcome back to Worldwide Exchange. Time now for your morning call sheet, where we check on a few of the morning's biggest upgrades and downgrades by firms you know and stocks that you likely own. We start with HSBC upgrading Chevron to buy from hold with a new $189 price target, which is actually down from a previous target of $193 a share. HSBC says Chevron shares are underperforming and it has an attractive distribution yield on par with its EU peers. Another big price target raise is talking about NVIDIA. Stifel raising its price target from $225 to $300 a share. It says AI positioning remains a key medium-term driver. NVIDIA is set to report its results tomorrow. And we got a pair of upgrades from Quanterix and Myriad Genetics, each to a buy. Goldman calling Quanterix a pure-play neurology company coming into view and saying that Myriad's improved financial profile is not reflected in its share price. Looking at shares of both, up pretty big in the pre-market, up 9% for Quanterix. All right, earnings in the consumer taking center stage once again this week with results from Lowe's, Dick's Sporting Goods, and Best Buy. A key focus for Lowe's when it reports at the top of the hour is home improvement trends, of course, with customers less eager to spend on remodels compared to last year. The earnings coming on the back of rival Home Depot's results last week, reporting its worst revenue miss in nearly 20 years. Let's talk a lot more about this with Michael Lasser, UBS Broadline and Hardline retail analyst. Michael, great to have you here.
Morning, Frank.
All right, looking at shares of Lowe's in the pre-market, down in the pre-market. The results coming up in just about 30 minutes from now. What are you expecting? And is Home Depot a read-through to what you're expecting from Lowe's?
So we're expecting that Lowe's going to comp down around 3%.
Jeg er short, er det penger.
Most likely it'll read.
Men det går så tregt at jeg kan like gjerne gå long.
Be a little bit more cautious given some of the softer trends that have occurred so far this year. In response to your second question, Home Depot is obviously a read for Lowe's this morning, but keep in mind that Home Depot called out California as an area of weakness, and Lowe's has only 6% of its stores in California versus 12% for Home Depot. Also, Home Depot noted that it saw underperformance of the pro business, and the pro business accounts for about 25% of the business at Lowe's versus 50% for Home Depot. So there are reasons to be a bit more optimistic at Lowe's than Home Depot. Still, it's clear that there is now some give back for the home improvement category, and we expect to see that within Lowe's results this morning.
So what's causing what you call that give back, or basically a slowdown in sales? Is it the slowdown in the housing market, or is it that consumers are a bit stretched right now?
So I think it's a couple things. One, we spent the better part of the last few years, I'm sure you did too, Frank, sitting in our homes doing a lot of home improvement projects, and now we're shifting our spend to other categories like leisure and traveling. The other point is that the consumer is feeling a bit stretched. A lot of the excess savings has been worked down, and as the consumer has less money to spend, they're being more discerning. They're having to spend more on necessities rather than luxuries. And so some of those elective projects are being scaled back in home improvement. We expect this to be a trend for the rest of the year. And as we work through this softer patch, we will get into more stabilized demand that will benefit Home Depot and Lowe's.
All right, Michael, we got to leave it there. By the way, I just redid my screens, and I'm cleaning out the garage. So if you want to come by and help me out, that'd be great.
I certainly will, Frank.
Michael Lasser, great stuff as always. Thanks for being here.
Thank you.
All right, ahead here on Worldwide Exchange, the one word that every investor needs to know today, plus RES Asset Management's Carrie Firestone. She's going to lay out the trading day ahead and the stocks that she says are high on her radar, including her pick for a really big tech play. And CNBC is celebrating Asian American and Pacific Islander heritage throughout the month of May. As we had a break, here is Apothecary founder and CEO Shizu Okusa.
Får ikke noe...
Makes me proud of being an Asian American founder.
Bare tull, egentlig.
They immigrated here in the 1980s with nothing. They were farmers, and here I am today, having raised over $13 million of venture capital on my second company, Apothecary, filmed for Shark Tank, and I am just getting started.
The transition to a carbon neutral future is very exciting for me. Natural gas has a key role to play in the energy transition. The LNG is natural gas cooled down. This allows us to transport large amounts long distances. Here we are using the ocean to deliver to different parts of the world. We want to reduce our carbon footprint, so we are leading the way. I'm positive and hopeful for the future.
Wow.
Ja, jeg trodde ikke du skulle sett fra sånn her halv 11 tida til 2 tida.
Nei, men jeg blir bare sittende og se på. Jeg gjør ikke noe. Jeg gjorde en liten short nå. Det er ikke så big deal. Det var godt med den kanalen vi snakket om hele dag.
Ja, den har ikke jeg lyst til å trade i heller.
Power E-Trade's easy-to-use tools make complex trading less complicated. Custom scans help you find new trading opportunities.
Jeg tar sikkert volumet på noe valutapar da, imens.
Jo, jeg skal det. Jeg bare... Ja.
Analyzing a big bank's data, no big deal.
Go on.
Nå er jeg penger igjen.
Partner with IBM and Red Hat, use a hybrid cloud solution to connect data across multiple systems globally, then analyze all that data with Watson.
Okay, but this needs to meet our
security standards? Yep.
Compliance standards?
Mm-hmm.
So they get the insights they need.
Yep.
In real time.
Check.
To make quick decisions.
Check. And check. That's the hybrid cloud solution IBM and a global bank created. What will you create? IBM. Let's create. Wow. Did you just say wow? Say it again. Wow.
Live shots from around the world this morning. We're looking at London, Hong Kong, New York, and Washington, D.C. A lot of action in all those towns. All right, welcome back to Worldwide Exchange. Time now for your WEX wrap-up. 6 stories you need to know before the opening bell. We start with shares of Zoom, losing steam in extended trading despite better-than-expected Q1 earnings and Q2 forecasts. Its annual revenue forecast, though, representing a gain of just about 2% from a year ago, raising concerns about growth. Activist investor TCS Capital Management unveiling a 4% stake in Yelp and urging the company to explore strategic options, including a sale. TCS believes Yelp can get at least $70 a share, about double the current stock price, according to the Wall Street Journal. Yelp shares, as you can see, surging on that report. Overseas, top investors at British American Tobacco are calling on the new chief executive to restart its share buyback program in an effort to speed up the return of capital to shareholders and to boost the company's ailing stock price. Walgreens reaching a tentative settlement with consumers who received Theranos blood tests in Arizona and California and claimed the drugstore giant was willfully blind to that fraud. Terms of that deal have not been provided. Tesla's first shipments to North America from its Shanghai factory are starting to show up for sale. The company's website in Canada showing this morning that Model 3s and Model Ys are available for immediate delivery. And former Federal Reserve Chairman Ben Bernanke making the case a soft landing is still possible for the central bank. In a paper with former IMF chief economist, Bernanke argues the Fed can still beat back inflation without a large rise in unemployment. All right, we're gearing up for the trading day ahead. On the economic front, we get flash manufacturing and services PMI figures this morning, along with new home sales numbers. As for earnings, we just discussed, Lowe's is out in just a few minutes. We also get results from Dick's Sporting Goods and Toll Brothers. And the Dallas Fed president, Lori Logan, set to deliver a speech at 9 a.m. Eastern Time. Of course, also top of mind for investors is Washington and the ongoing debt ceiling talks. It's an issue Jim Cramer notes may actually be falling off.
Also du tenker på sånn
It seems buyers who were everywhere except in the defensive stocks that historically thrive in recessions
have suddenly decided that bonds don't matter. It's like they don't care about the debt ceiling negotiations at all. And they're not the least bit.
Ja, du tenker altså du har jo noen som heter Fit Together, så har du jo men de er online coacher altså.
That's certainly what the market seems to be saying. Look at what went up. The stocks of companies that don't have much money, the ones that reported terrible quarters, the Cathy Wood kind of stories about no profits, just future growth and so-called out years. The buyers of the stocks of these companies seem indifferent to what's happening now, including those nasty debt ceiling talks.
All right, that was our Jim Cramer. Joining me now with her take is Carrie Firestone, CNBC contributor and Arias Asset Management CEO. Carrie,
Jeg skjønner hvor du vil etter deg. Du vil ha alt på et sted. Blir det som MyFitnessPal, eller?
Hi, Frank. Well, it seems to be of less concern to Wall Street than we might have expected. I mean, if we do default on our debt...
Morsia er ganske bra på, som har akkurat stedet treningen han prater om.
9.5% this year. What we would say is that the market is not always correct in its assessment. If we get to a week from now and we still don't have an agreement, of course that's a risk. And so therefore you can't just dismiss it. You really have to take seriously that there is some percent chance.
Og du sikker på dette her ikke finnes.
What do you make of the 1-month T-bill right now at 5.88? It's at a record high. What does that say to you about investor sentiment and confidence, at least on Wall Street, that this deal is going to get done in a timely manner?
Well, for that 1 year to trade at a high rate, that high rate is really amazing. I mean, people, first of all, should take advantage of it if they have an opportunity.
Det høres ut som
I'm not sure we're going to see 5.8% for long. I think that we're having this mismatch, as Jim alluded to. You know, there are concerns that's driving up treasuries. I mean, who knows where the treasury rate would go if there was really a default. So, you know, I think these moves in the near term, a lot of volatility, are really signaling very short-term distress concerns, then some sort of a relief rally in the bond market. We'll see what happens in a week.
All right, so obviously you have a lot of clients who are talking to you about everything that's going on. What are you advising when it comes to portfolio protection? Is there something that investors can do or at least keep in mind to protect their portfolios?
Yeah, sure. We think so. So we have not done anything so dramatic as to raise, you know, tons of cash because we're concerned that the market's going to have a dramatic decline. I mean, that's beyond where we're considering. And there always is a resolution. It's just about timing. What we decided to do is take some money off the table from stocks that had either had strong runs up. We trimmed a number of names. And we also decided that there are some stocks that have big exposures to government contracting, and perhaps we should scale those back. So on this, and then add some names where there was more protection, more defensiveness, less concern.
Og du vil ha eget univers med trening.
So for example,
Men vil du bare ha trening der, eller?
Some holdings in Booz Allen Hamilton. It's a large defense contractor. It's been a very good stock over the years, and that was when we decided we should have less exposure to. Also Wabtec, which makes freight cars and light rail, and while they're not necessarily paid by the federal government, there's a lot of government money that goes to them. Been a good stock, and so we trimmed that name. We added to Nextera, Charter Communications, for example, and we felt that those again were very inexpensive names on the charter side. Nextera,
Ja, for nå får alle coacher.
They're going to get paid. We like their exposure to sustainable energy, and we also added a little more TMO, Thermo Fisher, because that has been a stock that was great in COVID, and then it's come back down, and we like the price here.
You know, Carrie, important to note, the NASDAQ just turned negative just a few minutes ago, so all the futures are red right now. But I want to talk about just the breadth of the market. It's just been a few stocks. A lot of people pointing to Microsoft, Alphabet, NVIDIA, really being the drivers. Apple's in that group as well. A lot of index investors watch this show, a lot of index investors, period. Are you concerned that it's only those few stocks at the top moving the market higher?
Yeah, exactly.
Ja, det blir som et fitnessforum da, sånn som det var før.
80% of the market gains this year. can be attributed to 10 names, that's too narrow. That other 400
Men har du noen eksempler da?
names that haven't done much. They trade at 14 times earnings. The word that
Ta så gå på... Jeg sender en link, se på det om det er noe av det du tenker på. Jeg sender en link nå.
Problem, and we are avoiding a recession, or we have so far. Maybe we'll see a
Ja.
reemergence of the rest of the market because it's trading at a very reasonable multiple, and we need more breadth in order for the market
Jo, det er gæren. Det gjør jo... Det er ikke noe lyd på det. Klart det gjør det.
All right, Carrie Firestone, great to see you as always. Got to leave the conversation there. Thank you for the insight. So as we mentioned, futures
Ja,
turning
det går hånd i hånd. Det er ikke noe lyd på det. Jeg skal sende deg en link nå, så skal du se om det er noe av det. Greit?
And that's going to do it for us here on Worldwide Exchange. Squawk Box coming up next. Thanks for watching.
Looking for dinner made easy? Move over meal prep and make way for pre-chopped and pre-portioned ingredients. Hit the road hard to follow recipes and say hello to easy breezy meals. Peace out, pile of dishes, and welcome easy cleanup.
Er det en dude som skal starte en fitness-app,
Hello
eller?
there, home chef.
Ja, kompis som synes det var fett.
Pre-chopped and
Men
pre-portioned
det finnes jo millioner av de allerede.
Get 18
Ja, han
free
tenkte
meals when you sign
litt
up at
større da.
homechef.com. Home Chef. Delicious meat simple.
Ja,
With butcher
det meste
box.
innenfor fitness er jo gjort da. Men
Grass-fed beef, organic free-range chicken.
du har jo sånn som Morsia nå for eksempel, så er både forum, kostplan, coaching og program i en og samme app.
Hva heter det for noe?
Morsia.
Og så skriver du da...
M-O-R-S-I-A, mener jeg. Morsia-app, det er jo...
Morsia... Vent da. Nå kommer mutteren. Ha det. Jeg kommer tilbake snart. Du bare kommer, du.
But Gary's so tight with the budget. It's actually a lot less than we thought.
This is nice.
It's time to love your floors. Lumber Liquidators is now LL Flooring. Our experts make it simple to find the right floor at the best price, guaranteed. LL Flooring.
Create an amazing website with Fiverr. You'll need your web developer, UX writer, and Amy, a Fiverr freelance graphic designer with dozens of 5-star reviews who will join your team from her favorite coffee shop. Don't forget to tip. Expand your team with a Fiverr freelancer.
CNBC. Live ambitiously. The latest debt ceiling developments, what it means for the market and the Fed, plus breaking results from Lowe's, reaction and outlook. Squawk Box 6 Eastern.
Yes or no? Yes or no?
I just want a yes or no.
You get this shot once.
This is their one moment on the carpet.
Shark Tank, tonight starting 8 Eastern. CNBC. Your next best investment starts with CNBC Pro, the ultimate investing playbook. Scan this code or go to cnbc.com/pro for an exclusive offer now.
Good morning. Speaker McCarthy saying his meeting with President Biden was productive, but they haven't reached a deal on the debt ceiling just yet. We will take you live to Washington for the latest. A new milestone for market red flags. We're going to show you the signal in Treasury that's been flashing a recession warning since July of last year. And home improvement retailer Lowe's set to report. We'll bring you the numbers and the instant reaction. It is Tuesday, May 23rd, 2023. And Squawk Box begins right now. Good morning, everybody. Welcome to Squawk Box here on CNBC. We are live from the NASDAQ market site in Times Square. I'm Becky Quick, along with Melissa Lee. Joe and Andrew are off today, so the girls are running the show. Let's take a look right now at what's been happening with the U.S. equity futures at this hour. You will see there are some red arrows. Dow futures down by about 61 points. S&P futures off by 6. The NASDAQ down by about 11. And, of course, everybody's waiting to see what happens with this potential deal to avoid a debt default. If you're looking at the Treasury yields, you're going to see right now that looks like the 10-year is sitting at 3.734%, so yields are picking up once again. 2 years at 4.38%, probably more interesting to watch what's happening in short-term Treasury, the T-bills. The spread between the 2-year and the 10-year Treasury notes, though, has been inverted since July of last year. That's more than 220 consecutive trading days, making that the longest streak for an inverted yield curve since 1980. This is usually a signal of a recession. Obviously, this one's been flashing for a very long time, but
broken clock, I guess, is always right at some point.
Waiting for Godot recession here.
Exactly.
Waiting. It doesn't seem to come.
Yeah.
House Speaker Kevin McCarthy said he had a productive and professional meeting with President Biden on how to raise the debt ceiling, but the two did not reach a deal. Let's get to Kayla Tausche in Washington with the very latest developments. Kayla.
Good morning, Melissa. Negotiators met again late last night to try to build on the positive momentum established by President Biden and House Speaker Kevin McCarthy, who, despite not reaching a deal, both said the meeting was productive. President Biden said there are areas of disagreement, but the two reiterated once again that default is off the table and the only way to move forward is in good faith towards a bipartisan agreement. And McCarthy, speaking to reporters after the meeting, said this.
We only talked about where our differences were. We talked about items that, ideas to find that. So we're asking the staff to get back and run through those ideas to see if we could come to an agreement.
The two sides are arriving at some common ground, sources tell CNBC and NBC News, namely unlocking up to $60 billion in unspent COVID aid and reducing payments to insurers, physicians, and/or drug companies under Medicare. The White House estimates, for instance, that negotiating more drug prices alone under Medicare could save up to $200 billion over 10 years. Now, it's not the $4.5 trillion that Republicans have been seeking, but it's a start, it's some common ground, and it is at least a very thin sliver in the middle of that Venn diagram that can at least identify some savings and try to move the ball forward. Melissa?
Kayla, even if a deal is reached immediately, can you walk us through the procedures that it would take for it to actually pass? In other words, we have 9 days, so can we make it?
Right. Once they reach an agreement in principle, then they have to actually channel that into legislation. That can take a few days. Legislative text is very technical, it's very bulky, and it doesn't necessarily happen overnight. Now, there would be an expectation that at least if they reached a deal, say today, that the House could pass it by the end of this week. But of course, that window is closing. The Senate comes back after its recess following Memorial Day. And of course, then there's just 2 days before that June 1st deadline. But I think the important point here is that both sides, according to President Biden, have committed to avoiding a default at all costs. So that means that if they are negotiating in earnest, if they feel that they have reached a good point where there is progress to be made, there is a deal that's within reach, there is always the possibility of some sort of stopgap or extension that they could pursue. Both sides have said that is not their plan, that is not their preferred option, but it's something that's waiting in the wings if they get close to a deal, but it's also close to June 1st.
Yeah. Kayla, thank you. Kayla Tausche.
Sure.
All right, we've got numbers just out from Lowe's, the home improvement retailer, coming in with earnings of $3.77 a share. That's quite a bit better than the street had been expecting at $3.44, but it's the guidance that they're giving for the future that has this stock off by about 2% right now. Companies talking about how they are now looking at full-year comparable sales down by 2 to 4%. Previously, they had said flat to down 2%. So taking that down and saying that they're definitely looking for sales down somewhere between 2 to 4%. They are now also talking about looking at their full-year sales of 87 to 89 billion. Previously, they'd been saying 88 to 90 billion, so lowering the range there. And also cutting their view for adjusted earnings per share for the full year as well. They're now talking about looking at $13.20 to $13.60 on an adjusted EPS basis. Before, the range that they had given had been $13.60 to $14. So a little bit of bringing down some of their expectations about this. They do say that the first quarter comps were hurt by lumber deflation, just like we heard from Home Depot earlier in the week, unfavorable weather, and lower do-it-yourself discretionary sales. They say they're optimistic about the medium to long-term outlook for home improvement, and they're optimistic about their ability to continue to grow market share. So let's take a look at the stock right now, down by about 3 1/3%, a little weaker as we've been talking through some of these issues. Joining us to talk more about it is Brian Nagel. He is Senior Equity Research Analyst at Oppenheimer. And Brian, what's your immediate reaction to some of this news?
Well, good morning, Becky. Look, I think you summed it up well. I mean, it's very similar to what we heard from Home Depot a week ago, okay? And so if you look at these Lowe's numbers, they did beat on the bottom line. I think that's reflective of the company operating better. We talk a lot on your show Marvin Ellison, the CEO, is really running this business better than they've been run historically, and we're seeing on the bottom line. But the sales were weak. With comps down, call it 4% just to make it simple. That's definitely softer than most people were expecting. Now, but it's also very consistent with what Home Depot said. They did call out, like you said, they called out in their press release the headwinds, if you will, of lumber price deflation and unfavorable weather. Now, those factors are transitory. Okay, especially weather. Weather is actually starting to turn pretty nice across the country, so I expect.
Do you believe the weather? I mean, sometimes we look at that as an excuse. You're hearing it from more than one company, but was weather an issue for the quarter?
Absolutely. I mean, it's undoubted. There's really no question there at all. You had a late start to spring really across the country, and then this is what Home Depot was talking about, among others. In the western part of the country, particularly California, you had a really harsh winter, which is rare, that either delayed projects, canceled projects, or delayed the start of kind of spring buying. So it's absolutely real, and I think it's transitory.
They talk about lower do-it-yourself discretionary sales. Now, maybe some of that's delayed. Maybe some of it's just the consumer is feeling weakness. What do you think, having looked at some of these big box retailers, in terms of how the overall economy is doing?
Well, look, it's a great question. I mean, and that's the wild card here. Okay, so I was talking to Home Depot a lot, last week following their report on this exact topic, and you really don't know. So yes, they're seeing weaker, and I think this is what Lowe's is saying as well. There's weaker demand for bigger ticket projects. Okay, so could that be a more cautious consumer? Absolutely. Could it be weather? Absolutely. And then there's also, and I think this is probably the most likely factor, we've talked about this a lot. Through the pandemic, a lot of projects were done. We were spending a lot of time at home. We were not traveling. We did a lot of projects as a community, so to say. And I think you're getting this burn off now. I think a lot of those projects have been completed, so you're seeing the after effects of that. But it's really not totally clear as to exactly why this is all happening. But clearly there's a weaker trend here.
The company says that they are optimistic about their ability to steal market share. Lowe's says this. What do you think between Lowe's versus Home Depot?
Well, look, we like them both. I think given the valuations here, and I talk about this a lot, I mean, Lowe's stock, in my mind, is just cheap, for lack of a better term, absolutely cheap. So I think Lowe's is probably the better investment opportunity. But as far on the market share side, and again, I see this across retail, right? This has been the case for a while. I think post-pandemic, it's more the case. These really well-run, strong, digitally driven, digitally enabled companies like Lowe's, like Home Depot, are able to take market share from the weaker players. And as once we get through this, whatever we're in, this kind of this sluggishness, this messiness, 2024, 2025, I think we'll see a much clearer path to companies like Lowe's taking more market share. And I think that's the reason you want to buy these stocks. I think that's the real opportunity and called the intermediate term.
We were just talking this morning about how the 2-year, 10-year, the inverted yield curve has been signaling a recession, but it's been signaling that since July of last year. That's a long time coming. Once we get through this, are we looking at a recession?
Well, I joke with my clients. I'm not an economist, but I've had the recession conversation with clients a lot for a long time. And I think really that comes down to, and some of my economist friends will probably be bothered when I say this, but it's what do we mean by recession?
Er du der, eller?
Home Depot and Lowe's, okay, and over the last several quarters.
Faen, ass. Er du der? Sander?
Plus 30% to down 5. Okay, that in and of itself to me is recession. It's not recession in the traditional definition, but it's recession.
Da gevinst.
So, again, the point I'm making is
recession, or was it just
Er du her, eller?
Well, I think there's a big piece of that, but I think that's that change in
Hva fin den der, da.
plus 30, negative 5 would in and of itself, that's definitely a slowdown. Now,
Kjøpte der.
the negative 5 is on, still a much higher base.
Ja, sånn har jeg gjort det.
I'm using Lowe's as an example.
Jeg kjøpte der. Jeg kjøper på hver jævla dipp. Nei, jeg var short i stad. Ta gevinst. Nå, vet du hva? I dag har jeg gjort det veldig bra. Jeg har gjort det veldig bra i dag. Jeg har bare... Jeg gir faen i makro. Det er makro som ødelegger huet mitt, for jeg blir så jævla påvirket av den negative nyheten. Så nå bare trader jeg på rent teknisk, og det har fungert i hele dag.
I don't think we'll ever see plus 30% growth within the home improvement channel again. That was a unique event. But I think the better way to answer the question is, right now we're in this kind of down low, down mid-single digit type dynamic. I think as we look out to 2024, 2025,
Ja, det ser ut som det skal opp hele tiden.
back to normalize, we track towards normalized growth rates, and for this sector, that's plus low to plus mid-single digits. I think we're at least still few, maybe several quarters away from getting back to that normalized dynamic.
So 24 to 25, Brian, it sounds like you're saying the stocks may be sort of just treading water until we find that normalized ground. Is that the case? That's kind of a long slog for investors to wait through this.
No, look, I think that's exactly the case. And now what the one equalizing or balancing factor in this discussion, Melissa, is the valuations, right? So if you look at the multiples at which Lowe's, Home Depot, and others are trading, that's in my mind, those multiples are now
Han må ha dratt allerede.
well for a lot of bad news or potentially bad news.
Han må ha dratt allerede.
Ja, jeg tok gevinst. Det gikk jo long der nede.
That's how a lot of our clients right now are positioned.
Du gevinst på mora di, altså.
Look, things are not disastrous.
Hun kommer og bare prater.
I don't need to own them for the very near term. But when I've seen this historically, when this turns, when this normalizes, these stocks react very, very quickly. So, my advice to our clients is, at the risk of having dead money potentially nearer term, own these stocks for those gains that should come in 24 and 25.
Brian, thank you. Good to see you.
Thank you. Nice seeing you too.
Coming up, JP Morgan CEO Jamie Dimon warning that rates could go higher than markets are expecting. That's up next. Plus, TikTok firing back at the ban by the state of Montana. We'll tell you what TikTok CEO said at a conference in the last half hour. You're watching Squawk Box on CNBC.
I'm telling you, Coach Staley, I could really get used to this retirement thing.
Coach K, there's a goat here.
The story of my life.
No, Coach, there is a goat here.
What's this?
$1,000 hospital bill? But I have good health insurance.
Gap!
Did you say Gap?
He's talking about the expenses health insurance doesn't cover.
Well, with Aflac, you can get money to help close that gap.
Aflac, huh?
Gap! Aflac!
Get help with expenses health insurance doesn't cover at Aflac.com.
At IHG Hotels and Resorts, we're in the business of you.
We're here to help you plug in,
Connect and recharge.
make an impression,
and meet with confidence.
With 18 brands built for business,
Your business gets even more rewarding.
With an award-winning loyalty program at 6,000 IHG hotels and resorts worldwide.
You know, Doug, ever since switching to Workday, you've been a real rock star.
Rock star? What do you know about rock stars?
Billy Idol?
I mean, where's the skin-tight leather?
The shoes are leather.
Where's the unnecessary zippers? That thing!
Billy, Rockstar is just how Doug feels when he uses Workday. Thanks, Rory.
I'll show you Rockstar.
Be a finance and HR rockstar. Workday for a changing world.
Billy Idol just stole your golf cart.
When it comes to corporate and investment banks.
Nei, Jones, jeg skal ikke bare hoppe over på valuta og short kanadiske dollar til krigen og lenge.
Jo, jeg vurderer å gå på valuta faktisk, mye mer volum.
Ja, bare ikke bli borti det der som pegger til stein, så går det bra.
Jeg jo ikke noe trade på dette.
Mizuho Americas, a name worth knowing. Proud title sponsor.
For meg som en scalper, dette er mareritt for meg.
From Wall Street to K Street and Main Street, get the stories behind the numbers.
Last Call is really about spotting tomorrow's opportunities tonight.
Brian Sullivan hosts Last Call, weeknights 7 Eastern, CNBC.
My dream is to talk to people, real people, about stocks. We created a club to do it.
Join Jim Cramer and the CNBC Investing Club. Scan this code or go to cnbc.com/investingclub for an exclusive offer now.
Wouldn't it be great if every meal was perfect? Not just big family cookouts or cozy dinners for two, but even those crazy busy everyday meals? With Omaha Steaks, you'll love every meal because we only deliver the best. The possibilities are endless, and perfection is always guaranteed. Visit omahasteaks.com/TV to order the perfect meal collection today for just $99.99 and get 8 burgers free.
I love my parents. So as they've gotten older, we've had to have some not-so-fun conversations about their wishes if something were to happen to them.
As an estate planning attorney, most people that would come to my office were looking to create a will for their family, but many couldn't afford the fees.
That's why we started Trust and Will, a modern and affordable approach to estate planning.
Attorney-designed documents, customized by you, all through an easy-to-use website.
The way a will should be. Find the plan that's right for you at trustandwill.com.
JP Morgan CEO Jamie Dimon reiterating a warning about commercial real estate loans. Speaking yesterday at his bank's investor conference, Dimon said commercial real estate is the area most likely to cause problems for lenders. He said it'll happen in certain locations, certain office properties, certain construction loans, but could be very isolated and won't affect every bank. Dimon also warning that banks, especially smaller ones, need to plan for interest rates to rise far higher than most expect, up to 6 or 7%.
Did you hear some of the stuff he was talking about too? Just that quantitative tightening. He said he was more afraid than anybody in the room about quantitative tightening because we've never had quantitative easing before. We've never dealt with quantitative tightening before. So you don't really know how this is going to
short
play out.
gevinst.
I think that's a pretty good word of caution from somebody who understands the market so well.
Yeah, and you have to wonder also, I mean, is part of this just
Fy faen hvor mye penger jeg tjener bare på å gjøre de små jævlene, ass, i stedet for å drive og vente på sånn drag. Det er helt fjollet av meg.
the scenario that they actually believe in. They also said they're reserving on the assumption that unemployment would peak at 2024.
Hæ?
Which is
Ser du på å gå short på nytt her nede, eller ser du på å gå long nå?
playing it conservative in order for the banks to manage their risk, or is that the assumption that they actually see happening?
St. Louis Fed President Bullard made some
Ja,
comments
dannet sitt eget støttenivå her
about
nærmest.
how he would like to see probably
Intradag i
two
hvert fall.
more rate hikes at some point during the rest
Men
of
altså, jeg har aldri handla indekser på TD før nå, da. Er det like ræva? Jo, det må jo være like ræva på alle, faktisk.
Det er jo en av de mest populære scalping.
Men er det... Altså, i aksjemarkedet så er det veldig vanlig at på sommeren så tørker det litt ut. Så det her er vanlig på indekser, altså, tydeligvis.
Exactly, and that's a much worse scenario by all measures.
Folk har ferie.
He's also addressing Dimon, that is, the departure.
Folk har ferie.
Jo, men jeg trodde at det skulle være mer volum enn de greiene her, for det her er mye, mye mindre enn aksjer. Dette er jo helt katastrofe.
Ja, hvis du skulle bare trade, hvis du skulle scalpe en aksje, så kunne du sikkert ha scalpet Tesla. Da er det mye volum.
I like this phrase that he used, no CEO should retire in place.
Right.
Which is...
No quiet quit.
Yeah, exactly. Right. Especially in the CEO ranks, yeah.
I also like, they were kind of needling him about it, trying to get him to comment on how long he was going to be around.
Han sliter med å komme nær.
They were needling him about it.
Dagens feil.
It was a joke, said 3.5 years, which is how long is left.
Ja, du caller ikke når du går inn i posisjonen, du caller bare når du snart skal ta gevinst da.
Nei, for jeg gjør det sånn veldig kjapt.
It's going to be around 3.5 years.
Yeah, maybe. But like I said, he's only 67. TikTok has filed a federal lawsuit against Montana after the state passed a law last week banning
men jeg er ute. Jeg har gjort det greit nå.
The suit argues that banning a popular social media app constitutes an illegal suppression of free speech. Lawyers for TikTok also argue that addressing a national security threat is in the purview of the federal government, not something state officials.
Jeg skal shorte den på nytt da nå, hvis det er starten på fallet.
TikTok said that it will soon grant Oracle full access to its source code, algorithm, and content moderation material. This is part of the company's effort to try and alleviate those national security concerns, granting Oracle access to review its technology.
På hva er brå bevegelse, så er det riktig å gå long. Her er det midt i... Det er trist å shorte her, altså. Jeg har shortet nå. Nå er jeg short.
By the way, speaking of Oracle, the company's co-founder, Larry Ellison,
is preparing to spend millions
of dollars backing Senator Tim Scott's run for president. Ellison's net worth is about $115 billion. Sources tell CNBC that he previously donated $30 million to a pro-Scott super PAC. Ellison attended Senator Scott's campaign announcement yesterday in South Carolina, sitting in a VIP section at the rally, and Senator Scott called him out, gave him a shout-out at one point there, too.
Now to the fake image that rattled the markets yesterday. The image posted yesterday morning showed black smoke billowing next to a building that appeared to be the Pentagon. It was shared widely on Twitter, including by a Russian state news agency. For a few minutes just after 10 a.m.,
Spreaden var ikke noe særlig snill med meg der.
before officials said
Med
no
meg?
incident had
Nei,
occurred.
med meg.
Misinformation
Jeg shorta
experts
på.
told AP.
Ja, den er jo like ræva for meg. Den spretter jo opp og ned med $2 i en spredd, liksom.
And the way the grass and the concrete fade into each other. If you look very closely, also it was
Jeg starta $3 i minus her.
melded into one another, and so
Ja, jeg startet med 4.
clear tip off that this was a fake image. The market reaction was very brief, was fairly minor.
Bit risky
This,
then, Arnold.
0.3% change in the S&P 500. But if this were a better fake image, and it was spread a little bit more widely, you can imagine the kind of damage that could be done to the markets by something like this.
Look, I spent this weekend taking a lot of time looking at Twitter, which I think is a cesspool at this point because it's impossible to tell what's real and what's not. There were some fake accounts spoofing me.
Yeah, me too.
I kind of pointed out, like, what is this? What's
Litt
going
skummelt å
on?
sette short her også, for vi vet jo at med en gang det er rentegreier blir, eller gjeldsdagsgreier blir ordnet, så blir jo dagsene gå i ny topp
This is
igjen.
part of the problem with what they did with getting rid of the blue.
The legacy blue checks and the paid-for blue checks.
Everybody to have a blue check mark if they want it. Twitter has basically said it's up to all of us to police this, not them, which is they've washed their hands of this and basically
Dagen går opp, futurene går ned. Så det er liksom ikke helt vater
this
dette.
is going to lead to some significant problems with
Jeg har faktisk longa mer enn gått short i dag.
my concern that I was pointing out over the
Ja.
weekend. What happens if there's a false tweet that moves market information based on some of these ridiculous things?
Market information changes election outcomes.
Får vi sette stoppen på den her?
I mean, the list goes on
Du
and
kan
on.
ikke sette stopp i de greiene her. Du må bare sitte og følge med hele tida.
Fake, whether it be a video.
Det er altfor choppy. Du går jo stopp med en gang du setter noe stopp. Hvis du skal sette en stopp, sett den 20 pips unna.
Responsibility for stuff that is fake getting pushed around
Ikke
on the
mer.
network, on their
Det er for dårlig
If that was
likviditet.
if it was on CNBC, if it was in a newspaper, there would be liability. Why not here?
Yeah, and at one point in time, misinformation and content moderation, that was a big focus, a big area of spend for these companies.
Yeah.
And now all they say is, we're doing AI, and they've got billions of dollars in market cap added. And it's interesting that these are two push and pull effects, right? AI, which is fueling this misinformation, but also the need to spend to content that misinformation, so to police the misinformation. So we'll see how that shakes out.
Yeah, it's not a good scenario.
Yeah.
Anyway, when we come back, Nike CEO John Donahoe speaking at CNBC CEO Council Summit. We've got the highlights of this conversation next. Right now, though, as we head to a break, let's take a look at shares of Zoom. Quarterly results beat the estimates, and the company actually raised its full-year guidance. Zoom CFO is going to be joining us at 8:40 a.m. in a first on CNBC interview. We'll be right back.
This is GE Aerospace, advancing flight for future generations. Welcome to a new era of flight.
I was born here, I'm from here, and I'm never leaving here. I'm a New York hotel. Yeah, I'm tall. 563 feet and 2 inches. I'm on top of the world. I'm looking for someone who needs a weekend in the city, who likes being in the middle of it all. You hungry? I know a place. And a few others nearby. It's the city that never sleeps. But hey, if you need a last-minute spot, I've got you covered. Let's link up at Hotels.com.
Interactive Brokers pays up to 4.58% on instantly available cash in your brokerage account. How much interest can your bank or broker pay? Interactive Brokers' conservative and prudent risk management uniquely positions us to pay up to 4.58% on uninvested, instantly available cash in your brokerage account.
Så du den syke jeg sendte deg på med han der bikkja, eller? Fy faen, det kvalm.
Jeg skjønner ikke hva det er du sitter og ser på.
Jeg skjønner ikke selv.
Leading
Det
banks
er
and
helt
brokers
vilt.
are paying you interest rates that are exceedingly below market rates.
Det er faen meg det sykeste jeg har sett.
Maybe they made long-term
Han
loans
bare
at lower
spiste
rates
det.
and would lose money if
Nå er det penger, eller er det fortsatt i minus?
Or
Jeg er
maybe
fortsatt i
they
minus.
simply think their customers won't notice or care if they don't pay market rates. Whatever the reason,
Med en gang vi når
collect the interest you are
Skal vi se, du ser, nei.
Futurene kommer rett ned her. Dagsen går oppover.
Mine is almost the same as yours.
Du har sitt eget liv, den her.
Ja. Jeg tror at det bare er på grunn av volumet. Så det er marketmakerne som går litt sånn.
Your shipping manager left to find themselves, leaving you lost. You need to hire.
Men se da, i dag. Den er på akkurat der man åpnet i dag. Ja, ser du det?
Ja, han ligger bare en her.
Blir ikke rik av det.
Nei, da skulle du, i dag kunne du faktisk trygt ha tredje med flere hundre kontrakter, for det er så... Hva er det største grepet her i dag?
Means the smoothing benefits of retinol are now for your whole body.
Ja,
Plus, fast-working crepe corrector diminishes wrinkled skin in just 2 days. Gold Bond, champion your skin.
Jeg har tatt bomma maks i dag, så bra. Da ser det godt spart her, da. Du ender kommet deg ut til slutt. Da er vi...
Today, CEOs convene for CNBC's Premier Council Summit. Exclusive one.
Han har flyttet seg noen tikk i dag, da.
CEO Council Summit. Coverage all day today, CNBC.
Han har, maks du hadde satt det feil i dag, har vært 50 tikk.
CEO Council Summit convening on the West Coast this week.
Det er litt sjukt. Det er hele volatiliteten i Dagsen i dag, det er 50 tikk.
Ja, det er tøkkeren.
Top executives gathered last night.
Ja, så hvis du hadde sittet med 200 kontrakter nå, så hadde du bare måttet kunne tørt 50 tikk i feil retning. Så hadde du fått hentet deg inn.
Futurene fortsetter å falle.
Men da går Dagsen opp.
We believe trade, global trade is a good thing. We believe consumers benefit from that around the world. We believe that helps employees around the world. We believe that, frankly, can almost help promote peace and understanding. The business has to step up when the political institutions are in the state they're in today. And so we're committed to being a global company, whether that be in China, whether that be in other markets. And yes, there's risk. I think decoupling would be disastrous economically between the U.S. and China, or China and the European Union. If you really look at the trade flows, both ways, they play a mutually valuable role. And so, you know, again, we believe in global trade, and we'll continue to try to do everything we can.
Dagsen har jo 727 000 watt med hodet med den Dagsen her. Det står at det er 728,
Se på Dagsen nå.
Ja. Så det er 730 mil volum i Dagsen. Mens SPX har 2,187 billioner. Eller milliarder da. Så det er nesten tredobbelt volumet i SPX. Som det er i Dagsen. Bare så du er klar over det.
SPX?
Ja, SPX er S&P 500.
Ikke nå vel, før børs? Ja,
det står her.
Kanskje du går litt da, for det greiene her er som det her er jo så teit. Men Dagsen går rett opp her. Følger ikke futurene, følger ikke olje, følger ingenting.
Ja, jeg tror det må være en bug da, fordi Dow Jones er på 22K liksom, og Nasdaqen er på 73K. Så det volumet virker jo til å være litt feil.
At volumet er feil?
Ja. Ja, dæven, her skjøt Dagsen av gårde.
Ja, det her er noe snudd rett igjen da. Men se på Dagsen. Se på futurene. Futurene kommer ned. Denne går opp.
We stop cyber attacks. We stop breaches. We stop a lot of bad things from happening.
Nesten så du kunne hedga deg i hedging.
Nei, men kanskje du skal bare switche om over til S&P hvis du sier at det er mye mer volum der.
Ja, men så igjen, jeg tror det er en god bug, for at det kan ikke være så mye S&P, og så er det så lite i de andre indeksene. Det gir ikke mer.
Last call is really about spotting tomorrow's opportunities tonight.
Brian Sullivan hosts Last Call, weeknights 7 Eastern, CNBC.
So, you got your first
ChatGPT sliter skikkelig i dag.
Welcome to the club. These crates aren't just amazing STEAM projects. They're full of awesome moments like this, and this, and this. Get your first month free at trycubico.com.
Do you have a box of videotapes, film reels, or photos that are degrading? Legacy Box professionally converts them to DVDs, thumb drive, or the cloud. Legacy Box is simple and safe, with over 1 million satisfied customers.
Det var veldig den første
And I'm Chef Wonderful. I recently introduced the ERC program to Chef Wonderful here, which is a program created towards small businesses like mine for retaining their employees during the pandemic. Well done, and most of this money is still available. If there's one thing Wonderfuls never do, it's leave money on the table. Chihuahua, this guy is smart. Go to wondertrust.com now to see if you're eligible for this cash. Nice hat.
Good morning. Welcome back to Squawk Box. We are live from the NASDAQ market site in Times Square. If you check out the futures this morning, not a ton of movement. This kind of reflects what we saw yesterday, where the markets were basically flat if you were looking at the S&P. Right now, the Dow is indicated off by about 25 points. S&P down by 2, the NASDAQ indicated up by 2, and you have to think, Melissa, that a big reason for this kind of standstill market at the moment is just waiting to see what happens with the debt ceiling.
Of course, everybody's waiting. And it's interesting that the NASDAQ is managing still a positive bid this morning. Flight to safety still prevails. I mean, the thinking there is interesting. Minneapolis Fed President Neil Kashkari added to the list of Fed heads saying a rate hike in June.
Det er mening som er at Dow Jones har mest bevegelse på indeksen med tanke på at de siste 10 årene er det jo energiaksjer som beveger seg mest, og Dow Jones er jo primært energi. Så det er mening at den er volatil. Men bevegelse og volum behøver ikke nødvendigvis å korrespondere med hva jeg tror.
And with a specific focus in the service sector, which is the area where, frankly, the job market tightness is going to play through most directly. So those are the numbers that one would look at, and I think it's really a toss-up at this stage, which may be a little bit of a surprise given how much they've already moved.
Are you in the camp of
noen robotgreier du hører på, eller? Ja, det høres ut som 2 roboter som prater i vefta i bakgrunnen.
Nei. And a wait-and-see kind of, you know, just separation in the Fed. Where would you stand on this?
I think I'd stand closer to the wait-and-see. They've moved quite a bit at a historically fast pace. There's a great deal of uncertainty in the economy from the banking sector. That hasn't shown through everywhere, and you heard from Neil Kashkari yesterday that in his district he didn't see much impact from banking uncertainty. We are hearing from major companies expectations of a slowdown. And so I think from my standpoint, perhaps if they feel necessary to do one more, then I would definitely take a pause and just take a survey to see exactly where things stand.
In terms of the banking impact, Roger, I mean, we've already seen some evidence that there is a tightening of credit. And so what further impact would you see? Is it beyond the credit, credit tightening? Is it commercial real estate? I mean, what are some of the other impacts that you are expecting that will eventually factor into the Fed's decisions?
Well, I think it's mainly that tightening of credit, and the question is how widespread does that become? We know it is an issue for some banks and some locations. It doesn't really appear to be a national phenomenon yet, and that is, I think, really where one would look. The other point to recognize, when interest rates rise, there's an expectation that credit would tighten somewhat. So it's not a total surprise. The question is exactly how extensive that has been and likely to be. Thus far, I think it's a watch out. Has not yet become a major factor in monetary policy thinking, as far as I can tell.
If you were to speak to a market participant who believed that there were rate cuts sometime at the end of the year or early next year, what would you tell them? Are they off the reservation? Are they, in line?
Well, I think the market is misreading the Fed's intention. I think the market is not focused enough on how sticky this inflation appears to be. The other thing is, I think the market is thinking a little slowdown, maybe a modest recession, would force the Fed to change its thinking. I believe that there may well be a modest recession, and that is, I think, part of what's in their plan. No one wants a recession, but I'm not sure that if that were to
Det så lite bevegelse, så jeg vet ikke så mye hva jeg skal gjøre nå.
Start cutting rates right away, because it's part of the process of driving disinflationary forces deeper into the economy.
Ja, alternativet er å ta tapet, eller så er det
how people are trying to characterize the degree
of the
recession that is expected, whether it be short and shallow or moderate. I mean, in your view, what is moderate recession, Roger? I mean, is that unemployment peaking at 5.8% next year, which is the way JP Morgan is modeling for its credit reserves, or is it something deeper or less bad?
I certainly think it's less bad than the recession that we had, two recessions ago in 2008. I think it is unemployment peaking somewhere in the mid-5s, perhaps. Most importantly, I think it's 2 quarters, the sort of technical definition.
Jeg drar frem Dow Jones så ser jeg, så kan vi trede det snart, for det her dette går jo tregere enn noe annet.
Ja, det er pre-market der, så det er jo ikke noe.
Ja, men hvis det er mer volum der enn det er på Dagsen, og Dagsen er oppe, det er ikke noe vits å handle Dagsen igjen.
Ja, men det er ikke det. Dagsen har, altså grunnen til at jeg tror det er noe feil med SPX, det er at det står at Dagsen har 750 mil volum nå. Dow Jones har bare 22.253 volum. Nasdaq har 73.000 i volum. SPX står at det er 2,18 milliarder i volum. Men det tror jeg er feil. For det er ikke meningen at den skal ha det volumet når de andre indeksene i USA har så lite.
That I think surprises many people. We see steady demand across the board, so to speak. Secondly, the labor market imbalance is still really historically, quite great, with 1.5, 1.6 job openings. Normally, the number is 1, and I think the Fed is rather hoping that we can have this sort of modest increase in unemployment, still have plenty of demand for jobs. Still have consumers that are relatively strong, and I think that for if it occurs, is the backdrop for a recession that is relatively quick, relatively shallow, and let's hope if we have one at all that's the type of recession that looks.
Så der ja, der er det volum.
Sounds like you just made the case though, Roger, for inflation remaining stubbornly and persistently high. All those things that you listed are reasons why the Fed might have to go too far in the end.
I agree. So the issue that's driving most people here is this recession, this inflation is very stubborn, and it is coming from many sources of imbalance, and that's a big challenge. So one of the reasons that I've been in the camp that says we're likely to have a recession is I think that in order to drive inflation out, the Fed's going to have to go higher than markets currently expect, do one more, maybe pause, and then potentially start again. And so I think the risks are tilted towards probably doing a little too much rather than doing too little. And I think you've heard the Fed say that in their own risk thinking, doing too much is probably preferable to doing too little. They want to avoid the stop-start of the Burns era. And so I think that all piles into the argument for probably doing just a little too much and probably forcing us into a short and shallow recession. So it's all part of the same narrative, I think.
Yep. Roger, thank you. Good to see you. Roger Ferguson.
Thank you.
Coming up, big changes in the streaming world. We'll talk about the launch of Max and the combination of Paramount Plus and Showtime. That's next. And later, Zoom CFO Kelly Steckelberg will join us to break down the company's earnings, which topped estimates. And a reminder, get the best of Squawk Box in our daily podcast. Follow Squawk Pod on your favorite podcast app and listen to us anytime. We'll be right back.
You need to deliver new apps fast, using the services you want in the clouds of your choice. With flexible multi-cloud services that enable digital innovation and enterprise control, VMware helps you innovate and grow.
What do you see on the horizon? Uncertainty or opportunity? Whatever you see, at PGIM, we can help you rise to the challenges of today, when active investing and disciplined risk management are needed most. Drawing on deep expertise across the world's public and private markets in pursuit of long-term returns. PGIM. Our investments shape tomorrow, today.
Hi, I'm Terry Bradshaw.
And I'm Rocky Blyer.
And I'm Colonel Greg Gadsden.
On this Memorial Day, our heartfelt thanks to all of our military veterans for their service.
We honor our veterans and those who no longer are with us.
To all of our military serving around the world, thank you for defending the many freedoms we enjoy.
Tune in to Salute to Veterans for discussions about the issues our military veterans face daily.
We empower those who act. Those who see the correlation between things above and things below the surface. Those who navigate risk by meeting every turn with a heightened awareness of what's possible. Constant assessment. Determine the best position. Catch the perfect wave. CME Group, where risk meets opportunity.
Squawk Box, weekday 6 a.m. Eastern on CNBC and streaming live on Peacock.
Let's say they do create some digital superintelligence. Well, who's in control?
Artificial intelligence is going to create a productivity boom that we've only seen a few times in the last 75 years.
I feel, yes, it's moving fast, but moving fast in the right direction, where humans are more in control.
We're doing everything we can to make sure we're ready for autonomous when it comes. You might be surprised that it comes over the next couple of years a little faster than you think.
Paramount Global will combine its Paramount Plus streaming service with its Showtime app in the U.S. on June 27th. That merger will come with an increase in monthly pricing from $9.99 to $11.99. Users can still subscribe to Paramount Plus without Showtime for $5.99. The standalone Showtime app will be discontinued by the end of the year. Separately, Warner Brothers Discovery is launching Max today. That's a combination of HBO Max and Discovery Plus. An ad-supported pricing option will cost $9.99 a month. The ad-free version will start at $15.99. Discovery Plus will remain as a separate standalone option.
Activist investor TCS Capital Management has built a stake in Yelp and is calling on the company to explore strategic alternatives, including a potential sale. That's according to a Wall Street Journal report that says TCS owns more than 4% of Yelp's shares outstanding, making it one of the company's 5 biggest shareholders. TCS says that it believes the service recommendation site could be sold to a tech or a media company or a private equity company for at least $70 a share. That is more than double yesterday's close of $32.52. When we come back, we're going to talk about the metaverse and augmented reality with the CEO of a company that makes avatars for the stars. That's next. And a reminder for you, you can watch or listen to us live anytime on the CNBC app.
Executive Edge is sponsored by AT&T Business. AT&T 5G is fast, reliable, and secure.
Lily! Welcome to our third Barkery.
Oh, I can tell business is going through the woo. But seriously,
Seriously, we need a reliable way to help keep everyone connected from wherever we go.
Well, at AT&T, we'll help you find the right wireless plan for you, so you can stay connected to all your drivers and stores on America's most reliable 5G network.
That sounds just perfect.
Terrierific.
I Labrador you.
Round of applause.
AT&T 5G is fast, reliable, and secure for your business.
Hi, I'm Terry Bradshaw.
And I'm Rocky Blyer.
And I'm Colonel Greg Gadsden.
On this Memorial Day, our heartfelt thanks to all of our military veterans for their service.
We honor our veterans and those who no longer are with us.
To all of our military serving around the world, thank you for defending the many freedoms we enjoy.
Tune in to Salute to Veterans for discussions about the issues our military veterans face daily.
10 years ago, we started Untuckit out of my apartment, and today we have more than 80 stores worldwide.
It's been quite a journey. We didn't just create shirts designed to be worn untucked, we perfected them. With great fabrics and design at the perfect untucked length, so you can look sharp in this new business comfortable world. Just look for our signature sale. Untuck It, 10 years in the making, and we're nowhere close to stopping. Visit untuckit.com or your nearest store today.
Car designers can shape a piece of clay into a piece of art. So why don't they? At Nissan, things are different. They design cars that look like swords, gladiators, the future, or, wow. Nissan knows what thrill looks like because they design it into every car they make.
Weeknights from Wall Street to K Street and Main Street. Get the stories behind the numbers.
Last Call is really about spotting tomorrow's opportunities tonight.
Brian Sullivan hosts Last Call, weeknights 7 Eastern, CNBC.
We all know that we'll eventually need a will. Eventually. How about right now? Trust and Will has taken the process of creating your will and made it easy. Like while you're lounging on the couch, easy. Trust and Will is designed by attorneys, but customized by you. One question at a time. All documents are state specific, legally valid, and start at just $159. That's not a typo. Find the plan that's right for you at trustandwill.com.
Do you have a box of videotapes, film reels, or photos that are degrading? Legacy Box professionally converts them to DVDs, thumb drive, or the cloud. Legacy Box is simple and safe, with over 1 million satisfied customers. Visit legacybox.com.
Organization designed for a lifetime of modern functionality. The Dresser by Thuma.
A company called Genies creates virtual identities in the digital world. They have cartoon-like avatars that have gained traction with celebrities like Paris Hilton and Justin Bieber. And now the company is announcing the launch of its Developer Kit application to enable developers to try and create augmented reality experiences. Joining us right now to talk about what this means is Genies CEO Akash Nigam, I should say. I'm sorry, Akash. Akash, thanks for being here today. The metaverse was so huge for a couple of years, and everybody was trying to find a way to play into it. I think Genies really grew up in that environment, but now it seems like everybody's chasing after AI. It's a little bit of a different environment. What has happened with avatars? What's happened with engagement, especially now that people have kind of come out from the pandemic and gone back to their lives?
Yeah, we've been building avatars since 2014, and we never really considered them to be an NFT or a video game character. We always considered them to be the next method of communication, and specifically actually for an augmented world, right? And so like when you think about what an avatar is supposed to accomplish, it's supposed to emanate new information and solve for presence. And so in our minds, like I think the metaverse was probably my least favorite word throughout the entire hype, because I feel like it was misconstruing the entire purpose for what an avatar is supposed to actually represent in the future of the internet.
But what have you seen just in terms of use? Because two things happened. The metaverse was big, and it was a big kind of investment theme that people were looking at. And you had people who were staying at home and doing things like playing video games much more frequently, spending more time online. That happened during the pandemic, and we've seen a lot of those trends shift. What has happened with the use of avatars?
So at least for Genies specifically, our engagement continues to rise. I think other metaverse projects that were cut were from big companies that were utilizing avatars more as profile pictures or futile use cases. We've always been leveraging an avatar as your second identity and really targeting Gen Z specifically. And so in our case, we've seen engagement rise. I think in other places where they've had to cut the metaverse projects, it's been because of their use case and their intention of the product.
Part of the reason we first got interested in you is you were able to generate some really big interest from some important players, people like Bob Iger, who invested some of his own money in you and joined your board when he was not running Disney and the time in between when he had stepped down. You, I think, have raised about $250 million from Bob Iger, from places like Silver Lake, and that gave you a valuation of $1 billion at the time. When was your last fundraise?
Last fundraise was last April.
April of this past year, or April 2022 or 2023?
2022, sorry.
Okay, and that's what gave you the valuation of $1 billion at that point?
Yep, 100%.
Okay. Do you need cash or are you set?
We're set. I mean, look, I think that round was quite opportunistic in the sense that we felt like we could double down on a lot of momentum that we already had. I think the way that Genies is considering its overall blue sky potential and mission is that we want to be able to deliver avatars to the masses. And that's why we're really excited to be able to use some of the capital to allocate resources to invest in some of the tech that we're announcing today to the dev kit, right? So there's three main components to the developer kit. There's one, the avatar framework, which is customizable high fidelity avatars. Two, we have a generative gameplay AI bot that is trained to be able to help developers convert their imaginations and some of their wildest dreams into effective mini game experiences. And then finally, there's the XR compatible tech. And the XR compatible tech is really important because it ensures that all of our avatars and their experiences will load performantly in an AR world. Again, we feel like the avatar, the concept of an avatar can realize its fullest potential when it can solve for presence. And that's going to happen inevitably when we're in our next era of hardware, which, Apple's event is coming up here shortly. And I feel like they're going to be a big indication of the times to come.
When you talk about total addressable market, Akash, I understand that it could, in theory, be every human being on the planet will want an avatar. But when we talk about what the market is currently, what is it? How many people actually go to the metaverse, will need an avatar there, or have an avatar that may be janky and want to replace it with one of the ones that solve for presence, for instance? What is the market right now, and where do you see that going in the next year or two?
Well, look, so I would say the word avatar has evolved tremendously over the years, right? So back in 2013, if I said the word avatar, people thought I was talking about the movie Avatar. Then you get to 2015, and then all of a sudden Bitmoji is able to popularize avatars as small comic strips and just a layer over a filter. What we're trying to do is really take that idea and go from a profile picture and really usher into a virtual being, right? And so I actually do think the total addressable market is every single human on Earth. However, I do think that every single method of communication is always popularized by the center of culture. And the center of culture is always going to be youth. And so in our case, our target demographic, and as you can see here from the avatars that are being loaded and all the avatars that have been used today by the different creators and some people that have access to our beta, are all Gen Z, and specifically female Gen Z. And so for us, it's a really good indication that we feel like this is resonating with a culture that eventually is going to be able to proliferate this to the other age groups.
Akash, you've integrated ChatGPT, artificial intelligence, into the workflows in the company. How have you done that, and how are things going?
I mean, it's going really well. I feel like any human that isn't ambitious enough to be able to leverage technology to help their core skill set is going to be replaced. That being said, every human has a safe haven of critical thought. And so being able to focus on that, right? I tell people at work all the time, I was like, I don't really care if you work 15 to 18 hours if only, 3 to 4 of those hours are critical thinking. I'd rather you work less hours and have a higher density of critical thinking time. And so I think the introduction of ChatGPT has been really good competitive pressure in that realm. And it also has served as a very strong operating partner as well, right? Of course, it can automate some of the mundane tasks, but I think what gets us really excited is when you can leverage ChatGPT for a lot of the creative roles as well. The second component of the dev kit that I just talked about was using OpenAI and ChatGPT, right? We trained a bot to understand the Genies ecosystem, the Genies avatar social network inside and out, to understand what is going to be an effective mini game experience within our entire network, so that any person, you don't even have to be technical. You can come to the bot, you can tell that your most personal story from your childhood, and the bot can then work with you through game mechanics and game theory to convert that story into a legitimate experience.
Is Bob Iger still on your board, or did he have to step down when he went back to Disney?
He came and went. He's no longer on the board, but he's a significant
Öyle sandı.
to his investment, as you alluded to earlier, and so we're very close to him. Yeah, I think he was on for around 9 months, but we're really excited that he, of course, chose Genies as his only stop, really, during his interim break with Disney. And so we still get, considering that he's so close to the company, we built such a strong relationship, we still, of course, get all of the advice, and I feel like all of the wisdom and the help that we would normally get if he was on the board. However, now it's just in an informal capacity.
Yeah, I guess it's tough to do a partnership, though, with Disney, since he has the investment in the company.
I actually think it was the other way around. I mean, it doesn't even matter, right? It's like it doesn't even matter to the extent that our priority right now is not a partnership with Disney. Our priority right now is making sure that we can continue to deliver avatars in our vision and in our mentality to every single person from culture possible.
Akash, thank you very much. Akash Nigam, again, is the CEO of Genies. Good to see you.
Good to see you, too.
Coming up, quarterly results due from Dick's Sporting Goods will bring you those numbers and reaction on Wall Street. Plus, Senator Ted Cruz will join us to talk about the debt ceiling debate, concerns about TikTok, and much more. Squawk Box will be right back.
Had enough? No, arthritis. Here, Aspercream arthritis.
Huh. Full prescription strength. Reduces inflammation. Thank the gods.
Don't thank them too soon.
Kick pain in the Aspercream.
What if buildings could tell you how they could be more efficient?
I'm listening.
Well, with IBM, you can use software to help you connect and analyze data from HVACs to elevators to lights.
What if we use AI-driven insights to pinpoint inefficiency?
Yep, and act on it. Saving energy, money.
And emissions.
Yep, that's a big one. Now you've built something better for everyone. That's the sustainability solution IBM and a global real estate company created. What will you create? IBM, let's create.
GetRefunds.com, powered by Innovation Refunds, can help your business get a payroll tax refund even if you got PPP. And it only takes 8 minutes to qualify.
I went on their website, uploaded everything, and I was blown away by what they could do.
GetRefunds.com has helped businesses get over $1 billion, and we can help your business too. Qualify your business for a big refund in 8 minutes. Go to GetRefunds.com to get started. Powered by Innovation Refunds.
This is the all-new, all-electric Lucid Air. A car that goes as far as it does fast.
Ja, låt oss stoppa, så drar vi og henter tingene i dag.
As sleek as it is.
Fortest mulig, klokka er 1.
As smart
Ja, da.
as it is beautiful. Introducing the Lucid Air. Experience the best.
We are a special breed, driven by something altogether different. The belief that one day, every last second of work will have been worth it. Because we all know one thing. Inside every golfer is a better one.
Sander. Skulle kjøpe PGS eller Axel Evolution og vente til morgenen senere. Jeg tenker meg kortsiktig så har jeg ikke gjort noen ting. Jeg ville ikke kjøpt så mye akkurat nå. Vente og se hva som skjer med gjeldstaket.
Last Call is really about spotting tomorrow's opportunities tonight.
Brian Sullivan hosts Last Call, weeknights 7 Eastern, CNBC.
Good morning. Still no deal on the debt ceiling, but both sides describing the meeting as productive, and more talks are planned. We'll get a live update from Washington. Warner Brothers Discovery launching its combined streaming service of HBO Max and Discovery Plus. It's simply titled Max. We're going to talk about the latest salvo in the streaming wars. And a fake image of an explosion near the Pentagon has some asking questions about generative AI and how it can be used for misinformation. We'll talk about what happened and what it means for the technology and what it means for the rest of us, too. The second hour of Squawk Box begins right now.
morning and welcome to Squawk Box here on CNBC. We're live at the Nasdaq market site in Times Square. I'm Melissa Lee along with Becky Quick. Joe and Andrew are off today. Who needs them, right? Take a check on U.S. equity futures at this hour. We're pretty steady state here with the S&P looking to lose about 2 at the open. The Nasdaq looking to be higher by just about 3. Of course, we are waiting with bated breath as to whether or not Biden and McCarthy can actually reach a deal ahead of the ex-date of June 1st. The bond market, 2-year note 4.39%, 10-year at 3.748.
More meetings, more optimism.
Taget vinst på dagsshorten har det
raise the debt ceiling or face trouble paying its bills. Kayla Tausche joins us right now with the latest on this. And Kayla, it sounded a little better yesterday, but this seems to ebb and flow.
Yeah, and it flowed again last night, Becky, and at least the conversation lines are open. Negotiators on behalf of Biden and McCarthy met again late last night, beginning at around 9 p.m. to try to build on that positive momentum established by the president and the House Speaker earlier in the evening, who, despite reaching no deal, both said that meeting was productive. Now, President Biden said there are still areas of disagreement, but that the two reiterated once again that default is off the table and the only way to move forward is in good faith toward a bipartisan agreement. McCarthy, speaking to reporters after the meeting, said that there is room to keep talking.
We're not saying, oh, let's bring something new into the discussion. Let's not talk about raising taxes. That's been off for a long time. We literally talked about where we are having disagreements and ideas. So to me, that's productive. Not progress, but productive.
The two sides are arriving at some common ground, sources tell CNBC and NBC News, namely unlocking up to $60 billion in unspent COVID aid. That had always been sort of low-hanging fruit, but also now reducing payments to insurers, physicians, and drug companies under Medicare. The White House estimates that, for one, negotiating more drug prices under Medicare alone could save up to $200 billion over 10 years. So it's not the $4.5 trillion that the GOP has been seeking with its basis point for starting negotiations. But Becky, it's a start. It's the middle of the Venn diagram, and the goal of negotiators is to try to widen it out a little bit to get a deal, or at least get closer to a deal before that June 1st deadline.
Kayla, we're waiting for the photo op later today when you actually have McCarthy and Biden.
Jeg gjør ikke noe tredd, så jeg bare sitter og ser. Jeg synes Mike det er for lite volum for meg. Jeg bare sitter og gjør en sånn kontrakt til ny, bare for å følge med. Jeg kan ikke trade på så små bevegelser. Det er alt for lite for meg.
In just a matter of hours to try to follow on to what they discussed. I mean, there's a lot of rubber that's meeting the road behind the scenes, hours that are being logged by the deputies that are negotiating on behalf of the president and the speaker. The challenge is that ideologically they're coming from much different places, and finding that common ground is going to be very difficult until there is real urgency. Now, the GOP criticized the White House yesterday and said that they didn't feel that the White House approached yesterday's meeting with urgency. Perhaps what we can read into that is they didn't believe that the White House is willing to compromise on any of its points. But certainly the reason why that we see these deals come together in the 11th hour is because, you know, neither side feels willing to blink and cave to that political pressure until they're right up against the clock on this.
Right, what do? Sit in a room for hours and say yes, no, yes, no? Or do they have to come up with something that isn't even on the table, nobody's thought of, to say here's a creative way that everybody can get a little something?
Well, one of the criticisms from the White House was that on Friday, right before those talks pressed pause and Republicans left the room, was that they re-entered the conversations that day with a bunch of new line items to bring to the table that were policy items that had been supported by the House Freedom Caucus, which of course is the Republican base, the highly conservative Republican base in the Republican House, and that the White House said, you know that those are non-starters for us. There's no sense in sitting down here and talking about those because
Tager vinst på Nasdaqen nå, ute. Må støvsuge? Ja. Ja.
You know, there have been situations where new items have been brought into the discussion that is simply just
Perfekt.
both sides.
Da er vi faen meg mål snart, da. Ja, den kommer. Da skal vi kjøpe den.
Kayla, thank you.
Vänta, kommer snart ut.
For more on the debt ceiling negotiations and the impact on markets, we want to bring in Libby.
Sander, er du fortsatt short, eller?
Head of US public policy at PIMCO.
Eller tok han gevinst?
What do you think? You're watching this in Washington, kind of wondering what's
Han
happening.
tok han
How do you
tap?
handicap this? Do you tell people that you think a debt default?
Jeg vurderer også å kjøpe her, men ta et
This
stopplås.
is a replay of we're going to deal.
Well, it's definitely it's clear as mud, productive, but not
Kjøpte her nede.
not progress necessarily. I mean, so this is the number one issue for our clients. I mean, we're all hearing this from our clients. We've been constructive in terms of folks actually reaching a deal before the X date. We just think that, while Kayla's absolutely right, there's no political incentive to compromise before you absolutely have to. There's also no political incentive to default. It's in no one's interest to see us breach the X date. So we remain constructive. We think the contours of the deal exist. It's just a question of filling in the details. And the details are sort of mind-numbing, I think, for kind of the markets. It's what baseline they're going to be using, the depth of these spending caps, how much do you slow future growth. They're actually important from an economic perspective. But we think we remain confident that they'll be able to get there and be able to get there before the X date. Now, there's also the possibility that they have a short-term deal, where just a short-term extension for the next 2 weeks, because of course the Senate's on recess right now and the House is supposed to be in recess next week. But we remain constructive. But we have to start, seeing these details be filled in, because we do think the market's going to start reacting if they don't.
Yeah, McCarthy, I think, is of the opinion that he is not bringing something to the floor that he can't pass with a majority of his caucus signing off on it, somewhere from half to 2/3 maybe signing off on that.
Right.
How tricky is that? That seems like it's going to be the hard nut, is getting something the White House would agree to that also half to 2/3 of the Republican caucus would agree to.
Right, and then presumably you have to get Democrats on board as well in the House, right?
Well, you probably don't need that many of them.
You don't need that many, but you still need some, right? So you need to provide cover to the Democrats, you need to provide cover to those moderate Republicans to vote for it, and then of course you need to provide cover to the White House. And this is why I think it's actually helpful that they're saying we're narrowing the scope of the negotiations. We're not going to be talking about immigration reform or tax increases, because those are both non-starters for each of the respective caucuses. So this is sort of, they're going to be kind of threading the needle here, if you will. We remain confident that they're going to be able to do it. And we think once there is a deal in principle, that folks will fall in line. Everyone understands that this is something that they just can't, this is kind of the stove that they realize is hot and they don't want to touch. So I think they all realize that they need to get this done.
So what's the actionable advice here? I mean, if it's the top question you're getting from people, it doesn't seem like it's had a huge impact on the equity markets to this point.
Not the equity markets. Now, of course, as you pointed out, the bills market has very much been dislocated, right? So you saw the auction yesterday at 545 on the 3-month. So we are sort of seeing some dislocation again, the front end of the yield curve. But broadly speaking, the equity market has been
ta gevinst på Dagsnytt jeg nettopp kjøpte. Vent da. Ute. Hæ? Ja, bare ta det.
People should also then just assume that there's going to be a short-term deal. And so that means that this sort of uncertainty will
Ja, det gjør vi. Det går bra. Konge, jeg sender en melding etterpå.
So I think if you don't see a deal in principle in the next, say, 48, 72 hours,
Vet du,
we might see a short-term increase. I think you probably would see...
Is that a reason to sell the market?
Again, I think that
ultimately a deal, do you just ignore all?
Well, and we have the benefit of being long-term investors, so we're doing something tactically, but for the most part, there's no big strategic shifts in our portfolio.
Would you buy if you did see a sell-off?
Well, I think we have concerns about just the slowing economy and sort of some of the fundamentals, going into the sort of the second half of this year. So from our perspective, I'm not sure it would necessarily be a buy, but again, we're not necessarily shifting any sort of portfolios as it is right now either.
Is there anywhere in your scenario where the U.S. gets downgraded even if we don't hit that X date? Because we could get downgraded. Fitch has said that we could downgrade the U.S. because of, dysfunction in the government. And we see in spades, really.
De som har flyttet bilen.
Yeah, so, what we saw, of course, in 2011 was that there was a downgrade, and that did, spur partly the sell-off. There was also the European debt crisis, and there was also big budget cuts, so I think people were worried about the recession. However, in 2013, when we also didn't see a deal until the day before the X date. I don't think people remember that. We had 2011, and then we also had a 2013 episode. 2013 episode sort of been a repeat of this, where there's just been these sort of languishing negotiations and what have you, but there was no downgrade. Moody's, I believe, has come out, say that they're not necessarily going to downgrade in advance of the X date, but of course, if we do breach it, then everything's on the table. And I do think, I mean, we don't mean to be sanguine about sort of the implications of a breach. We think that it would be, I mean, people have used catastrophic. That might seem hyperbolic, but we think it could be.
Thanks, Libby.
Thanks. Appreciate it.
Good to see you. Coming up, we break out results from Dick's Sporting Goods and then the latest development in the streaming wars. Warner Brothers Discovery launching its combined streaming service of HBO Max and Discovery Plus, simply titled Max. And later, Senator Ted Cruz and the debt ceiling, TikTok, China, and much more. And as we head to break, take a look at Eli Lilly's stock this morning. TD Cowen raising its price target to $500 from $430. Squawk Box, be right back.
Interactive Brokers pays up to 4.58% on instantly available cash in your brokerage account. How much interest can your bank or broker pay? Interactive Brokers' conservative and prudent risk management uniquely positions us to pay up to 4.58% on uninvested, instantly available cash in your brokerage account. The best informed investors choose Interactive Brokers. Don't be Wall Street's useful idiot. Leading banks and brokers are paying you interest rates that are obscenely below market rates. Why? Maybe they made long-term loans at lower rates and would lose money if they paid you higher interest rates. Or maybe they simply think their customers won't notice or care if they don't pay market rates. Whatever the reason, don't let them rip you off. Collect the interest you are entitled to. Move your account to Interactive Brokers.
Shark Tank, tonight starting 8 Eastern, CNBC.
Within the Asian culture, being blue-collar worker isn't recognized enough. So 12 Hell came about through my initial desire to break the Asian American narrative. I was always taught higher education was always the goal. The idea of us breaking old school rules to create new school standards really drives my team to be more ambitious. What I really learned through my journey here is believing in yourself, to develop the confidence so that you can do what you want to do is the ultimate financial security.
Do you have a box of videotapes, film reels, or photos that are degrading? Legacy Box professionally converts them to DVDs, thumb drive, or the cloud. Legacy Box is simple and safe, with over 1 million satisfied customers. Visit legacybox.com.
The perfect platform bed frame. Timeless design and modern functionality. Comes together in minutes. The bed by Thuma.
I'm Kevin O'Leary, and this is my bonsai garden. The only reason I have time to indulge in such a tedious yet zen hobby is because my companies have already received money from the Employee Retention Credit Program. But just like these fussy little shrubs, how you doing, Maxie? Filing for that money is a lot more complicated than it looks. If you own a business with employees, you need to look into this program. Go to wondertrust.com to see if your company qualifies. He says he's thirsty.
Welcome back, everybody. Dick's Sporting Goods out with quarterly results. Want to get the numbers right now from Courtney Reagan. Court.
Hi, good morning. Good to see you, Becky. Well, Dick's Sporting Goods is reporting their earnings here, and they are beating the street by a pretty wide margin, reporting $3.40 a share compared to the $3.18 estimates. But the beat is driven by a tax benefit largely. Revenues $2.84 billion, slightly above estimates of $2.8 billion. Comparable sales of 3.4%. That's a bit below consensus estimates for that growth of 3.8%. Transactions and average ticket, though, did both increase. And the athletic retailer is reaffirming its full-year earnings and same-store sales forecast. I spoke to Executive Chairman Ed Stack, who explained there's also some dilution in the earnings from the Moose Jaw acquisition from Walmart. That plus that tax benefit I mentioned is why Dick's Sporting Goods is only reaffirming its earnings forecast and not raising it even with this big beat this quarter. Now, Stack did say he's, quote, cautiously optimistic for the remainder of the year, but acknowledges you never know what's going to happen next. And while Foot Locker is hurting from Nike pulling back on some of the inventory that it allots to that retailer, Stack said Dick's Sporting Goods' relationship with Nike has, quote, never been better. And while Under Armour said it had to offer discounts to sell its merchandise, which hurt its margins in the quarter, Stack said that wasn't the case with the more premium Under Armour product that Dick's Sporting Goods sells. In fact, Stack said Dick's Sporting Goods, quote, didn't have to promote to drive sales, and that all of its customer segments have, quote, done pretty well for us. And we haven't seen people trading down as of yet. but we know it's possible. Now, gross margin was flat compared to last year, but it did come in better than expected. So a very different story for Dick's Sporting Goods than what we heard out of Foot Locker. Although, if you think about it, the merchandise mix is very different. Dick's Sporting Goods obviously sells more equipment and more outdoor-related items, and Foot Locker is largely footwear and apparel.
So the sports craze has not ended.
It has not ended. Ed Stack did say that he did see some pull forward for some of those core outdoor activity kind of items like kayaks. I mean, once you buy one, exactly. Once you buy one kayak, you're not going back next quarter for another one. So he does believe there was some pull forward from that. So those categories were a little softer, but by and large, the quarter came in as planned without a lot of surprises from the consumer, which it seems like is what happened with Foot Locker. Although BTIG does note that the Foot Locker consumer skews a little bit lower income than some of the other athletic retailers. So perhaps that's the group that's a bit more pressured.
Yeah, you think with Dick's, you've got kids who are going on to the next year of sports. You got to get the next bat size. You got to get the next basketball. You got to get the
That's
next
exactly what Ed Stack always says. He says our products are not as discretionary as you might think, especially when it pertains to kids items, or if you really are an athlete, you're a big runner. You know, you buy running shoes because they wear out, and then it's not good for your feet.
Right. It's interesting that because it's sold off along with Foot Locker.
Sure.
Foot Locker still has not recouped those gains. So even with this earnings report, that's not enough. It seems, at least at this point, to really alleviate those concerns.
Yeah, probably not. And I think that nuances that we mentioned with the earnings is interesting too, because it looks like such a wide beat when you just look at the numbers. But there was that tax benefit, and then the dilution from the Moose Jaw acquisition, and so only reaffirming their guidance, you know, is not quite a blockbuster signal for the rest of the year. And again, he used the phrase cautiously optimistic for what he's seeing.
Courtney, thanks.
Thanks.
Courtney Reagan. For a look at some other pre-market movers, let's get to Dom Chu. Morning, Dom.
All right, so let's stick with that retail theme because it continues to drive a lot of the pre-market action. Melissa, Becky, today it's America's second biggest home improvement retailer, Lowe's. Those shares are just down about 1.5% or so, just north of 10,000 shares of trading volume pre-market. It reported better than expected profits and revenues, but sales growth at established store locations, those so-called same-store sales, fell by more than analysts had forecast. Lowe's, by the way, also cut its full-year revenue forecast amid falling lumber prices and what also appears to be slowing demand from do-it-yourself customers. Now, on the positive side, Lowe's did report that growth in key sales numbers around professional contractors, those pros, as well as e-commerce platforms helped kind of power some of the results. But on balance, we're talking
Lagervinst ute av Dagsen. Erik Long der nede. Tok gevinst. Bare sånn smått. Bare for å være med.
10%, albeit thin pre-market volumes. The online customer review site and advertising platform is the target of activist investor TCS Capital Management, which plans to send a message to Yelp's board pushing for the company to sell itself. That's according to a report from the Wall Street Journal. So that activist move driving a 10.5% drive in Yelp shares. And then we'll cap things off with a check on an analyst call in oil and gas this morning. We're talking shares of Chevron just up about 1% or so, 3,000 shares of volume. The integrated energy giant and Dow component is getting upgraded by analysts over at HSBC to a buy. It was a hold. They cited the recent underperformance of the stock, creating an attractive entry point, and Chevron's expected path of maintaining both its share buyback program and pace of dividend payouts is attractive as well, Melissa. So Chevron on the oil and gas side, retail with Lowe's, and of course Yelp on activism. I'll send things back over to you.
You know, Dom, with a lot of activists, they push for change, but the TCS letter, according to the Journal, is actually very specific. They outlined, you know, the price at which a private equity firm could pay for it. It said that they could do a tax-free merger with Angie, or they would buy it themselves. I mean, it does seem like there's sort of a backstop or a floor in terms of this gain in shares.
Dere har sett en liten longen her nå på nytt.
Right, and not just that. Anytime you lay out, I mean, first of all, we
det gjorde
know
han
finance
ikke
is always
long.
about assumptions, right? So when they come up with those target numbers and they come up with evaluations, they're looking at comparable sales or comparable transactions in the past, things that they're also kind of looking at with regard to the company's operations and what they could kind of fine-tune. With the TCS letter, what's curious about this is whether or not you could actually see any kind of this move happening with a company like Yelp. Online advertising is something a little bit dicey these days. Becky.
Faen trekker det.
Dom, thanks.
Still to come this morning. Time to tune in. Warner Brothers Discovery launching Max today. Paramount Plus plans to fold in Showtime. We're going to talk about the next episode in the streaming wars and what it means for the media stocks. And no deal yet for the debt limit. Senator Ted Cruz will join us in the next half hour. Squawk Box will be right back.
Every time someone tells you they vacation in the same place every year, it should really make you wonder. Why? Travel like you mean it with IHG Hotels and Resorts. 18 hotel brands, 6,000 global destinations, one loyalty program.
Got this. Let's go. Gobble, gobble.
Hello.
I seen bigger legs on a turkey. Rude. Who are you? I'm an investor in a fund that helps advance innovative sports tech, like this smart fitness mirror. I'm also Mr. Leg Day 1989.
Anyone can become an agent of innovation with Invesco QQQ, a fund that gives you access to NASDAQ 100 innovations.
I go through a lot of pants.
Before investing, carefully read and consider fund investment objectives, risk, charges, expenses, and more in prospectus at Invesco.com.
The first time you made a sale online with GoDaddy was also the first time you heard of a town named Dinosaur, Colorado.
I just got an order from Dinosaur, Colorado.
Start an easy-to-build, powerful website for free with a partner that always puts you first. Start for free at GoDaddy.com.
Had enough? No, arthritis.
Here, Aspirin Arthritis.
Full prescription strength. Reduces inflammation. Thank the gods.
Don't thank them too soon.
Kick pain in the Aspercream.
What is N? It's a variable. A symbol of flexibility. Solving for the needs of today's investors. Finding opportunities across asset classes. Investing to sustain growth ahead of the unknown. That's the power of N.
We empower those who act. Those who see the correlation between upswings and downswings. Those who manage risk by meeting each obstacle with a perfectly executed strategy, a measured approach, the right tools, driving accuracy. CME Group, where risk meets opportunity.
Weeknights from Wall Street to K Street and Main Street. Get the stories behind the numbers.
Last Call is really about spotting tomorrow's opportunities tonight.
Brian Sullivan hosts Last Call, weeknights 7 Eastern, CNBC.
Paramount Plus will officially merge with Showtime on June 27th, and subscribers can expect a price hike. The combo was announced earlier this year. Showtime customers will get to watch Paramount content and vice versa. The price for the ad-free plan will go up by $2 to $11.99 a month. If you don't want Showtime, you'll pay $5.99 a month, $1 more than the current price. And meantime, Warner Brothers Discovery launching its Max streaming service today, combining HBO Max with Discovery Plus. Joining us now is Rich Greenfield, Lightshed Partners co-founder. Rich, great to have you with us. You got all these combinations. You got a multitude of streaming services now. Does this all just show you that Netflix is the leader, is out in front, has the lead?
Look, I think what you're seeing is everyone is recognizing that they need more time spent. That is the challenge of all of these services, right? You need time spent for two main reasons. One, if you're not watching something on a regular basis, you're far more likely to churn off, meaning cancel and then re-sign up later on. Also, if you want to raise price and actually make money, because a lot of these services were priced pretty inexpensively. So if you want to raise price, you need people that are so engaged they can't live without these services. They're using them every day. But a lot of these companies are struggling. A lot of these big media companies are struggling to spend the type of money that Netflix has spent. And so what are they doing? They're aggregating services. Disney's trying to, combine with Hulu. You're seeing Paramount and Showtime, as you just mentioned, Melissa. Obviously, Discovery Plus is now being pushed into HBO Max. So more and more of these services are aggregating because they're trying to drive and solve for time spent, which is especially important as all of these services are now pushing their advertising tiers. So a little bit cheaper comes with ads, but ads only actually make money for you if you spend a lot of time watching ads. And so you really need to center on watch time. That's what Netflix has been focused on for many, many years. And I think now you're seeing from all of the major media companies out there why Netflix has been so successful is that they dominate with 2.5 hours every single day of watch time.
They dominate with their content spend. I mean, it seems, Rich, that one could make the argument that they're solving for time spent, but they're solving for money not spent because they want the growth in hours on their platforms, but they don't want to spend the money for the content. Is that going to work out?
I mean, that's what, I mean, Melissa, I could not have said it better. It is very hard to see, you're looking at, Disney's kicking content off of its platform. Obviously, Warner Brothers already did that. They're trying to fix that now by, putting in some of the Discovery content. I think, look, I think what you're really seeing is all of the legacy media companies are scaling back their ambitions. I mean, I think if I was sitting discussing this with you 2 years ago, everyone was chasing Netflix. They wanted to be Netflix. I think what you're seeing now, and I think David Zaslav at Warner Brothers Discovery, now the Max service, they're really scaling back their ambitions. They want to have a streaming service, but their North Star is no longer Netflix. They're going to sell content to Netflix. Like just over in the UK, I saw yesterday morning, all of the Harry Potter series. So that's a Warner Brothers series. The Harry Potter series is dominating Netflix over in the UK. So it's not just about licensing to yourself, which was really the story of the last few years. They're taking a very balanced approach. I don't want to say giving up, but they are certainly, they are no longer chasing Netflix. And I think that's whether you're talking Warner Brothers Discovery, whether you're talking Disney, even Paramount. None of these companies are chasing Netflix the way they were 2 to 3 years ago. It's clearly helping their overall financial story at WBD. It's, the balance sheet is improving, pretty dramatically in 2023, but it's obviously also giving a big boost to Netflix investors because I think people essentially we believe they've won.
Right. If you're a legacy media company, though, and you were pursuing streaming because that was going to be your growth, your new growth engine going forward, and that's no longer the case, Rich, then what is?
Look, all of these legacy media companies have had a very long history of selling content to third parties. That's how they made tons of money for decades.
Så jävla... Jag är mer like... Ja, idag har jag gått lång och short. Sådana små.
Early momentum of Disney Plus, which came out of the gate with 10 million subs on day one. You look at the incredible success of Netflix over the last decade. I think they all got excited that they could do that too. And that it was, I don't want to say easy, but it could be replicated. And I think now you're seeing, hey, this is much, much harder. This is not as easy as it looks. We're going to take a more balanced hybrid approach of, we'll have a streaming service, but we're not going to have the world's largest streaming service. We're okay to be a smaller but profitable streaming service. That's, I think you heard that first from Zaslav. And now, in the last couple of weeks, you've heard it pretty clearly from Disney's Bob Iger. Like, they are just not going to chase the way they were. They're going to have smaller ambitions. Obviously, it's impacting the stocks. I mean, I think, certainly that growth engine that you sort of referenced, Melissa, is not going to be the same growth engine. But on the other hand, the profitability is going to be far better. And I just don't think they had the balance sheets to attack Netflix, knowing that their legacy cable network broadcast TV businesses do not have the sort of stability that they had hoped for. Those businesses with cord cutting, the shift of ad dollars, those businesses are challenged. And I think they're making the appropriate sort of adult decision to focus on their financial outlook and not really risk stretching the balance sheet beyond what is possible.
Rich, just really quickly, is there a future? I mean, that's pretty grim when you talk about it. What's the third party that they get to sell to down the road? If it's not going to be Netflix, if it's not going to be the cable carriage companies, what's the future hold?
Look, I think there are going to be a lot of players. I mean, look, I don't think Netflix isn't going anywhere. So Netflix is going to buy content from third parties. You're seeing Apple buy more content from third parties. I mean, I think, the Apple service is now spending billions of dollars a year on a lot of content that sort of feels HBO-like. They just had a big premiere of one of their movies, Killer Moon, at Cannes this past week. So I do think between Amazon and Apple and Netflix, there is going to be places to sell content. I think your fear, though, Becky, is a good one, which is, if all of these services start to cut back, do you end up having fewer places ultimately to sell content
Så stikker også
to?
hente
That fear has been out there for a long time. There
Hente
always
henger.
seems to be somebody who wants to buy great content. So I think if you make really good stuff, I think you always end
Det
up
så dødt.
finding buyers. That's what
Vi
history
blir bare
has shown
sittende.
us
Så har vi sett
throughout
på.
the entire history of television, whether it's been linear, broadcast, cable, streaming. If you make really good content, you find buyers, and I don't think that's going to be any different. And also there's windowing, right? You may put something on your service for its first run, and then you may sell back episodes to a Netflix. I mean, that's what you sort of has happened time and time again, is that you window content versus this focus on everything has to be exclusive. I know why Netflix does it, but even Amazon has started to shift their policy, and Amazon is now willing to license content to third parties, something that we never would have fathomed, 12 or 18 months ago.
Rich, great to see you. Thanks. Rich
Thank you.
Greenfield.
Still to come this morning, the debt limit negotiations, China, TikTok, national security concerns, all on the table for Senator Ted Cruz. He joins us. Plus, will the next Fed decision be too close to call? Mohamed El-Arian will tell us what he sees for rates, the economy, and the markets. That's coming up at 8 a.m. Eastern Time. By the way, CNBC is celebrating Asian American and Pacific Islander Heritage Month throughout the month of May, sharing stories of influential AAPI business leaders. Here's Sarah Wynn Coffee's supply founder.
At Nguyen Coffee Supply, our mission is to celebrate diversity and culture in the coffee industry. As a first-generation Vietnamese American, and knowing that Vietnam is the second largest coffee producer in the world, it is my passion to preserve my heritage while also sharing culture with the world. So as you're consuming Asian stories, cuisine, and beverages, remember that behind these products are everyday people and communities with rich stories and histories.
I'm so glad we did this.
I'm so glad we did this.
I'm so glad we did this. I'm so
Glad we did this.
Life is for living. Let's partner for all of it.
I'm so glad we did this.
Edward Jones.
10 years ago, we started Untuckit out of my apartment, and today we have more than 80 stores worldwide.
It's been quite a journey. We didn't just create shirts designed to be worn untucked, we perfected them. With great fabrics and design at the perfect untucked length, so you can look sharp in this new business comfortable world. Just look for our signature sale. Untuckit, 10 years in the making, and we're nowhere close to stopping. Visit untuckit.com or your nearest store today.
With Allegra, allergies don't hold us back. Allegra starts working 2 times faster than Claritin. And unlike Zyrtec, it won't make us drowsy, so you can live your greatness. And Allegra Hives works from the inside to relieve itching and reduce hives for 24 hours.
Your next best investment starts with CNBC Pro, the ultimate investing playbook. Scan this code or go to cnbc.com/pro for an exclusive offer now.
Do you have a box of videotapes, film reels, or photos that are degrading? Legacy Box professionally converts them to DVDs, thumb drive, or the cloud. Legacy Box is simple and safe, with over 1 million satisfied customers. Visit legacybox.com.
When the details take precedence, the rest falls perfectly into place. We strip away everything but the essential, and what we're left with are thoughtful bedrooms for modern living. Thuma.
Hi, I'm Mr. Wonderful. If you own a business and have employees, you need to check out the ERC program at wondertrust.com. There's money waiting for you. I did, which is why I have time to tend to my precious little trees. I'm such a good boy.
Sometimes one thing leads to another thing.
Da må du ikke lukke døra helt igjen, da.
With Roman, you can take care of erectile dysfunction discreetly. So whenever the moment happens, you're ready. Roman ready.
Hva er det du driver med?
BJ's Wholesale just
Hva er det du gjør for noe?
earnings coming in at 85 cents a share. That's in line with estimates. That's on revenue of 4.72 billion, which missed estimates of 4.8 billion. Comp Club sales, excluding gas, were 5.7% during the quarter, missing estimates of 6.1%. The company also reaffirming its outlook for the full year. We're seeing it trade slightly off, down by just about 0.8%. Let's get to the markets now with our next guest, Sylvia Jablonski, co-founder and CEO of Defiance ETF. Sylvia, great to have you with us.
Faen, du er jo frosset fast, jo.
We've been talking a lot about the jitters surrounding the debt ceiling and coming to some sort of a deal, and yet the market, the S&P 500, is holding on to around 4,200, Sylvia. And so I'm wondering if you think, you know, getting to a deal is actually a sell the news sort of event.
I think that the deal feels a little bit like a saga at the moment. I think that most investors believe that there will be a deal, whether it's, short term or a longer term permanent solution. I don't think that most investors believe that the U.S. will actually default on its debt. But in terms of your question specifically about a deal getting done, we saw what happened a few days ago where there was evidence that it sounded like a deal was going to get done, and the market really popped on that news. So I wouldn't be surprised if you get a short-term pop actually on an agreement here, but I don't think that that's necessarily, a start to a new bull market.
Er det noen som ringer på?
Like that, I think that there'll be some short-term momentum that would be positive for S&P and broad-based indices on a deal getting done.
We've gotten a lot of Fed speak, and we will get some more Fed speak with Dallas Fed President Lori Logan today, Sylvia. But, in terms of thinking about what Kashkari said, which is maybe a pause, but an indication that tightening could still come, in terms of Bullard saying possibly two more, he'd be in the camp of two more right now. Does that make a difference in terms of your view of the markets for the next 6 to 12 months?
It doesn't at this stage. I think that we're at the point where we're closer to the end of Fed tightening in terms of raising rates. And then, at that point, it's how long will the Fed keep rates restrictive. But in terms of markets themselves, we see where this is all going, right? So at some point, rates are going to be held higher for longer, but then reverse. So if you think about equities and positioning in equities, a lot of factors are leading to the idea that inflation is coming down, PMI, consumer spending, some loosening in the data. And I think that, it's a situation now where if you're looking to buy on the days that we have pullbacks, it might be a smart idea to dollar cost average because stocks are probably lower today than they will be 6 to 12 months from now, in my view.
Do you also think that is the case for technology? And I'm thinking of, like a Microsoft, for instance. Jefferies just raising the price target of Microsoft to $400 this morning. Alphabet also getting its price target raised over at Jefferies. I mean, these are stocks which have led the markets. Do you think that we will be higher in those names in big cap tech 6 months from now?
I do think we will, and there's a great argument that they've run up too much. But if you look back, last year I think was very much a bear market for technology. And what this year proved was that tech was undervalued. It was a
Skal ta gevinst på den ene Daxen min. Kjøpte Dax her nede. Ta gevinst på. Det er jo ikke noe. Det er jo ikke noe big deal. Sånn, nå er jeg ute.
Technological advancements that are being deployed
Der er vi ute.
and used in the economy. So I think growth can sustain in this sector.
Sylvia, thanks. Sylvia Jablonski.
Sitter inne med en liten dagspost igjen. Jeg handler bare for å være med. Det skjer jo ingenting. Jeg må hente noen sofa. Jeg bare la alt det rulle.
Before officials said no such incident had occurred. We'll talk about it right after the break. Squawk Box will be right back.
CNBC. Live ambitiously. When the closing bell rings, we're just getting started. Market analysis, insightful interviews. Closing bell overtime. Weekdays 4 Eastern, CNBC.
This is Real-Time Insights. I'm here with Kathy Gramling, EY America's Consumer Industry Markets Leader. Kathy, thanks so much for joining us. When it comes to the consumer, we're getting a lot of mixed signals right now. Pressured, but still spending. What are you seeing?
Well, you're right. Consumers are still spending, albeit on credit. And then we've got geopolitical tensions. We've got monetary policy, all suggesting we should be a lot less enthusiastic. Rather than focusing on the macro environment, we're saying to our clients, really take advantage of AI-driven scenario planning and build a set of no-regret priorities.
What are some of those priorities?
The top 3 that come to mind are, first and foremost, Continue to focus on growth and innovation. Second, obviously, cost containment, look in the supply chain. And then third, this is the time to really look at workforce resiliency. Robotics and AI have come a long way.
And how are you seeing all of this play out in your industry?
So I work with our retail and CPG clients every day. And when we think about this is the time to look at competitive advantage. And that is around emerging technologies, generative AI, Web3, social commerce. It is really clear in a capital-constrained environment, those companies who have placed their no-regret strategies versus the ones that haven't.
Kathy, thanks so much for sharing your expertise.
Thanks.
Weeknights from Wall Street to K Street and Main Street. Get the stories behind the numbers.
Last Call is really about spotting tomorrow's opportunities tonight.
Brian Sullivan hosts Last Call, weeknights 7 Eastern, CNBC.
Google CEO Sundar Pichai penning an op-ed in the Financial Times focused on artificial intelligence, saying AI is the most profound technology humanity is working on today, and it will touch every industry and aspect of life. Pichai went on to say, quote, while some have tried to reduce this moment to just a competitive AI race, we see it as so much more than that. At Google, we've been bringing AI into our products and services for over a decade and making them available to our users. We care deeply about this, yet what matters even more is the race to build AI responsibly and make sure that as a society, we get it right. Well, a fake image, speaking of AI, of an explosion near the Pentagon went viral yesterday on social media. The picture, which may have been generated using AI, caused the market to fluctuate for a brief time, and it's leading to a number of questions about the policing of misinformation. Steve Kovac is here to help sort this out. There's so many ways to go here because part of it on Twitter was it was retweeted by blue check accounts.
That's exactly it. This is almost as much a Twitter story as it is a danger of AI story, because the reason why this was able to propagate so quickly and hurt the markets yesterday was because the way Musk has changed Twitter. So you paid, $8 a month to get that blue tick mark. You get prime real estate in the app when people open it up. Therefore, you can just anybody with $8 a month can do this. So yes, Musk might be right that this helps weed out fake people, but it also gives everyone that air of authority, even if they don't necessarily deserve it. That's how this was able to propagate. By the way, we have an election next year. I don't know if Twitter is ready for this.
Yeah. You know, I even before this, we were talking earlier this morning, I was looking at stuff this weekend, fake accounts that are mimicking my account. That fooled me when somebody on Twitter pointed it out to me. It took me a few seconds to figure out that was not me.
Was it verified?
No, it's not verified, but I'm not verified. And they respond saying I should verify myself. Well,
what's the point? They can verify themselves.
This is why I deleted my Twitter account, Becky, because it's become, it used to be a cesspool. Now it's a cesspool plus whatever we're seeing yesterday.
Right. So it's how do you do this verification? Who's responsible for it if somebody fakes this and goes on with it?
They are so not ready for what's coming next year, especially with these AI
I was worried about
images.
this weekend, like just what you could potentially do with that, what you could go and try and move on the market. So the SEC is going to have to up its game and see who's doing what.
Exactly.
You know, there's just...
One of the accounts that retweeted this image was a fake Bloomberg account.
That's the one I saw.
With
a blue check.
Exactly.
And,
And
so,
for $8, you too can try and defraud anybody you want.
And send the markets lower, whatever you want to do. And there's no checks on it.
You mentioned the election, but I mean, we saw the slight dip in the markets, and the S&P 500 was down 0.3%. That's kind of small, but you know, you can impersonate an FDA commissioner about a drug that's in line for approval. You've seen these biotech stocks move in integers and you know, double-digit percentages. Imagine the power that you could have if you impersonated the right person and spread misinformation about. I mean, you can have a much deeper.
The fake Pfizer account.
Exactly. That happened a couple months ago.
There was a fake Pfizer account that said what? That they were going to be offering discounts for one of their drugs or not. I forget what it was, but it moved Pfizer shares.
Yeah, and part of the other thing is we just have to kind of inoculate ourselves to treat what we read on social media like we read a supermarket tabloid, right? And even journalists are still missing it. Just take an extra beat. Just because it has that blue tick now doesn't mean anything anymore. It just means someone paid $8 a month to make sure that tweet got in front of you.
But what's scarier is that, you know, all these companies are working so hard to make AI and generative AI so good.
Yes.
And the farther down we go that road, the more convincing every single fake tweet, fake video gets. and the more power the people have who are using this to convey misinformation.
And the cynical thing is, you just read that op-ed from Sundar Pichai. He's in Europe right now just to kind of talk about the regulation. They have an AI law that's being worked through right now. This was being discussed last week when I was down at Capitol Hill. It's like, how do we combat this? It's happening so quickly. They have their hands full. They're not equipped to handle it. One of the ideas is, let's have some kind of marker on these images to prove that they're AI, but you can just edit that out. That's not a perfect
If you're
solution.
a terrorist or a state-sponsored organization, this is not going to be. This is going to be a minor barrier.
This is great. Yes.
Yeah.
And again, on Twitter, Elon Musk's thesis is what we saw in the 2016 election was people were able to create, thousands of accounts that pumped a certain conspiracy theory. This will stop it, sure.
And he's right on that
And he's
count.
right on
He's
that,
right on
sure.
that count.
But what he doesn't account for is that air of authority a blue check marks gets. And
Look,
you
I
just
get
free
wanting
rein
to
do this.
be more egalitarian about all of it, but there are serious problems that are erupting as a result.
We are just not ready, Becky, and this is one incident of many to come.
Steve, thank you.
Thanks.
Up next, Senator Ted Cruz will join us on set for a wide-ranging interview, everything from the debt ceiling to China. And by the way, we're going to get him to weigh in on all of the technology issues we were just talking about. Futures this morning. At this point, you're going to be looking at down across the board. Dow futures off by about 57. The NASDAQ down by 18. The S&P down by just over 7. Squawk Box will be right back.
Meaningful actions are not always big. But one by one, they can add up to something incredible. Because when you tap or order online with your MasterCard at restaurants and grocery stores, MasterCard will donate 1 more cent up to $5 million to Stand Up to Cancer. As individuals, we are powerful, but never as powerful as we are when we come together. The strength of us, priceless.
The biggest ideas inspire new ones. 30 years ago, State Street created an ETF that inspired the world to invest differently. It still does. What can you do with SPY?
What do you see on the horizon? Uncertainty or opportunity? Whatever you see, at PGIM, we can help you rise to the challenges of today, when active investing and disciplined risk management are needed most. Drawing on deep expertise across the world's public and private markets in pursuit of long-term returns. PGIM. Our investments shape tomorrow, today.
If you have employees, you need to check out the ERC program, Chef Wonderful. Why, Mr. Wonderful? Because it's cash flow that you don't have to pay back. Good to know. This guy's so smart and so handsome. Go to wondertrust.com to see if you're eligible.
Sure, you should teach him to ride a bike. Then use Greenlight and teach him how to invest in bikes. Teach him to be smart about money, and he'll go far.
Super far! Oh, hey, Mom!
Navigate the world of money together. Invest in your best investment. Greenlight.
Do you have a box of videotapes, film reels, or photos that are degrading? Legacy Box professionally converts them to DVDs, thumb drive, or the cloud. Legacy Box is simple and safe, with over 1 million satisfied customers. Visit legacybox.com.
Listen up. Viagra works. That's why Roman offers Viagra and the generic option 100% online. Connect with a provider today to find out if treatment is right for you at ro.co/Roman.
President Biden's meeting with House Speaker Kevin McCarthy on Monday didn't yield a deal on a debt ceiling just yet, but both sides said that the talks were productive, and Speaker McCarthy pledged to speak with the president daily until a deal is done. For more on this, we want to bring in Senator Ted Cruz of Texas. He is the ranking member of the Commerce Committee and a member of the Foreign Relations and Joint Economic Committees. And Senator, thanks for being here on set.
Good morning, Becky. Good to be with you.
All right, we were just talking off camera, and I told you I'm so sick of the debt ceiling talks. Nobody really knows what's going to happen except for Kevin McCarthy and Joe Biden. Maybe they can work out something great. I will ask you, because we have to, do you think something happens? Do you think a deal gets done?
Look, I hope so, and I think it probably does. Right now, it's a game of chicken, and the question is who's going to swerve. I think the House passed a good bill. I'm glad House Republicans actually stepped forward and led. This was now several weeks ago. They passed a bill that raised the debt ceiling, but also that takes real steps to rein in the out-of-control spending. What has happened on the spending and debt side is crushing. It is unprecedented. And I think the House bill has reasonable and modest steps. It's designed to cut $4.8 trillion over 10 years. And I think it's a very reasonable piece of legislation. Obviously, the White House is not going to agree to it exactly, but I think it lays out a good roadmap of where they should go. The question is, you know, Joe Biden started off with a position he wouldn't talk at all, he wouldn't compromise, he was unwilling to consider anything. That was obviously unreasonable, and he had to fold from that because that didn't withstand scrutiny. Where we are now, I don't know if the White House is willing to be reasonable. I'll tell you what I've encouraged President Joe Biden to do, which is listen to Vice President Joe Biden. In 2011, the last big debt ceiling showdown we had, where Republicans held a line and said we need to rein in spending, it was Vice President Joe Biden who negotiated what was called the Budget Control Act, designed to cut $2.3 trillion in spending. And he sat down with Mitch McConnell and with the House Speaker, and they negotiated that deal. I hope Joe Biden as president has at least some modicum of the same willingness to do that. I'm worried that he doesn't have the ability to do it anymore.
Look, I will say honestly, this is going to be a negotiation that plays out. Kevin McCarthy definitely has a stronger hand because he passed the bill in the House. That gives him a stronger negotiating power. He is not going to take something to the floor that he can't get at least a majority of his caucus to sign off on. So hopefully the two of them can work some sort of a deal out. Look, I think we both agree that it's not a good scenario in any way, shape, or form if we default on our debt.
We should absolutely not default on the debt. And I will tell you, I am more worried now that we might default than I ever have been.
Really?
And the reason is I don't think Biden is up to the task. I don't think he's engaged in the negotiations personally and directly. I think
they're talking and sitting and meeting every day.
Yeah,
it may be later than we want.
His mental capacities are markedly diminished from even a few years ago.
Senator, don't make me go through this.
And what makes me worry is that I think the decision making in the White House is being done by a bunch of 20-something and 30-something little Marxists who don't have an appreciation for reality.
Oh, I told you I didn't want to dig into this. We're going to get stuck digging into this. I mean,
I will say
the same argument. There have been people who questioned the last president's ability to be able to have rational conversations and do these things. There were people who were talking about having him removed with the 25th Amendment. But look, he's in the room. He's making the talks. Hopefully we get something out of
I can tell you the reality. All right, when the Senate is in session, every Republican senator, we have lunch together. We sit around and talk about how virtually none of us have spoken to the president even once. He doesn't talk to Republican senators, and that's weird. We all know Joe. I was sworn into office by Vice President Joe Biden. He was a man of the Senate. This White House hides him, and it's unfortunate.
Did McConnell just meet with him?
McConnell had met with him briefly, but it is. I used to talk to Trump every week, sometimes every day. I spoke with Obama. I spoke with Obama regularly. It is weird. Lindsey Graham has flown all over the world with Joe Biden for 20 years. Lindsey hadn't talked with Joe. They keep him hidden. That's not disputed. Like nobody denies that they keep him hidden.
He's not doing media.
He doesn't do media. He doesn't do.
Just sit down with McConnell, and McCarthy is talking to him every day.
He also just went to the G7. It's not like this guy is hiding.
Hold on a second.
I don't want to be in the. I don't want to be in the corner of defending anybody.
He's intellectually acute and on things. Great. If he is, then he ought to do what he did in 2011. I don't think he is, and I'm worried because I think the young extreme staffers in the White House have no appreciation for just how damaging a default would be. And so I think they are quite willing to force a default because they think the media will blame it on Republicans. And I think that would be wildly irresponsible.
The talking points I hear all the time is that this would be much worse for the president to go into a default because he's the president who would get blamed in the next election cycle, which is why Donald Trump is urging anyone in the House to say no. Don't do this. Vote against it.
I don't think that's what the White House believes. I think the White House believes whatever happens, the media will blame it on Republicans. Whether that's true or not, I think that's what the White House believes. And one thing to be clear, Joe Biden today could take the chances of a default to zero. Here's what I think a responsible president would say. He would stand up and say, under no circumstances will we ever, ever, ever default on the debt, no matter what. The United States honors our commitments. Now, how could he do that?
He could do that by claiming the 14th Amendment and saying he's going to pay out. And I know you
except
disagree
that
with
would be
and I
patently
know-
unconstitutional. But he could do it in a very simple way that is clearly legal, which is that every month federal tax revenues coming into the federal government significantly exceed interest on the debt. And he could say, we're going to pay interest on the debt. We're not going to
We're not
default.
gonna pay everything else.
It's what's called prioritization. He could do that.
And they very, very well may get to that situation at the beginning of
They may get to that situation, but the reason that he hasn't said that, which he could say, he could take the chances of default to zero. The reason he hasn't is I think the White House is trying to scaremonger on this. They're trying to threaten default.
Well, not paying the rest of our bills would not be great either.
Well, but
do you
let's
stop paying the veterans? Do you stop paying the Defense Department? Do you stop paying the salaries of people in Congress?
Okay, not paying the salaries of people in Congress would actually be a pretty good step. So that I can agree with.
Those should be the first bills they don't pay, actually.
And to be clear, everyone agrees that the debt ceiling needs to be raised. But if you look historically, it has been the only leverage that has been effective in reining in out-of-control spending.
Look, it's a negotiating tool. I get it.
And it's the only thing that works. And given Squawk Bucks gets into the numbers, I think it's worth pausing for a second and reflecting at how different this is from the past. So 2017, total federal spending was about $4 trillion. Total federal tax revenue was about $3.3 trillion. Now, quick math, that means we had about a $700 billion deficit. That was 2017. Fast forward to today. Total spending has gone from $4 trillion up to $6.5 trillion, $6.4 trillion. Tax revenues have exploded. Tax revenues have gone from $3.3 trillion to $4.8 trillion. Now, quick pause to note, when we signed the 2017 tax cuts that I fought very hard to pass, every Democrat went on TV and said this is going to slash federal revenues and blow up the deficit. Turns out they were entirely wrong on that. Every year, federal tax revenues have gone up, and they've gone up from $3.3 trillion to $4.8 trillion. The problem isn't tax revenues. The problem is we had a spending binge from the Democrats that has caused the national debt to go from $20 trillion to $32 trillion in 4 years.
We did pass an infrastructure bill, a CHIPS bill, the ridiculously named Inflation Reduction Act.
Yeah, look, I voted against those bills. Those were mistakes.
You voted against the infrastructure bill, too?
Yes.
Okay, so there are people who would say even once we get through that, you got to cut the spending back because those are long-term projects that maybe even if they were in need of spending.
And by the way, if the infrastructure bill had focused on actual roads and bridges and infrastructure that we need, I would have happily voted for it. The problem was it was filled with all sorts of goodies for special interests that had nothing to do with real infrastructure.
So you said it. Squawk Box is all at the numbers.
Yep.
So is CNBC. So the S&P 500 is at 4,200. There seems to be a firm belief in the markets that a deal will be reached. It sounds like you're saying to market participants, brace yourself because we could actually go to default. That's a scenario that we are not pricing into the markets right now.
I agree. And listen, I think a deal will be reached. I think at the end of the day.
So even though you're saying Joe Biden's not going to be the vice president of 2011, you think a deal is going to be reached?
I think a deal will be reached, but I worry that the chances of a default are greater than they ever have been. I worry that this White House is reckless enough to force a default. I don't think that'll happen. I think that's less likely than not, but the odds are higher than we should be happy with.
Let's switch to technology. We were just having
Well, the discussion about what happened yesterday, the fake picture of the Pentagon being bombed. What else can you imagine under this scenario? How do you stop it? How do you make sure that this is not going to be something that we have to be worried about every day?
Oh, look, it's a brave new world we're in, and it is frightening. Between technology, the technology of deep fakes, between where AI is going, it's just going to be a very dangerous environment for the foreseeable future. And we're going to have real skepticism to almost anything you see to make sure it is real and accurate. It's not going to be that hard to suddenly have video of some politician saying something they never said, or somebody, people doing things that never happened. And so it's going to be incumbent it's actually why I'm a big believer in free speech, that if you have lots of people engaged, you can have real-time fact-checking. You remember one of the first big instances of this was Dan Rather back in, I guess it was 2004, where he had 60 Minutes, this big expose on George W. Bush with these documents. And, this was one of the first instances of, I guess it was a bunch of, bloggers in their pajamas who noticed the documents that he claimed to have appeared to be fraudulent. And it ended up within a couple of days revealing that they were fake and fraudulent documents. That was one of the first real illustrations to me of the power of the community of folks online being able to point to facts and correct them. And with new technology, we're going to need to do that.
It's easier to do that when you have a limited number of news sources and a bunch of people fact-checking them, when everybody is a news service, which is essentially what you have on a lot of these social media apps. That becomes, it's how something can get faked and spread instantaneously, and before you have the time to fact-check it. The stock drops significantly.
Yeah.
There's questions about security, something along those lines.
And I'd say yes and no. I worry about what has happened to much of the media. There's a reason I like coming on Squawk Box, because y'all actually talk about substance, and you get into it, and you guys are much, much less partisan than most of the other media outlets out there. One of the really unfortunate consequences, I think, of the age of Trump is that much of the media, Trump broke the media. That stations like CNN, MSNBC, they hate Trump so much that they've stopped practicing journalism. And I don't think that's good for America when people who are supposed to be journalists view their role as advocates pushing a point of view. Particularly in that context, I think it's important to have lots and lots of people where everyone can be a publisher and can press back.
So the media is broken, but back to the question, is there anything Congress can do about AI? Because misinformation can spread, and it's like shouting fire in a crowded movie theater. And in this case, it could be billions of dollars in market cap shaved off the stock market, a single stock. So many different ramifications here.
Well, it's not like Congress is going to be able to wave a magic wand and make AI go away. It's not like Congress is going to be able to stop criminal activity and make suddenly criminals go away either.
But you signed off on an amicus brief against Section 230, and I think that's a good start.
Absolutely.
Liable.
Yeah, look, Section 230 was passed at a time when the internet barely existed, and it was designed to protect a nascent industry and to enable it to grow. We now have big tech are these massive behemoths, the largest companies in the world, and the power they exercise, the monopoly control they exercise, and in particular 230, when it was passed, Congress assumed that big tech would be a neutral public square. In other words, it wouldn't be putting its thumb on the scale, it wouldn't be silencing some voices and not others, but it would let everyone speak. And the reasoning was, it's not fair to sue Facebook because of a comment you make or I make, because if you make it or I make it, it's not Facebook's fault. Now that's true if they're an open public square for everyone. What's happened is that big tech in recent years has decided to actively and aggressively censor speech and silence views they disagree with. And I got to say, Elon Musk's buying Twitter and making the Twitter files public was an absolute game changer.
If that is your view, though, about big tech and their ability to control speech, et cetera, then that should be even more of a concern when it comes to AI.
Yes.
They are the leaders in AI right now. They're the ones that have accrued billions of dollars in market cap because of the notion that they are in the lead on AI.
Yeah.
So is that a much bigger concern? And how does it factor in also? Because there's a thinking that if you constrain the development of AI in this country, that you're going to actually allow other countries, particularly China, to take the lead in this technology.
Look, I think you make a very good point, and I am quite nervous about constraining the development of AI. And are there very real dangers coming from AI across the board? Yes. I chaired the very first congressional hearing ever on artificial intelligence. The problem is, and is there a need for congressional action on some point? Almost surely there is. But the problem is most people in Congress don't understand this at all. Look, we don't do intelligence very well, much less artificial intelligence. And, the Senate, I think the median age is about 142. One of my colleagues on Judiciary referred to the internet as a system of tubes. you ought to be, we should be careful asking folks who don't really understand it to regulate it. I think Congress needs to get smarter. I think we need to have hearings. I think we need to consider testimony. But I think we should proceed slowly so that we don't go in and break things. The last thing I want is for China to get way, way ahead of us on AI because government regulators have gotten in the way. So it is reasonable to be worried about where AI is taking us, but I don't think Congress is going to fix the problem overnight.
Senator Cruz, want to thank you for coming in today.
Always a pleasure.
Good to see you.
It is just after 8 a.m. on the East Coast, and you're watching Squawk Box here on CNBC, taking a check on how we're going to open up 9:30. S&P looking to lose about 12 points. NASDAQ looking to be down by about 38. We've lost a little bit of ground pre-market here as we are awaiting any news on a debt ceiling deal. Let's bring in Mohamed El-Erian, the Chief Economic Advisor at Allianz and President of Queens College at Cambridge University. Mohamed, always great to see you.
Thank you for having me, Melissa.
You know, with the S&P close to 4,200, Mohamed, it feels like the stakes are even higher for there to be a deal on the debt ceiling and for there to be a deal before this X date, just because of the valuations that we are at right now.
I totally agree. First, the only people who benefit from this debt ceiling saga are the adversaries of the United States. We are sending a very negative signal about our ability to run our economy, let alone be an anchor for the rest of the world. And the market so far has actually dealt with it very well. There's three big uncertainties: the debt saga, whether the Fed is going to hike, pause, or skip at its next meeting, and of course, what's happening to credit. So I look at this market, and actually I'm very impressed by how stable it has been over the last month.
You know, it's interesting that you mentioned, you know, the beneficiaries or adversaries, and I sort of heard the same commentary from Lori Calvasina of RBC yesterday, who said that U.S. investors are pretty sanguine when it comes to the debt ceiling, the belief that there will be a deal in place, but international investors are much more worried. Is this going to be a permanent harm in terms of the perception of the U.S. markets, or is this just going to be, oh, you know, it happened in 2011, it happened in 2017, and this is just another time?
You know, if it was happening on its own, I would say it would be very transitory, to use that awful word. But it's not happening on its own. There's other things happening. You know, people still remember that the global financial crisis originated in the U.S. People still remember that the trade tariffs that went against international law originated in the U.S. in 2017. People still remember that we had a banking tremor not a few weeks ago. So it's starting to add up. And this is important because already certain countries are embarked on building little pipes around the dollar as the reserve currency, China being the lead example of that. So we've got to be careful. We must not give the rest of the world one excuse after the other to try to de-risk from the U.S.
So there are a couple of ways of looking at the S&P 500 and how far it's come and how well it's held up. One way is to say, you know what, it's stronger and more resilient than we think. Or another way to look at it is that we are much more vulnerable because of the heights we are at right now, because of the concentration of the gains in the large caps at this point. What's your view of where we are?
I mean, you're absolutely right. It gets even more so because the S&P has been anchored by what I call all-weather names. Tech in particular, that is seen as doing well, that is seen to benefit from the AI theme, and that is seen to be able to generate revenues almost regardless of what's happening in the broader economy. So you have a situation where you've had a few names anchor the market as a whole, and then people are waiting. So this is what I call an unstable equilibrium. It's going to go one way or the other. Hopefully, the S&P will go higher because these things are going to resolve to the positive side. But it is uncertain. We are fairly priced for what we don't know, and we just need to figure out when are we going to find out, including the Fed. The Fed is going to play a very critical role here.
Well, fairly priced. I mean, I actually thought, Mohamed, you were going to say we are overpriced. So it's surprising to me that you said fairly priced. Why do you think we are fairly priced on the S&P?
So I've said for the last 6 weeks on this show, we are fairly priced. And I have been consistent in that view. Why? Because there's a lot of good things happening in the U.S. economy. The labor market remains strong. There's a lot of entrepreneurial activities going on. There is reason to be positive about productivity gains. So if we can just stop shooting ourselves in the foot there is a runway for a bumpy journey to a better destination. We just have to stop shooting ourselves in the foot.
So good news is good news, Mohammed, finally, in the markets. When it comes to Fed rate hikes, though, I mean, are we going to be fairly priced if 2 more hikes come down the pike, as James Bullard is saying, or are we going to be fairly priced if it's 1 hike, but also the indication that there could be more to come? Or do we need to see a pause, a full stop pause, in order to say that we are fairly priced?
So of the 3 things I mentioned that are uncertain, the debt ceiling, what the Fed is going to do next, and what's going to happen to credit, to the economy, it is the Fed that's the most difficult to resolve. This is a Fed that has been inconsistent. It has made mistakes in its analysis, in its forecast, in its communication, in supervision. And it's very hard to predict. So, Melissa, I don't know what the answer is to that question because I don't think the Fed itself knows what it is.
Fair enough. Mohammed, thanks. Mohammed El-Erian. Coming up, Zoom CFO Kelly Steckelberg, fresh off first quarter earnings. Squawk Box will be right back.
Payday. A big moment for your employees and a big moment for you. And it all happens thanks to the experts at Paychex. When it's time to add a new member to your team, the Paychex suite of next-generation HR solutions can handle it all for you. And when you want to get your employees the benefits they need, Paychex does that too. 50 years and thousands of experts in payroll, HR, benefits, and insurance. Sign up today for 2 months free at paychex.com/future.
If you have diabetes, getting on Dexcom is the single most important thing you can do. It eliminates painful finger sticks, helps lower A1C, and is covered by Medicare.
Before using the Dexcom G7, I was really frustrated. All of that finger pricking, my A1C was still stuck.
My diabetes was out of control.
Dexcom G7 sends your glucose numbers to your phone or Dexcom receiver without painful finger sticks. The arrow shows the direction your glucose is heading, up, down, or steady. And because Dexcom G7 is the most accurate CGM, you can make better decisions about food, medication, and activity in the moment.
After using the Dexcom G7, my A1C has never been lower. I lead line dancing 3 times a week, and I'm just living a great life now.
It's so easy to use. Dexcom G7 has given me confidence and control that everything I need is right there on my phone.
Dexcom is the #1 recommended CGM brand. Call now to get started on Dexcom G7.
Hi, I'm Jay Jackson. For almost 20 years, Abacus Life has been purchasing life insurance policies from seniors. And in just seconds, you can use the free calculator at abacuspays.com to learn what your policy might be worth.
For many of my clients, selling their life insurance to Abacus was right for them and their estate plan.
Don't sell or lapse your policy without going to abacuspays.com first. There are no fees and no obligations. Get the real value from your life insurance when you need it with Abacus.
False or misleading search results can negatively impact your life. A bad online reputation can put you at significant risk of losing job opportunities or new customers. Reputation Defender helps clean up your search results, wiping away negative first impressions, allowing truthful, positive content to rise to the top. Don't you deserve to have more control over how you're represented online? Get your free reputation report card at reputationdefender.com or call 1-877-866-8555.
Let's get to some earnings movers. Lowe's out with first quarter results. The company topped Wall Street profit and revenue expectations, but Lowe's did cut its full year outlook as lumber prices fell and do-it-yourself customers bought fewer discretionary items. Comp store sales fell 4.3% in the first quarter. That's worse than what many analysts expected. The stock is down by 1.25% right now. In the green is Dick's Sporting Goods. That company also topping Wall Street sales and profit estimates. Same-store sales missed, but Dick's affirmed its full year earnings guidance and its expectations for comps. The stock is up 2.33%.
When we come back, an interview with the CFO of Zoom straight off first quarter earnings. But next, United Airlines prepping for its busiest Memorial Day ever. Phil LeBeau is live at Denver's International Airport. Phil, how's it going so far? What's the traffic look like?
It's a mess in terms of getting through security, not in terms of flights. And that's part of what we're going to talk with Scott Kirby, CEO of United Airlines, about the growth here in Denver. It is close to becoming United's largest hub. Is the airport ready for it? We'll talk about that when Squawk Box returns.
Hi, I'm Terry Bradshaw.
And I'm Rocky Blyer.
And I'm Colonel Greg Gadsden.
On this Memorial Day, our heartfelt thanks to all of our military veterans for their service.
We honor our veterans and those who no longer are with us.
To all of our military serving around the world, thank you for defending the many freedoms we enjoy.
Tune in to Salute to Veterans for discussions about the issues our military veterans face daily.
I'm Jordy Crooks, strategist at AmericanEagle.com. Our clients have complex website and digital needs. Ron John Surf Shop needed a new, fully integrated e-commerce solution that was mobile-friendly and engaging. We solve digital challenges like this all the time. We built an e-commerce website for Ron John Surf Shop, centered around the customer experience, leveraging powerful marketing, merchandising, and promotional tools. For complete website and digital solutions, come to AmericanEagle.com.
Hi, I'm Mr. Wonderful. If you own a business and have employees, you need to check out the ERC program at WonderTrust.com. There's money waiting for you. I did, which is why I have time to tend to my precious little trees. You're such a good boy.
Weeknights from Wall Street to K Street and Main Street. Get the stories behind the numbers.
Last Call is really about spotting tomorrow's opportunities tonight.
Brian Sullivan hosts Last Call, weeknights 7 Eastern, CNBC.
I was paying for in-flight Wi-Fi for months before I finally caught it. Rocket Money uncovers hidden subscriptions and notifies you when a charge is upcoming. From there, you decide if you want that service. And if not, cancel it right from the app with one tap. Download Rocket Money, the money app that works for you.
If you have employees, you need to check out the ERC program, Chef Wonderful. Why, Mr. Wonderful? Because it's cash flow that you don't have to pay back. Good to know. This guy's so smart and so handsome. Go to WonderTrust.com to see if you're eligible.
Thuma, defined by simplicity, meticulously crafted to be enjoyed for years to come. Thoughtful bedrooms for modern living.
Sometimes one thing leads to another thing. Then all of a sudden, it's on. With Roman, you can take care of erectile dysfunction discreetly. So whenever the moment happens, you're ready. Roman ready.
United Airlines betting on its fastest growing hub to help handle what is likely to be a record-breaking Memorial Day weekend for travel. Phil LeBeau joins us right now with a special guest. Phil, good morning again.
Good morning, Becky. Scott Kirby, CEO of United Airlines. We got through security.
We're
did.
Here. A lot of people down there, weren't there?
Yes, a lot of my friends for about a half hour. Let's talk about Memorial Day weekend. 2.9 million passengers is what you're expecting. Busiest ever for United Airlines. There's no slowdown in demand, is there?
No, demand is really strong right now. The consumer is strong. You know, we've had this month 6 of our 10 biggest booking days in history. The other 4 record days were in March before Silicon Valley Bank. Demand is really good. Bookings are strong. It's going to be a busy summer.
Part of the story today out here is the fact that you're adding, 12 new gates. You're adding more flights, especially to some smaller markets. As you were doing this, is there a concern that you know the demand is there, you want to add the flights? This is an example of an airport where there's some physical constraints here, and it makes the flying experience, maybe not with United, but getting through security, a real mess.
Yeah, look, most of the time the security situation is working okay around the country, but it is a growing problem. We've had I called it a skunks work team. I'm talking about it on national TV, so it's not really skunk work. Team working for about 2 years on the next challenge that we see in aviation. There's plenty of challenges, but we're going to double the amount of passengers that we're carrying versus pre-pandemic within a few years. It's just airport constraints and facilities, and checkpoints are a perfect example. And the lesson from that, we are working with airports to improve it, but we got to build efficient, functional. It's nice to have a lot of shops on the ground floor when you're standing in security, but it's a lot better to not have lines that go out the door.
And that's going to take years to remedy.
It's not going to get fixed overnight. I mean, there's a lot of work going on. Newark is a perfect example where we started working with the Port Authority in Newark, and there's huge improvements. That situation is 20% more seats there than we've ever had before this summer. but the security situation is significantly improved, even with 20% more seats.
Let me ask you about the DOT now saying that it wants to it's proposed a rule where there are going to be fines and there's going to be cash payments to passengers who are delayed, excessive delays. Similar system to what you see in Europe. When you look at that, do you look at it and say, good for the passenger? Obviously, no airline wants to pay if there's excessive delays, but you will. Or do you look at this and say, this is part of the problem? The FAA also needs to step up to the plate here.
Yeah, look, we already take care of our passengers on things that are within our control. And the United, at least, is running the best operation we've ever run in our history. We've got 10% more pilots per block hour, double the amount of spare investment this year, 25% more spare aircraft. The biggest issue with us is air traffic control. Every day we wake up to air traffic control delays that flow across the system. And I think the more important issue on this is really about safety. We've built the safest system in the world. We shouldn't chip away at that foundation by asking our employees to balance safety with cost. We have a culture where we just don't do that.
But you know that the FAA is going to come back and they're going to say, look, we've hired air traffic controllers. We've got more who are coming on. We've got the staffing.
Well, look,
but you're saying they don't have the staffing.
Well, the Secretary of Transportation said a week or two ago that there are 3,000 air traffic controllers short. We experience it every. It's not their fault, by the way. Like, this goes back 20 years. We've been understaffed for. There's fewer air traffic controllers today than there were 30 years ago. And we just have to fix that. That's the issue. We all know that's the issue. We just need to get that fixed if we're going to really have an impact on this on delays.
Scott, Becky has a question for you.
Yeah, Scott, your prediction that you are going to, I think you said, double passenger miles or travel miles from pre-pandemic in the next couple of years. I don't see how that's possible because things are bursting at the seams right now. None of these are fixes that can be corrected anytime soon. I'm talking about getting through security. You're talking about getting your bag back from these places. You're talking about being transported once you are back in the airport, trying to get from one place to the next. You use Newark as an example. I flew through the new B terminal there and took forever to get the luggage, and then there's no connection because the monorail system has not been connected there and is not going to be for years. I mean, you're talking about some major hurdles to getting to that goal. What makes you think you can possibly get there?
There are. You should be flying out of the A and C terminals on United in Newark, Becky, and then it goes a lot smoother.
No, but it was on United. You flew me back into the new terminal.
Oh, it's Terminal A, I think.
Terminal A, okay, new Terminal A.
But in any event, Terminal A is a good example of there is a lot of progress being made, and Terminal A is a good example of it's open yet, but everything about Terminal A is not open yet. So it's not up to 100%. But that's investments that started years ago that are beginning to pay off. And so I think that's the point. And when I say we're going to double the traffic, that's, by the time we get to 2027 versus 2019. And so we have time to work on all these things. And there are projects underway really around the country. We've got a big expansion going on in Washington, Dulles. A lot of the growth, take a market like Dulles, is going to occur during the off-peaks. Instead of having 4 banks a day, it'll have 7. So there are ways to grow, but it is going to require investment at airports, and that's what we spend a lot of time, our team, working with airports to make investments, to have more ability for passengers in airports.
What about the FAA, though? They have already said that you're going to have to fly fewer flights into the New York metropolitan area. Even if you fix the airports, what's going to fix the FAA system to allow more flights to take off?
We need to get an FAA reauthorization bill that gives them money for technology and staffing. This is the one I'm the most worried about. At United, we have the advantage of we can double our passenger count. We're getting rid of over 300 regional jets. And so while we can reduce our impact on the number of flights in the system by upgauging, so we can carry more passengers by flying bigger airplanes. But this is by far the biggest structural issue that I'm worried. We see it this summer. It affects United, impacts every airline. This is going to be the ultimate limiter on growth here in the United States because the air traffic control system is near capacity. There's ideas like let's limit private jets. Like why do private jets fly into Newark? It's crazy. But that's going to be the limiting factor.
We're playing the music, playing our song to get out of here. Scott Kirby, CEO of United Airlines. Guys, we'll send it back to you from a very busy Denver International Airport.
Good luck, Phil. Thank you. When we come back, former White House Chief of Staff Bill Daley weighs in on the state of negotiations over the raising of the debt ceiling. We will be right back.
Only at Vanguard, you're more than just an investor, you're an owner.
That means your priorities are ours, too. Our retirement tools and advice can help you leave a legacy for the ones you love. That's the value of ownership.
Hi, I'm Terry Bradshaw.
And I'm Rocky Blyer.
And I'm Colonel Greg Gadsden.
On this Memorial Day, our heartfelt thanks to all of our military veterans for their service.
We honor our veterans and those who no longer are with us.
To all of our military serving around the world, thank you for defending the many freedoms we enjoy.
Tune in to Salute to Veterans for discussions about the issues our military veterans face daily.
It's hard to run a business on your own. Make it easier on yourself. With Shopify, you can have everything you need to streamline your shipping, returns, and product storage so you can focus on growing your business. Because when we work together, the future is bright. It doesn't have to be lonely at the top. Join the millions of finding success on their own terms. Start your journey with a free trial today.
I'm Matthew.
I'm Melissa, and together we started Fresh Clean Threads.
Since day one, our Fresh Clean tees were made to offer a flattering fit for all body types and not break the bank. Unleash your confidence at freshcleanthreads.com.
Organization designed for a lifetime of modern functionality. The Dresser by Thuma.
Squawk Box, weekday 6 a.m. Eastern on CNBC and streaming live on Peacock.
Let's say they do create some digital superintelligence. Well, who's in control?
Artificial intelligence is going to create a productivity boom that we've only seen a few times in the last 75 years.
I feel, yes, it's moving fast, but moving fast in the right direction, where humans are more in control.
We're doing everything we can to make sure we're ready for autonomous when it comes. You might be surprised that it comes over the next couple of years a little faster than you think.
Coming up, breaking economic data from the Philadelphia Federal Reserve, and the CFO of Zoom will join us on first quarter earnings. Stay tuned. You're watching Squawk Box on CNBC.
When you really philosophize about it, there's only one thing you don't have enough of. Time is the only truly scarce commodity. When you come to that realization, I think it's very important that you spend your time wisely. And what better way of spending time than traveling, continuing to educate ourselves and broaden our minds.
Viking, exploring the world in comfort.
Are you sick of UTIs? I had 8 in 1 year. This inspired my husband and I to start Eucora.
Eucora makes a UTI emergency kit to manage your symptoms until you can see a doctor.
If you get UTIs, try Eucora. Eucora saved my life.
Try today at eucora.com.
Hi, I'm Terry Bradshaw.
And I'm Rocky Blyer.
And I'm Colonel Greg Gadsden.
On this Memorial Day, our heartfelt thanks to all of our military veterans for their service.
We honor our veterans and those who no longer are with us.
To all of our military serving around the world, thank you for defending the many freedoms we enjoy.
Tune in to Salute to Veterans for discussions about the issues our military veterans face daily.
Today, CEOs convene for CNBC's Premier Council Summit. Exclusive one-on-ones with Apple's Eddie Q and Nike's John Donahoe, plus a deep dive into the world of AI. CEO Council Summit. Coverage all day today, CNBC.
I'm Mr. Wonderful, and I'm Chef Wonderful. What does ERC stand for, Chef Wonderful? The Employee Retention Credit. What else does it stand for? Cash flow. This guy's so smart and handsome. Go to wondertrust.com to see if you're eligible.
Sure, you'll teach her how to drive a car. Then use Greenlight to power her independence with crash detection with 911 dispatch, family location sharing, and emergency SOS alerts. Invest in your best investment with Greenlight.
I'm Mr. Wonderful, and I'm Chef Wonderful. What does ERC stand for, Chef Wonderful? The Employee Retention Credit. What else does it stand for? Cash flow. This guy's so smart and handsome. Go to wondertrust.com to see if you're eligible.
Welcome back to Squawk Box on CNBC. We're just seconds away from some business survey data from the Philadelphia Fed, taking a check on how we are set to open right now. S&P looking to lose about 8 at the open. The Nasdaq looking to be down by about 25, and the Dow looking to be off by about 54 points. Checking on the 10-year, we've got the 10-year at 3.755, the 2-year at 4.391%. Rick Santelli standing by to CNBC in Chicago. Rick, the numbers, please.
Yes, Philly Fed, non-manufacturing. This is the service sector, what most are paying closest attention to, especially the Federal Reserve. And if the Federal Reserve is watching closely, we all need to watch. Minus 16 is the May read, minus 16. That compares to minus 22.8 in the rearview mirror and still unrevised. And what's notable about minus 22.8 is that it was the lowest since Dece of 2020. So these levels are not good. Minus 16 is a bit of an improvement, but do keep in mind, we've only had one positive number going all the way back to July of 22, and that was for the month of February of this year, and that was 3.2. So you can see the numbers are weak and small, but it is a subtle improvement. Interest rates, as you see, hovering at 3.75 for a 10-year. Melissa Lee, that means we're up 31 basis points month to date from the closing levels of the last day of last month. On a 2-year, it's up 38 basis points month to date. So we have seen some very, very large moves. And of course, they've pushed mortgage rates higher. We're going to be having some housing numbers yet to come out at 10 Eastern in the form of new home sales. And I do want to point out one more thing, and of course, that would be that as interest rates continue to move up, we see the curve inversions continue because 2-year notes and short maturities have once again grabbed the lead on what is proven to be a very stubborn Federal Reserve when it comes to flagging anything on the pause side, which we're all speculating, of course, but yet still 2-year note yields leading the charge for higher rates and lower prices. Melissa Lee, back to you.
Rick Santelli, thank you. Let's go now to a call by the former chairman of the Federal Reserve, Ben Bernanke, in a new paper authored with the IMF's former chief economist. Bernanke argues a soft landing is still possible for the U.S. economy. Steve Leisman has more on this. Steve.
Hey, Melissa, good morning. Two of the world's top economists in a paper that looks at the sources of the pandemic-era inflation conclude it's possible to escape it without a massive rise in unemployment. It's going to be difficult, but that would be part of a key part of a soft landing. Former Fed Chair Ben Bernanke and former IMF Chief Economist Olivier Blanchard, they conclude in a Brookings paper that supply shocks combined with government stimulus, easy Fed policy, and a consumer preference for goods, that's what caused the inflation outbreak. It was not at least driven by tight labor markets, but that's changing according to the two. The paper says from as early as 2023, tight labor market conditions still accounted for a minority share of excess inflation. But according to our analysis, that share is likely to grow and will not subside on its own. The portion of inflation which traces its origins to overheating of labor markets can only be reversed by policy actions. Policy action, of course, means tighter Fed policy. So the two economists are backing what the Fed is doing right now implicitly. The more interesting idea, how much unemployment will have to rise to conquer inflation? The two have at least one optimistic scenario, and I'll give you that one. For reasons not fully understood, the job worker matching process become less efficient. That is, we have a high job vacancy rate and a low unemployment rate. If that shift were to be fully reversed, it could bring down inflation over time without a significant increase in unemployment and immaculate disinflation. Alternatively, if we don't get back to a place where you have this normal relationship restored between openings and unemployment rate may have to rise further from the current level of 3.4 to as high as 4.3, maybe stay there for some time. Fundamentally, that would mean reducing job openings, but not jobs. That's a key idea, Fed Chair Jay Powell. So at least, Melissa, it's out there as a possibility, though just one of three.
So so what is the worst case scenario according to their research?
You rise. The unemployment rate goes up by a percentage point or more. It has to stay there for a while to wring inflation or the labor market portion of inflation out of the inflation problem.
How much of this, though, Steve? I mean, it sounds like they're trying to predict something about a situation that is still fluid. We still don't know if the Fed will continue to hike, if they will continue to hike and then pause, or hike 2 times, or whatever it is. And so, saying that this once, it just seems kind of premature. It seems sort of like a moving target.
Okay, so to be fair to the authors, Melissa, they acknowledge the situation is fluid. They say a lot of things have to fall into place. If you read the paper, I'm, of course, just getting it down into a 90-second version of a 50-page paper here. So just to be fair, what's happened is there's a very strange relationship. Usually when job openings fall, the unemployment rate comes down or goes up because there's fewer job openings. We have this incredible ratio of high job openings to unemployment. And they talk about an inefficiency in matching workers and jobs. Before the pandemic, we were much more efficient. So what they're saying, and it's not a crazy idea, Melissa, is we get back to being as efficient as we were of matching workers to job openings. And that's not a crazy idea. If that can happen, perhaps we can get back to a lower inflation rate, not driven by higher wages and, of course, low unemployment.
Sorry if I'm being obtuse about this, Steve, but it sounds like the unemployment rate it's not a valid number almost. That there are things that are making it look even lower.
I'm not sure that's accurate, Melissa.
Okay.
I think the unemployment rate seems to be what it is. In fact, some people over the years, and I've been doing this for a couple decades now, say you can crunch and look at all the jobs numbers you want. The thing that tells you the most that you need to know about the job market is the unemployment rate. And it is low, and I think it's real. It's the only thing we have to really gauge what it is. It's a survey of people around the country, and it keeps coming back low and lower. So I don't know what alternative data would suggest that it's not real.
All right. Steve, thanks.
Pleasure.
Steve Liesman.
All right, no deal on the debt ceiling between President Biden and House Speaker Kevin McCarthy, but McCarthy called the latest meeting between the two men productive. Meanwhile, Treasury Secretary Janet Yellen affirming a week from Thursday as the earliest date that the U.S. could be at serious risk of default. Joining us right now with lessons from the debt crisis of 2011, former Obama White House Chief of Staff Bill Daley, of course, also the former Commerce Secretary. He's now Wells Fargo Vice Chairman. But Bill, let's put on your hat of Chief of Staff and try and look at this from just a practicality matter. What needs to happen? What do you think is the most likely scenario, and what's playing out behind the scenes?
Look, I think what you're seeing play out with the meeting yesterday, the Speaker and the President, it is in both of their interests that this get resolved. They both said it. Senator McConnell has said it. Schumer has said it. We're not going to default a week from Thursday. There is a little fudge after that, quite frankly. It's not as though on June 1st we go off the cliff. There usually is some play. But I think there is a desire on both sides, both for politics and economically, listening to Steve and listening to Rick with the numbers. The thought of us causing an economic crisis because the politicians can't get together in this serious time for the economy and for the world would be absolutely crazy. So I'm optimistic, but with our politics being so divisive lately, we could stumble into a situation, at least a week of uncertainty running up to this, or a few days beyond June 1st, which could have serious consequences for the U.S. economy.
Is the problem with McCarthy and Biden that they don't want to do this, or is this a problem that neither of them can control their base? They're not strong enough to get their base in line.
Look, no one's going to get everything they want. And this is not when there is a deal at the end, and we've seen deals in 11, you've seen them in 13, 15, 17, 19, 21. It's not as though this never happens. That there will have to be a lot of people disappointed on both sides. Speaker McCarthy will not be able to deliver every one of his House members, and the Democrats will not deliver all of them in either the House or the Senate, and it will have to be a compromise. And the extremes on both ends will be probably sorely disappointed. But that's moving the system forward. If everyone has to be happy, then you won't see it, and you'll see the American people and our economy seriously impacted, and a lot of unhappy Americans.
But that's what I mean.
And
I
people
mean,
around the world.
if they are not strong enough to be able to say, this is what we're going to do, and if the rest of my party doesn't like it, suck it up, how come they haven't done that to this point?
Well, it's a negotiation. So you can't do that till you get to the crisis. One thing we know about Congress, they can never act until they're at the edge of the cliff. And that probably will be, if not next Thursday, shortly thereafter. So you need a deadline in Congress to get anything done, and the crisis and has to build. And we've seen this movie too often, quite frankly. It's not exactly the way one should run a government, but it's the way it's been for the last number of years with this divided government, which we have, and the divisiveness of our politics. But I'm confident that it is both in the Speaker's interest, as he looks to try to get more House Republicans elected in 2024, he needs to go to those districts that he thought they were going to win last fall, and they didn't win, and he only got a majority of 4 or 5 or 6 or whatever it is. And on the Democratic side, in order to expand and try to do better, they're going to have to show that they can govern in this divided government. So I think it's in their self-interest. But we've seen in the past the ability of the system to stumble at times and cause a crisis. But both the president and the speaker, I think the fact that the president came back from his Asian trip, the speaker was willing to meet with him right away, is an extremely good sign. But they still have to get a deal that they can sell to a majority of the House and the Senate. Not an easy task in today's politics.
So let's put on your hat now as a Wells Fargo vice chairman. Equity markets haven't really budged on any of this. I think the expectation from most watchers is that something will get done. Where you have seen some activity is in the short-term treasuries and the T-bills here. Yields have been elevated, especially 1, 2, 3 months. That's where you've seen the real pressure. What are you telling investors? What would you say in terms of whistling through this? Or
Right. No, I don't think so. I think there has to be serious concern, and Charlie Scharf and the entire team at Wells Fargo, has directed all of us to be obviously sensitive, watch and make sure that we're engaged with our customers, to make them aware of what we feel is going on, and be ready for, and we're very strong, obviously, financially, if there was to be a stumble in this thing next week, end of next week or early the following week. But I think you're going to continue to see a ratcheting up of concern next week. I think there's right now sort of a sense of, oh, they'll get this done. You know, we thought that in 11 too, but we had to go to the final hour to get a deal. And then we still got a downgrade after the fact that a deal was done because of the turmoil and the crisis sense that was going on. And that was, there were negotiations going on for months in 11. Here you seem to have put this all together in the last 10 days, 2 weeks, with the president and the speaker getting together, and then having a Asian trip by the president, which took time out. But his negotiators have been engaged, and so has the speaker. So I think there is reason to be concerned as to the potential short-term impact if we do stumble into a crisis at the end of next week or early the following week. As I said at the beginning, I think the secretary can get a little wiggle room past June 1st, but not probably much more than 5 or 6 or a week, a full week. After that, then I think you really get into a situation where it will be harder to get a deal then, because you have people, you know, getting more firm in their positions and more public about what's going on. One thing that I admire about the president and the speaker so far is you really haven't had many leaks about what the positions are. There's a lot of speculation by people who have no idea what they're talking about. But the actual details, they've kept very tight. And that's a good way for negotiators to handle these sort of things.
Bill, thank you. Good to see you.
Great. Okay, Becky, nice to see you.
Bill Daly.
Coming up, the CFO of Zoom joins us live in our company's outlook for the second half of 2023, investments in AI, and much more. Squawk Box will be right back.
Andre, what are
Maria, I love the way you smile and the way you get distracted by birds.
Huh?
But most importantly, I love the way you love to love me.
Ever wonder where the people with all the answers get all the answers? Ask Markham, accountants and advisors.
I can do this. Luxury that lets you feel infinitely you.
Wealth-changing question. Is your advisor giving you incomplete advice? Besides investing, there's also taxes, insurance, estate planning, and other elements that can be stressful to organize. At Creative Planning, we provide all the expertise, all the advice you need, all in-house, ensuring every aspect of your wealth works harder together so you can enjoy your wealth instead of worrying about it. Book your free meeting today at creativeplanning.com. Creative Planning, a richer way to wealth.
Your record label is taking off, but so is your sound engineer. You need to hire.
I need Indeed.
Indeed you do. Indeed Instant Match instantly delivers quality candidates matching your job description. Visit Indeed.com/hire.
AG1 is so much more than a greens powder. In one single scoop, it delivers daily multivitamins, pre- and probiotics, stress adaptogens, and yes, greens. Start your journey at athleticgreens.com.
What if you could make analyzing a big bank's data no big deal?
Go on.
Well, what if you partner with IBM and Red Hat, use a hybrid cloud solution to connect data across multiple systems globally, then analyze all that data with Watson?
Okay, but this needs to meet our
Security standards? Yep.
compliance standards?
Mm-hmm.
So they get the insights they need.
Yep.
In real time.
Check.
To make quick decisions.
Check.
And check.
That's the hybrid cloud solution IBM and a global bank created. What will you create? IBM. Let's create.
My dream is to talk to people, real people, about stocks. We created a club to do it.
Join Jim Cramer and the CNBC Investing Club. Scan this code or go to cnbc.com/investing club for an exclusive offer now.
Weeknights from Wall Street to K Street and Main Street. Get the stories behind the numbers.
Last Call is really about spotting tomorrow's opportunities tonight.
Brian Sullivan hosts Last Call. Weeknights 7 Eastern, CNBC.
Welcome back, everybody. Shares of Zoom are lower in the pre-market. They jumped in the extended session yesterday after the company beat first quarter top and bottom line estimates, but the shares later gave back some of those gains. Investors may not have been completely impressed by the amount that the company raised its full-year profit and revenue outlooks by, given the beat for the most recent quarter. Stock right now down by about 2%. Joining us right now, first on CNBC, is Zoom CFO Kelly Steckelberg. And Kelly, welcome. Had strong numbers, but I guess this is maybe a situation where people are always asking, what have you done for me lately?
Thank you. Good morning. We're very pleased with our Q1 results. As you just mentioned, we beat on both the top line and the bottom line, and we raised our full FY24 outlook for both our revenue as well as our profit targets. And this was largely due to very strong performance in the online segment of our business. That business, we've been very focused on getting it stabilized, and that occurred earlier than we expected. We were also very pleased with the performance of Zoom Phone, which is our cloud PBX solution, which we announced is now 10% of our revenue. And we're just very pleased with the outlook, and we're going to continue to execute through the rest of the year.
What is the situation just in terms of controlling your margins? I know you had announced some layoffs earlier in the year. How is that playing off and playing out? What do you see right now just overall in terms of whether or not you think additional cuts need to come?
So we announced that we had achieved our long-term target of our gross margin of over 80% in Q1. We did indicate that we're going to continue to make some investments in AI throughout the year, but still guided to 79.5%. And then from an operating margin perspective, as you indicated, we made some very difficult decisions earlier this year to reduce, but we're very pleased. We overachieved our operating margins. We came in at 38%. And we are continuing to invest in areas that we see we can drive growth. This includes both investment in our R&D teams as well as our sales and marketing teams, focusing on expanding our Zoom Contact Center team, as well as, of course, continuing to invest in the topic of AI that everyone's talking about. We see that as really important to the future of the company. And we made some collaboration investments this last quarter with both OpenAI as well as Anthropic. We also announced an acquisition of Workvivo. We're thrilled to have them join our team. So we feel great about where we're situated for the future, and we'll continue to contribute strong margins for the rest of the year.
What are you seeing in enterprise, Kelly? Specifically for enterprise, average revenue per user was down 2% sequentially after 4 straight quarters of quarter-on-quarter growth. Some analysts are saying they will see the forecast that this will continue in the current quarter and going forward. What are you seeing right now?
Yeah, we had not only a reduction, but also a reorganization in our sales team in Q1. And understandably, that caused some distraction. But we are now really focused, as I just mentioned, on continuing to invest in this area. And we continue to see strength in Zoom Phone, in Zoom Contact Center. We are thrilled that in March, we launched the beta features of Zoom IQ, which leverages generative AI now to support our customers in their productivity around things like meeting summary, chat, and email compose. And these are all the products that are going to drive the future growth in our enterprise segment.
You're not seeing any of the enterprise users migrate to the new version of Teams that incorporates AI already?
We saw very strong performance in Q1 in our renewal segment. So we have a seasonal trend that Q1 is our largest renewals quarter. And even though some of our customers have been impacted through their own reductions, we were able to work with them. And even if they wanted to reduce their seat count, to potentially repurpose that spend towards areas that we can help them save, like Zoom Phone and Zoom Contact Center. And we are thrilled with the position that we have in terms of AI. Again, Zoom IQ is going to be a smart companion that everybody will have to help make them more productive. And we have that AI already built into our DNA. We've been using it for things like virtual backgrounds that you can see me using here today. And that's been part of our DNA from the very beginning. So we're really excited about the future of continuing to apply AI to our entire product suite.
Kelly, we had an interesting conversation with Strauss Zelnick yesterday from Take-Two Interactive. Just this idea of AI. Is it going to make companies more efficient? Is it going to make it cheaper and easier to do these things? Or is it just going to increase the expectations, the product at the end of the day? He thinks that this is just a situation where all this technology in the past has always just been used to make the product better. It's not going to get cheaper. It's not going to improve margins, but it will make the product better. What do you think?
I think it's going to absolutely make the product better. We're really focused on how do we make all of our customers more productive. And if you think about, you can spend less time on tasks like meeting summaries and more time with your team, that makes us all better. And that improves human connection. And that's really what we're focused on. I think in the near term, what you're going to see is significant investments across all companies as we're all looking to leverage. Our approach is take a federated approach to AI. So you're going to benefit from the learnings from our language models, as well as some of these key collaborations that we've put in place. And then, of course, our customers' models as well. And in the future, I think we're going to see a very different time where we don't have to spend time on doing things like meeting agendas, but again, connecting with our teams in much more meaningful ways.
Kelly, thank you. Bye. When we come back, we'll tell you what to watch ahead of the opening bell on Wall Street. Stay tuned. Squawk Box will be right back.
How can you be sure you're getting the right deal?
I have to talk to my bestie. This one's like your last boyfriend. It's got issues.
For the right used car, just say, "Show me the Carfax value." You'll get the most accurate price based on the vehicle's accident history. Shop at the all-new Carfax.com.
What do you see on the horizon? Uncertainty or opportunity? Whatever you see, at PGIM, we can help you rise to the challenges of today, when active investing and disciplined risk management are needed most. Drawing on deep expertise across the world's public and private markets in pursuit of long-term returns. PGIM. Our investments shape tomorrow, today.
At IHG Hotels and Resorts, we're in the business of you. We're getting back.
We're here to help you plug in,
connect, and recharge.
We're getting back.
Make an impression, and meet with confidence.
With 18 brands built for business,
your business gets even more rewarding.
With an award-winning loyalty program at 6,000 IHG hotels and resorts worldwide.
About time, we're getting back.
They call it the right stuff. Get up and go. Fire in the belly. We call it ambition. And if you want to get there, you can start right here. CNBC. Live ambitiously.
Sure, you'll teach her to drive a car. Then use Greenlight and teach her to save up for her own car. Mowing lawns and getting paid. Navigate the world of earning, saving, and investing together. Invest in your best investment. Greenlight.
Organization designed for a lifetime of modern functionality. The Dresser by Thuma.
Finances out of control? Take control with Rocket Money. See all your accounts in one place.
Find and cancel unwanted subscriptions with just a tap.
Get help lowering your bills. And put more money into savings. Rocket Money. Take control of your finances.
Welcome back to Squawk Box, everybody. Yelp is the target of activist investor TCS Capital Management. It's trying to send a message to Yelp's board, pushing for the company to sell itself. That's according to a report from the Wall Street Journal. Take a look at shares of the stock right now. It's up by about 10.9%.
We're just over 30 minutes away from the opening bell. For more on the markets and the trading day ahead, let's bring in Cameron Dawson, Chief Investment Officer at New Edge Wealth. Cameron, great to have you with us. Are you surprised that the S&P 500 has been able to hold on to, the 4,200 range with VIX, remaining pretty tame? It's about 17.
Yeah, it's been really incredible just how calm and placid markets have been in the face of a lot of headline risk. One of the reasons that we think markets have been so resilient is because there's actually been a big liquidity boost to markets all year long. One of the dynamics around the debt ceiling is that as the Treasury hit the debt ceiling, it started spending its cash instead of issuing new bonds. This effectively added liquidity into this market and explains why the entirety of the market rally this year in the S&P 500 is driven by valuations, nothing to do with earnings. And usually valuations are very sensitive to things like liquidity. So we can see why we've had this rally and this resilience, and it really all comes back to liquidity.
And so, I would imagine that this is a huge reason why we're seeing, in particular, the rally to focus on big cap technology. Do you think that continues?
Well, I think that it could be challenged once we get on the other side of the debt ceiling. Once we start seeing liquidity become a headwind, where we start to see the Treasury issuing bonds and draining liquidity. And if we look at those growth stocks, they're now trading with the Russell 1000 Growth Index at back to valuation bubble levels that we saw during the pandemic at about 26 times. And so that would be at risk in an environment where liquidity is draining. And we shouldn't also forget that yields are rising. Better economic data is causing yields to rise, and usually that is bad for those big tech valuations. So we think that this rally in those names, though it has momentum today, could stall or struggle as we get past the debt ceiling.
So is there an opportunity, Cameron, that in the other parts of the market, there is a real disparity between the performance of the S&P 500 market cap weighted versus the equal weight. Is there an opportunity in that equal weight side of the S&P 500 where we're going to see sort of a catch up to the gains that we've seen in the bigger cap peers?
100%. Yes, that's where we think that investors should be looking to add to new capital into the equity market. Instead of focusing on the cap weighted index and chasing the big growth rally, look at equal weight. It's only trading at about 15.5 times earnings. That's not stretched versus history. And it has a much more balanced sector exposure than things like the value index, which is good to remember that has a 20% weighting to financials. So investors may not be as comfortable people stepping into value, which is cheap as well, but has that big financials weight. So we are looking at that equal weight index, given that valuations aren't stretched, and it really has lagged year to date.
So it sounds like when we get a debt ceiling deal, Cameron, you're saying to not just sell the news, but sell tech specifically on this news.
Well, I think for very long-term investors, it likely presents an opportunity more to hold pat. You know, you probably have some pretty big capital gains if you've ridden tech over the last few years. So we're always very conscious of that. But that's why we're not wanting to chase at this point, because we're at the high end of those valuation ranges. So for tactical investors, yes, it likely does make sense to remove a little bit of an overweight to tech and to growth into things that are more equally weighted. But for long-term investors with tax sensitivity, that's important to keep in mind.
Cameron, great to talk to you. Thank you. Cameron Dawson.
All right, let's take a final check on the markets this morning before we hand things over. You're going to see that the Dow is off by about 58 points. S&P futures down by about 11. The NASDAQ off by about 53. 10-year has been, the Treasury market's been the thing to watch. The 10-year right now yielding 3.755%. The 30-year's up at 4%. 2-year at 4.393. Melissa, I want to thank you for being here today.
Pleasure. I liked it so much.
A little later today.
Yep,
and
I'll
see you
be
right back here tomorrow. Make sure you join us for that. Right now it's time for Squawk on the Street.
Good Tuesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer and David Faber. We are live at CNBC's inaugural CEO Council Summit in Santa Barbara, California. Take a look at futures here as the market juggles a bunch of pieces of news today. These debt ceiling talks, a little more optimism, not a lot of news. Global PMIs rolling in. Yields definitely elevated. That long bond back to 4 for the first time since March. Our roadmap begins with D.C.'s race for that debt deal. Speaker McCarthy says talks were, quote, productive, as Wall Street watches for any signs of negotiation progress.
Plus, inflation headwinds. Lowe's joining Home Depot, warning about waning demand for home improvement goods as consumers cut back on discretionary spending. And AI's labor and economic impact. The CEO of EY is going to join us later this hour to discuss.
As we mentioned, we're live from CNBC's first CEO Council Summit in California, where we're going to bring you exclusive interviews and insight from some of the country's biggest executives. They're going to tackle the debate over the nation's finances, AI, the revolution there, of course, the dangerous escalation in U.S.-China tensions. Got a nice little set here. We'll be moving around. Gorgeous view of the ocean.
Oh, look, I'll just tell you, I don't want to be a buzzkill, but everybody keeps saying we're waiting for when the consumer is going to get weaker. Other than when it comes to airplane traffic, the consumer's weaker everywhere. Everywhere. I mean, they're spending less on cars. They're spending less at Home Depot. Now we know they're spending less at Lowe's. Yes, okay, so they spend equal amount at Dick's. But they're at BJ's, they spend a lot less. David, I'm not getting a picture of the consumer buying anything. Remember, they were buying clothes, they were buying software, they were buying hard, then soft. Now, yes, it's true. We had Kirby on United Air, and the planes are full. But if that's it, what kind of economy are we going toward?
I would go back at you and say, well, Jim, what kind of economy are we going toward?
Well, it was rhetorical, so thank you.
You're welcome.
It's good to see that even though we're out here in somewhere, in Santa Barbara, he hasn't changed his ability to be...
No, nothing changes, except that we're even closer than usual. We're like literally rubbing elbows here.
I'm very uncomfortable.
We may move to our other set that was set up and beautiful, but the ocean mist here apparently is quite heavy.
I know the people at home really care about that.
Well, I like to inform the viewers to everything that's going on. So, all right, continue and tell me what's the economy going to look like with a consumer that's only spending on air travel.
Okay, so you look at the Lowe's quarter, and I think Marvin Ellison's doing a great job. And you say, okay, well, the do-it-yourselfer is really not doing that well. Then you go to Home Depot, and they say the do-it-yourselfer is not doing that well. Both say the professionals not that strong, not that weak. And Carl, okay, so we know that they're not buying clothes. We know that they're not fixing up their houses. I think they're tapped out, except for the fact that this is that long on money, short on time. They're still going places. Now, one of the things that we do know is that airplane tickets are up, and the Fed hates that. It's right in the CPI. It's just such a sore point, that and rent, which is very hard to bring down because you can't build any more homes. There's just only so many. They're buying them. They're building them only if you want one. The old days, they put them up everywhere. But so I just come up with if the Fed is waiting for the consumer to get weak, stop waiting.
Yeah. one of the issues we're going to try to tackle today at this CEO Council Summit, along with AI, what's happening with tech, what's happening with China, Jim, which really got our conversations started off last night with John Donahoe of Nike. And he talked to our Sarah Eisen about the progress, the thinking in corporate America behind trying to decouple or de-risk from China. Here's what he said.
I think decoupling would be disastrous economically between the U.S. and China, or China and the European Union. If you really look at the trade flows, both ways, they play a mutually valuable role. And so, again, we believe in global trade, and we'll continue to try to do everything we can to support that.
He argued that global trade's a force for stability. He argued that they're not a national security concern, obviously, and they're highly regarded among the Chinese consumer.
Well, look, they've always have a great relationship. The Ministry of Sport likes Nike. Nike stands for exercise worldwide, and that's terrific. But what we're doing with China has much more to do with the military. And we don't want to give them the chips. Why? Because the military. It's not like we don't want to give them the chips because we don't want them to have high fidelity at home. The chips are all about, David, the ability to be able to sink a naval vehicle, Navy, be able to stop us while we try to defend Taiwan. Mm-hmm. And, you can sell a lot of sneaks, and that'd be great. I mean, it would be terrific if the sneaker economy were to,
sure,
like the ping pong
buy as many
economy.
Nikes as you want, but sorry, you don't get any H100s from NVIDIA.
Right. And you think, which would they prefer? Jordans or H100s? We have NVIDIA reporting tomorrow. We had Nike talking there. Nike versus NVIDIA. Which do they really want?
Right. It's a great, important question. I think they want both. Yeah. But there's no doubt that they're continuing to build up their military in a significant way in China, and obviously want access to the best technology they can. And they do not have a homegrown chip sector that is at anywhere near the level that ours is on the designing front or on the manufacturing front, which of course then takes you to TSMC in Taiwan, and the conversation we have often at whether it's this desk or our desk back at the New York Stock Exchange, and one also I had with Musk a little less than a week ago during our interview, in which he discussed that decoupling, Carl, and called it separating conjoined twins was his line, and you can imagine what that can look like as well. So not good. It is top of mind for every CEO, I think, the relationship with China. Even if you don't necessarily have important business in that country, it's still something you're monitoring closely, and for boards of directors. It's right there. AI is now right there. These handful of issues that everybody has to think about all the time.
Well, look, I think that we don't want war. We don't want Taiwan to be taken over. We don't want a Hong Kong version of Taiwan. And it's one thing to be able to talk about world trade. It's another thing to be able to say, look, we are trying to keep them from having hypersonic weapons that could hurt us. This is Cold War. And anyone who thinks it's not Cold War is kind of like, off the reservation. You can't have this. You can't have, on the one hand, worried about whether we have a naval presence to stop them from taking over Taiwan, and on the other hand, say, you know what, it's really great to have a lot of trade. We had a lot of trade with Russia. Then Russia invades Ukraine.
Nothing like what we have with China. Not even remotely in the same.
No, but I'm saying that Taiwan, they want those chips, right? They want what the Chinese want, what Taiwan semi-mix.
Yeah, although again, in the scenario that you imagine, it's unclear exactly what would happen. What would happen with Taiwan semi? What would happen with anything?
It would help if there was supposed to be some talks between.
Yes, it would help if they de-escalated.
Yeah, I think that you have to pull it back. I mean, you see what. Well, no, Russia's a rogue nation now. China's not a rogue nation. China just doesn't want to come to the table like it used to.
This piece in the FT this morning that says China's more worried about Japan's chip curbs than our own. And we are not doing this by ourselves.
No. I mean, it's funny because Micron, which is doing this huge deal with Japan, Micron was kicked out of China, so to speak. And yet this very morning, Mizuho says that the Chinese need the Micron chips so badly that they're going to have to come back. Now, Micron makes the lowest end chips. And Sanjay Mehrotra is terrific. He's a great CEO. but they don't need the Micron chips as much as they need the NVIDIA. Or, by the way, AMD, which has a new version of the Italian roadmap that has AI. We haven't talked about AI. Dave, remember what was it we used to talk about? That we hadn't mentioned Apple instead. Now we haven't mentioned AI. And
we haven't mentioned Apple
It was Tesla.
or Musk. Yeah, although we've mentioned Musk already, so that's good. We got that in. We don't have a clock here, but that's pretty early in the show.
I wanted the clip of him just staring at you, not saying anything, just
put that on a loop, so it's
right?
a 30-minute stare.
Right. And that's that moment where you say he's going to rip his mic off. He doesn't like David. And then it turned out that it was like he liked David.
Yeah, he wasn't going to do that. It was fascinating, and I hope we get to do something more. There's always endless things to talk to that man about.
But we do talk about the volume of cars he's making in China. I mean, that if you want to know who I think could make it so that there's a softening, it's Musk just saying, listen, we got this these markets are terrific. No one is.
You think he's willing to play diplomat?
Honestly, yes. Not with this president, though.
Yeah, well, I don't know. I mean, listen, I didn't expect we'd end up talking about this, but don't forget Starlink and the importance that it's had in the Ukraine war. So he is involved in things. We didn't get to that during our conversation last week, but he's involved in things far beyond, what you might expect. Met with Macron a week ago as well.
But it was the balloon that set things back.
Yeah. Back to politics. Well, actually, we want to get to the debt ceiling.
Yeah, I mean, you've been arguing, Jim. It's been something to watch. McCarthy did say last night, best meeting so far.
Yeah, look, it's one of these things where if it doesn't go to the deadline, then it's kind of like a clock. It's like cutting their show short at like 9:32 in Eastern time. They can't do that. They have to go to the last hour so that they can each attack each other, saying that the other person's not doing it. Now Senator Cruz was on this morning.
No, I heard Senator Cruz this morning, but McCarthy and Biden did not seem at each other's throats yesterday.
No, they're not. No. You ever talk to the speaker?
Yeah, I think I have at some point.
He's not an ideologue. Now, so there are a lot of people in the party who are ideologues. I think he wants to do a deal, but I think they also have to. I think that they're going to portray Biden as being the reason why we have high inflation and we don't have a budget deal, and you're not getting your Social Security check.
Reports that I read of the meetings yesterday, Carl, seem to be more positive than not in terms of the possibility of reaching a deal.
Yeah, and McHenry, too, coming out and saying, we'll see what we get. I think we do have a market flash here on Apple, and if I'm not mistaken, we're going to turn to Steve Kovac on that. Is that right, Steve?
Carl, yep, you are correct. Look at shares of Broadcom up about 3.5%. Apple announcing what they call a multi-year, multi-billion-dollar agreement with Broadcom to make RF 5G chips for the iPhone. Now, this is a continuation of a current deal they already have. You might remember a couple months ago, there was a report out there saying Apple was intending to make their own chips and actually get rid of Broadcom. That's clearly not happening anytime soon after the announcement of this deal. So we're seeing shares pop about 3.5% here on Broadcom, and Apple is about flat right now.
Steve, thank you for that.
Thank you.
Interesting, because I had an interview yesterday with, thanks, Steve. Sorry. I interviewed yesterday with Liam Griffin from Skyworks Solutions. Now, that stock is trading down for a belief that perhaps they could get some of Broadcom's business. Broadcom, I like Broadcom. I like Hock Tan. He's been on our show, but they're regarded as being a company that is very, very tough. Now, not Qualcomm, which is being regarded as a company that is almost rogue by some people, but this is very good for Broadcom, and I think people who felt that there was finally going to be a chance that Broadcom is ripped out, boy, were they wrong. David, Hock Tan has got a reputation as being ruthless, and yet he still got the Apple deal.
He did. The deal that is on my radar still does the VMware deal. And the question about, in particular, the regulator in the UK, the CMA, that our viewers, of course, perhaps have become familiar with given their opposition to Microsoft's acquisition of Activision. But that's the next one on the docket there. The CMA has been under some pressure from the Prime Minister to be a little more pro-business, but very much unclear what the position's going to be on that deal. It's an important deal, obviously, for Hock Tan.
Oh, look, I've got to tell you, if he doesn't do his deals, he can't make his numbers. That's the way he does his numbers. Now, I know that sounds a little ruthless myself, but he does deal after deal, and then he fires a lot of people. Remember the Symantec.
I do. Yes, he's on that cycle.
I don't know if you disagree with us.
He would say no, because we've asked him that question before, which is, do you have to continue to do deals to maintain?
Oh, no, I meant that he fires.
Oh.
He fires people when they...
Oh. I just wonder whether, I mean, that's the rap against them, isn't it? Hasn't it always been that if you the next deal's got to be even bigger, and if you end, then you become, we know any number of those roll-up kind of companies that it was always about the next.
Well, I mean, Broadcom is the
and
roll-up.
always about right.
It used to be
the accounting.
AVGO kept the symbol.
Well, and right, exactly.
Well, look, I think that Apple is secretive. So it's very interesting that they even announced this. I mean, when you speak with Liam Griffin, and I love Liam from Skyworks, he always says, in the big company, because Apple doesn't like you to mention it. Qualcomm, of course, was flattering everything, and to the point where, see you later, they're almost done. But it's a great deal for Broadcom. Broadcom's going to be up more than this. It was up a lot earlier this week, but now it's going to break out. This is a very big deal.
Between this and AMAT this week, there's so much news in the chip space.
And I just think that, don't forget, we still haven't heard from NVIDIA.
Yep.
And Jensen's got some stuff for you, talking about totally replacing it.
Completely?
You remember how he's always worried about whether, what's going to happen?
You just replicate him rather than replace him.
I am worried. I'm still here. I'm still here.
You should be worried.
I am worried. I'm much more worried than you are.
Who was that who threw out the first pitch? That was clearly not you.
No, that was some guy who doesn't know how to throw a baseball. That's not me.
That was simulation.
Yeah.
That was Davis Faber, right?
Yes.
Still to come this morning, we will hit lows. A bit of an echo of some dynamics we saw in the Home Depot call. We'll get to DKS, AutoZone, BJ, Lordstown, a lot of news. Meantime, take a look at futures here as the market obviously once again on tenterhooks looking for headlines on the debt ceiling. Don't go away.
At PNC Bank, you can find us in big cities and small towns across the U.S., where our focus is to always support the people who live and work there. Because you call these communities home, and we do too. PNC Bank.
Your next best investment starts with CNBC Pro, the ultimate investing playbook. Scan this code or go to cnbc.com/pro for an exclusive offer now.
June 15th, join CNBC's Financial Advisor Summit. Hear from top advisors and market experts. Creative solutions to generate consistent returns. Register now at cnbcevents.com/FA.
I'm Mr. Wonderful, and I'm Chef Wonderful. I recently introduced the ERC program to Chef Wonderful here, which is a program created towards small businesses like mine for retaining their employees during the pandemic. Well done, and most of this money is still available. If there's one thing Wonderfuls never do, it's leave money on the table. Chihuahua, this guy is smart. Go to wondertrust.com now to see if you're eligible for this cash. Nice hat.
Check out shares of Lowe's this morning, moving lower despite a beat on earnings. Comps did miss. They do cut the guide. Once again, Jim, it's lumber deflation, bad weather, lower do-it-yourself.
Yeah, I mean, this is, again, that whole theme I have, which is that we are done fixing up our homes. People are not moving, in part because they don't want to lose their low mortgage. Look, I think Marvin Ellison's doing a very good job. There was a pullback when you speak with him on discretionary large ticket purchases, but very limited examples of customers trading down. Now, this is important because when you go back to the Deere quarter, Deere makes the finest lawn equipment. And it was bad for them, just bad. So there is some inventory in the system. It's good to see that it's not dear. But, David, what we're seeing, again, is that garden is good. Paint's good. Appliances were good for them. That's different from Home Depot.
Okay.
So it's not, I would say that this, because Home Depot reported first, Lowe's doesn't seem as
Did
bad.
Lowe's, I forget, did Lowe's suffer at all on the day that Home Depot also reduced its guidance?
So therefore you got a little de-risk. But I just am used to the do-it-yourselfer doing well, and because during the great pandemic, everyone was kind of tinkering with things. People like their homes as they are. I can't find anyone. We have Williams-Sonoma coming up soon, but I can't find anyone who just says, you know what, I really want to do a big job in my home. That's kind of like where the professional is. The professional Home Depot says it's a little bit better, but this is all part of what I'm saying. If the Fed is listening, they should be saying, okay, everything's getting weaker by the month. The cadence is bad. Everyone expects, the quarters have been cut for the next quarter.
Yes.
So but so many Fed people come on and say, the economy is so strong, we have to keep raising once or two.
Except that they go back to what you've discussed, which is unemployment is at a historic low, and wages are actually still strong.
No,
and
I know they need more layoffs.
And I mean, you can do that too. You're sort of, both sides here.
They don't have enough layoffs, but I think that we'll speak to Carmine DeCivio from EY, and I think he might tell us a story of people are graduating from college, and they're not getting jobs. That's where the surfeit of employment is going to be, the graduates.
That's interesting. You've made the point that corporates are in a sweet spot with their input costs are coming down, but they can still charge. Isn't the consumer in the same place where wage growth is outlasting goods inflation?
Well, we know that they're charging credit cards. They're charging more. We know that. We know that higher rates have at some point have to impact. I mean, the Capital One's the world, but they're still doing very well. I don't know, Carl. I look, as long as wages hang in, people hang in.
Higher rates. I mean, yesterday Jamie Dimon was talking
How about those?
And he said this before, but it's still rather stark. I'm not talking about 4.25. I'm 5, 6, maybe even 7%.
That 7's new. He did 6 with me when he was in Philly.
I feel like I remember 6 as well when we
did
something.
6 for a while.
He's at 7 now as a possibility. 7%.
Yes, 13% of the country.
Yeah. Should we take a listen?
Yeah, this is what Dimon said about being prepped for higher rates. Take a listen.
You're already seeing credit tightening up because, the easiest way for a bank to retain capital is not to make the next loan. So I think you are going to see that. And I think everyone should be prepared for rates going higher from here. That if 5% is not enough in Fed funds, and I've been advising this to clients and banks, you should be prepared for 6, 7. You should be prepared for on the 10-year bond. And I also feel this way. The Fed doesn't control the 5 or 10-year rate. They control the overnight rate. So while they've been raising the overnight rate, there's still too much liquidity in the system, which is why stocks are high, bond spreads are still, you all talk about recession, not reflected in bond spreads. So I think there's a chance you can have rates ticking up, and not to 3.78. I'm talking about 4.25, 4.5, 5, 6, hell, maybe even 7. I would be prepared for higher rates.
The COO later said, just got back from Argentina, and trust me, you'll take a recession over entrenched inflation over many years.
Look, we don't want Federal Reserve Chairman Burns. I mean, every time that things got better in the 70s, he let off the gas pedal, and then it got worse. I mean, you can't have that stop-start. But you know what? Jay Powell knows that. He's an historian of what the Fed's done right. They can't lay off.
But now you're talking the other side of rates continue to go up.
You're
on
not
one
talking the other side.
Okay.
I'm saying that wages are the last bastion of inflation.
So when do they go? When do they start to turn?
June 17th.
What are you talking about? What day is today? Okay, thank you for that. May 20. Oh, right, of course. It's May 23rd.
When people start getting fired other than working at Meta.
Other than.
Yes.
Yeah.
Meta. This is the year of efficiency, Dave. And also the year of living dangerously.
Great film.
Wasn't it?
Yep. When we come back, Kramer's Mad Dash, West Coast style, and we'll count down to the opening bell. Take a look at futures. Back in a moment.
Our stock's tanking.
Well, you need to holistically re-optimize revenue streams for pre-emerging markets. Not to mention the integration of cloud-ready
meta service functionalities. And of course, synergy.
Ever wonder where the people with all the answers get all the answers? Ask Markham, accountants and advisors.
You got the rings?
Hello? You guys don't look half bad.
Yeah, thank you.
Thanks, man.
Luxury that lets you feel infinitely you.
I love shopping The RealReal.
It's luxury brands up to 90% off retail.
It's Gucci,
Hermes,
Louis Vuitton.
It's 10,000 new arrivals every single day. The RealReal, where luxury's yours to define.
Shop now and get 20% off at therealreal.com. Terms apply.
Oh, not him. His first name's Derek. He's all the way uptown. Yeah, I'd rather just let my teeth fall out. Too educated. Too young. Too old. Too medium-aged. Too good-looking to be good. Ooh, great reviews. Available tomorrow? Booked.
Thank you for doing that out loud.
Dr. Hamilton is perfect for me.
Search, read reviews, book a doctor on ZocDoc.
This bakery needs new equipment fast to keep up with demand. So they're going to OnDeck, the online lender that makes it easy to choose your loan and, if approved, get funds as soon as the same day. Your loan is on deck.
I'm not a cat lady. I'm a cat goddess. Thanks to Pretty Litter, it's ultra light and odor absorbing. Plus, it changes color to monitor my cat's health. Pretty Litter tells you what your cat can't. Go to prettylitter.com.
When people get real negative, they're closed off to new ideas. You always have to realize where you are versus the crowd. The crowd being where you don't want to be, because when everybody's betting on the same thing, there's rarely money to be made. Watch or listen live on the CNBC app.
Plenty of news on this Tuesday. We've got the Fed's Logan now on the tape. PMI is coming in all around the world, and we'll get ours at 9:45 Eastern Time. New homes coming up at 10 a.m. Eastern. Opening bell's a few minutes away, and don't forget, you can catch us anytime, anywhere. Just listen to and follow the Squawk on the Street Opening Bell podcast.
25 major champions with a combined 42 major trophies under their belt take a swing at the oldest senior major, the KitchenAid Senior PGA Championship on NBC and Peacock.
Hi, I'm Mr. Wonderful. If you own a business and have employees, you need to check out the ERC program at wondertrust.com. There's money waiting for you. I did, which is why I have time to tend to my precious little trees. He's such a good boy.
The perfect platform bed frame. Timeless design and modern functionality. Comes together in minutes. The bed by Thuma.
Opportunities can be hard to find, like catching lightning in a bottle. In uncertain times, it's tempting to retreat or simply wait and see. At CME Group, we empower those who act. We deliver tools to help manage risk and capture opportunities in every market climate, across every major asset class, to seize each possibility at precisely the right moment. CME Group, opportunity is everywhere.
New projects means new project managers. You need to hire.
I need Indeed.
Indeed you do. When you sponsor a job, you immediately get your short list of quality candidates whose resumes on Indeed match your job criteria. Visit Indeed.com/hire and get started today.
The first time you connected your GoDaddy website and your store was also the first time you realized.
Well, we can do anything. Cheesecake cookies? The cookie.
Manage all your sales from one place with a partner that always puts you first. Start today at GoDaddy.com.
What is N? It's a variable, a symbol of flexibility, solving for the needs of today's investors, finding opportunities across asset classes, Investing to sustain growth ahead of the unknown. That's the power of N.
The opening bell is brought to you by Nuveen, a leader in income, alternatives, and responsible investing.
All right, let's get to a mad dash, Santa Barbara style, whatever that might be. Microsoft.
Well, Jefferies has a piece today, David. It talks about taking a price target for Microsoft from 350 to 400. Now, you're talking about one of the biggest companies in the world.
$2.388 trillion market cap.
And if it goes to 400, I mean, obviously what this piece is about how everybody knew about AI, but then after ChatGPT, it's in your face, and it's going to matter. And I think, David, one of the things that Jensen Huang from NVIDIA has talked about is that he labored in the vineyards with AI for 5-6 years, and then suddenly with ChatGPT, it just exploded, and it's only been 3 months. So I know that AI seems like it's almost old hand to our viewers. It's just now starting to impact numbers, and that's very good for Microsoft.
It's very, 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 very early days. And I'll tell you, it's every 48 hours there's something, an advancement. I mean, this is moving at a pace that is unequaled, I think, is at least what I'm told by any number of people who are leading various organizations or at least involved in the development of AI for their organization.
We'll be talking to Carmine DeCipio at EY, and I think that what you're seeing, maybe you can confirm this, it's dangerous to hire someone because you don't know whether you need that person. No longer because your business is doing well, but maybe because that person isn't needed because of the bots.
Yeah, Logan's on the tape right now saying we're already seeing the effect of technology in finance. We'll talk more about that in a bit. Let's get the opening bell here. Real-time exchange at the big board. It's laser manufacturer Coherent, and at the NASDAQ, freight transportation company CSX, as we see the breath fill in here. Jim, a lot of discussion this morning about, to your point about Microsoft, the spread in valuation between tech and the broader market.
Well, it's become back to what happened after 2011. That was the beginning of FANG. And we are, at that point, it was Facebook, Amazon, Netflix, Google. But we're beginning to see the banks, and I regard these companies as banks. Some people, I think we should almost call them nation states. Because when you look at their balance sheets and you look at their earnings, you can just say, I like their paper more than I like, treasuries. I mean, we're not concerned about the coupon paying off at Microsoft, for heaven's sake. So I do think that this is going to continue. These companies have an edge, and the alternative is to go buy Clorox or PepsiCo. Can't buy banks. Industrials could be on the hot seat if the Fed keeps going. Look, if what Jamie Dimon says, let's say it goes to 7, you would think that the valuations of the stocks that are on the screen would be hurt. But no, they seem almost immune to rates, which is an extraordinary thing. But it's what happened in 2011. They're immune to rates. It's back.
Well, should Apple borrow at a rate above that of the U.S. government, or perhaps below it?
I think it should below it.
I mean, who's a better credit?
Do you think Eddie Q argues with Tim Cook about whether to pay?
No, I don't think they have any argument about whether to pay, and you're making a bet on the ability of the iPhone to continue to be a selling product around the world and their services revenue. I'd say they're pretty money good, not to mention they have how much in cash?
Well, but right now, the president is talking with the speaker about whether basically to pay off the debt.
Well, pay the interest on
it. Pay the interest. The Apple board sits around and says, I hate you, you hate me, we're not paying.
No, that never comes up.
It's more about how are we going to de-risk our supply chain out of China.
Yes. And I think that when I look at Apple, I think to myself, somehow it's not caught up in the AI conversation. That's ridiculous. They are every bit as interested as everybody else. The one that is just shocking is the Mark Zuckerberg tie-up with Jensen Huang at NVIDIA, because they don't necessarily share the same values. But there is just something going on at Meta that just shows you it's almost like they've decided you need very few people to make a lot of money. And you see no degradation of product, even though they just laid off a lot of people.
And potentially will continue to lay off even more, Jim. I mean, I had some reporting yesterday. You were doing some work on it as well. Many of these have been announced, broadly speaking. But the era of efficiency is not over, I think is fair to say, based on at least what I'm hearing. And so there is an expectation that there's going to be another round. yet to come. Whether that's part of what was already announced or new, unclear, but another round.
But it's emphasized constantly when you go to the company. They just say, listen, we have an efficiency roadmap. Basically, like, stop it, Jim. This is what we're doing in 2023. It's never, ever mentioned that it's metaverse. It's almost as like there's like a secret plan to shut down metaverse, but it ain't happening.
This fine out of Europe on Meta got some eyebrows raised yesterday because it has implications for companies that transfer data from Europe to the U.S. You got TikTok pushing back in Montana. Yeah, Donahoe last night from Nike talking about the metaverse being very much alive in their view and capturing the attention of Phil Knight, for example.
Well, look, if metaverse is real, then why don't people do what Mark Zuckerberg really wants, was be part of the virtual mall? Ralph Lauren wanted to be part of the virtual mall. David, the virtual mall could be alive and well if anyone would be willing to sell stuff in it.
If they would. I mean, Meta, which obviously changed its name from Facebook, important to point out, is still spending a lot of money on
$3 to $4 billion.
The metaverse.
Well, it's also, I think, when you don't have to wear something on your head is when we'll get the big breakthrough. Interesting, you know, he doesn't want avatars, he being Mark, looking exactly like you. Because I said, look, I would prefer an avatar that is me, which of course you can do, and he wants funny ones.
Cartoonish.
Cartoonish. I don't think cartoonish. I mean, David, what do you look like? I mean, I almost wish we had like a video of what the metaverse would look like, the three of us.
Yeah, we do have that. I forget, we made our meta. We have our meta graphic somewhere. AI, though, in the ability to actually create these deep fakes is what I'm thinking about. Right. Obviously, given the news from yesterday, Carl, and what we saw with things that were completely fake but ran on Twitter and for at least a moment may have, scared people and also brought a market reaction, brief though it may have been.
Amplified by people with a blue check, the appearance of legitimacy on social platforms. Yeah. And as Steve Kovac pointed out on Squawk this morning, this is just the beginning of what we're likely to see in certainly a political cycle.
With that, and I did ask Musk about it in our interview last week, specific to the election, and you know he seemed to rely a lot on the community notes function that will be a policing. He believes will be able to police in some way, but you know he agreed that somebody at this very moment, he said, could imitate both of us in an effective way, and so you just do wonder where and how are people going to be able to truly discern what is reality and what is not.
You couldn't. When Jensen Huang presented me, I walk into a room, and a guy says, "Hey, I'm Cramer." And I said, "No, I'm Cramer." And he said, "No, well, no. Welcome to Mad Money." He's talking to me, right? And it's interesting. Jensen said he had spent all weekend developing the Philadelphia accent, which he said was hard. Now, by the way, Mayor of remember how?
Yeah.
Remember how she
felt?
Where
you're going? Yes, the HBO show. Yeah.
Hard to replicate. But
yes.
No.
Kate Winslet, and she did a great job with it.
I have to tell you that he was not concerned. He's more concerned about using the product for good and also for eliminating waste, because that's what NVIDIA cares tremendously about. But you couldn't detect whether it was me or a drone.
How about this op-ed in the FT from Pichai? It's talking about the early days that we're in, but also pushing back on the idea that people want to make this about a competitive race. It's Google versus Microsoft. That's not the most important thing going on.
It's true. I mean, the Google numbers are good and the Bing numbers are okay. Google, I could argue that the search function's actually picked up. Alphabet stock fully reflects the idea that it's not a 2-horse, 3-horse, 4-horse. It's, David, it's just anybody who has the technology is going to find ways to make it so that it's exciting.
Yeah, and don't forget, Meta has released it in an open source fashion, right? With Llama, so that there are people who can build on what has already been the computing power that has already taken place to create the weights, I think is what they call them, so that it can be open to more than just the big guys who obviously have access to enormous amounts of computing power that you need, which is incredibly expensive. That said, that will still be a key defining characteristic of those who move forward.
Well, the defining moment will be when you look at a call center. Now, there are call center F9 stock went up yesterday. Yesterday was a rebellion against the AI movement. A lot of the companies have been taken down because people feel that they're superfluous, really call center related companies started going back up as if, whoa, we're still going to need humans somewhere. And we haven't had McDonald's embrace what Wendy's doing with the test of whether we need for drive-through. Starbucks isn't doing it. We haven't even heard, by the way, Starbucks, David. Starbucks in China. Remember the great ambassador to China?
Yes.
Where is it?
Where's Starbucks?
Yeah.
What about them?
They're
in
ambassador.
China. Yeah, they're ambassador. They open stores every day, lots of them.
Right. Every 9 hours.
Yeah.
So what do they have to say? They've been silent. That's where they are. They've been silent.
Sometimes that's a good policy.
Well,
because you don't want to be put in a position where you're going to have to say something, right?
You're not talking about the fact that they said +3, -3 right now. Minus. What's going on with the Chinese middle class?
You've been asking that question.
Well, because there's nothing going on.
Youth unemployment's at a, 20-year high?
Yeah. I mean, LVM, how could Tiffany be doing incredibly well there? And yet, what is it, David? The Chinese, they're doing remonstration classes. You know that. They're back to remonstration classes. Like under Mao. Mao, he was a leader of China.
I'm aware. Yeah, I know. He died.
There you go.
Nixon went and visited with him, and then he died.
You really hit it out of the park with that one. You threw that one right over home plate. Oh, I'm sorry.
You stood in front of the mound, just to be clear. Okay?
They made me stand.
I got on the mound,
all right?
I got on the mound. I went for it. I had my son crouching down 60 feet away, and I went for it.
He keeps living that. The day before, he was king. The day before, he was interviewing Musk, and he was king. And then, I don't know, were you...
Like Icarus?
I think you were Rook.
It was moments before. It was the greatest thing ever. I'm having a catch in the field, and then it was the low point in my life.
My God.
But thank you for bringing it up.
I have no other choice.
Over and over again. I
Many
appreciate
times.
that.
No, that's it. That's the last time. I'm done.
Okay, we'll see about that.
With it.
We'll see about that.
I'm done.
And yes, I do know who Mao was because I listen to you talk about him all the time.
On the Starbucks call, there was a great conundrum, which is that my chapel trust owns it. And I said, no, not -3 for heaven's sake. They don't have enough money for the triple have to do is give it wet. That's how you order it.
I'm aware.
Meantime, guys, relative softness, except for energy. 2 upgrades Jim of Chevron today. I know you've seen those. And these comments from the Saudi energy minister basically telling the shorts to, quote, watch out.
Yeah, that's a dangerous thing. When you start having major people when it comes to oil talking about the shorts, no. It's going to be real demand versus not a lot of demand and real supply versus not a lot. It's not the shorts. It's not the future. What are they trying to get it? The shorts are pressing it to 68. It's a worldwide market, for heaven's sake. But that made me concerned because those who worry about shorts are people who are actually worried about demand.
Well, the meeting is next week. 73, though, would be the highest close in a couple of weeks, at least on Texas.
Look, I think that the oil market, this is summer driving season. It's Memorial Day. If it's not up right now, it ain't never going higher. I don't know whether the Fed's really in there, whether the federal government is refilling or not. But I know that this country we keep discovering more oil, despite the fact that there was some moments where people said we haven't. And you go back to that Chevron deal in Colorado. If they can do 350,000 more barrels, that's meaningful. And so they can worry about the shorts. I'm worried about Mike Wirth, CEO of Chevron, putting his finger on the scale.
On what scale?
Supply
scale.
Well, they did that deal yesterday.
Yeah, they did.
Yeah.
Well, they did. I'm just saying that was 350,000 barrels that wasn't really there. The Colorado, that was not an area where...
The DJ Basin is not...
The DJ Saul Basin is not what we think it is.
It isn't?
David's here, and he's very good. Look, he's felt.
I'm not sure we're supposed to say who's here or not.
Really? Oh, shoot.
Not even supposed to say where we are.
Yeah. All right, how about my wife? My wife's here.
That's good.
Good.
I was much happier to see her.
We addressed Lowe's, guys. We didn't get to DKS, though, with the beat, revenue ahead. He didn't talk about trade down.
No, he actually, Ed Stack, who's executive chairman, he told a good story. And he was distinguished from Mary Dillon from Foot Locker, who I think kitchen sinked, bathroom sinked, attic, basement sinked. Because what I'm concerned about is that it can't be that good on the Dick's side of the street and that bad on the Foot Locker side. I often see them together. Dick's has a panoply of sporting goods. Sporting goods were supposed to be very weak. They were weak in the CPI. CPI actually referred to sporting goods being weak. So I don't know. I struggle over how that index is calculated because the Dick's numbers were quite good. Actually, the only one I think that is really kind of just front and center good.
BJ in line. Comps,
Yeah,
I think comps missed a bit.
They're going to take that one down. I expect Costco to miss only because this is when Costco decides we're going for club membership. We are not going. Remember, their value, they want value and they want transactions. Everyone thinks that they really want price. They don't want price. They want card holders. They want, instead, David, you should trade up. He should trade up from the white card to the black card.
I mean, that chart right there, that's BJ and Costco. Is that what you would expect going into recession?
Well, Costco is driving prices down in order to be able to capture from everybody else. We need to see Kroger. I thought that Walmart was tepid. I thought that Target was tepid. I mean, we can't just decide, if the Fed gets together and says, you know what, Dick's had a good quarter, we're fine. I mean, that would be wrong. I think if they went over the vast panoply of retailers, they struggle the Target. I think Brian Cornell is sensational. He did not say this quarter was good. He said each month was worse. And I don't know why the Fed doesn't come. Someone from the Fed should be saying, you know what, we really have to pause here because each month's worse. But they don't because of wages.
Right, although there's still an expectation they are going to pause in the June meeting.
I think that they don't have maybe they say I took a very expensive plane to get to Washington. We should anecdotally.
If they raise rates in June, that would be unexpected. Right?
I think it would be unexpected.
And that would, I don't know what the market reaction would be, probably not positive.
You're Jamie Dimon. The first thing that happens is maybe people don't make loans. He's Jamie Dimon.
The thing out of his mouth was not necessarily about higher rates per se, but was much more about, as you say.
Why aren't we talking about that?
Well, we did kind of talk about it because we listened to him.
We didn't emphasize it.
Okay.
Let's get some PMIs. For that, we'll turn to Rick Santelli this morning. Hey, Rick.
Yes, global PMIs are coming out from S&P. We know Philly non-manufacturing was still a minus number, even though it improved regarding service sector. Here we go. On the manufacturing side, wow, under 50 again, 48.5. We popped over 50 last month, and it was the first time since October. We're back below at 48.5 is the lowest level since January, when it was 46.9. And if we look at the services, by far the most important aspect of this, 55.1, it's improved, so yields are going to firm up a bit on that. 55.1 is the highest level since April of last year when it was 55.6. And finally, when we put them together, the composite reading, 54.5, also a bit better than expected. 54.5 is the best also since April of last year. Rates have moved up, not to the highs yet, but definitely the service sector is what many are concentrating on because that's the focus of some of the best strength in the economy, especially when one considers the path of the Federal Reserve. Squawk on the Street will return after a short break.
The Bond Report is brought to you by PIMCO, a global leader in active fixed income.
Meaningful actions are not always big.
But one by one, they can add up to something incredible.
Because when you tap or order online with your MasterCard at restaurants and grocery stores, MasterCard will donate 1 more cent up to $5 million to Stand Up to Cancer. As individuals, we are powerful.
But never as powerful as we are when we come together. The strength of us, priceless.
What's the alternative to riding the public market roller coaster? The alternative is alternatives. Private market alternatives help you outperform the traditional portfolio by up to 40%. Meet YieldStreet, the leading private market investment platform with 9.7% realized net annual returns across 10 highly vetted asset classes. Join over 400,000 members with over $3 billion invested. Diversify with alternatives. Open an account at YieldStreet.com.
You founded your kayak company because you love the ocean, not spreadsheets.
you need to hire.
I need Indeed.
Indeed you do. Indeed Instant Match instantly delivers quality candidates matching your job description. Visit Indeed.com/hire.
At Avocado, we believe what's better for you is better for the planet. That's why we're so excited to introduce our new radically affordable eco-organic mattress, starting at just $6.99. Crafted with the same incredibly comfortable, certified organic materials you've come to expect from Avocado, but at a price that puts sustainability and a great night's sleep in reach of everyone. Learn more at avocadomattress.com.
AG1 by Athletic Greens gives you the daily nutrients that form the foundation for your health routine. It's made with the highest quality ingredients, put through the strictest quality testing standards, so everybody can own their health. Start your journey at athleticgreens.com.
Are you sick of UTIs? I had 8 in 1 year. This inspired my husband and I to start Eucora.
Eucora makes a UTI emergency kit to manage your symptoms until you can see a doctor.
If you get UTIs, try Eucora. Eucora saved my life.
Try today at eucora.com.
When the details take precedence, the rest falls perfectly into place. We strip away everything but the essential. And what we're left with are thoughtful bedrooms for modern living. Thuma.
Today, CEOs convene for CNBC's Premier Council Summit. Exclusive one-on-ones with Apple's Eddie Q and Nike's John Donahoe, plus a deep dive into the world of AI. CEO Council Summit. Coverage all day today, CNBC.
Here we go. We got a treat. Let's bring in a company with a strong pulse of the broader economy across pretty much everywhere. Talking about EY Chairman CEO Carmine DiCibio. He's joining us now. Hey, Carmine, great to have you out here on the show.
Thanks, Jim. It's great to be here. It's great to be here.
Well, you know, you talk to everybody. You actually do talk to everybody. I mean, he even talks to the king, the king of England. He showed up there in the coronation.
Yeah.
Are people going to stop hiring for now, both because of the economy and also because maybe you can hire people? ChatGPT is cheaper to hire.
Yeah. So we have been seeing a slowdown in hiring, Jim, across the board, in particular in professional services, which is what we're in, but really in any kind of more professional kind of jobs. And so that has been slowing down. That's something, if you look at a lot of the consulting firms, including ourselves, they've moved their start dates for their new hires. Their new hires are supposed to start in September or even August. They've all been pushed back to January. And so there is, the job market is actually a lot tougher than it was 6 months ago. So we are seeing that, as we move along here. And it really has nothing to do with ChatGPT yet. It has to do with the fact that many companies were hiring based on attrition rates that were much higher. A year ago, a year and a half ago, post-COVID, people were leaving, great resignation. Those attrition rates, for example, for ourselves, went from over 20% down to 12 pretty suddenly. And so therefore, a lot of companies, including ourselves, have found ourselves with more people than we need at this point in time.
Do you think there will be a round of layoffs the way we've seen previously going into recessions? Right now, we really don't have many big such and such a company lays off 5,000.
Well, in the tech sector, we've seen some of that. We've seen, announcements of that. Of course, it's a small percentage of the workforce because there's been so many jobs that have been created. But I think you'll see more of that as we move into it. Now, that does not count the service sector, hotels, restaurants. There, the job market is still pretty tough. There, we still need more people. We need more services people. And that's, when I talk to our clients in those businesses, that's still an issue.
Well, aren't you surprised that wages remain so strong away from that industry? And I say that because you would think that somehow the Fed would be able to say, we see wages peaking, but they're not.
Yeah, I'm actually surprised at that. I think that's a good point. They're not really peaking, and I think maybe that's a little bit of a laggard. You'll see more of that in the next few months, for sure. But, if you get into the whole ChatGPT thing, that will, that is, everyone's talking about it. It's number one item, AI, generative AI. We're doing a lot of work in this area with our clients and with ourselves. We've created, for example, we do a lot of work with HR functions of companies. We've created basically a chatbot that answers all the questions employees have around their pay stub and everything else. This ChatGPT with OpenAI on Azure, it's ingesting 500 questions a day, and it's learning really, really fast. And this is something that we'll utilize ourselves, but we'll also license out to clients.
Are you seeing the number of use cases? I mean, I think JP Morgan yesterday said their number is up 34 year on year.
Yeah,
active use cases.
The number of use cases, Carl, is going through the roof, and it's all different sectors. Some of the use cases are more set on efficiency, which will mean that it will replace some jobs. Some are more set on, generating revenue, and how do you generate more revenue. So the use cases, we really look at it by sector. Each sector, and we're working with different companies in sector, have different types of use cases. And we're working with a lot of our clients on those exact use cases.
What about productivity then? I know it's early, incredibly early, but I mean, every 48 hours there seems to be some sort of step function here. Yeah. What are your expectations when it comes to productivity in terms of the use of generative AI over, let's call it, the next 3 to 5 years?
Yeah, David, I think that's a good point. Like everything else, people start saying, oh my God, it's going to replace all these jobs and so forth. But this is really an evolution. Like everything else in technology, it'll evolve. It will definitely replace jobs, and it will make things more productive, but it's going to take time, and jobs will change, just like any other piece of technology.
So you're not in the belief that it will wholesale replace a lot of jobs across the board?
Over the long term, it will replace a lot of jobs, but those jobs will also change. That's been true with almost every piece of technology that's been invented.
Can you tell us about Europe? You've been there so many times. Is Europe stronger than the United States?
No, I will say, Jim, Europe is incredibly resilient. I mean, that's the word that I use with Europe. I mean, every time we think things are going wrong, there's a war in Europe, Europe just kind of moves through. People are resilient, consumers are resilient, and for us, Europe's done incredibly well. We have very good growth in Europe, double-digit growth, a lot more transformations going on than people realize. Some of those are more exemplified in the U.S., but there's a lot of them going on in Europe with different countries, different companies.
Why I am just curious about the split or the plan to split. You were obviously supportive of that, pushing it. You spent a good amount of money on it. How disappointed were you when you had to decide to shelve that split of audit and consulting?
Yeah. David, I was obviously very disappointed. It's something that the strategic rationale behind the split made all the sense in the world. It still makes all the sense in the world. But the execution of it, the complication of it, remember, we're a partnership. We're a series of partnerships. We're not a corporate. A lot of CEOs you all talk to, they say, go that way, and everyone goes that way. With us, it's much more consensus-driven in terms of all the partners. And so it didn't happen this time. We have a lot of learnings that we're incorporating into our strategy going forward. One of our advisors told me early on that we'll learn a lot more about the organization. And I've been there 38 years, so I know a lot of the organization. But it's amazing when you go through a process like this how much you learn, and we're incorporating that into going forward.
I know I'm supposed to end, but I have to ask you, Coronation, what was it like to be there?
It was great. I think I'm involved in this organization, the Sustainable Markets Initiative, with Brian Moynihan and with now King Charles. And our whole mission is to really get the private sector much more involved in sustainability and working with the public sector. So that's one of the reasons why I was there. King Charles is very, very passionate about this, and he makes it known.
Well, yeah, you've just done great things, Carl. Just great things.
Thanks for having me,
Well,
guys.
we've got Mad tonight.
Jim, what's up?
We've got, we'll have a little bit of Eddie Q from Apple. We have Palo Alto. We have Nikesh Arora. We've got Carrier. David Gitlin's here. And then we've got Anthony Noto for SoFi. So it's very exciting here, I've got to tell you. And one of the great things is to see you in this venue. Thank you.
Thank you. Thank you, guys.
Good to see you, Jim. We'll see you tonight.
Thank you.
Still ahead, an exclusive with Michael Dell, talking everything from AI to the tech rally and a lot more. A big show still ahead from Santa Barbara. Don't go anywhere.
You need new replacement windows, but you're just not sure if they're in the budget this year, right? I'm Brian Gary here with Ted Coons from Renewal by Andersen, and he's here to talk about how to make window replacement more affordable.
Well, first, Brian, you don't have to do them all. You could just replace your worst windows first. Or another way to make them affordable is to change the style of window. For example, you could do a gliding window instead of a casement. We have a lot of ways to make window projects really affordable.
Compared to other window companies, you have a completely different business model.
Yeah, with other companies, there's just too many people involved in the process. There's the manufacturer, the seller, and then the installer, and then the customer. And if you call with a problem, that's when they say, oh, well, we're the manufacturer. You have to call the installer for that problem, or vice versa. We're the full-service replacement window division of Andersen. With us, there's no passing the buck. At Renewal by Andersen, we sell, build, install, and warrant our windows and patio doors. So if there's ever an issue, we take full responsibility for it.
Why don't you sell vinyl windows?
Well, a lot of vinyl products just don't hold up well in the elements. You know, like a vinyl fence. When it's first installed, it looks great, but with expansion and contraction, it discolors and cracks. For that same reason, a lot of vinyl windows just won't last. Our window material is a composite that combines the best of vinyl and wood. Well, Fibrex is low maintenance like vinyl, but stronger than vinyl. And it's beautiful like wood, but doesn't require the upkeep of wood.
Before May 31st, buy one window, patio door, or entry door and get the next one 40% off. That's 40% off with a minimum purchase of 4. Plus, save an extra $150 on your entire project with no money down, no monthly payments, and no interest for 1 year. This offer ends May 31st. For a free appointment with Renewal by Andersen, call 1-800-918-0808.
My dream is to talk to people, real people, about stocks. We created a club to do it.
Join Jim Cramer and the CNBC Investing Club. Scan this code or go to cnbc.com/investing club for an exclusive offer now.
Good Tuesday morning and welcome to another hour of Squawk on the Street. I'm Sarah Eisen here with Carl Quintanilla, David Faber, live for you from CNBC's inaugural CEO Council Summit in Santa Barbara, California. Good morning. We are about half hour into trading and it looks like stocks are under a little pressure. S&P's down 0.2%. NASDAQ down about 0.25%, still higher on the week. You've got energy, utilities, real estate, and consumer discretionary positive. Everybody else is falling in the early going here.
Pretty decent diet of eco data this morning with PMIs, and there's a little more crossing the tape. Let's get to Rick Santelli. Hey, Rick.
Yes, Carl, let's look at Richmond Fed for May. On the manufacturing side, minus 15, the weakest since February. If you look at the services side, Richmond Fed Business Index, minus 17, which is exactly equal to March. And, of course, it follows minus 27, which was the weakest level since May of 2020 and still unrevised, which continues to demonstrate that there are lots of reasons that many are looking for a recession down the road. New home sales for the month of April expected to be up 665,000 seasonally adjusted annualized units. It bested that, 683,000, which would have been exactly the same as last month, but it was revised. Last month now stands at 656,000. So 683 stands out as the best level going back to March of last year when we crossed the threshold over 700,000. And to get a little bit more color on why single-family homes seem to be improving here, let's go east to Diana Olick. Diana?
Rick, actually, I'm out west, but I'll say it's all about the inventory. There's just nothing for sale out on the existing home market, and that's why we saw existing home sales drop. Now, these are based on signed contracts in April, so people out shopping, looking at their mortgage rates were to right around 6.5%, so kind of in the middle of where we've been skewing between 6 and 7%. We're up closer to 7% today, but it's all about incentives. And I'll note that the builders were dropping prices, too. We had a median price of $420,800. That's down 8% year over year. So the builders are doing incentives. They're buying down mortgage rates. They're lowering prices, and they're seeing traffic come in. They said it in their builder sentiment survey that they're just getting so much more traffic because of the lack of homes for sale on the existing side. Builder sentiment popped up into that positive zone for the first time since last summer. So the builders are really benefiting from it. The question is, can they build more? Because we're not seeing as much new construction as we'd like to see on the single family side. Still a lot of multifamily, but we need to see more of that in order to get this out there. Now, there is a 7.6-month supply. That's unchanged month to month, which is much better, of course, than the 2-month supply you're seeing on the existing side. But the builders still are only building what they're selling. They haven't gotten that much. We're starting to hear rumbles about getting into the spec market, but so far we need to see more of that. Sarah?
All right, Diana, thank you. Diana Olick. Guys, just to take a pause here on the markets, yes, we're pulling back a little, but the story has been strength, especially we know the tech-heavy NASDAQ, highest level now since August 2022, which is just interesting because it continues to occur, first of all, as a surprise, and part of it is that the positioning has been very bearish. The speculative hedge funds and other speculators, net shorts, S&P futures, near record levels. We've taken out the 2011 levels and now back to 2007 levels. And that just tells you the pain trade continues to be higher, and it's interesting that it's coming in the face of rising treasury yields and higher rates.
The long bond above 4, first time since March, 10-year 3 3/4. The 6-month, some crazy numbers on the 6-month. You got to go back to 2001, and we know the reason for that.
Yeah, that's debt ceiling, obviously. Are we right near 5.4 or something along those lines on 6-month? How is that figuring into things at this point, Sarah, in terms of the debt ceiling and or the market reaction, which doesn't seem to be particularly strong at this point, one way or the other?
I feel like it's been a sense of optimism around the debt ceiling. Certainly last week, the market rallied because of all this constructive commentary. And even yesterday, as talks broke down, the tone was good. I mean, House Speaker McCarthy, even, who's been more the bad cop in terms of rhetoric, said that it was the most fruitful of negotiations. But after 90 minutes, again, there's no deal. Deal remains very elusive. Treasury Secretary Yellen continues to come out almost every day saying, look, June is still the date, early June. You know, by June 15th, we're out of money to pay our bills. And so she's continuing to beat the drum on the urgency. We're continuing to hear from the politicians there won't be a default. I think the two big questions for investors are, if things are going constructively in tone, does that mean that we'll get more than just a very short-term debt ceiling bill? We don't want to be here again in a few months trying to raise the debt ceiling.
They want to extend it beyond the 24 elections, ideally.
Right, which
we don't
would
want
be
this
a
to be
positive,
an issue
right,
again.
For investors.
Right.
We don't want that to be an issue. And then what does the fiscal trajectory look like? Are we actually talking about cuts, right? Do we talk about cuts that will impact the economy? We really don't know too much about the details of this deal beyond COVID savings and other things that they can sort of agree on.
Some sort of caps, perhaps, a work requirement for certain programs as well. On to the other side of things, the interest rate picture. Sarah, you know, we heard from Lowe's, once again, sort of indicates perhaps a dip in discretionary spending. Jim, we were talking about this obviously in the last hour in terms of it seems as though consumer demand is weakening, except perhaps for air travel, but nonetheless, wages continue to be strong. Any new data points that you've got?
Well, we have a few retailers this morning. It's a little bit hard to tell because so for Dick's, the big beat on earnings was because of a tax benefit, and comp store sales, while growing, it wasn't a Foot Locker-like disaster, were a little bit weaker than expected. Just some commentary out of the BJ's wholesale call, and BJ's with good numbers. They tend to benefit during times like this. The CEO, Bob Eddy, says the perspective is clear, and there is pressure out there, and as you would expect, those folks in the lower economic strata are feeling more pressure than those at the high end. So basically what we've learned from earnings season so far on retail is that the trends that we're developing in the previous quarters, pressure on the low income, pressure on big ticket items, especially do-it-yourself home items. We saw that in Lowe's and Home Depot. Those trends are accelerating and worsening. And I think there's more pressure on the consumer, and we're starting to pick up threads about weakness in the luxury space, in the higher-end consumer. Walmart told us there was some trade down from higher-income consumer. Not hearing a lot of recessionary talk, but definitely things have worsened. And I think that jibes with the fact that we've seen higher interest rates. We have the rate shock. We've seen the inflation shock. We've seen the regional bank shock. And the stimulus is fading. It's not fully faded. I think that the estimates are for the end of the year, but it is coming down, and that's going to have an impact as expected.
Yep. Fresh Reuters poll about where the market's going to end the year. In February, consensus was right at 4,200, now 4,150. So that's moving sort of in the wrong direction. On the other hand, yesterday, third best retail flows of the year. So we're definitely chopping around here as we sort of navigate the high end of this range. Kashkari yesterday seeming to endorse a pause in June, and BlackRock today saying that's pretty much what they're expecting would be a pause in June, and not necessarily a given that you end up in a deep recession, sort of echoing Diamond yesterday.
Clearly, the Fed is considering a pause and is leaning in that direction. The problem, guys, is that core inflation is at 5.5%, and we don't know how fast it's going to come down. Half the people I talk to will tell you, non-issue, look everywhere, early signals, it's coming down, the Fed should not be worried about this at all. And then the other half say, there's some real sticky elements here to this inflation. Look what Jamie Dimon said, get used to 6 or 7% rates. If he would have said that last year, I think the market would have taken that really negatively. But this market is choosing to ignore the hawkier side of the arguments and continues to price in 50 basis points of cuts by January of next year. That's not a 6 or 7% rate.
No, it is far from a 6 or 7% rate. Obviously, there has not been any talk, though, of any of these Fed governors that we've heard from about cuts during the course of this year or even early
none of
next.
They won't even go there.
Right.
And in fact, they explicitly say, we're not thinking about cutting, including Fed Chair Powell. He says it at every press conference, and the market continues to go the other way. The other factor, guys, of course, is China, and it's a huge topic of conversation here at our CEO Summit. You know, last night, I had the chance to speak on stage with John Donahoe, the CEO of Nike, and we talked about a lot of things, consumer, AI, politics, but his views on China in particular were what stood out to me, because here's a company that employs 250,000 people in China. They rely on it for the consumer market, and of course we know a lot of sneakers are produced there. Here's what he said about some of the recent tensions which have escalated between the U.S. and China.
If you're going to be a global company, you've got to play by both a global set of rules but also local sets of rules. And that's just a reality, and the local sets of rules differ. So in China, we have a very strong local business. We play by the local sets of rules. We don't violate any global rules, including human rights ones. But we very much understand ourselves to be a local citizen with our China consumers and our China team.
How important is China for you right now?
China's been, as you know, China's a very important market to us. Phil Knight entered China 40 years ago, and he took a very long-term view. He was early. And it took years for the business to build up. So we've always taken a long-term view in China. And as you and I have talked several times during the last several years, we're trying to maintain very much of a long-term view during this period. There have been ups and downs over history. And we're blessed where we have strong leadership position. In addition to our supply chain, it's an important end-user market. It's part of our supply chain, but even more important, it's an important end-user market for us where Chinese consumers, we're the Jordan, the Nike, and the Converse brands are the leading brands with really strong connections with consumers in China.
Isn't it risky, though, to go so deep into China, especially on technology?
The good news is we are not a strategic industry, right? You know, and so
you're a major American brand.
But we are one that the Chinese consumer wants, and so we want to continue to make it that way by delivering the most innovative product, a brand that they identify with. We're the number one cool and favorite brand in Shanghai and Beijing. In fact, that's expanding our leadership position.
John Donahoe facing a series of questions, guys, and I asked him, you know, it came out of a discussion about how Nike has been unafraid to speak up for its values and the values it sees of its consumers. We talked about Colin Kaepernick. We talked about when they cut Kyrie Irving and how they can't do that in China. Right? For China, they operate increasingly local innovation centers in China. For the Chinese market, they think differently about what the Chinese consumer wants. And you know, they cannot get involved in the politics. It's just a different way of operating, and they continue to face questions. I said, what happens if China invades Taiwan?
Right. I mean, it came up last week again in the Musk interview. He said it's you know, have to read between the lines, the quotes from Musk, and obviously called it, you know, taking the two economies apart, taking apart conjoined twins. I mean, it would be bad, Sarah. There's just no doubt about it across the board for every company, period, including obviously Nike.
John wouldn't go there. He said, look, I would not sleep if I had to worry about all these geopolitical risks, but obviously there's contingency plans, didn't go into it. But it would be a big headache. Now, he also says we're not a strategic industry, which I know you guys talked about with Jim. They're not chips. It's not Micron. So it doesn't feel like they're in direct firing line when it comes to some of these issues and these tensions on trade. They pay a lot of tariffs, though.
He did say that.
Yeah.
They pay a lot of tariffs,
Yeah.
and happy to do so.
Yes, because they're happy to have the business, because it's a huge and growing market, increasingly a profitable one for them.
China continues to be, of course, top of mind for so many executives, those who lead companies that have businesses, or even those who don't have businesses, perhaps, that are so centered on the country as Nike does. All right, let's move to another issue that's also top of mind right now, and that's the latest talks around the debt ceiling. That's a day after President Biden and Speaker McCarthy failed to reach a deal. Kayla Tausche's live from the White House, and she's got the latest for us. Things keep changing. Kayla.
They do keep changing, David, but a lot's still staying the same at this hour. Negotiators set to meet again on Capitol Hill. They met last night at 9 p.m. After the meeting between President Biden and Speaker McCarthy, they're trying to move the ball forward on what was overall a positive meeting between the two principals, even if it failed to break a ton of new ground. On the tape this morning are the deputies to Speaker McCarthy who are leading negotiations for him. They said that they are trying to plug forward to get a deal, but they say that the White House still is trying to push to spend more money in the 2 fiscal years going forward, and they want the White House to understand the urgency of needing to spend less. So what happens from here? Well, here's essentially what still needs to happen before June 1st. First, they have to reach a deal. Second, there has to be legislative text written to accompany this deal that would be very robust, including some changes to programs and everything that's been negotiated. Speaker McCarthy has told his conference that he would give them no shorter than 72 hours to read what's in it after criticizing the robust government spending bill from last December that was jammed through right before the holidays. And then, of course, they need to vote on it. The House of Representatives is set to break for the Memorial Day recess on Thursday afternoon. The Senate is already out and returns on Tuesday, but the House is out next week. So it's already looking from that timeline like you're going to have the House of Representatives potentially working through the weekend if McCarthy holds to that 72-hour window to allow members to read the deal. Well, at least for McCarthy's part, he seemed optimistic leaving the meeting and said that it had been a better meeting than he's had so far in this process. Here he is in his own words.
We're not saying, oh, let's bring something new into the discussion. Let's not talk about raising taxes. That's been off for a long time. We literally talked about where we are having disagreements and ideas. So to me, that's productive. Not progress, but productive.
Is some incremental progress being made? We've learned from sources that a couple areas of agreement is rescinding some of the COVID aid that hasn't been spent. It's not a lot of money. It's anywhere between $20 and $60 billion, depending on how you count it. And then there's the potential for some health care savings. The White House, at least, is optimistic about that, according to my sources, because the GOP's appeared open to it as well. What exactly that looks like, we still don't know, but we know that the discussion is around potentially reforming some of the areas of Medicare Plan Part B, Part D, Advantage plans, drug price negotiations, where the White House feels that the government is overpaying drug companies, insurers, physicians, hospitals, etc., and they feel like that's low-hanging fruit where they could unlock potentially hundreds of billions of dollars. So we'll see exactly what ends up being on the table here in a potential deal. They're moving forward, but David, the clock is ticking and June 1st is approaching quite quickly.
It certainly is, Kayla. June 1st and or perhaps a few days after that, as Secretary Yellen has made clear, time's going to run out. Kayla Tausche, thank you. As we head to break right here, let's give you a quick roadmap for the rest of the hour. That includes former Treasury Secretary Jack Lew will be joining us, breaking down, of course, the latest from those ongoing debt ceiling talks.
Apple just announcing this big chip deal with Broadcom. We'll talk about what that means for both companies.
Plus, a rare exclusive interview with Michael Dell, weighing in on the AI arms race, and some new announcements from that company today. Big show still ahead. Don't go anywhere on Squawk on the Street.
If you have employees, you need to check out the ERC program, Chef Wonderful. Why, Mr. Wonderful? Because it's cash flow that you don't have to pay back. Good to know. This guy's so smart and so handsome. Go to WonderTrust.com to see if you're eligible.
Hi, Phil Swift here. This is Flex Super Glue. Just one single drop virtually welds itself to the surface and can easily lift over 3 tons. Get the new Flex Super Glue because it works.
You're doing everything you can to get your blood pressure in check, and now you have SuperBeets Heart Chews on your side too. In a leading clinical study, SuperBeets Heart Chews polyphenol compound was shown nearly 2 times as effective at promoting normal blood pressure as a healthy lifestyle alone. Just 2 delicious chews a day support nitric oxide production, healthy blood pressure, blood flow, and heart-healthy energy. Support your healthy blood pressure with SuperBeets Heart Chews. Get a free 30-day supply and free shipping at superbeetschews.com.
Create social media ads with Fiverr. You'll need your brand manager, copywriter, and Zena, a Fiverr freelance video editor that works with Fortune 500 companies who will join your team from home. Her home, not yours. Expand your team with a Fiverr freelancer.
Sure, you should teach him to ride a bike. Then use Greenlight and teach him how to invest in bikes. Teach him to be smart about money, and he'll go far.
Super far! Oh, hey, Mom!
Navigate the world of money together. Invest in your best investment. Greenlight.
Do you have a box of videotapes, film reels, or photos that are degrading?
Legacy Box professionally converts them to DVDs, thumb drive, or the cloud.
Legacy Box is simple and safe, with over 1 million satisfied customers.
Visit legacybox.com.
Mark?
All right. I think I got it right here. Let's go. Let's go. Let's just copy that.
I love my parents. So as they've gotten older, we've had to have some not so fun conversations about their wishes if something were to happen to them.
As an estate planning attorney, most people that would come to my office were looking to create a will for their family, but many couldn't afford the fees.
That's why we started Trust and Will, a modern and affordable approach to estate planning.
Attorney-designed documents, customized by you, all through an easy-to-use website.
The way a will should be. Find the plan that's right for you at trustandwill.com.
Shares of Broadcom moving higher on this deal news with Apple this morning. And for that, we'll turn once again to our Steve Kovac. Hey, Steve.
Hey there, Carl. Yeah, Apple and Broadcom announcing what they're calling a multi-year and multi-billion-dollar agreement for 5G radio chips. Now, this is a continuation of a previous agreement from about 3 years ago. There are no specifics on how long exactly it will last or how much Apple has committed to pay Broadcom this time. But the last agreement, Apple agreed to pay Broadcom $15 billion, so you can use that as kind of a guide. Now, Broadcom shares rising a little over 1% on the announcement. It was up as much as 4% before the bell rang. Now, a little context and history here. Back in January, Broadcom was under pressure following a Bloomberg report saying Apple wanted to make its own chips to replace Broadcom's. Now, that's not going to happen anytime soon after this announcement was announced. Could be a sign Apple couldn't get its own solution ready in time, assuming that report was accurate, of course. But Apple may be closer to making its own 5G modems, which it currently buys from Qualcomm. Speculation that Apple will have its own 5G modem ready as soon as next year. That means it won't have to pay licensing fees to Qualcomm, which come out to about a few bucks for every iPhone sold. Apple also highlighting some of these components from Broadcom will be made in U.S. cities like Fort Collins, Colorado, and saying part of a previous commitment from Apple to invest $430 billion in the U.S. economy over 5 years. David, I'll send things over to you.
Okay. Thank you, Steve. Thanks. Still to come right here, you're not going to want to miss our exclusive interview with Michael Dell, live from Dell Technologies World 2023, talking everything from new products, AI, and a lot more. We'll be right back.
The perfect platform bed frame. Timeless design and modern functionality. Comes together in minutes. The bed by Thuma.
If you have employees, you need to check out the ERC program, Chef Wonderful. Why, Mr. Wonderful? Because it's cash flow that you don't have to pay back. Good to know. This guy's so smart and so handsome. Go to wondertrust.com to see if you're eligible.
You got the rings?
Hello. You guys don't look that bad.
Yeah, thank you.
Thanks, man.
Luxury that lets you feel infinitely you.
Introducing the world's smartest fence. Halo Collar is a virtual fence inside a collar. The fences can go wherever you go, allowing your dog the freedom of a life off leash.
Lily! Welcome to our third Barkery.
Oh, I can tell business is going through the woo.
Honestly, we need a reliable way to help keep everyone connected from wherever we go.
Well, at AT&T, we'll help you find the right wireless plan for you, so you can stay connected to all your drivers and stores on America's most reliable 5G network.
That sounds just perfect.
Terrierific.
I Labrador you.
Round of applause.
AT&T 5G is fast, reliable, and secure for your business.
The biggest ideas inspire new ones. 30 years ago, State Street created an ETF that inspired the world to invest differently. It still does. What can you do with SPY?
These bills are crazy.
She has no idea she's sitting on a gold mine.
Well, she doesn't know that if she owns a life insurance policy of $100,000 or more, she can sell all or part of it to Coventry for cash, even a term policy.
Even a term policy?
Even a term policy!
Find out if you're sitting on a gold mine. Call Coventry Direct today at 800-476-0100 or visit coventrydirect.com.
Squawk Box, weekday 6 a.m. Eastern on CNBC and streaming live on Peacock. Your next best investment starts with CNBC Pro, the ultimate investing playbook. Scan this code or go to cnbc.com/pro for an exclusive offer now.
Back to Squawk on the Street. I'm Seema Modi with your news update. A 19-year-old intentionally crashed a U-Haul truck into a security barrier near the White House last night. According to the Park Police, he has been arrested on multiple charges. They include threatening to harm or kill a president, vice president, or family member. Authorities also seized a Nazi flag at the scene. No one was hurt. Former President Donald Trump is scheduled to make a virtual appearance in a New York criminal court today. Last month, he pleaded not guilty to 34 felony counts related to a 2016 hush money payment. During today's hearing, the Manhattan District Attorney's Office will hand over their evidence in the case to Trump's lawyers, and the judge will spell out a protective order that prohibits Trump from publicly disclosing that evidence. And U.S. Surgeon General Vivek Murthy is calling for tech companies and lawmakers to protect teenagers' mental health on social media. He also says we need more research on its impact. He made the comments after the release of a new report that warns social media platforms are a major contributor to mental health problems affecting teens. Sarah, back to you.
Seema, thank you. Seema Modi. Dell World kicking off in Las Vegas with some big announcements for investors. Dell Technologies Chairman and CEO Michael Dell joins us now in a CNBC exclusive. Michael, it's great to see you. Thanks for making the time. A lot of big new partnerships you're out with today. Microsoft, Red Hat. I think I'm most interested in NVIDIA because you're going to work with NVIDIA on AI for enterprise. Talk to us about what this looks like.
Yeah, absolutely. Great to be with you, Sarah. And, you know, at the center of the AI boom is data. You can't have AI without data. And you also need an incredible amount of processing power to deal with this data. And so we've been creating servers and infrastructure specifically for this AI boom. And we announced a number of new innovations here at Dell Technologies World. We've got more coming later on today. And look, I think this is an enormous unlock of the power of this data. And, you know, I think it's the next big wave. So we're quite excited about it. And certainly it requires enormous amounts of storage and infrastructure and all the things that Dell Technologies provides.
Yeah, I was really eager to hear from you, Michael, on AI in particular, because we haven't really heard from you since we've seen this wave sweep across the market and corporate America. How are you positioning Dell, your company, around generative AI, and just how big do you think it's going to be?
Well, I think with generative AI, you're going to see a proliferation of both open and closed source models, and companies will likely have a large number of these models at play to deal with their data. And in some cases, the public models will be appropriate, but in many cases, they'll want to make sure their private data is secured and protected. And the problem they're trying to solve is a simpler problem. So if you think about a bank, right, it wants to improve fraud detection and improve customer service and, be able to work with its customers in a more effective way, cross-sell different offerings. It doesn't need its data to generate beautiful artistic images or write poems or know all sorts of other random things that are not relative to the bank's business. So it's actually a simpler problem. And so I think you're going to see a proliferation of these models. And of course, that's going to require lots of new infrastructure. You also have at the same time this intelligent physical world that's emerging, what we in the industry call edge computing. And this is also generating huge amounts of data. There will be new servers required for inferencing at the edge to process all this data and turn it into something useful. And, we're quite excited about all those opportunities.
How do you think about the impact of AI on labor and productivity?
Many estimates on this. My net view is this is going to dramatically enhance human productivity, and certainly there will be new jobs that are created. With any new technology, you're going to have jobs that are less needed as well. But look, I continue to be an optimist about the role technology plays in our world. When I meet with our customers who are, for example, working in cancer, right? The advances in gene therapies, in the development of RNA vaccines, in immunotherapies, and gene editing, all of these things are driven by computing power and AI, and there are wonderful advances. So while we could sort of doomsday about all the horrible things that could happen, let's not forget all the amazing things that are going to happen in the next decade and beyond with all this technology and power that's being unleashed.
Still, the doomsday scenarios are out there, and there are concerns, and it's getting attention, certainly of regulators. And G7 this weekend, they said they need to start working on AI guardrails. Do you have any sense of what that should look like? Do you have an opinion there?
I think we do have to be careful and think about this in a thoughtful, ethical way and in a responsible way. It has to reflect our humanity. There should be some guardrails and probably some controls about who has access to, what types of computing power and that sort of thing. And we'll certainly weigh in with the regulators on that to help develop those in a thoughtful way.
I'm looking at your stock; it's down 1%. So, not getting the AI boost that some of the other companies when we get from these announcements, Michael. And you've been weighed down a bit by the PC cycle, right? And what's happened post-COVID and the continued decline there. I'm curious, first of all, whether you think the stock is undervalued and underplaying what you're seeing in enterprise technology on the other side of your business, infrastructure.
Well, Sarah, we've been buying back our stock, and that's been going on for quite some time. We also have initiated a dividend a little over a year ago. We just upped the dividend by another 12% recently. And so, look, I think Dell is, very well positioned in a $1.4 trillion market. We had $102 billion in revenues last year. Yes, there's some ups and downs. We had a big boom in buying as everyone was working from home. Now everyone's returning to the office. We have AI, we have the edge, we have multi-cloud, security. So while customers are focused on controlling costs, they're also very focused on continuing their digital transformation. And, here at Dell Technologies World, we're talking all about that and helping our customers prepare for that future.
Hey, Michael, it's David. You know, I can remember you many times saying you're not crazy about being a public company CEO, and then you weren't. You took the company private. Given what you just said, I always wonder whether you would ever consider doing it again if you don't feel as though you're getting the appropriate valuation in the public markets.
Well, you know, that was 2012, David, and this is 2023. Many things are different. The interest rate environment's different. You know, Dell is a very different company than it was then, and we have absolutely no plans to go private.
There you go.
On the deal front, though, you do have an important transaction involving VMware getting sold to Broadcom. It's in front of the CMA, which you know, has been a tough foe lately when it comes to deal making. Any updates for us in terms of your confidence that that deal will get the regulatory okays that it needs?
You know, I don't have any updates beyond what you've been hearing from the companies, and you know, the transaction is making good progress. The reviewers, the regulators are obviously doing their reviews, but we continue to be confident the transaction will close as planned.
Hey, Michael, it's Carl. We've been trying to watch the line between the regional banking crisis, some 11 weeks old now, and any degradation in demand from financials for technology. We know they're a huge buyer, if not the largest. Have you noticed any, at least on the margin?
You know, I've been looking for that myself, Carl, but I haven't really seen it. And I think the big financials, if anything, are leaning more into accelerating their digital transformation. And while we've heard from customers that they're controlling costs, the one area that they're not slowing down is how they forge ahead digitally. And they know they really can't fall behind there. And now with what's going on with AI, of course, this enormous unlock of the power of data, nobody wants to be left behind there.
The other thing that we talked about with regard to Dell in recent weeks has been your comment about customers demanding components that are more free of China supply. And I wonder if there's been any movement on that. Is that rolling forward, accelerating? And if so, would you attribute it to the tensions that obviously have had trouble getting any better?
You know, we have built one of the most resilient and strongest global supply chains, and certainly a part of that has been not really being dependent on any particular region. And so that continues, and you know, we certainly have important businesses in all regions of the world, but resiliency is a major theme. It's super important for customers. They depend on our technology. You know, our technology literally runs the world. We've got 98% of the Fortune 500, you know, as our customers, and they want to know that they can depend on our supply chain, and they can.
But what happens in a scenario where China invades Taiwan or China arms Russia? I mean, you have to be, as I was talking to John Donahoe here yesterday of Nike, you have to be thinking and making contingency plans about what that looks like, don't you?
That's right. And, you know, we think about those unexpected scenarios all the time and prepare for, you know, whatever events might occur. I'm not going to speculate on that. But look, we have a resilient supply chain that is built to last. I do think, you know, a complete decoupling with China is not practical and not likely as well. And, you know, look, hopefully these issues get resolved. But in the meantime, we'll continue to build the strongest, most resilient supply chain in the world that can withstand, you know, whatever shocks are thrown at it. And look, I think during the COVID period, we redeemed ourselves extremely well, showing the strength of our supply chain with customers, and we'll continue to do so.
Hey, Michael, our viewers may not focus on it as much, but obviously, you know, you also, your family office is very busy making investments. You recently did an important deal with Byron Trott's firm. You merged. I'm just curious to get an update in terms of what you're seeing there and whether it's meeting the expectations you had, when you did make that deal with BDT.
Yeah, that's right, David. We combined BDT and MSD and really have created an amazing firm. The reception and activity has been far greater than any of us expected, and we continue to advance all the areas where we're active. Certainly, helping founder-led companies and family-owned companies in private equity and helping them plan out their futures. We have a fantastic private credit business that we established at MSD, over 2 decades ago, a great real estate investment business, as well as a growth and venture equity business. So the new firm, BDT MSD, is doing extremely well. Super happy to have Byron and Greg combined together, leading this firm, and tons of opportunity ahead for all of us.
Greg Lemko at our CEO Summit here in Santa Barbara.
Oh, good.
Michael, finally, you mentioned Carl asked about the financials, but just overall on enterprise spend right now, every economic cycle, and when there's a downshift, we see companies cut. Is this time going to be different just because of these secular opportunities we're facing around AI and cyber and everything else where companies can't afford to cut those budgets?
Sarah, I think there's some overhang from the incredible spending that occurred during the COVID period. But generally speaking, the IT sector, the technology sector is a growth sector long term. And again, we're in a $1.4 trillion TAM space. Just think about the growth in data in the world, right? It's not slowing down at all. Now you've got 5G networks and, anything that you want to do that's interesting in the world has data right at the center of it. So that's going to continue to be a long-term growth driver, notwithstanding the, interim fluctuations.
Michael Dell, thank you so much for spending the time with us this morning from Dell World Conference. Appreciate it.
Thank you. Great to be with you all.
Coming up after the break, we'll talk about the latest around the debt ceiling talks with former Treasury Secretary Jack Lew when we're back in 2 minutes.
You got the rings?
Hello. You guys don't look half bad.
Yeah, thank you.
Thanks, man.
Luxury that lets you feel infinitely you.
You're doing everything you can to get your blood pressure in check, and now you have SuperBeets Heart Chews on your side too. In a leading clinical study, SuperBeets Heart Chews polyphenol compound was shown nearly 2 times as effective at promoting normal blood pressure as a healthy lifestyle alone. Just 2 delicious chews a day support nitric oxide production, healthy blood pressure, blood flow, and heart-healthy energy. Support your healthy blood pressure with SuperBeets Heart Chews. Get a free 30-day supply and free shipping at superbeetschews.com.
Sure, you'll teach her how to drive a car. Then use Greenlight to power her independence with crash detection with 911 dispatch, family location sharing, and emergency SOS alerts. Invest in your best investment with Greenlight.
False or misleading search results can negatively impact your life. A bad online reputation can put you at significant risk of losing job opportunities or new customers. Reputation Defender helps clean up your search results, wiping away negative first impressions, allowing truthful, positive content to rise to the top. Don't you deserve to have more control over how you're represented online? Get your free reputation report card at reputationdefender.com or call 1-877-866-8555.
Want to touch on the debt ceiling talks this morning with former U.S. Treasury Secretary Jack Lew. Mr. Secretary, it's great to have you. Appreciate the time. It's been quite a 24 hours where the speaker said that the meeting yesterday was maybe the best of the rounds so far. Although I was looking at McHenry just now, who was asked whether he believes June 1st is the X date. And he said, you know, I want to trust the Treasury's math, but they've got to show their work. Do you think the timing of the X date is under question at this point?
Well, good to see you, Carl. The truth of the matter is no one knows with perfect accuracy when the final deadline is. The money that moves in and out of the Treasury changes from day to day. There are events that you know are coming. You know their estimated tax revenues coming in June 15th. So the question is, can they get to June 15th? As to which day, June 1st through June 15th, you actually would go over the cliff, it's a mistake to gamble, because I can tell you, having been briefed daily when I was in that role, you have a sense of where you're going, you have a range of estimates, but you don't know with precision. And I think Congress needs to get its work done, and it can't wait till that last possible moment, or there's the risk of it being an accidental default, even if they're getting close.
What's your characterization right now of at least the words, the tone that are coming out on these meeting updates?
Look, obviously it's better when you hear reports that they're having serious conversations, exchanging ideas in a constructive way. I don't think we can tell from these reports exactly what's going on in the room right now. It's certainly difficult for me to tell you that I know exactly what's going on in the room right now. I do know there are a bunch of moving pieces which are still very difficult, and they need to make progress through them. They need to decide on what spending levels will be and for how long. They need to decide what they're going to do in terms of addressing some of the rescission of some of the COVID funds. And they need to get to the hard issues where there are just very, very stark differences between the two sides. And I think they should agree to take those things off the table and not do them. You know, on the Democratic side, work requirements for people on food stamps and TANF, they're just terribly difficult issues. I think it's terrible policy, and it doesn't belong in a negotiation like this. Putting people into poverty shouldn't be the price that you pay to meet your obligations to fund our national commitments.
It's Sarah. I asked Secretary Yellen this a few weeks ago, and she couldn't answer because she's current secretary. So I'll ask you, since you can, since you're not in office anymore, which is what happens if they cannot secure a deal? Who gets prioritized in terms of payments? Is it the bondholders? Is it the pensioners? What does the prioritization look like? And what does that actual default mean?
Yeah, Sarah, there are no good options, and the reason that question can't be answered is it should never have to be answered. We should be able to meet all of our obligations, and it's, I think, unthinkable to put the United States in a position where it would have to figure out, does it have the authority and the ability to pick and choose what to pay? You know, one of the things about our federal payment system that people need to understand is it's not a modern interactive computer system. You basically can turn a check writing center on or off. You can't pick or choose what to pay within it. It's not a very precise, it was not designed to pick and choose what to pay. It was designed to pay everything, which is why I think you've heard the Secretary say it is not something that people should think it can be done easily, even if the decision were made that needed to happen. I always said when I was Treasury Secretary, I can't answer that question. Only the President can answer the question because Secretary of the Treasury doesn't have the authority to pick and choose what to pay.
Sure, though I'd have to think there are contingency plans drawn up. But, okay, so let's say we get a deal and we raise...
Sarah, the contingency plans, importantly, don't include any field experiments. So you're talking about using systems for a purpose other than what they were designed for. So one has to assume enormous risk that things won't go very smoothly, even if they were to cross that Rubicon. So I think it's a mistake to test the system. Obviously, you're asked, what can you do if, and those kinds of scenarios are thought through. But I don't think you should assume that there's a nice, clean plan what's going to happen if we actually default. Congress needs to raise the debt ceiling.
Agree. So let's say they do. And then what? There's some concern on Wall Street about the enormous amount of money then that would have to be issued in terms of debt, to raise money, refill, $600 billion, I've seen the estimates, to $1 trillion, and the liquidity that would drain from the system, whether it would come from bank reserves or elsewhere. Is that a valid concern?
Are you saying in the event of a default, Sarah?
No, I'm saying after they raise the debt ceiling.
Well, after the debt ceiling is raised, I think we probably will see some lingering impact of the stress in terms of higher rates. But I don't think you'll see a fundamental loss of interest in U.S. Treasuries. It's if we default that I worry deeply about what that does to the depth and liquidity in the Treasury markets. Not that it would ever go away, but we have tremendous value in having the deepest and most liquid market in the world. And anything you do that creates risk around that is negative and something to be avoided. So, I think that the question of what happens if we default is very different than what happens if they solve this at the 11th hour. My own view is that observers from the outside are a little bit sanguine about everything working out. I think the odds still are high that they reach an agreement, but I don't think it's 100%. And I think that the risk of having something very bad happen is something that people have to be focused on avoiding.
Mr. Secretary, back in 2011, it was the downgrade by S&P that roiled the markets as much as anything, obviously, despite the fact that we didn't have a default. Any concern on your part about the rating agencies this time around as well?
Look, the experience with the S&P downgrade was a terrible one. They did not reach the conclusion that there was a solvency problem in the United States government. They reached the conclusion that there was a political problem, and you couldn't count on the political system working smoothly without interruption. I think that as we go through yet another round of kind of threats of default if one side or another doesn't get its way, that raises those kinds of concerns again. I can't speak for what the rating agencies will do, but I do think that you're seeing all of the conditions set for that question to be asked. It's a bad thing if the rating agencies downgrade the U.S. debt. It triggers some questions as to who can and can't invest in treasuries. And just in terms of the role of the United States and the U.S. economy in the world, it is an unforced error. It's something that we would have done to ourselves that our adversaries couldn't do to us. And I think it's just in the interest of our strength in the world to avoid that, which is why I think it's good that the sides are talking, but they have to be careful and not to go across the line. Republicans can't think, because this is so important, that will all of a sudden mean that Democrats can concede on issues that are just matters of real principle. Likewise, I think Democrats are going to have to accept levels of spending reduction, that might be challenging. The numbers that are in circulation are going to be much smaller than the House bill. They can't have their eye on saving $3.5 or $4 trillion. I think the question is, what can they agree to in the next couple of years so that we don't end up with a crisis?
Finally, Mr. Secretary, the Republicans have tried to take a victory lap, at least on the process. The argument that the president, after taking his time trying to separate budget and the debt ceiling, engaged in negotiations finally, which they see as a political win. Do you think there was lost valuable time in the president making that pivot?
Look, I don't think there's any political wins in setting up a drama like this, which hurts the country. And that's something that the Republicans did by saying we're going to demand things we know we can't get. I think that a discussion over the budget, over fiscal policy, is entirely appropriate. That means setting spending limits for next year. Should they be at the levels of the current year that we're in? Should they be held at that level for a year or two? That is a normal budget negotiation. Threatening to repeal, the climate change initiative, threatening to make massive changes in our poverty programs, that's not what you do when you're trying to work out a budget deal with divided government, where the challenge is find agreement in the center where there can be agreement. So I don't think there are any wins in this. I think the administration was right to say you cannot be held hostage. I think it's important that the negotiation over the budget is going on. I just wish they would complete it and get to work. Once they have an agreement, extending the debt ceiling is going to be attached to whatever they do.
Yeah. Mr. Secretary, thanks so much on behalf of viewers who are still trying to get their arms around this one. Jack Lew, thank you.
Good to be with you.
In the meantime, let's get a sector sort with Dom Chube. Hey, Dom.
So, Carl, stocks are mostly mixed this morning. The energy sector is an outperformer. You've got APA Corp, Marathon Oil, Exxon, all firmly in positive territory as oil prices tick higher, driven in part by Saudi Arabian oil minister Prince Abdulaziz bin Salman warning traders speculating about a drop in oil prices, that there could be pain ahead for those looking to profit on short oil positions. OPEC, remember, and its partner countries meet on June 4th to discuss those production policies. Chevron among one of the bigger gainers as analysts at HSBC upgrade that stock to a buy, saying that stock represents a valuation opportunity given its recent underperformance. So keep an eye on Chevron. There's more Squawk on the Street coming up from Santa Barbara. Stay with us. We're back after this commercial break.
Real-time exchange Sector Sort is sponsored by Sector Spider ETFs.
You could buy a single stock and go all in on one company, or own the sector and invest in keeping good company. Is it so radical to be so rational? Before investing, consider the fund's investment objectives, risks, charges, and expenses. Go to sectorspiders.com for a prospectus containing this information. Read it carefully. Sector Spiders, the 11 sectors of the S&P 500.
Hey, corporate types, will you stop calling each other rock stars?
You're a rock star. You are a rock star.
No more calling your coworkers rock stars.
Look, it's great that you use Workday to transform your business.
But it still doesn't make you a rock star.
So unless you work with an actual rock star.
Hi, I'm Oswald.
Hello, Oswald.
Pam, you are a rock star. I wasn't going to say it.
Private market alternatives help you outperform the traditional portfolio by up to 40%. Meet YieldStreet, the leading private market investment platform with 10 highly vetted asset classes. Diversify with alternatives. Open an account at yieldstreet.com.
We need a small business loan fast.
I got this.
Loan cannon!
Oh! There's a better way to get a fast small business loan. Go to OnDeck.com, and if approved, get your funds as soon as the same day. Your loan is on deck.
Tommy John. This is what confidence feels like. Go to TommyJohn.com and get 30% off site-wide.
My plane has a mechanical problem. I'll try to get there as soon as I can.
Breakfast looks delicious, as always. Having a chauffeur car plane side helps keep me on schedule. Hi, Jeff.
With all the plane shortages, did you have trouble finding one?
I never have any trouble. I simply pick a plane, pay, and I'm ready to badge it to my destination.
Are there any taxis around? I'm really late for my meeting.
Do we have a deal? Missed you at the meeting today. Badge it and don't miss out on the most important moments of your life.
Call for a complimentary flight.
CNBC. Live ambitiously.
An overtime exclusive with the CEO of Adobe. Where is software and generative AI headed? Outlook for the tech sector. Closing bell overtime 4 Eastern.
Welcome back to Squawk on the Street. If you're wondering where we are live at CNBC's inaugural CEO Council Summit on the West Coast in Santa Barbara, talking to leaders across business, finance, culture, sports, and academia. A lot of big topics are going to be covered the next couple of days, including the nation's debt, obviously, the AI revolution, relations with China, and we'll be bringing you some of the sound that we got already. You heard Sarah with John Donahoe of Nike last night. In the meantime, a lot more Squawk on the Street continues after this. Stay with us.
Hey, I'm Brian Gary, and today we're talking about the biggest misconception there is about replacement windows. I'm here with Ted Coons, the project manager for Renewal by Andersen, to talk about it.
Yeah, one of the big things we hear from homeowners is, I shouldn't need to replace my windows, they're just not that old. But here's the thing, home builders put in high-end kitchens and bathrooms and low-end windows that just aren't that good. So even if your windows are only 7 to 10 years old, they may still need to be replaced.
Ted, there's so many window companies out there. What's different about your company?
Well, besides being the full-service replacement window division of Andersen, we're the company people tend to call when they're particular about their home. They don't want just any old window or any old installer.
So your standards for installers are pretty high, right?
Yeah, Brian, you could have the best window or door in the world, and if it's not installed correctly, it's going to fail. So we don't hire these jack-of-all-trades installers that do gutters and siding on the side. Our window installation teams do our windows year in, year out, and have done thousands of them.
Anytime a homeowner has to deal with multiple home improvement companies, they get stuck in the blame game.
Yeah, with other companies, if there's an issue, the manufacturer blames the installer blames the manufacturer. With us, there's no finger pointing or blaming each other. We're both the installer and the manufacturer.
Ted, is it easy for a homeowner to get a price?
Very easy. We'll come out to your house, we'll assess your current patio door or windows, and then we'll give you an exact price that's good for an entire year.
Ted, that's great information. Thank you.
Before May 31st, buy one window, patio door, or entry door and get the next one 40% off. That's 40% off with a minimum purchase of 4. Plus, save an extra $150 on your entire project with no money down, no monthly payments, and no interest for 1 year. This offer ends May 31st. For a free appointment with Renewal by Andersen, call 1-800-918-0808.
What do you see on the horizon? Uncertainty or opportunity? Whatever you see, at PGIM, we can help you rise to the challenges of today, when active investing and disciplined risk management are needed most. Drawing on deep expertise across the world's public and private markets in pursuit of long-term returns. PGIM. Our investments shape tomorrow, today.
Get CNBC's market data online or on the app with an ultra-fast, reliable internet connection. Stream at home or on the go with millions of Wi-Fi hotspots. Introducing the Xfinity 10G network. The future starts now.
I'm going to do stuff before you.
Okay, great.
Good Tuesday morning. I'm Sarah Eisen with Carl Quintanilla, live from Santa Barbara, California at the CEO's inaugural CEO Summit, CNBC's inaugural CEO Council Summit. Setting our agenda today, TCW Group CEO Katie Koch with $215 billion under management. She's going to weigh in on the debt ceiling, the state of private credit, and her market outlook for the second half.
Oppenheimer's John Stolfa is going to join us with a controversial contrarian call, another rate hike in June, and potentially one more after that before year end.
And later, Saks Fifth Avenue CEO Mark Metrick with us here on set. Exclusive results from their new luxury pulse survey, plus his take on the troubled commercial real estate sector.
Markets mostly lower following debt ceiling negotiations last night were described as productive, but no real news coming out of them. Both sides meeting again later on this hour. The debt ceiling has certainly been central to the discussions we're having here at the CEO Council Summit. It is remarkable how many very large issues are worrisome, whether it's the debt ceiling or relations with China, and yet somehow aspirational at the same time. The productivity you could get if this AI revolution turns out to be for real, that combined with all the uncertainty makes the debate and the discussion here really valid for people who are here.
Right, and we're getting some real-time information from some of these companies on the data points they're seeing. Just as far as what we're watching in the market today, Carl, I'm watching the home builders because they are getting hit hard for a third day in a row, and we were sort of wondering why the rise in mortgage rates and bond yields wasn't impacting the market in a more meaningful way. So I'm watching that to see if that is starting to have an impact, because we have seen a big jump in the 2-year policy-sensitive rate. We've seen a big jump in the 10-year rate, and we've seen stocks pretty resilient. That's been the story of the last, week and a half or so leading into yesterday. So far, it's pretty benign. The S&P is down 1/3 of 1%. We're getting strength in names like Tesla and Amazon, Meta as well. That helps the whole market. But just waiting to see the reaction with the rate move, as Jamie Dimon of JP Morgan says, get used to 6% rates. As Fed maybe leans toward a pause, but doesn't doesn't take June off the table, considers it a live meeting, and has introduced this new idea in the market that maybe they'll take a pause and then go again because inflation is just still too high. It's very different than what the market's been expecting.
It's been remarkable. As Sarah says, the yields have been elevated all morning long. Services PMI beat. Atlanta Fed still at 2.9. IMF says UK is not going to go into recession this year. So resiliency is kind of a theme, whether it's here or in Europe.
At the same time, though, manufacturing comes in a little bit lighter. The data has painted a confusing picture because we still have all these COVID hangover impacts. You know, you see the Lowe's report this morning after Home Depot. No surprise, weakness in do-it-yourself home projects is accelerating and continuing. The Dick's quarter noted some softness from the consumer. The BJ's wholesale, while better, also noted that consumers are trading down and the strength is in groceries. So all those trends really continuing to cloud the picture, I think, of an economy that is not in recession, but is showing some signs of weakening. Let's take a closer look at the impact of the debt ceiling, the Fed, and all these things we're talking about on today's market. Joining us here in Santa Barbara is TCW CEO Katie Koch. It's good to have you.
It's great to be here.
Welcome. I think this is the first time we've had you since you've taken over as CEO.
Yes, very exciting.
We talked in Milken. So you're a big bond shop.
Yes.
What do you make of some of the risks out there and the fact that we have seen this bond sell-off and hasn't hit equities as hard this time?
We are in the camp of the medium to hard landing, and when you and I were at Milken, we were on a panel together, and I remarked to you that I thought people were a little bit too happy at that conference, the macroeconomists, the investors. I'm really interested in my time at the CNBC CEO Council Summit that the CEOs are actually decidedly more negative. And I think that's a really, really important data point because as an equity investor, which I did for most of my career, I always found that CEOs were more real-time and closer to real data. And I've met with CEOs everything from donuts to coffee to logistics to people in the asset management space. And people are seeing real degradation, trading down, revenues being muted, and also job losses. So I think that's going to weigh on the economy. And the second thing we can talk about a little bit is that we're having a major call on global liquidity here, which is going to put additional pressure on the economy.
So you don't buy the idea that inflation is still stuck too high, the Fed's going to have to keep going, and the market is too excited about rate cuts?
I do think inflation continues to be an issue, and it is possible that we get another rate hike. In fact, you guys saw markets overnight and this morning pricing in a 50% chance of a 25 basis point hike in June. That's what I mean by the call on global liquidity. That's going to weigh against us. We have regional banks. We have deposit flight from them. And we're hearing from our portfolio companies that they're really struggling to extend loans and tap those revolvers again, which is going to put pressure on markets as well. So we have a real liquidity crunch here. And the combination of the slowing economy and this global call on liquidity leads us to be in this medium to hard landing camp. Now, the good news for us as investors is that we're value-oriented investors, and we really relish leaning into a dislocation for our clients. And so we're focused on those potential dislocations in the broad real estate market and also in private credit.
When you say medium to hard, give us some levels that would get us familiar with what that would feel like, either in economic growth or stocks.
Yeah, so I would say from an economic growth perspective, you could see several percentage points being taken off GDP. And obviously, the important thing to remember from a risk-on perspective is that, of course, what the Fed's going to do against that backdrop if things get worse is that they will cut rates, and that'll be the path to recovery. But we do expect it's very possible to have a recession at the back end of this year. But now, unlike previously, we do have some of this firepower set up for a recovery.
Would you expect the labor market to start cracking about now?
Yeah,
or is that more of a Q3, Q4 phenomenon?
The labor market, I would argue, already has started to crack, and certainly in the higher-end jobs, the technology, for example, we've seen a lot of job loss. Now, those consumers have a lot of pent-up savings, so it takes longer for us to see them come under pressure. But whether it's the credit card companies or some of the consumer companies we were talking about earlier, you're already starting to see the early stages of that coming through. So job market currently under pressure, and I would expect that, to come under more pressure in the back end of the year.
So all this bond bullish?
I think it is possible, if you are selective in what you own, to be bullish on that. We think private credit is going to be an incredible opportunity, but we do think it is very important for manager selection. So if I could just say something very quick on that. Private credit.
Everybody loves private credit right now. but I have to say, at Milken, Katie was the only one that said, hang on, I have a warning for you on private credit, because everyone's in love with it.
Yeah, so I think, good point. We do think it's an epic opportunity over the next 10 years, but we also think it's the first time that manager selection actually might matter. Now, I want to say something quick on a look back and then a look forward. On a look back, this is a very overused term, but it's very apropos to the moment, which is that when the tide goes out, that's when we'll see who's been swimming naked. This is so true of what we are going through in private credit right now, because we have 96% of private credit managers started post-global financial crisis, and we all get to be geniuses when rates are zero to low. Now we've had a massive repricing of that capital. We know that there's been some bad lending because we did not engage in it. We walked away from those deals. Those are deals that were not covenant heavy, as an example, where there wasn't a lot of diligence done. And so there are going to be some accidents ahead. At the same time, on this look forward, if you can be a very conservative manager and do what we've been doing for the last 20 years and that we have not strayed from, and be very covenant heavy, which gives you a seat at the table when things go sideways, and diligence those assets and make good loans, I agree that it could be an incredible opportunity for private credit over the next 10 years. Our team is very, very busy. And our team is conservative. So people didn't want our money the last couple of years because we were too demanding. People need our money now. And so that's a good sign for us as a private credit manager and a good sign for the asset class that good deals can be done.
Are you talking first and foremost about real estate, or is it something else?
No, just broadly. We actually invest, we're sector agnostic. We invest across all sectors. I think real estate's a separate opportunity, but in private credit, there should be opportunities across all sectors. I do think one important thing in terms of finding opportunities is to be in the middle market space. That's what we think is the most underserved and has the best potential upside. And yes, we work with some financial sponsors in the middle market space. That's about half of our origination, but we can also originate on our own. So you said everybody's excited about private credit. Sarah, I agree with that, but you need to be...
Jonathan Gray called it the golden era of private credit.
I think it could be, but manager selection will matter, and you've got to push those managers on. How are you originating? Are you very covenant heavy? Are you doing the diligence? Have you been at that credit committee at 2 a.m. in the morning trying to fight out for your clients? These are important things to ask managers that a lot of them haven't really done over the last 20 years.
Yeah, I think Robert Frank did that story that family offices are now getting involved. Is that?
Yes, there is certainly, whenever there's an opportunity, there's more people involved. You just want to be with the people that have done it successfully for a few decades.
Is the debt ceiling interesting to you at this point, or is this all theater?
Yeah.
It's so short term, we think.
Yeah.
Right?
I think whenever there's a risk of the U.S. government defaulting on debt, it's of interest, so we're, of course, tracking it. Like everybody else, we think it's highly unlikely, but we are preparing our portfolios for that possibility. But again, we think it is highly unlikely, and that's what the markets are telling us at the moment.
How do you prepare your portfolio for that?
Well, first of all, one good thing, interestingly, is that we are long investors in emerging market debt, which no one would have thought would prepare you for investing in U.S. Treasuries.
That's crazy.
There's a little bit of that happening. So you have to be, in terms of preparing portfolios, we're running several contingency scenarios, whether they extend maturities, they don't extend maturities, if they downgrade debt, what would that impact in terms of what our clients' guidelines are in the portfolio. So we're working through all that and making sure we have the systems in place to accrue those coupons in the event that there is a default. But again, that is not our base case scenario, but it's our job, obviously, to be prepared for our clients for any scenario.
You know, one of the firms you compete with for funds is BlackRock, and I was just, the trend, they've lost some money because of the politicization around ESG, and they've seen divestments. And I'm wondering, first of all, are you growing market share because of that? And how do you talk to your clients about some of these issues in a productive way?
I can't really comment on what our competitors are doing, but I can say from a TCW perspective, our approach to sustainable investing is very centrist. We are an investing company, not a divesting company. We want the widest opportunity set from which to select opportunities for our clients, very returns focused. That means that we don't exclude any sectors at the get-go. And where we own any company, where we are a creditor or an equity holder, we'll actually engage with that company to make sure that they are operating in a best-in-class way. So I'll end with a quick example, very topical at the moment. Let's take energy. We do invest in traditional hydrocarbon companies for our clients. Let's just talk facts. We need hydrocarbons to run this country over the next coming decades. So we will invest in those companies, but we buy the best-in-class operators, or we're creditors to them, and then we engage with them to make sure they're running those companies in a way that will generate sustainable returns. And then in addition, we will also own companies that are part of the energy transition. The IEA has told us that we're going to spend $4 trillion on that transition a year out to 2050, and we want a piece of that for our clients too. So I would describe our approach as returns-focused and very balanced.
Katie, thanks so much. It's good to have you here.
It's so good to be here.
CNBC inaugural CEO Summit, and good to have you on set.
And congrats on the summit. It's awesome.
Thank you.
Have fun.
Thank you.
Wall Street leaders like Jamie Dimon have reiterated the notion of higher for longer. Oppenheimer agrees, calling for another hike at the June meeting, and we'll talk to John Stoltzfus next to talk about that.
Also, we're keeping our eye on Tesla, trying to make it 6 straight days of gains. Stock's up 16% just this month. Squawk on the Street. We'll be right back. Market's still under a little pressure. It's being offset with weakness from Apple, Microsoft, Alphabet, and NVIDIA today. We'll be right back.
Meet Gold Bond Healing, a powerhouse lotion that moisturizes, heals, and smooths dry skin. With 7 moisturizers and 3 vitamins, you can pay more, but you can't get more. Gold Bond, champion your skin.
Your shipping manager left to find themselves, leaving you lost. You need to hire.
I need Indeed.
Indeed you do. Indeed Instant Match instantly delivers quality candidates matching your job description. Visit Indeed.com/hire.
My business would be nothing without my employees. That's why I want the best for them.
So when I needed to set up a retirement plan, I went to Paychex. I've always used them for payroll, but now they're handling my benefits too.
Paychex also let me know about this new Secure Act. They told me my business may be eligible for tax credits, and they created a plan to help me secure them.
The experts at Paychex have been helping all businesses reach their full potential. See if you qualify for retirement tax credits. Paychex, HR, payroll, benefits, insurance, retirement. Visit paychex.com to learn more.
Let's say they do create some digital superintelligence. Well, who's in control?
Artificial intelligence is going to create a productivity boom that we've only seen a few times in the last 75 years.
I feel, yes, it's moving fast, but moving fast in the right direction, where humans are more in control.
We're doing everything we can to make sure we're ready for autonomous when it comes. You might be surprised that it comes over the next couple of years a little faster than you think.
Sure, you should teach him to ride a bike. Then use Greenlight and teach him how to invest in bikes. Teach him to be smart about money, and he'll go far.
Super far! Oh, hey, Mom!
Navigate the world of money together. Invest in your best investment. Greenlight.
BetterHelp makes therapy accessible to all for a number of different reasons. Sometimes people are looking for that relatability. They're looking for someone who looks like them.
Being able to share parts of your identity with your therapist can be really important.
False or misleading search results can negatively impact your life. A bad online reputation can put you at significant risk of losing job opportunities or new customers. Reputation Defender helps clean up your search results, wiping away negative first impressions, allowing truthful, positive content to rise to the top. Don't you deserve to have more control over how you're represented online? Visit ReputationDefender.com or call 1-877-866-8555 for your free consultation.
I do think inflation continues to be an issue, and it is possible that we get another rate hike. In fact, you guys saw markets overnight and this morning pricing in a 50% chance of a 25 basis point hike in June.
TCW Group CEO Katie Koch telling us a few moments ago that it is possible we get another rate hike, maybe in June. Our next guest agrees, saying not only could we get one in June, we may get another one in the second half of the year. Joining us this morning, Oppenheimer Chief Investment Strategist and Managing Director John Stoltzfus. John, it's great to have you back. Talk to me about why you think the market may have this wrong.
Great. Carl, thanks for having us on CNBC. Great to be here with you. We've been thinking the market's been wrong about this a pause or cut business for quite a while. The inflation is simply running too high. While we have the Federal Reserve thus far has taken inflation down, the headline number, from around 9% to a little under 5%. There's a long way to go to that 2% target. And the Fed speak keeps telling us that it's not so much bifurcated, it's just diverse amongst the economists there. The thought is some think that we could pause, that others think that, likely, I heard Bullard once thinks rates go higher from here. And we certainly think so, but we don't think it disrupts the markets.
Really? I was going to say, how would the S&P react to a June hike?
You know, Carl, I've been in this business for just around 40 years. So when I came in 1983, Paul Volcker was still ruling the Fed. And the question still remained amongst clients and amongst professionals in the industry, you know, is inflation coming back? Will the Fed fail? What have you? And yet, if you look at the markets from 1979 through 1990, I mean, you've got a lot of plus years there when rates would vacillate, going from higher to lower. And the market gets used to the fact that you're dealing with higher rates from the Fed, especially in this case. We're just getting over free money. It's the end of free money, which we saw had been achieved by a combination of Fed policy and fiscal stimulus by politicians. It took us to 40-year highs. But it's not. This is not a case where we feel that Powell has to become a Volcker. He just needs to be Powell in these modern times, and we think he'll bring down inflation on a very sensitive level. He's done it so far.
So, John, if you think that there's another rate hike in the cards and the market's got it wrong, does that influence your earnings outlook and your equity market outlook? Because wouldn't that mean that the chances are higher for, as what Katie mentioned, a medium to hard landing, which is not factored in?
Well, we think that actually we think because of the slower growth that will likely come through the system as a result of the regional bank problems that we've seen in that space, you know, where you have a crisis of confidence, that will likely see increased regulation, tighter lending practices from that group and its implications. It will contribute to slowing, which will allow the Fed to remain very sensitive in terms of how it's hiking. And thus far, with 10 hikes in the box thus far, I'm looking at my screen. On a year-to-date, the S&P is up 16.93% from October 12th low. I'm sorry, the S&P 500 year-to-date is up 8.94%, but from the October 12th low, it's up 16.93. Curiously enough, you've got real big gains in technology, of course, and communication services, but also industrials, materials have participated in these rallies, and consumer discretionary. It's quite a story. And what it shows is a progression wherein the better players, the quality stocks, are able to move higher, even as the Fed sensitively adjusts interest rates to rid us of this free money environment that we've been in, which is not good for the markets or for Main Street.
So with that in mind, John, what's your take on where tech valuations have risen to? I mean, we got a new target of Microsoft this morning of 400 out of Jefferies. Are you worried about that getting a little stretched?
You know, Carl, our opinions on these big stocks that are profitable companies established and deeply embedded in the lives of both business and the consumers, especially with all that's coming on track with AI, as well as developments within semiconductors and the importance of semiconductors in our lives. We have to think that ascribing higher multiples to technology makes sense at this point. We don't mean, you know, getting back to tech bubble lunacy, but the fact that where the growth lies tends to attract investors at times like these, and especially when you have both bulls and bears are thinking, how much do we slow? I don't think anybody's disagreeing with the fact that we're slowing some, and so that encourages us to buy garpier growth within technology.
Yeah, those charts definitely don't lie, at least what's happened lately. John, we'll see what happens in June. Still got a couple more prints between now and then. We'll see you soon.
Great, thank you.
Yeah, importantly, the May inflation and unemployment read. Hard to make a call before you get that. Still ahead, the CEO of Saks. Is the luxury consumer continuing to spend, or are recession fears starting to stifle demand? We're going to get his take on how retailers are using AI, of course, as well.
And we continue to watch shares of Broadcom today, inking this multi-year deal with Apple to develop a 5G technology. Broadcom trading at an all-time high. Stay with us.
You need new replacement windows, but you're just not sure if they're in the budget this year, right? I'm Brian Gary here with Ted Coons from Renewal by Andersen, and he's here to talk about how to make window replacement more affordable.
Well, first, Brian, you don't have to do them all. You could just replace your worst windows first. Or another way to make them affordable is to change the style of window. For example, you could do a gliding window instead of a casement. We have a lot of ways to make window projects really affordable.
Compared to other window companies, you have a completely different business model.
Yeah, with other companies, there's just too many people involved in the process. There's the manufacturer, the seller, and then the installer, and then the customer. And if you call with a problem, that's when they say, oh, well, we're the manufacturer. You have to call the installer for that problem, or vice versa. We're the full-service replacement window division of Andersen. With us, there's no passing the buck. At Renewal by Andersen, we sell, build, install, and warrant our windows and patio doors. So if there's ever an issue, we take full responsibility for it.
Why don't you sell vinyl windows?
Well, a lot of vinyl products just don't hold up well in the elements. You know, like a vinyl fence. When it's first installed, it looks great, but with expansion and contraction, it discolors and cracks. For that same reason, a lot of vinyl windows just won't last. Our window material is a composite that combines the best of vinyl and wood. Well, Fibrex is low maintenance like vinyl, but stronger than vinyl. And it's beautiful like wood, but doesn't require the upkeep of wood.
Before May 31st, buy one window, patio door, or entry door and get the next one 40% off. That's 40% off with a minimum purchase of 4. Plus, save an extra $150 on your entire project with no money down, no monthly payments, and no interest for 1 year. This offer ends May 31st. For a free appointment with Renewal by Andersen, call 1-800-918-0808.
Hi, I'm Jay Jackson. For almost 20 years, Abacus Life has been purchasing life insurance policies from seniors. And in just seconds, you can use the free calculator at abacuspays.com to learn what your policy might be worth.
For many of my clients, selling their life insurance to Abacus was right for them and their estate plan.
Don't sell or lapse your policy without going to abacuspays.com first. There are no fees and no obligations. Get the real value from your life insurance when you need it with Abacus.
Today, CEOs convene for CNBC's Premier Council Summit. Exclusive one-on-ones with Apple's Eddie Q and Nike's John Donahoe, plus a deep dive into the world of AI. CEO Council Summit. Coverage all day today, CNBC. Your next best investment starts with CNBC Pro, the ultimate investing playbook. Scan this code or go to cnbc.com/pro for an exclusive offer now.
Markets in Europe set to close in just a moment, mostly lower as investors continue to wait out the negotiations on the debt ceiling here in the U.S. Household goods and retailers, the underperformers today over in Europe. Brutal session as well for the luxury goods stocks. The Stocks Europe Luxury 10 about to post its worst one-day drop since December. LVMH, Hermes, Kering all down pretty significantly today. Worries over China persist. Copper's down again. The biggest mover in the session, though, was Swiss private bank Julius Baer. Miss on earnings and a big hit on currency conversions, dragging that stock down. The bank said Q1 was, quote, a challenging backdrop of wealth managers. But our story abroad to talk about today is the about-face from the IMF on the UK, saying the British economy will now avoid a recession and actually outpace Germany this year. Projections now up to 0.4% growth after predicting a 0.3% contraction just last month. Pretty significant upgrade, and they commend British policy when it comes to tackling the financial problems and the banks, the better supply chain healing, the fact that Britain has dealt well with the energy policy problems around Russia and Ukraine, and now think they're going to grow 1% next year, 2% beyond that. It's a pretty big vote of confidence.
Yeah, we were talking with Carmine DeCipio of EY about the resilience in Europe. Even though sentiment among consumers isn't all that great, there's a lot of wringing their hands about Brexit and would things have been better if they had made other decisions in the past. But you can't argue with the fact that they've definitely surprised with a little bit of luck mixed in on the upside.
Here's the problem. They still have like 10% inflation. So they've got to continue that fight. on inflation from the central bank, and that obviously increases the risk that it will hurt growth and it'll weigh on consumers, which we're already starting to see. But food inflation is a big problem there, just like it has been here.
Yeah. We'll see if they get any relief, even though global food prices have been on the mend a little bit. Let's get a news update this morning with our Seema Modi. Hey, Seema.
Hey, Carl, great to see you. But here's what's happening at this hour. Hungary's nationalist prime minister publicly declaring he will back Donald Trump in the 2024 presidential election. Viktor Orban, the nation's longest-serving prime minister, made the comments today at an economic forum. He is widely regarded as the most pro-Kremlin leader of the 27 European Union nations. State Democrats are demanding South Carolina Governor Henry McMaster apologize for remarks he made during a Republican Party event over the weekend. A reporter at the event tweeted that McMaster said he looked forward to the day Democrats are so rare we, quote, have to hunt them with dogs, end quote. The governor's office said he was joking when he made the comment. LeBron James said he has not made up his mind on retirement after the Los Angeles Lakers were swept by the Denver Nuggets in the Western Conference Finals. The 38-year-old said he has a lot to think about when making that decision. He is under contract for $46.9 million next season with the Lakers, and the superstar has expressed a desire to play with his son Bronny, who is expected to enter the NBA in a few years. Carl and Sarah, back to you.
All right, Seema, thank you. Seema Modi. Still to come, despite predicting a broader downturn for the energy sector, one Wall Street firm upgrades Chevron, saying a 20% rally could be ahead, and it is one of the leaders right now in the Dow, which is almost positive.
Meantime, CNBC is celebrating Asian American and Pacific Islander heritage this month, sharing stories of influential AAPI business leaders like this one.
Growing up in an Asian household, my parents have instilled values of hardship, believing in myself, and giving back to community. And I've charted my career based on those values. I have taken up opportunities where historically there has been a very low representation of women. I have sought out mentors that value diversity, that value who I am, what I bring to the table. So I think mentorship, giving back to the community, and as you get more senior, creating that time and space to nurture the next generation of talent would be my message to everyone.
This is the all-new, all-electric Lucid Air. A car that goes as far as it does fast. As sleek as it is spacious. As smart as it is beautiful. Introducing the Lucid Air. Experience the best.
A vacation starts with how you get there. A private jet experience from One Flight's budget. You've got to see this. Plug in your itinerary, search from over 5,000 planes, pay, and you're on your way. Nothing better than a personalized meal on board.
It should be a beautiful day in the Bahamas, Mr. Hershevak. We should be landing in about 20 minutes.
A great vacation always starts with your flight experience.
Call for a complimentary flight.
I need a cooler night.
You trying to ice me out of the bed?
Baby, only on game nights.
You know you're retired, right?
Am I?
Yeah.
Save 50% on the Sleep Number limited edition smart bed, plus special financing and free home delivery when you add any base. Only at Sleep Number.
False or misleading search results can negatively impact your life. A bad online reputation can put you at significant risk of losing job opportunities or new customers. Reputation Defender helps clean up your search results, wiping away negative first impressions, allowing truthful, positive content to rise to the top. Don't you deserve to have more control over how you're represented online? Get your free reputation report card at reputationdefender.com or call 1-877-866-8555.
I'm Kevin O'Leary, and this is my bonsai garden. The only reason I have time to indulge in such a tedious yet zen hobby is because my companies have already received money from the Employee Retention Credit Program. But just like these fussy little shrubs, how you doing, Maxie?
Filing for that money is a lot more complicated than it looks. If you own a business with employees, you need to look into this program. Go to wondertrust.com to see if your company qualifies. He says he's thirsty.
Welcome back to Squawk on the Street. We're live for you from Santa Barbara, California, site of CNBC's inaugural CEO Council Summit. We're going to do our look at the notes that are catching Wall Street's attention today. We'll start with Meta. The stock, of course, has been on a tear so far this year, up more than 100%. But the Street pointing to more than one reason for the rise. We've got UBS pointing to improving engagement in short-form video, thanks to Instagram Reels, moving its, quote, best-in-class bottom funnel advertising tech. And Piper Sandler says that its ad tech is likely to improve thanks to its AI initiatives, which it thinks could spur revenue share gains as soon as this year. Luckily, we've got Julia Boorstin here on set. She is part of the CEO Council here. What do you make of the new calls on Meta? It feels like the Street is increasingly looking for reasons to keep getting more bullish.
Yeah, and two very different reasons to be bullish here. On one hand, you have the fact that we've seen Meta, its different platforms, including Instagram with Reels, and then also even on Facebook, seen this increase in the amount of video that's consumed on these platforms, but the advertising growth has not really met that. So they see this as a huge opportunity, especially if you look at the fact that the traditional TV bundle, where so much advertising was sold for so long, that industry is declining. They see that sort of these short-form video ads as being an opportunity to take share from the TV ad market. And then on the other end of the equation, you have AI. Meta is investing a lot in AI, both in terms of making the product more engaging, serving you different videos or posts based on what the AI thinks you'd like to see rather than just what your friends are sharing, and then also making the ad business more effective. So these two different pieces of the pie, making these two different analyst notes bullish here.
AI, I mean, do they get as much credit as perhaps they deserve at this point? And they've gone a different strategy to a certain extent, but they are quite advanced, at least according to many who follow the company
Yes,
closely.
I mean, I think it's a little too soon to say, right? So right now, they're rolling out these AI tools to help the advertising delivery and the ad content itself be more effective. But it's still very early days. What a lot of analysts have been saying is that Meta really took a step back and really suffered from the changes that Apple made to its operating system that limited its ability to target ads. But with AI, they could effectively compensate for that and find new ways to target ads that are more effective. I think the question is whether it's an incremental benefit or really a sea change in what Meta can do in terms of the efficacy and the return on investment of its ads.
Well, what's the difference between the algorithm and what they can do with AI?
Well, I think that's the thing, is they're using AI to improve the algorithm. And Meta, along with many of these companies, have always used AI. The question now is how they're using generative AI. And can they use generative AI to make it much, much easier to not only make ads, but also test the ads and figure out which ads are going to be most effective?
Yeah, and right, even deliver things into your timeline that are not necessarily what you're following, but that are potentially of value to you. The year of efficiency continues as well. You know, Jim and I were talking. I mean, continue to hear that there are more layoffs yet to come. Unclear whether they're part of what's been announced, but yet not formalized, but still.
I've heard that they're what's part of been announced. So they announced that they're going to be a sort of massive layoffs done in 3 different tranches, and then this final one is supposed to come within the next week. The question, though, is that it, or will there be more?
Right. We don't know.
Yeah.
By the way, David stepped in for Carl in that commercial break, in case you were wondering. Carl had some onstage
Carl left.
duties.
I was here, so here I am.
So we collected David and all of our friends here at the CEO Council. Julia, thank you very much. We'll see you later. A lot of retail news to get to this morning. Lowe's cuts guidance, Dick's with a big earnings beat, and BJ's disappoints as sales slip. So how's the consumer holding up? We're going to ask the CEO of Saks, in particular, what he's seeing from the luxury consumer. He'll join us right here from Santa Barbara next. Don't go anywhere.
Hey, I'm Brian Gary, and today we're talking about the biggest misconception there is about replacement windows. I'm here with Ted Coons, the project manager for Renewal by Andersen, to talk about it.
Yeah, one of the big things we hear from homeowners is, I shouldn't need to replace my windows, they're just not that old. But here's the thing, home builders put in high-end kitchens and bathrooms and low-end windows that just aren't that good. So even if your windows are only 7 to 10 years old, they may still need to be replaced.
Ted, there's so many window companies out there. What's different about your company?
Well, besides being the full-service replacement window division of Andersen, we're the company people tend to call when they're particular about their home. They don't want just any old window or any old installer.
So your standards for installers are pretty high, right?
Yeah, Brian, you could have the best window or door in the world, and if it's not installed correctly, it's going to fail. So we don't hire these jack-of-all-trades installers that do gutters and siding on the side. Our window installation teams do our windows year in, year out, and have done thousands of them.
Anytime a homeowner has to deal with multiple home improvement companies, they get stuck in the blame game.
Yeah, with other companies, if there's an issue, the manufacturer blames the installer blames the manufacturer. With us, there's no finger pointing or blaming each other. We're both the installer and the manufacturer.
Ted, is it easy for a homeowner to get a price?
Very easy. We'll come out to your house, we'll assess your current patio door or windows, and then we'll give you an exact price that's good for an entire year.
Ted, that's great information. Thank you.
Be first. Buy one window, patio door, or entry door and get the next one 40% off. That's 40% off with a minimum purchase of 4. Plus, save an extra $150 on your entire project with no money down, no monthly payments, and no interest for 1 year. This offer ends May 31st. For a free appointment with Renewal by Andersen, call 1-800-918-0808.
Choosing Miracle Ear was a great decision. Like when I decided to host family movie nights. Miracle Ear made it easy. I just booked an appointment, and a certified hearing care professional evaluated my hearing loss and helped me find the right device calibrated to my unique hearing needs. Now I enjoy every moment. The quiet ones and the loud ones.
Make a sound decision. Call 1-800-MIRACLE now and book your free hearing evaluation.
Welcome back. We are live today from CNBC's CEO Council Summit in beautiful Santa Barbara, California. As we head into another big week of retail earnings, Saks out with a new survey on the state of its consumer. The bottom line, a decreasing number of respondents looking to spend on luxury goods, shifting their focus to savings and travel heading into the summer. Joining us here for an exclusive sneak peek at the data is Saks CEO Mark Metrick. It's good to have you.
Thanks for having me.
So what are you gleaning from this new data?
Yeah, first you want to look at it in a glass half full. It's sort of still more than half of the respondents indicated that they were going to spend more or the same in the next 3 months than the prior 3 months. I think the deceleration is around how they responded to that question last time, and that's the half empty, which was 62% last time indicated that they were going to spend the same, if not more, and that was January. So we're seeing sort of an overall pullback from the luxury consumer. Looking more at sort of that core luxury consumer, that high income spender, that's where we saw the first drop from them in all of the surveys that we've been doing. So about 57% of them, which again is more than half, said that they're going to spend more over the next 3 months than the prior 3, but that's down from 62%.
So you think luxury spending has peaked?
I think it's peaked, and I think you're starting to see a little bit of a pullback from across the entire continuum, not just the folks at the beginning.
But when you look at your sales, they're still higher than 2019, aren't they, at this point?
Absolutely.
How much higher?
Well,
how much better?
On the e-commerce side, we're about 120% ahead of 2019, and even the bricks and mortar stores are well above where 2019 levels were. But I think that's strategy, and that's how we're executing versus just the overall macro.
How do you change your strategy at all if you're going to respond to these surveys in some way and see a diminution, at least in terms of spending from the high end?
Yeah, I think what you need to do is you need to be very, pretty conservative on the inventory purchasing and not get yourself, well overboard with your investments. Make sure you don't have to be promotional or incrementally promotional to where you normally would be. And, you have to keep a close eye on what the consumer's saying. So they're also telling us, hey, we're traveling. 77% of respondents indicated that they were going to travel, and that they've already booked a trip in the near future. And they also said, hey, I'm going to buy some stuff from you when I do it. So we got to have stuff that people can wear when they're away, when they're moving. We're also reacting to how consumers are saying, we're not going to trade down. And I heard Ed Stack say that this morning as well when they were talking about Dick's. And that's what our customers said too. We might buy a little bit less or fewer items, but we're not going to trade off of luxury.
How far back have you gone with these surveys? How long have you been doing this?
We've been doing this for, I think, about a year and a half or so.
Okay, and has it been accurate? I mean, has it largely actually predicted properly what would happen in terms of spending?
Yes, absolutely. The canary in the coal mine is sometimes even just the data we see on our site itself. So just an example, people ask me, are you going to have to be more promotional? The consumer in the survey indicated the 47% of respondents that said, hey, we're going to pull back on spending. When asked what would make you spend more, over half of them said a sale or a promotion. And we're also seeing that on our site, but we started to see that about 3 months ago when consumers, the glance views on our site, so that's just what people are looking at. We had a 700 basis point increase in the index of people looking at sale product versus the full price product. So it just reinforces what we see sometimes in our own data.
So how does that influence overall pricing? Because for some of these luxury brands, like Chanel shoes, it was like there was no ceiling at one point for how high prices got. Has that come down?
We're not seeing that come down, but I think what you're seeing is, again, the consumer, they're reacting and behaving not just to the price of the shoes. And I think, inflation in luxury has always been about scarcity and the demand for the product. It's not been so macro-driven, so the consumer's used to it. I think what you're seeing now is the consumer's probably saying, all right, I'm going to wait for a sale, or I'm going to wait for the price, or I'm going to buy, instead of 2 pairs, I'm going to buy 1. But they're not trading off of these brands. And the big strategy around luxury is, even if I have to sell fewer units for more, that makes the inventory more scarce, that makes it more desirable, and it keeps demand actually going in the long term.
What do you see in brick and mortar, particularly for the flagship store? I mean, people aren't coming to the office the way they used to, but I would assume tourist traffic is obviously very important.
Yeah, I think, and again, I run our e-commerce business, but we stay very close with the SFA stores. We do all of their purchasing and their marketing. And I would tell you the New York City flagship has been slower to return since the pandemic. We sort of came out into that next normal out of the pandemic, and it's, so we have the benefit, so to speak, of it being up against easier comparables, but still not there yet. But bullish in where we are in New York City, for sure.
And what about AI when it comes to sort of targeting the customer digitally and whatever tools may soon be available or are available that you perhaps are using to do an even better job of sort of figuring out when somebody wants something, even if they don't know they want it?
That's what we do. We actually sell things to people when they don't think they want it. No, I believe, look, we've been using algorithms and machine learning and different tools for a lot of years on trigger campaigns, on personalization. And I think we just heard it from the guest that was on before me. AI and what AI is going to do, it's going to strengthen those muscles, and it's going to make it an even better tool for us to go after. So I see a lot of opportunity with AI as it relates to how we communicate with the consumer, how we go at the consumer to make recommendations and to personalize. Always going to want Saks to have some level of high-touch, authentic, personalized approach.
Mark, thank you. It's good to see you here at our CEO Summit.
Thanks for having me.
Mark Metrick, CEO of Saks.
Well, shares of Yelp are jumping this morning. That's on what are new calls for the company to consider alternatives that might include a sale. You can see the stock up almost 10%. We'll give you the details next.
Also watching regional banks, of course. PacWest up big, second straight day on its plan to sell more than $2.5 billion of its real estate loan portfolio. The stock's up 7.77% just in the past week. That has helped stabilize the entire regional bank stock index, which has been higher week over week, and that's good for the overall market. Don't go anywhere. We'll be right back.
Is this how you're hoping to retire? Well, hope isn't a good retirement strategy. You've worked for a comfortable retirement for years. Now you need to plan for retirement income. Learn ways to avoid common mistakes, like being too conservative or not setting retirement goals. Have someone on your side to keep you on track.
Call for Fisher's Comfortable Retirement Kit with the help you need to make your retirement a success, including the Investor's Guide to a Comfortable Retirement, 13 retirement blunders to avoid, and maximize your Social Security. Call 1-800-759-4477.
Fisher tailors a plan to keep you on track for a retirement you want. And as a fiduciary, we do better when our clients do better.
Call now for your Comfortable Retirement Kit. Call 1-800-759-4477.
If your retirement portfolio is $500,000 or more, call us today. You don't have it coming to you unless you plan for it.
Call 1-800-759-4477.
CNBC. Live ambitiously. An overtime exclusive with the CEO of Adobe.
Where is software and generative AI headed? Outlook for the tech sector. Closing bell overtime, 4 Eastern.
Is it possible to survey foot traffic across all of our locations? Or to help stop a cyber attack before it starts?
Or help provide secure healthcare virtually anywhere?
With global secure networking from Comcast Business, it's not just possible, it's happening.
False or misleading search results can negatively impact your life. A bad online reputation can put you at significant risk of losing job opportunities or new customers. Reputation Defender helps clean up your search results, wiping away negative first impressions, allowing truthful, positive content to rise to the top. Don't you deserve to have more control over how you're represented online? Visit ReputationDefender.com or call 1-877-866-8555 for your free consultation.
BetterHelp provides various options to connect with your therapist.
We can do this via video, we can do this as a chat, we can do this over the phone. So whatever is most convenient for the client is really what's going to help them open up more at the end of the day.
I have learned that I really do believe in the best of people. And I do really believe that people are stronger sometimes than they think they are, even themselves.
We are watching shares of Yelp surging today as activist investor TCS Management pushes for a sale of the company. That, of course, is the focus of today's Tech Check segment with Deirdre Bosa. So, Deirdre, what are we hearing about the plan and how investors are taking it? Clearly, they like it.
Well, yeah, they do like it, judging by that stock pop. And I just got off the phone with TCS's president, Eric Semler. He's the one that sent that letter this morning. And he's making the case that Yelp should consider merging with Angi. That's formerly Angie's List, to form what he is calling a powerhouse in the $500 billion home services market. Now, in my conversation with him, Semler did allow that Yelp is executing on a few fronts. He says it survived the threat of Google, it's grown its home services business, and has, quote, an incredible balance sheet. The problem, though, according to Semler, is that nobody cares. The stock has underperformed the broader markets over the last 5 and 10 years. He made the point, too, that there was just 2 analysts who asked questions on the last earnings call. And more than that, he calls Yelp CEO Jeremy Stoppelman a serial numbers misser, and one that he says uses the company as his own personal piggy bank while the rest of us lose money thanks to a, quote, puppet board. Now, he also says that TCS is willing to make a bid themselves to acquire Yelp, and he even has his own CEO in mind with public company experience, though he wouldn't name any names for me. Yelp statement, let me mention that, says Yelp maintains an active dialogue with our shareholders and values constructive feedback on our business and ways to create value. Semler says that he has not yet heard from the company since sending the letter, though that was just this morning. And he says, though, that he doesn't expect to. He says it's been a frustrating experience owning Yelp shares. But the timing, that may have been strategic, guys. Yelp is speaking today at the JP Morgan TMT conference and is expected to meet with investors, as they often do at those kinds of events. With that 9% pop today on the back of that letter, some of those investors may be wondering if Stoppelman can or should be doing more. Of course, he's been in this position before with an activist investor and managed to fend it off. So we'll see if this time is different.
Yeah, actually, Deirdre, that's where I was going to ask you. I do remember another activist there. Obviously, it doesn't take much to take a significant percentage stake in this company, given it only has about a $2.5 billion market value. But remind me again of the last campaign that came after Stoppelman.
Yeah, so that was SQN. That was back in 2019. And they said also that Yelp should consider strategically selling itself. And after Yelp made a series of adjustments or improvements, they backed off, but they left saying that they should still be open to an eventual sale. And I think we showed you the stock price over the last 5 and 10 years. And Yelp as a company, you know, when it came out of the gates on its IPO around 2011, it had a huge pop, but it's never really been able to regain that momentum. But we should note, this is a company that's always been talked about as being killed by Google, right? Google coming in and eating its lunch when it comes to restaurant reviews and recommendations. But Yelp, and this is what TCS really allows for as well, has done a good job in transforming itself and pivoting to the home services market, but you're just not seeing that reflected in the stock performance.
All right, Deirdre, thank you. Deirdre Bosa, out west. From Wall Street to the East Coast, our own CNBC CEO Summit on the West Coast. Everyone is buzzing about AI this morning. We've got Some new headlines for you next. And then take a look at shares of Zoom Video, falling more than 7% on the back of earnings. Down almost 8% right now. The company reporting numbers that beat estimates, but the guidance for the enterprise division in particular, softer than expected. Here's what the CFO had to say about the quarter earlier on Squawk Box.
We beat on both the top line and the bottom line, and we raised our full FY24 outlook for both our revenue as well as our profit targets. And this was largely due to very strong performance in the online segment of our business. That business, we've been very focused on getting it stabilized, and that occurred earlier than we expected.
Tech Check is sponsored by Comcast Business, powering possibilities.
Every day, businesses everywhere are asking,
Is it possible?
with Comcast Business, it is.
Is it possible to use predictive monitoring to address operations issues?
We can help with that.
Can we provide healthcare virtually anywhere?
We can help with that too.
Is it possible to survey foot traffic across all of our locations?
Yeah, absolutely. With global secure networking from Comcast Business, it's not just possible, it's happening.
These bills are crazy.
She has no idea she's sitting on a gold mine.
Well, she doesn't know that if she owns a life insurance policy of $100,000 or more, she can sell all or part of it to Coventry for cash, even a term policy.
Even a term policy?
Even a term policy!
Find out if you're sitting on a gold mine. Call Coventry Direct today at 800-476-0100 or visit CoventryDirect.com.
Fresh warm hot dogs. When I'm not selling hot dogs, I invest in a fund that advances innovations like robotics. Fresh warm hot dogs straight out of my torso. One for you, one for you. Oh, you're a messy one. Cool, right? So cool.
Anyone can become an agent of innovation with Invesco QQQ, a fund that gives you access to NASDAQ 100 innovations.
Hot dogs. Fresh warm hot dogs.
Before investing, carefully read and consider fund investment objectives, risk, charges, expenses, and more in prospectus at Invesco.com.
We need a small business loan fast.
I got this.
Loan cannon!
There's a better way to get a fast small business loan. Go to OnDeck.com, and if approved, get your funds as soon as the same day. Your loan is on deck.
Your record label is taking off, but so is your sound engineer. You need to hire.
I need Indeed.
Indeed you do. Indeed Instant Match instantly delivers quality candidates matching your job description. Visit Indeed.com/hire.
Choosing Miracle Ear was a great decision. Like when I decided to host family movie nights. Miracle Ear made it easy. I just booked an appointment, and a certified hearing care professional evaluated my hearing loss and helped me find the right device calibrated to my unique hearing needs. Now I enjoy every moment. The quiet ones and the loud ones.
Make a sound decision. Call 1-800-MIRACLE now and book your free hearing evaluation.
My dream is to talk to people, real people, about stocks. We created a club to do it.
Join Jim Cramer and the CNBC Investing Club. Scan this code or go to cnbc.com/investing club for an exclusive offer now.
Welcome back. We had some news from Microsoft at the top of the hour. Additional capabilities with AI and ChatGPT. With its products. Steve Kovac has some details for us. Steve.
Hey there, David. Yeah, this is Microsoft's Build Developers Conference. It's developer conference season. Apple's is in a couple weeks. But look, of course, this all these announcements are centering around AI. Most notably, they're bringing Bing search into ChatGPT. Now, that might sound a little confusing, but basically, if you got the new ChatGPT iPhone app or you use it on the web, now search results from the web will come into ChatGPT from Bing. So it's a big win for Bing as they attempt to gain market share against Google to really show off this technology. In addition to that, they're announcing new tools for developers to make plugins for ChatGPT and Bing Chat, basically, and think of it as an AI kind of app store. So companies like Spotify and Kayak have already built these capabilities for ChatGPT, plugging it into that AI system and creating new capabilities for their apps. Also, they're bringing this AI system called Copilot, which was already previously announced for Microsoft Office apps. They're bringing that to built directly into Windows 11. That's another one. We're going to hear from CEO Satya Nadella here in about 3 minutes. He's taking the stage for his opening keynote, and we'll be back with more comments from him. Sarah, I'll send things back over to you.
Hey, Steve, it's David. You know, now, if I want ChatGPT 4, right, I got to pay, what, $20 a month, don't I?
$20 a month, yeah.
What these products are not that, correct?
No, and also, speaking of the $20 a month thing, the ChatGPT Bing relationship, you're only going to get that if you are a subscriber to that $20 a month plan, whereas you can just use Bing for free if you go to Bing.com and still use those capabilities.
Got it. Steve, thank you. I've been using the freebie. Steve Kovac. Of course, AI is a hot topic here in Santa Barbara as well, dominating the buzz with multiple CEOs weighing in on CNBC this morning. Michael Dell, we talked to earlier, also the CEO of EY. Take a listen.
Like everything else, people start saying, oh, my God, it's going to replace all these jobs and so forth. But this is really an evolution. You know, like everything else in technology, it'll evolve. It will definitely replace jobs, and it will make things more productive, but it's going to take time, and jobs will change, just like any other piece of technology.
My net view is this is going to dramatically enhance human productivity, and certainly there will be new jobs that are created. You know, with any new technology, you're going to have you know, jobs that are less needed as well. But look, I continue to be an optimist about the role technology plays in our world. We could, you know, sort of doomsday about all the horrible things that could happen. Let's not forget all the amazing things that are going to happen.
Mark Metrick of Saks talking about how he's looking at AI and personalization. John Donahoe of Nike talking about AI for the first time, talking about how shoe designers are using it. It's not going to replace them, he said, but because we need their taste and their judgment, but it is helping them, that generative AI, and figuring out what the consumer wants and needs.
Just when I hear Dell talking about things are going to be amazing, I'm always like, oh, yeah, they're going to be really, really good. And then they're not once they reach intelligence beyond our own, Sarah.
Well, that one. I thought,
then it's, you know, then it's all bets are off.
I know you want to go there. But
I do. I like going there because I don't know
no one knows what to do about that.
No, I don't know what you do. But, well, do you think the machines will see the human species as having value?
I think it's scary when they start to form their own judgment, and that's what Microsoft has said, that they're in the early innings of seeing in the latest ChatGPT 4, right? That's what's happening. But I think that a profound question also for investors is on that productivity. Like, what banks, any industry that employs a lot of people, if it's going to replace a lot of jobs and increase productivity and efficiency,
much more near term than the end of humanity.
I mean, it has implications for how stocks are valued, how the entire market is valued. I would think in a positive way, right?
Potentially.
Yeah.
Potentially.
We're going to end it on positive note, despite your doom and gloom. It's been nice having you sit in. Continuing to see the markets stage a bit of a comeback right now. We know that they're going to be monitoring it. Home Depot, Chevron, and Amgen leading the Dow right now. Let's go to the half and Post 9.
And welcome to the Halftime Report. I'm Scott Wapner, front and center this hour. The tech tailwind for stocks, how long it might last, and what happens if it doesn't. We'll ask the investment committee, debate the road ahead for your money. Joining me for the hour, Stephanie Link, Josh Brown, Jim Lebenthal. Check a look at the markets here. Well, we're a bit muted today. I think our eyes are obviously still on those debt ceiling negotiations. We are focused, though, on tech, as we have been almost every day, and for good reason. NASDAQ is coming off its highest close since August of 22. The NASDAQ 100 coming off its highest close since April of last year. Another new high for Microsoft today, and we're going to get to all of that. However, we have a trade alert from Josh Brown that we want to get to first. You've doubled your position in
Toast.
TOST.
So my history with the stock since I got involved with it, relatively recently, bought it right before an earnings call, and of course it went immediately down. Had a new earnings report 2 weeks ago, which I thought was one of the best earnings reports I've seen from any of the stocks I own this year. I think they beat on revenue by $150 million. This is now a business that, between subscription revenue and annually recurring revenue from the various services they sell to restaurant owners, really is a multi-billion-dollar base that they can build on. And if you think about the TAM, the amount of restaurants, not just in the U.S., but globally, that could use Toast's products and services to make more money, who doesn't want that? The growth here could go on for a decade or more at relatively high levels. So they obviously have to execute in order to make that happen. Technically, stock looks phenomenal coming off those lows after the last earnings call. This was a beat. It was a raise. There aren't that many of those in this economy, and I really like the momentum here. So I added to the position slightly lower than where I first bought it, and may God have mercy on my soul.
All right. So you've doubled your position there.
Yeah.
How do you feel about the overall market?
Well, I said may God have mercy on my soul because I think we're probably about to have a blow-off top in tech if we haven't already. Doesn't have to be the final top. The market's still pretty constructive. I could picture the NASDAQ rallying throughout the course of the year, especially if rates are pretty much done going up. But they get overbought. And overbought is not like a feel thing where you just look at the tape and you say, oh, the roulette table hit black too many times. It's overbought. I'm going red. Overbought literally is when you're tracking relative strength. And when you look at RSIs for some of the hottest tech stocks in the market and some of the largest, they're all approaching levels where you say, okay, this might have gone too far too fast. Not necessarily too far, period, but just in the short term. So I don't hate the idea of maybe calming down a little bit, maybe not adding the next tech stock. I want to point out that nearly 70% of the Triple Q's ETF holdings hit above their 50-day moving average last week. That's now back down to 62%. But those are the highs that we've seen in this reading of breadth going back to December of 22. So this is like the best levels of the year for Qs above that 50-day. And it becomes more challenging for the rally to continue once every stock has already made its move.
All right,
so that's how I'm feeling right now.
So you're not alone.
No.
You know, Jimmy Wolf today says they're just waiting for the inevitable rug pull as it relates to tech. We believe we're in the final stages of the blow-off top for tech, like Josh was talking about. It's not just the narrowness that troubles us, but the wide and growing divergences. And we know what divergences we're talking about between tech and seemingly almost everything else. Not everything else, but almost everything else.
Yeah, and I think it begs the question, you asked it in your intro, of, what happens if tech does reach its top and come down? Does the rest of the market come down with it, or does it come up? Now, I actually take some comfort from this earnings season because a lot of stocks actually did beat, raised guidance, and I'm seeing earnings estimates go up in real hard asset type of stocks, industrials like CAT, like Deere, discretionary, true discretionaries like General Motors or the airlines. These are stocks where they beat earnings, Scott, guidance went up, and estimates are going up. I put all that together. Oh, by the way, I left out the punchline. Most of these stocks, the prices are down, as you alluded to. But I put all this together and I say, in those conditions, if tech has reached a top and comes down, these stocks actually fundamentally are poised to take up the leadership.
Well, Steph, that's arguably the biggest question in the market. The fact if tech tumbles in any way, can anything pick up the slack? And that's what Mark Newton at Fundstrat wants to know, that if the broader market strength is possible if when technology stalls out, and he thinks it looks possible into the end of the week. That's just near some of the resistance of what, is an obviously overbought sector based on, the metrics of those who look at that sort of thing. That doesn't mean that overbought means, poised for a big decline in any way. Things can remain overbought, oversold for an extended period of time. But what about that issue of whether, if there is a tumble, if the tailwind does go away, what, if anything's going to pick up the slack?
I don't know if it's all or nothing, Scott. I think you have to step back and say, why has tech and the large tech names, why have they outperformed everything else? And it's really because there's been a defensive feel in the market all year long. There's just too many unknowns, like with regards to the debt ceiling and with regards to the Fed. And are they going to pause? Are they going to pivot? Inflation remains too high. So all of these concerns have led investors to focus on quality companies, free cash flow, strong balance sheets, and excellent market share. And oh, by the way, throw in AI, which is $2-3 trillion total addressable market. And oh, by the way, you have mean reversion because all of these stocks were horrible performers last year. When you add it all up, you can see why these stocks have done well. And in fact, all of the big six, big seven, they're all down still from their highs. And if you look at Amazon and Meta, they're still down over 30% from their highs. So you can see why you've seen this kind of a rotation. I think to some degree, if you can get a resolution on the debt ceiling, and we will one way or the other, if you can get some resolution on the Fed, if they just pause and look at the economic activity, which, by the way, is also pretty darn good. If you look at the GDP now numbers are running at 2.9%. So if you can have all of those things kind of work itself through, I think you could actually see a broadening in the market. Not necessarily tech has to fall. Maybe tech just pauses for a little bit, and then you can see, though, other sectors pick up the slack. But I think it's more of a broadening thing as you get these questions answered.
Well, I got two tests, I guess, Josh, that I would say that tech has to get through. Rates headwind. If rates continue to go up, which we've been saying almost every day they're up, and you look at the curve today, everything's green in terms of yields. So they're up again. That's one. And then NVIDIA earnings tomorrow in overtime. Yeah. Those are two significant tests for tech, I think. What do you think?
Yeah, chips have been a really big part of the tech rally, and without a doubt, NVIDIA has become a bellwether, whether it wants to or whether it should. It absolutely has, not just because of its position in so many different areas of the technology ecosystem globally, but because of how popular its stock has become amongst traders and investors. So I wouldn't say it's make or break for the market, but I would absolutely say it's very tough to picture a bright green day for the overall market if NVIDIA blows the quarter. Now, I don't think that that's what's going to happen. I think there's more of a danger in they have an incredible quarter and the market yawns because the stock's already been up so much. That's actually the risk that I think is the heavier risk. So I remain invested there. One thing I want to point out that we shared with clients over the last couple of weeks about the tech rally specifically, because of how widely held these stocks are. You know, a lot of this conversation depends on the lens that you want to use. And so many people talk in terms of year to date. And I understand that there's nothing wrong with that. But if you contextualize this huge rally in NASDAQ and tech and you take it back to the COVID lows, what you find is all that's happened this year is a giant catch-up trade. And Jimmy will be aware of this data, but let me share it very quickly. If you think about the COVID low in March 2020 through the end of last year, the Qs underperformed by a huge margin. As of December 30th, 2022, the Qs were only up 60%. The S&P was up 75% off that COVID low, and the Dow was up 82%. This year, that's reversed. The Qs are leading substantially. But look at the totals. Now they're all neck and neck off that COVID low. So we needed a catch-up trade. These are high-quality companies. They had a really horrendous 2022. And this year, you had some equilibrium come back. I don't think it has to be more complicated than that.
See, to your point, off of the 52-week lows, Apple's 40%, Microsoft's 50%, Alphabet's 48%, and Amazon's 41%.
Yeah.
But off of their record highs, also to your point, we're still 23% for Alphabet.
Yeah.
Amazon 63%.
The Qs are 16% away from the high, and the Dow is only 7%. So, yes, we've had a great rally in large cap growth and tech this year, but let's not just start January 1st as though it has any sort of meaning. If we take these numbers back to the COVID lows, these stocks have not been excessively bid up relative to everything else.
So NVIDIA is reiterated by Jimmy at Stifel today. Price target to 300. It's reiterated by its Citi. Microsoft added to the Jefferies franchise picks list. Reiterated overweight at Piper. AMD gets a nod as well at B of A, which just shows you the love affair with these stocks doesn't seem to be waning in any way, shape, or form.
It does not. And I could point out, and Josh would as well, that NVIDIA is up 114%, I think, year to date. Now, would I have said at 80% that I think that's enough? Sure, I would have, and I would have been dead wrong. So the analysts are doing what's safe here, and they're going with where the strength is. I completely get that. I think there is an underlying cause besides AI to the strength in these FANG names, and that's this continuing debate about whether we're going to have a recession or not. It's a healthy debate. The economy hasn't shown signs of a recession yet, a few cracks, but not really a recession. So what that's doing is that's saying to investors, well, maybe we should get in the markets. Where are we going to get into the stock markets? We're going to get into the strongest place, the safest place, the stocks that in the last 15 years, when there was slow or no growth, performed well. It is, to me, more behavioralistic. The fact that NVIDIA, just to use an example, has gone up 114%. If, however, the recession is proven to be not coming, and we're not there yet, but if that proof comes, I think you may see the non-tech stocks rally.
I think Stephanie would agree with this very quickly. These companies have really big moats, and when interest rates go higher, what that means is less funding for other Silicon Valley companies that might want to challenge, and as a result, these franchises become worth more, not less. And there's not a million of them. I'm talking about the dominant 6 or 7 tech giants. The moats become even more formidable when capital dries up out west. And there is some element of that to the story. And Steph, I think you would agree with me, at least as it pertains to, let's say, a Meta or an Alphabet.
Well, yeah, I mean, that's why I say people were focusing this year on quality, on free cash flow, and these companies have it in spades. And then also the market share numbers just continue to grow. And I think AI is only going to help them grow even faster. And that's clearly what the market's thinking because these stocks are up so much. But I think that you want to be very careful on chasing here. I think you have to look at valuations. And I actually think that the semiconductors are more attractive here. They're cheaper. The SMH is up 30% year to date, and a lot of other stocks, and like your NVIDIA, Josh, it's up a heck of a lot more. But I still think that there is value there, and especially in the semi-cap equipment names as well. And I also think cybersecurity is still very, very much in the early innings, and there's opportunity as well. So overall, we talk about the mega cap stocks, but there are so many technology stocks and themes within technology that have done really well this year that maybe they're the ones that you have an opportunity to buy on any weakness versus chasing these other names, which seem very concentrated and very overloved.
Steph, you made a comment in your sort of opening commentary that the economy is, quote, pretty darn good.
Yeah.
So what am I supposed to do with manufacturing PMI, which is at 48.5, which is below 50? You know, the economy's been hanging in pretty darn good. Are you sure that that's the way you would characterize where the economy is now?
Yeah, I would. 2.9% GDP, even if it's 2%, even if the numbers come in a little bit. But you had a great PMI services number, 55.1. That's expansion. You had a composite. When you add the manufacturing with services, that is over 50. That's expansion. You had core retail sales last week, core retail sales, not the headline. And then today you had the new home sales at the best number we've seen since March of last year. And so I think you're troughing in housing. You got to be patient for sure. But I think the services side is still humming along. Is it going to slow? Yeah, it's going to slow. But for now, there's so much momentum, Scott. There's just not, you can't say that we're in a recession at this point in time, which a lot of bears are saying at this point.
No,
and
we're not.
In addition, as Jimmy just mentioned,
we're
earnings
not in a recession. I mean, that's kind of obvious. I hear you on that. We're not in a recession, but you know, the idea that the economy is pretty darn good today means that it's going to remain pretty darn good for the next however many months. Why are, for example, steel stocks down? Why are metals and mining stocks down? Why is copper the lowest level of the year, on pace for its worst month in almost a year? Why is all this happening if people are convinced the economy is, quote, pretty darn good?
Well, I think 2.9% GDP growth is there are puts and takes within the economy. Maybe the manufacturing side and the commodity side have struggled, and they will continue to struggle, although I am encouraged about energy and how it's perked up most recently. There are places in the economy that are strong, and there are places that are not. But I think I mentioned last time I was on, I listened to all of these industrial company conference calls from Eaton to Parker Hannifin to Ingersoll Rand to Caterpillar to Deere to I can name you a million of these companies, and every one of them have talked about how they're seeing momentum from reshoring, from government stimulus, from energy infrastructure build out and that sort of thing. And so I think there are going to be pockets in the economy that are going to do well. I'm not trying to whistle past the graveyard and say commodities rolling over I'm not saying it's a good thing. I'm not happy about it. But I don't think it's as gloom and doom when I listen to what companies are saying, especially the manufacturing companies themselves.
Scott, just to answer this question well put about why are the metals down and why are industrials, why is Cat and Deere down? I actually think there was a clue yesterday, and it really does come down to this recession call. Okay, yesterday Ford reiterated its guidance for the year. Now, let's be clear. They didn't raise guidance. I'm not saying all is rosy. But if the economy is going into recession, they should not, Ford or any auto OEM should not be reaffirming guidance as of yesterday. That to me was a pretty strong indication. Now the stock is pretty much, flat to down on the year. It really didn't do anything yesterday. It's up a little bit today. It is this ongoing tug of war, in my opinion, about the market thinking we're going to have a recession. The stocks, what the actual managements are saying is they just don't see it happening. At some point, that will resolve. One of those two sides will be right at some point.
See, now Marko Kolanovic yesterday, J.P. Morgan, I think it was yesterday, they're adding to cash and they're adding to gold. And he says, even aside from the debt ceiling issue, we maintain that the risk-reward for equities is poor, given elevated risk of recession, stretched valuations, high rates, and tightening liquidity. And we favor cash over equities at the former's 5% yields. How do you push back against that?
A former bull, as you've pointed out, and I took comfort last year when he was on my side. Obviously, he's not now. I really think this is the top-down. The things that he's talking about are macroeconomic, right? Liquidity, where the economy is overall. What Stephanie was saying, what I'm saying, is from the management's point of view. I mean, I could look at Wynn Resorts, right? I think they reported 2 weeks ago. And Craig Billings, the CEO, for the fourth quarter in a row said, listen, we're perfectly aware of the macroeconomic environment, the things that Marko Kolanovic is talking about. But from our perspective, ultra-discretionary spending, we just don't see it.
Could we have a service sector that avoids recession and a manufacturing recession happen concurrently?
Yeah.
Isn't that the only thing that would make
Aren't we kind of having that as we speak?
So look at May S&P Global U.S. manufacturing PMI. It's like seven straight months or 6 out of 7 months in contraction. Services are going up. So it's very hard. It's very hard to look at all of the data and form one conclusion. What if it's just this kind of thing where it's affecting one part of the global economy way differently, and we should stop using these catch-all terms like recession, expansion to try to describe everything?
Josh, to answer your question, yes, we can definitely have a combination in terms of the economy. One that's not doing well, one that is. Services is important because it's 70% of consumption, right? So we are rooting for services. We're rooting for the consumer, which is 75% of GDP. So I know the consumer is mixed, but the services piece is a very important component to keep an eye on. And so to your point, yeah, you could have manufacturing struggle and have the services part of the economy do well and keep us maybe not in a recession. We'll have to see, but maybe that's the kind of the saving grace, if you will, if it stays strong.
Stephanie, I'm sorry to cut you off. Can I also point out, we have had this discussion about rolling recession. By the way, Josh, I agree. These catch-all terms are ridiculous. Crash landing, no landing, hard landing, whatever. But I do think there is a case to be made, Ed Yardeni made it, about a rolling recession. Look at what's going on in housing right now. We are seeing more and more green shoots. New home sales, or I forget if it was home sales or starts today, came in a little bit better than expected. And that should be expected to continue if, here's the big if, Scott, if interest rates remain stable where they are.
Well, they
don't have to come down.
But they haven't really remained, quote unquote, stable. They've been rising, and they've been rising a fair amount. And Jamie Dimon yesterday at J.P. Morgan's Investor Day was trying to prepare investors, the markets, and virtually everybody else for an idea that rates are going to go higher. Fed funds rate going much higher than people expect. That's not going to be good for the economy, the types of stocks that both you and Stephanie are talking about, nor for the housing market, which some have called a trough in already. And you look at what housing stocks have done, that would lead people to believe that the worst is over there, but not in a continuing environment where rates go up.
Well, let's be clear. My argument, and I think Stephanie's as well, is a lot stronger if the Fed doesn't continue raising rates. Let's start there. That's the easy part. If the Fed continues to raise rates, Jim Bullard's yesterday, not a voter, but he said he'd do 2 more this year. It becomes awfully hard for this economy to hang in there, whether it's housing or manufacturing or services. It just becomes harder to hang in there. So what this comes down to is inflation. You've got the PCE report coming out on Friday. We've got another inflation report, CPI, the day that the Fed's meeting. It's really down to the wire in terms of inflation showing signs that the Fed can pause. That's what it's coming down to.
Let me just ask you straight up right here, because since we talked about what metals and mining, stocks are doing, would you advocate for people right now today to add to Cliffs on some of the recent weakness that we've seen?
I do. I will, and I do. And the reason for it, and again, this is what is my perspective. It's not from the top down. It's from bottom up, looking at what's going on at the company. Here's a company that has controlled its raw material inputs by buying scrap metal, by actually originally being an iron ore producer. It controls its own raw materials. It has locked in contract pricing with 1/3 of its customers, which are auto OEMs. And oh, by the way, steel prices relative to a year ago, hot rolled coil is higher now. So, I mean, there's a lot of things going right. By the way, Cleveland Cliffs, again, company specific, right? CapEx is going to be a lot lower this year than last year. So when you look at a company level, you can get excited. And what is it, like 5.5 times earnings? Something like that, below book value. Yes.
You make really good arguments about the fundamentals of the company, but most of those arguments you could have made 6 months ago with the stock almost 25. So, like, at what point does the market decide it cares about those particular metrics that you mentioned, which I agree, if they're true, it's a fairly healthy company, but like it.
And I think it's a good question. Yeah. And why hasn't the stock? Presumably, the market knows everything you said about the fundamentals of their pricing and whatever else. Why hasn't it mattered?
Well, you said presumably the market knows. I think the market disagrees. It just disagrees. It says these things aren't going to happen. We're going to have a recession. People are going to stop buying autos. That's what happens in a recession, right? Production of automobiles is going to go down. We're not going to be building things. Steel prices are going to go down. That's the classic playbook. By the way, to answer your question, 25 to 15, that's what happens in a recession. If we're not in a recession, this stock should be higher than 25.
How much of the end market is auto? How much of the end market is commercial, real estate, construction?
Yeah. So about 40% of the company's revenues are auto.
Okay.
And the rest of it is, some of it's on the spot market, some of it's contracted with just overall construction, both residential and non-residential. So it's a pretty diverse base. Look, it's economic activity that's going to drive this.
All right, up next, we have a big win today for Broadcom. Shares hitting a new high on a new deal with Apple. It's our chart of the day. We'll talk about it next.
Meet Gold Bond Healing, a powerhouse lotion that moisturizes, heals, and smooths dry skin. With 7 moisturizers and 3 vitamins, you can pay more, but you can't get more. Gold Bond, champion your skin.
You came in? The internet is telling me a million different ways I should be trading. Look.
What's up, my trade dogs?
So you should be listening to me. You want to be rich like me?
You want to trust me on this one.
Malachite crystals.
Wow. Yeah.
It's time to take control of your investing education. Cut through the noise with best-in-class education resources that match your preferred style of learning. Learn your way, not theirs. TD Ameritrade, where smart investors get smarter.
Your next best investment starts with CNBC Pro, the ultimate investing playbook. Scan this code or go to cnbc.com/pro for an exclusive offer now.
If anybody here understands hard work, I think that we can help you get to where you want to go.
With a little hard work, you can be right here where I am.
All this hard work has paid off.
Shark Tank, tonight starting 8 Eastern, CNBC.
Wouldn't it be great if every meal was perfect? Not just big family cookouts or cozy dinners for 2, but even those crazy busy everyday meals? With Omaha Steaks, you'll love every meal because we only deliver the best. The possibilities are endless, and perfection is always guaranteed. Visit omahasteaks.com/TV to order the perfect meal collection today for just $99.99 and get 8 burgers free.
Create amazing work with Fiverr. All you need is your team and a talented freelancer who will lend a hand and seamlessly join your team from just about anywhere. Expand your team with a Fiverr freelancer.
Chart of the day, Broadcom hitting a new record intraday high today after the company signed a multi-billion-dollar deal with Apple to supply U.S.-made chips. All right, Stephanie Link, second largest position, right?
Yeah. Yeah, I mean, this is good news. Apple is their largest customer. It's about 20% of their total revenue. And there was also rumors earlier this year that Apple was actually going to do all of this in-house. So the fact that they're now outsourcing and keeping the relationship with Broadcom, that's a good thing. It obviously removes an overhang. It's kind of annuity-like revenue, so it's not going to change the game too much. But it's a nice win for them. I just think that this company has a really diverse revenue mix it's underappreciated, even with the stock at new highs, because it only trades at 16 times, right? And it just doesn't get the respect. I mean, they have data center, they have cloud, they have AI. In fact, they are the number one. They actually are the number one customized AI chip to companies like Meta and Alphabet. And they're also the number one cloud switch, right? So they don't get a lot of credit in terms of AI, but they have it. And then they have a lot of these other businesses that are kind of growing at double digits. So they're also growing their dividend. It's been up about 25% over the last 5 years on a CAGR basis, and it yields about 2.7%. So you get the yield as well as the valuation.
Lam Research is the other chip stock you have. We could talk about the sector, too, if you'd like, which I would want to. NVIDIA sort of sucks all the air out of the room, as we talked about it in the A block, because its earnings are tomorrow in overtime. But what about Lam here, which I think you've been adding to as well?
Yeah, I have been adding to Lam. The stock is trading at 16 times forward estimates, and I do think that we're in the bottoming process of kind of memory. Maybe another quarter or two, Scott, but I'm not going to be good enough to time it when they get through all of the excess inventory. And I thought that Applied Materials quarter last week talked about foundry being strong. Well, they've got about 30% exposure there, too. So I like it. The valuation is very attractive. It's really kind of almost like a duopoly in this industry. There's a couple of fringe players, too, but I just like the valuation and the setup into the second half of the year.
What about you, Jimmy? You got some Qualcomm. Obviously, as people know, NXP pretty levered to the continued strength in the auto industry by virtue of what you said about Cliffs and then NXP.
NXP has been doing okay. Qualcomm's been a real thorn in my side. I mean, no question about it. And the turnaround in the handset market has taken a lot longer than expected. JP Morgan's analyst did an interview with management yesterday, and they said they don't see that turning around anytime soon. So what you're really looking for Qualcomm is for Internet of Things and automotive to pick up the slack from handset. That's going to happen. I don't think it's going to happen over the next quarter or two. But at this price for Qualcomm, I just find it hard to sell. I'm going to hang on to it, even though it's been very disappointing. NXP, based on what you were pointing out and what I'm saying about automotive production, which basically inventories do still need to be filled on dealer lots, NXP should be doing good with production of autos.
So, Josh, you mentioned the SMH, the semis up 30% year to date. It hasn't gotten a lot of play. Now, maybe NVIDIA and AMD and some of those names that are more linked to AI have accounted for the lion's share of that. But what about the space now?
Well, look, I think what you're seeing is just investor interest gravitating where the big secular growth stories are. And it's obviously not PCs. We know that from the way Intel has been executing. It's obviously not handsets. We know that from the Qualcomms of the world. Really, all of the activity is in capital equipment for semiconductors. Those are some of the better stocks. And anything that has to do with machine learning, artificial intelligence, augmented reality, virtual reality, et cetera, et cetera. It's just easier. So you pay a higher valuation for the names that play there, of course, but the reason why you pay a higher valuation is because you have a tailwind, and these companies have an easier time meeting and exceeding expectations, less disappointments. Now, every game comes to an end, and eventually those stocks get bid up too much, far outstripping what the actual fundamental growth story is, but I don't think we're there yet. Like, we might be there short term, but this is a decade-long story of our economy literally being transformed by some of these tools, and I think that's what's in the valuation of the companies that are in this space. It's not for everyone. Not everybody plays that game, but for the people that do, the stocks that you want to be involved with are right in front of your face.
All right. Coming up, we have an upgrade for one big oil stock. It's down 6% this month. Stephanie Link owns it. We trade it. It's our call of the day. Plus, we want to remind you that Thursday is the 9th annual Red Nose Day. And the NBC family is a big supporter of that. We need your help as well. You can buy a Red Nose at Walgreens for $1. Wear it this Thursday and watch an NBC Red Nose Day edition of The Wall at 8 p.m. And since 2015, the campaign has raised more than $324 million to fight childhood poverty in the U.S. For more, go to rednoseday.org. Halftime is back right after this.
How can you tell which one's the better deal?
Bring in Dad from Sarasota.
Dads are great, but let's say, show me the Carfax value. You'll get the most accurate price based on the vehicle's accident history. Shop at the all-new Carfax.com.
Interactive Brokers pays up to 4.58% on instantly available cash in your brokerage account. How much interest can your bank or broker pay? Interactive Brokers' conservative and prudent risk management uniquely positions us to pay up to 4.58% on uninvested, instantly available cash in your brokerage account. The best informed investors choose Interactive Brokers. Don't be Wall Street's useful idiot. Leading banks and brokers are paying you interest rates that are obscenely below market rates. Why? Maybe they made long-term loans at lower rates and would lose money if they paid you higher interest rates. Or maybe they simply think their customers won't notice or care if they don't pay market rates. Whatever the reason, don't let them rip you off. Collect the interest you are entitled to. Move your account to Interactive Brokers.
What if we live to 100? I don't want to outlive our money. I keep eating all these chia seeds. I could live to be 100.
We work at Empower. Even if we do live to 100, we don't have to worry.
Not worried.
Take control of your financial future to empower what's next.
I can do this.
Luxury that lets you feel infinitely you.
We need a small business loan fast.
I got this.
Loan Falcon! There's a better way to get a fast small business loan. Go to OnDeck.com, and if approved, get your funds as soon as the same day. Your loan is on deck.
Our roof got damaged during Hurricane Ida last August. We answered some questions on Angie. Next thing we knew, we were put in contact with our Angie Pro, and then that weekend, they came out, and we had a brand new roof.
Get started at Angie.com today.
Introducing a new season of Peter Millar footwear.
Weeknights from Wall Street to K Street and Main Street. Get the stories behind the numbers.
Last Call is really about spotting tomorrow's opportunities tonight.
Brian Sullivan hosts Last Call, weeknights 7 Eastern, CNBC.
Welcome back to the Halftime Report. I'm Seema Modi with your CNBC News Update. A group of Chinese immigrants in Florida suing the state over a new law that bans them from buying properties within 10 miles of military installations and other critical infrastructure. The law also impacts citizens of other countries, including Syria, Iran, and Russia. But Chinese citizens and those selling property to them face the harshest penalties. The suit says the law unfairly equates Chinese people with the actions of their government. Emergency shelters have started to fill in Guam as residents brace for Typhoon Marwar, a powerful storm that is expected to hit the U.S. Pacific territory on Wednesday. President Joe Biden approving an emergency declaration ahead of the storm, and the governor ordering people in low-lying areas to evacuate. And WhatsApp will allow users to edit messages, but only for 15 minutes after they press send. The popular chat app just started to roll out this feature to people worldwide. It should be available to all users in the coming weeks. Scott, back to you.
All right, Seema, thank you. That's Seema Modi. Let's do our call of the day. It's Chevron. It's upgraded today to a buy at HSBC. Analyst says that its underperformance versus its peers creates a buying opportunity. There it is, up 3%. Stephanie Link, you own it. So they cut the price target by a few bucks to 189 from 193. It's still 24% higher from here. Energy's been a big underperformer so far this year. What about this one from here?
Yeah, and you know, we talked about this last week. I actually added to it. It was Last week, it was down about 18% from its January high, and I just thought it was really extreme. This is a great diversified total revenue energy company, international company with upstream, downstream chemicals. And I think their E&P business, their upstream business, just got a whole heck of a lot better with this PDC deal that they announced yesterday. It will add 10% to proven reserves in the Permian, and you know that they have great assets in the Permian. About 9% of their total mix is Permian, so they're increasing that, which I like very much, and it adds about $1 billion to free cash flow. So I think at 11 times forward estimates and a $17.5 billion buyback. With M&A now on their mind, I really like that a lot. So I'm going to continue to buy on these dips.
Jimmy, you still prefer Exxon to Chevron?
I do, because I'm in it, and I know that's not the solid answer that you like to hear, Scott. But the thing is I look at these two as twin giants, and I think you got to own one or the other or both of them. Now, I choose only one because I like to run a concentrated portfolio. But Stephanie hit on something. This deal that Chevron did with PDC shows why you want to be in the bigger integrated oil companies, because they have the balance sheet capacity to do deals, which is going to be important in the years to come as supply is constrained, not just in the Permian where you're seeing well productivity decline, but around the world where you're going to have to drill in more expensive places like harsh environment off water. You're going to need that balance sheet capacity of either an ExxonMobil or a Chevron. I've been an Exxon for 3 years. It's been very good to me, so I'm not going to switch horses now.
Steph, I think I generally find that it's either or for people. I don't feel like we have too many people who come on and say, I own both and make the case for both. Is it a one or the other trade?
Well, they're the two largest companies in the ETF, right? So if you want energy exposure, you're going to own one or the other, or you own the ETF and you own both, right? So for me, I just kind of like to diversify within energy. So I've got the big one, right, with Chevron, kind of steady Eddie, if you will, less beta. And then I kind of work around it with something like a Diamondback, which has a lot of juice, a lot of beta to it. But I like the E&P cycle very much. I like what they have to offer, and the stock is extremely cheap. And then Schlumberger, I feel like I talk about it every week. I really do like it, and it is this little technology gem within the energy oil field services industry. And we haven't even seen international activity pick up just yet. We're at the inflection point, and I think they have pricing power as a result. So I kind of like to just do this whole barbell thing and this mix of diversification within energy. But I can't really turn down, Exxon. I know Jimmy. I know why he owns it. It's a quality company. You get a good yield, and they're also very diversified as well.
You go IEO, Josh.
Yeah, so if you think there are deals to be had, a lot of the companies that make up the IEO ETF are going to be the prey if Chevron and Exxon and companies of that size are the predators. So I think both can do well. I don't think you necessarily want to be a size queen in energy stocks in general, because the larger ones are more integrated, more hedged, maybe less directionally involved with whatever's going on with oil that day. The smaller ones, they tend to trade more specifically on either oil prices or natural gas prices or barrels per day demand or whatever metric is moving the market. So I think you want to do some combination of the two. I just think IEO has more potential upside right now.
All right, up next, Mike Santoli has his midday word. He'll be right here at Post 9 next.
Grade My Trade. Send us your latest stock move, and the investment committee will debate it and grade it. Email us at askhalftime@cnbc.com or tweet us, #GradeMyTrade.
You know that tech stock we talked about? I picked up 500 shares.
You get in at a good price?
Oh, yeah.
Schwab saved you how much?
With Schwab Order Execution Advantage, you get price improvement on 96% of orders and commission-free online trades.
I'll take care of this.
Are you getting complete price transparency? Expect more from your firm. Schwab, the better place for traders.
My plane has mechanical problems. I'll try to get there as soon as I can.
Breakfast looks delicious, as always. Having a chauffeur car plane side helps keep me on schedule. Hi, Jeff.
With all the plane shortages, did you have trouble finding one?
I never have any trouble. I simply pick a plane, pay, and I'm ready to badge it to my destination.
Are there any taxis around? I'm really late for my meeting.
Do we have a deal? Missed you at the meeting today. Badge it and don't miss out on the most important moments of your life.
Call for a complimentary flight.
CNBC. Live ambitiously. An overtime exclusive with the CEO of Adobe. Where is software and generative AI headed? Outlook for the tech sector. Closing bell overtime 4 Eastern.
Do you have a box of videotapes, film reels, or photos that are degrading? Legacy Box professionally converts them to DVDs, thumb drive, or the cloud. Legacy Box is simple and safe, with over 1 million satisfied customers. Visit legacybox.com.
When the details take precedence, the rest falls perfectly into place. We strip away everything but the essential, and what we're left with are thoughtful bedrooms for modern living. Thuma.
Listen up. Viagra works. That's why Roman offers Viagra and the generic option 100% online. Connect with a provider today to find out if treatment is right for you at ro.co/Roman.
There is a lot that goes into becoming a licensed therapist.
2 years of graduate school followed by 2 years of clinical training.
You literally have to do 3,000 hours plus of interactions with clients. It is quite a journey.
We're back. Our senior markets commentator, Mike Santoli, joining us now for his midday word. What's on your mind today?
Well, this is the kind of day the complainers have been asking for, right? You have small caps and banks outperforming. Apple and Microsoft each down 1%. So the supposedly dangerous divergences may be closing a little bit, and it nets out to not much action on the indexes. I guess there might be some who think there's some significance at the S&P. 3 of the last 4 days, trades above 4,200, doesn't stay there, doesn't close there. So it seems silly. It seems very kind of micromanaged. But in the absence of big swing factor data points, it's going to move consensus one way or the other and get conviction up. I don't necessarily think it's irrelevant. Let's just put it that way, tactically.
Could we really expect the S&P to find any stability above 4,200 as long as rates continue to go up almost every day?
Yeah, you know, they can't go up too fast, I would say. They may be bumping up against levels where it matters. They're below where they were in March, okay? So we're still kind of operating in this post-SVB world of rates lower. The Fed path has definitely been kind of pressured lower as well. But, yeah, I think it's going to be an issue. If it continues that way, if it's all because people are anticipating some supposed rush of supply after the debt ceiling deal happens, I think that's being front run. I mean, that doesn't seem like it should matter that much. All people are doing is putting money in money market funds, which will immediately go soak up all the Treasury bills that get issued. But you know, I guess that's another thing we should worry about if we choose to.
I guess it's going to test the resolve of the market, if nothing else, if tech starts to sputter. In any meaningful way.
Well, you have to see if there's an answer for it. You have to see if, in fact, you know, I keep wondering what exactly we were complaining about. So, as Goldman says, Apple, Amazon, Alphabet, Meta, Microsoft up 40% year to date. The other 495 stocks up 4% year to date. If the whole market was up 4% year to date here in May, would we be thinking it was awful? Would we be thinking it said bad stuff is going to happen? We'd be saying we're up 12 and 13% from the October lows, some stocks up, some stocks down. It's not operating like the owner's manual of a bull market that people put in your hands and said this is how it should be. But it doesn't always. It also isn't really acting like a bear market, frankly.
You have a thought on this?
Yeah, I just think there's so little investor interest in small caps overall, like today notwithstanding. And then you look at some of the outflows coming from corporate bonds, and you say to yourself, can every one of these dollars really be going to money markets? And maybe they are.
Yeah.
They won't stay there. And so maybe that is some dry powder for later this year when we think maybe we've seen the worst of the earnings recession that I'm still waiting for. That might be something where we say, oh, my God, remember how much money went into money markets and chase treasuries. maybe there's a new game in town. So I think that's one aspect.
It doesn't change that. Look, most of the Russell 2000, it probably would be fine if they weren't public companies, right? You don't expect there to be real high conviction buyers to show up for all that. But as an asset class, it gets too cheap or too neglected for a while and comes back.
Yep.
See you in a couple hours on Closing Bell. That's Mike Santoli. Stay with the Halftime Report. CNBC CEO Council Summit underway in Santa Barbara, California. Our own Jim Cramer is speaking with Apple's Eddy Cue. That's a rare conversation. You just don't get the opportunity very often to speak with Mr. Cue. We got highlights from that exclusive interview coming up next.
We empower those who act. Those who see the correlation between things above and things below the surface. Those who navigate risk by meeting every turn with a heightened awareness of what's possible. Constant assessment. Determine the best position. Catch the perfect wave. CME Group, where risk meets opportunity.
These used cars look the same, but Carfax can show how damage history affects the value.
Your damage has always been visible. We're twins.
Stop overpaying. Shop at the all-new Carfax.com.
Identical twins.
Electric Dream Days are here. Come in now and experience the intense thrills and incredible offers on any of 5 Mercedes-Benz electric vehicles, including 2 years complimentary charging and prepaid maintenance. The vehicles are all electric. The feeling is all Mercedes. The choice is all yours. But hurry, these Dream Days are only here until June 5th.
The first time your sales reached 100K with GoDaddy was also the first time your profits left you speechless. At the counter or on the go, save 20% with the lowest transaction fees and keep more of what you make. Start saving today at GoDaddy.com.
What's the alternative to riding the public market roller coaster? The alternative is alternatives. Private market alternatives help you outperform the traditional portfolio by up to 40%. Meet YieldStreet, the leading private market investment platform with 9.7% realized net annual returns across 10 highly vetted asset classes. Join over 400,000 members with over $3 billion invested. Diversify with alternatives. Open an account at YieldStreet.com.
With Allegra, allergies don't hold us back. Allegra starts working 2 times faster than Claritin. And unlike Zyrtec, it won't make us drowsy. Allegra gives you the fastest, non-drowsy 24-hour allergy relief so you can live your greatness.
We are back. CNBC's inaugural CEO Council Summit underway in Santa Barbara, California. Our own Jim Cramer, as I said, just taking the stage with Apple's SVP of Services, Eddy Cue, to talk about the strength of Apple's brand. Here's what he said.
I think we have a huge advantage in the world. We use all of our products all the time. Our families, wife, kids, friends, certainly all the good friends. We all use our products, so there's no really, like I always look when we've blown some things or whatever, not done well. There's no excuse for it because we're first and foremost first-time users. I think, we get a tremendous amount of feedback. Our customers give us a lot of feedback, and we do that. I think the interesting thing is always about how to see around the corner. And so it's how do you give things that customers want that they don't know they want yet?
All right, that's Eddy Cue with Jim Cramer. CNBC CEO Council Summit continuing on the West Coast this week. For more, check out cnbc.com/CEO. And there's part of the lineup we still have to come. We'll have some highlights coming up for you later on in Closing Bell as well. Grade My Trade up next. We're right back.
What do you see on the horizon? Uncertainty or opportunity? Whatever you see, at PGIM, we can help you rise to the challenges of today.
when active investing and disciplined risk management are needed most. Drawing on deep expertise across the world's public and private markets in pursuit of long-term returns. PGIM. Our investments shape tomorrow, today.
Dad, we got this.
We got this.
I'm gonna check out the town, okay?
We got this.
We got this.
We got this. We got this. We got this.
Life is for living.
We got this.
Let's partner for all of it. Edward Jones.
My dream is to talk to people, real people, about stocks. We created a club to do it.
Join Jim Cramer and the CNBC Investing Club. Scan this code or go to cnbc.com/investing club for an exclusive offer now.
June 15th, join CNBC's Financial Advisor Summit. Hear from top advisors and market experts. Creative solutions to generate consistent returns. Register now at cnbcevents.com/FA.
Sure, you'll teach her how to drive a car. Then use Greenlight to power her independence with crash detection with 911 dispatch, family location sharing, and emergency SOS alerts. Invest in your best investment with Greenlight.
I'm Mr. Wonderful, and I'm Chef Wonderful. I recently introduced the ERC program to Chef Wonderful here, which is a program created towards small businesses like mine for retaining their employees during the pandemic. Well done, and most of this money is still available. If there's one thing Wonderfuls never do, it's leave money on the table. Chihuahua, this guy is smart. Go to wondertrust.com now to see if you're eligible for this cash. Nice hat.
We're doing some Grade My Trade. Stephanie, you're up first. It's from Justin. Bought UPS just shy of $180. So you own it. What do you think of UPS here?
I like it. I bought it after the company reported a disappointing quarter and the stock fell 11% that day. Hasn't really done much since I bought it, but I'm patient, and I think everyone should be patient because I think the first half of the year, we all know the macro is slowing down a bit, and then also, of course, they are doing a very heavy investment year. But I think that's going to yield to really good results going forward in terms of margin expansion and better top-line growth. So I like it. Very rare to get this stock at 14 times forward. The average is 16.5, so I like it.
Okay, thank you. Jim, you first on Oracle, because I'm going to go to Josh as well. You both own it. It's from Joe. Bought 65 shares of Oracle last month. Should I add more or hold? You go first.
Yeah, and I think I bought it one day after Josh, so I was following good company. Here's the story with Oracle. It's a great company. It's at an attractive price, but I think we have to respect the fact that it's up about 55% off the October lows. What I'm saying to you is, yes, you can add to it. I'm not sure now is the right time. There's a little bit of a give back in tech. See if that continues a little bit. I'm just saying you don't have to add to it now, but if you get pullbacks, then yes.
You called for this breakout.
Yeah, it happened, and now this is what we call the low volume retest of the breakout level. So this is like the stock dips back a little bit. Maybe some of the people with less conviction that were only in it on technicals, maybe they falter, they get out. This is a classic setup that traders look for. Patty, give me a 3-year chart really quickly. It's not this is why you pay attention to technicals. It's not an accident where this stock stopped. Literally, the November 2021 high acted as a ceiling for the stock. That's where this huge breakout took a little bit of a pause. I think some sellers materialize. I think maybe you see that low volume, low conviction pullback. And then once that supply is digested, this stock can continue on. Worth pointing out, at its peak last week, the stock hit a relative strength index of 75. Almost unheard of, especially for a stock like this. Way overbought short term. Now that's corrected. Probably get it back closer to 60 by the time it's ready to be bought again.
All right, good stuff. Thank you for that. Final trades are next.
you could make analyzing a big bank's data no big deal?
Go on.
Well, what if you partner with IBM and Red Hat, use a hybrid cloud solution to connect data across multiple systems globally, then analyze all that data with Watson?
Okay, but this needs to meet our...
Security standards? Yep.
Compliance standards?
Mm-hmm.
So they get the insights they need.
Yep.
In real time.
Check.
To make quick decisions.
Check. And check. That's the hybrid cloud solution IBM and a global bank created. What will you create? IBM. Let's create.
These used cars look the same, but Carfax can show how damage history affects the value.
Your damage has always been visible. We're twins.
Stop overpaying. Shop at the all-new Carfax.com.
Identical twins.
I'm Mr. Wonderful, and I'm Chef Wonderful. What does ERC stand for, Chef Wonderful? The Employee Retention Credit. What else does it stand for? Cash flow. This guy's so smart and handsome. Go to wondertrust.com to see if you're eligible.
Are you still using your hands when you put on your shoes? Step into the future like I did with new hands-free Skechers slip-ins. The secret is slip-ins have an invisible built-in shoehorn so your foot slides into place without bending down or touching my shoes. Try Skechers slip-ins.
A vacation starts with how you get there. A private jet experience from One Flight's Badget. You've got to see this. Plug in your itinerary, search from over 5,000 planes, pay, and you're on your way. Nothing better than a personalized meal on board.
It should be a beautiful day in the Bahamas, Mr. Hershavac. We should be landing in about 20 minutes.
A great vacation always starts with your flight experience.
Call for a complimentary flight.
AG1 is so much more than a greens powder. In one single scoop, it delivers daily multivitamins, pre and probiotics, stress adaptogens, and yes, greens. Start your journey at athleticgreens.com.
Thinkorswim by TD Ameritrade is more than a trading platform. It's an entire trading experience. With innovation that lets you customize interfaces, charts, and orders to your style of trading. Personalized education to expand your perspective, and a dedicated trade desk of expert-level support that will push you to be even better and just might change how you trade forever. Because once you experience Thinkorswim by TD Ameritrade, there's no going back.
3 o'clock Eastern Time, closing bell. Lauren Goodwin's going to be with me along with A.J. Oden. We're going to have the latest from our CEO Council Summit as well out in Santa Barbara. Frank Holland's going to set you up for Palo Alto earnings, too. Cyber stocks have done really well. So he'll tell you what to look out for when that company does report earnings as well. But let's do some finals. Stephanie Link, why don't you go first?
Sure, HCA. I haven't bought it yet, but it's on my radar screen. Strong fundamentals, 7-8% EBITDA growth, margin expansion, a $3.7 billion buyback. And I love this acquisition they did last week to increase their urgent care exposure. That's going to give them higher growth going forward.
Okay, good stuff. Thank you, Steph. Farmer Jim.
Cisco Systems. This is another one of those stocks where it beat, it raised, earnings estimates are going up, and yet the stock has really been lackluster all year. I think that's the opportunity at this valuation to get into it.
You know, we've almost been talking about everything but Amazon in terms of mega cap tech, right?
Yeah, I am ready to issue a crossover alert on Amazon. You've got a rising 50-day about 103, 104. You've got a flat-lining 200-day at 105. That 50-day looks like she wants to cross over. Amazon is green and a red tape for large cap tech. Something's brewing here. I'm long. I'm excited.
All right, good stuff. Thanks, everybody. I'll see you on closing bell. The exchange is now.
Thank you, Scott. Hi, and welcome to The Exchange. I'm Kelly Evans. Here's what's ahead this hour. Negotiations continue, but no debt ceiling deal yet. The equity markets are largely in wait-and-see mode, while the yield on 6-month T-bills is now at a multi-decade high. We'll look at how investors can profit from this disconnect. Plus, Microsoft unveiling more AI products, Google CEO warning of more AI perils, and Bank of America names one stock well-positioned to ride the AI wave to greater market share. The analyst behind that joins us ahead. And with Toll Brothers on deck, we'll see how much longer the home builders can keep rallying, especially as mortgage rates spike up again. That plus two other names are coming up in earnings exchange. But first, let's get today's markets and Dom Chu with the numbers, Dom.
The stock market doesn't seem to fear what's happening in Washington, D.C. And the reason why is if you take a look at the picture overall, Kelly, the S&P 500 is at now below 4,200. It's 4,169 and change. We're down about 23 points right now. This is towards session lows. We were down 28 at the lows of the session so far, down about 7 at the highs. So it's been a predominantly down day. But again, we're talking about fractional gains and losses over the course of the last year. Remember, just a couple days ago, the NASDAQ 100 hit a one-year high. So the Dow Industrial is down about 0.1%, 33,234. The NASDAQ Composite, the underperformer of the day, down about 0.75%, 12,632 the last trade there. One place, though, you are seeing a good amount of positivity, computer chips and circuits, that sort of thing. And that brings us to Broadcom and Apple. Now, Broadcom shares are up 2% in a predominantly down tape, driven on headlines that it, alongside tech giant Apple, have now signed a multi-billion-dollar, multi-year agreement for Apple to purchase Broadcom-produced U.S.-manufactured chips, mostly for radio frequency, communications, wireless-type services. Broadcom shares up 2%. And by the way, we get to put a gold star up here because that's a record high now for Broadcom. So keep an eye on that technology trade, specifically with regard to semiconductors. And then we're going to end with a check on interest rates. They are all the rage right now, given what's happening with the debt ceiling debate, everything else happening there. Inflation is still part of the story. Kelly mentioned the 6-month. Look at the 1-month ticking just slightly lower, but it's still 5.57%. We're going to put a particular focus on other parts of the note and yield curve. The 2-year note, 4.36%. The 10-year note yield ticking higher to 3.72%. That's been on a multi-day winning streak in terms of yields going higher. And I just want to call your attention, Kelly. I know in just a few moments here, we're going to get results. Big 2-year T-note auction, $42 billion worth up for sale this afternoon. I'm sure in just moments you guys are going to be breaking down all the details. You and Rick Santelli, watch that 2-year, currently 4.36%. I'll send things back over to you.
No, the yields are eyebrow-raising again, Dom. We appreciate it, Dom Chu. Well, to raise or not to raise, that is the question for the Fed's next policy meeting in June. And none other than former Fed Chair Ben Bernanke this morning says another rate hike is necessary in the fight against inflation, and that he thinks a soft landing is still possible. Both of my next guests agree about the rate hike, but not about the soft landing part. Let's bring in Brian Weinstein. He's head of fixed income at Morgan Stanley Investment Management. And here on set with me is Chris Crisanti, chief equity strategist at MAI Capital Management. Welcome to both of you. Chris, I'll start with you. Why do they need to keep hiking?
Well, you know, Kelly, I think the economy is still quite strong. It's an ocean liner. We've had an inverted curve for just about 6 months. It usually takes a year or more for things to really slow down. So they've really got their work cut out for them. There's still several hawks on the committee. I think you're going to see a hike in June.
Well, let me kind of ask it differently. Or sort of phrase it differently. Maybe everyone thinks they will hike, but should they? I mean, you're worried about a hard landing already here. I am. And having said that, I think the Fed's between a rock and a hard place because they can't be easy on inflation. If they get, by the way, the employment and the CPI numbers will come out right before the meeting. That might give them the excuse to hike that I think they're going to use. Or maybe the excuse to pause, or do you think that's, or
no,
skip, or whatever?
I think we're still going to see strength.
Okay. All right. Brian, I turn to you. And maybe that, I mean, only that really would explain bond yields at these levels, don't you think?
Yeah, I think that's right. I mean, as someone who thinks they should pause, and even Jay Powell was out, yesterday, the day before, saying that there's some evidence they should pause. I think it's hard, right? I think the risk markets are saying they need to go, and I think the way they played the transitory card on inflation, too soon and maybe incorrectly, they need to show they're tough on inflation here. The market gives you an opening, you take it. I'm not sure they want to hike, but I do think another one is in the cards.
But so you basically said you actually don't think they should keep hiking, but just that they will. So what do you see that you're worried about?
I think there's a tale of two markets here, right? I mean, I think if you're a smaller business, if you're looking for a regional bank to lend to you, I think it's tough, right? I think credit conditions have gotten much tougher. You can see it in survey data. If you're a large company, it feels pretty good, I think, right? Especially a tech company. So I think the Fed, the evidence that they've pointed us to, CPI and employment, continues to move along in a way that suggests they need to hike. Unless they point us another direction or the data changes dramatically in the next few weeks, you get another 25.
I mean, we'll wait in a moment for the results of this auction. But, Brian, are these yields a gift? I mean, who wouldn't? And Chris, I'll ask you as well. But, okay, so you can get upwards of 5%, I think, beyond the 6-month bill. I mean, maybe on the 1 year at this point. And yeah. I just don't understand why the market keeps offering what seem like such, kind of shockingly high, like a gift, like practically a gift for people to take.
Right. Well, Kelly, you and I have discussed this before. I mean, it's happening. Money is moving to the front end of the yield curve. Money market fund flows are great. People are buying T-bills, opening up Treasury direct accounts, or buying funds. And I think that's the right part of the curve. I think out the yield curve, where the market is really looking for the Fed to ease quickly, we're starting to struggle there, right? We got 10-year notes to 330, 335. They're back to 375. Tight range. But actually, I think the market is questioning whether or not the Fed has to ease quickly. So it makes that cash market even more attractive in this environment. I think you'll keep seeing it. I do think it's a gift. I think it's a good place to invest money.
Yeah, I've been surprised by the strength in the 10-year part lately, almost 375 today. Let's pause for a moment, get the results of that auction. It was the 2-year, which has been quite a round trip of its own lately. Rick Santelli, how'd it go over?
A is an apple. That's what demand was. It's straight up one Eastern. The 2-year note, $42 billion. I'm kicking off $120 billion in Treasury coupon supply. Well, those $42 billion 2-year notes had a yield of 4.30, Kelly. The one issued market was about a basis point and a half higher than that. Lower yield, higher price. If you're the seller, a high price is a good thing. Some of these metrics are really stellar. If you look at the bid to cover, 2.90. Wow, that was the best since January of this year. And if you look at 68.2 on indirects, that is the best since June of 09. June of 09. Can anybody hear those foreign bidders? I can. Direct was a little light, and that's the only reason it wasn't an A+. It really was a stellar auction. You could see yields have dropped. And with regard to those T-bills, remember, when it comes to T-bills, there's a lot of moving parts here. But one of the things we really want to pay attention to is if the debt ceiling gets solved, maybe there's going to be a boatload of T-bill issuance, something to figure on the better side of the equation. Kelly, back to you.
Thank you, Rick. And it does seem, Chris, as almost the investors looking at this like a gift, like we were just talking about a moment ago. Why?
I think so. A couple of observations, and I defer to Rick, of course, but this debt ceiling stuff has really kind of messed up the yield curve. You see the high things real early, and the 2-year was strong, maybe because folks don't want to buy the real short end because there's uncertainty. So I think we need to let this simmer. But what I would say, Kelly, one last thought, is that maybe we don't want the Fed to ease because the situation that would cause an ease would not be good for the equity markets, which is where I'm coming from.
The good situation is, hey, CPI is gently declining and the economy is still strong, but it sounds like no one thinks that's going to be the situation in which they ease.
Yeah, I think that's right. I think they'd love to see the CPI gently decline for more than a year and keep things just where they are. Something that would really make them cut. That's something I don't want to see as an equity investor.
We often talk about your picks. I know, obviously, we've talked about Dollar General. Bristol Myers is one you're looking at today. But just when it comes to being in the market overall, what's the game plan for kind of debt ceiling, whatever might happen, getting through that, knowing the economy is at some point is going to weaken? How long do you stay in? Are you building cash positions to try to put to work later on? I'm just curious.
Well, I think it's very wise right now to sail close to shore. There are times to get real excited about the equity market and go all in, but this is not one of those times. I think getting 5% for your cash it takes the FOMO away, so I think that's important. But I also think there are some opportunities. You mentioned Bristol Myers, just stock that everybody seems to hate. We love that kind of opportunity.
Well, they don't have Alzheimer's and they don't have weight loss, so they're going to.
But they also don't have a high multiple. They're selling at 7 times earnings. So we like that here, and they will do fine in a recession. The cash flow is strong. The balance sheet is strong. That's the kind of company you want to own if things get rough.
Then, Brian, a quick final question to you is where do you think the 10-year is headed next? I mean, can the answer possibly be higher?
Kelly, I'm a little worried that the debt ceiling is going to highlight how much debt there is. So last time there was a big conflict here, the government shut down for a bit. We had a big rally. We got downgraded. I think people are positioned for that. I'm a little worried, and I wasn't worried about this a few weeks ago, that, yes, maybe we'll retest the highs of this range in the 10-year note, re-steeping the yield curve, because money's going to the front end, and the 10-year note, I think, could cheapen some more. So it seems counterintuitive, but I'd be careful buying longer duration treasuries right now.
Hang on, because the Treasury math always confuses me. So does that mean you think yields at the 10-year going up or down?
10-year yields, I think, could go higher. So we tested, 415, 420 late last year. We're 375. I think we could get there again.
Wow.
Yeah, I think it's possible.
Wow, very, very interesting. Thank you, gentlemen, both. Really appreciate it today. Brian Weinstein with Morgan Stanley, Chris Grisanti with MAI. The clock is ticking down to the debt default that could happen as soon as June 1. My next guests have different views on whether it actually will happen. One says President Biden has no incentive to compromise right now, but the other says the president hasn't played his McConnell card yet. Joining me now are Nicholas Glinsman, co-founder of Malmgren Glinsman Partners, and Marco Papich is chief strategist at the Clock Tower Group. It's good to see you both. Nick, I'll just start with you and kind of what's the TikTok you expect here?
Well, I've got a slightly different view insofar as if you go back to 2012, 2013 fiscal cliff, it was sorted out by Biden and McConnell, who are long-standing, long-term friends. And McConnell seems to step up for Joe Biden quite a bit. Now, McCarthy is unpredictable. He's exposed to the whims of 5, 6 GOP members who could, in effect, remove him. But McConnell has huge power within the GOP. He controls the funding of candidates. Hence, he has a strong ability to facilitate a deal. It's worked before over the end of 2012 fiscal cliff. I think we got an announcement in the evening of New Year's Eve. The equity market had been down quite aggressively. Come the first day of trading in 2013, gap open on the upside. So that's a possibility. I mean, you know, if somebody says to me, what's your timeline? Between 10 and 30 days, and then it's all history.
So you're feeling a little more sanguine about it, Nick, whereas Marco, you see a little more risk that things could go wrong here. Why is that?
Well, thank you, Kelly. Yeah, I agree with Nick. I think the GOP is actually has a pretty clear path to resolving the crisis. My concern is that the last time we had the debt ceiling in 2011, the last time this was a big issue, the median voter in the United States was very clear. I mean, the polling was showing that about 70% of Americans thought that the debt deficits were the most critical issue for the government to resolve. Today, that's collapsed to 40%. So 12 years later, you could argue that the median voter has a completely different view of budget consolidation and austerity. And that's really important because it means that President Biden can push the Republicans to whichever corner he wants. And I am concerned about that. Now, the good news is the news flow has not supported my view. The news flow has been relatively conciliatory on both sides. So there is hope that, you know, I'm wrong.
No, the positivity of the news flow is what has me so worried. I mean, it's almost glowing. Oh, McCarthy's, you know, so well supported. Oh, Biden's so good at negotiating. I'm like, why are we reading such positive commentary? It's odd. Like you said, maybe it's fine and the stock market's certainly acting that way, but I just wonder if there's many chapters of this yet to be written. One more on this, and then I want to ask you both about China. But Nick, what would your advice be to investors who have to somehow figure out what to do? I mean, are they looking for an opening to buy stocks here, or what's the action plan?
Well, I actually think once this gets resolved, you have $1 trillion of new Treasury issuance. That is a huge vacuuming of liquidity out of the markets. And I think, I don't know whether it's contrarian, but I think that vacuuming of liquidity will actually be somewhat negative for the equity market. So I have a slightly different view from the general commentary that, equities are going to rally after the debt ceiling gets resolved. Yeah, but we've got $1 trillion worth of issuance coming up. Plus, quantitative tightening will continue. Other central banks around the world will be withdrawing liquidity. It's going to be quite a hard liquidity environment going forward if everything is resolved in a positive fashion.
That's a great point. And again, a Fed that has to consider that among many other factors in debating this rate hike. Let's pivot and talk China for a second. You both have such strong views on it. We've had quite the news flow. We've also had the KWEB China Internet ETF coming off a 7-week losing streak. That's its worst since the depths of the pandemic. Sentiment on China's growth has turned really negative lately. Meanwhile, Nike CEO John Donahoe spoke with our Sarah Eisen at CNBC's CEO Council Summit last night, and he had a pretty dire warning about U.S.-China relations.
I think decoupling would be disastrous economically between the U.S. and China, or China and the European Union. If you really look at the trade flows, both ways, they play a mutually valuable role. And so again, we believe in global trade, and we'll continue to try to do everything we can to support that.
Marco, what do you think? I mean, we've talked before about whether Chinese stocks are a great opportunity. And as we kind of move into the middle of the year with a lot of headwinds over their economy and especially these kind of, we'll call them geopolitical risks, what should investors do now?
Well, first of all, when I look at China, I think they're stuck in 2009, 2010. It's a situation where consumption is not going to be revived easily. They're going to have to over-rely on monetary policy and QE, which is negative for currency and positive for stocks, especially the big tech ones that will feed off of disinflationary impulse. Now, when you talk to American investors, they talk geopolitics. I'm on the road here in Canada, speaking to clients, non-American clients, whether Canada, Australia, the rest of the world. The rest of the world has a different perspective. They're not inundated with this, China-US bipolarity, Cold War propaganda. And so they're looking at China as an opportunity. They're looking at it as a tobacco stock with some sin premium to harvest, quite frankly. And so it really depends on where you're sitting and what your perspective is. But I do think that there'll be an opportunity over the short term to play this disinflationary impulse in China, which should be good for large cap tech stocks.
Yeah, well, that's a great point. I want to make sure everyone caught that as well, because we have had some deflation kind of a surprising way there. But Nick, let me turn to you. And I think you're as concerned as John Donahoe and some others about the business environment in China and the decoupling that, I don't know, is it going on here?
Oh, yes. It's decoupling by the US, but also by China. She is decoupling from the old Deng Xiaoping model. You have now businesses in China, be they domestic or foreign, that has to have a CCP member within the decision-making process and have to follow directives from the CCP. This means that shareholders and profit incentive are secondary to what the CCP is demanding. Our recommendation, we would define China as moving from an autocracy to a police state. Xi has just basically appointed his equivalent of Stalin's Beria, Shen Zhijing, as the man in charge of investigating US companies for breaching the new espionage law that was brought in at the end of April. This is what has made due diligence an offense under that law. So, if you are an investor, or be it corporate or financial, a fiduciary, you really can't do due diligence. And I think we've already seen one non-Chinese member of Bain was detained without any ability to contact outsiders.
Right.
You will see, as the Americans respond, the Chinese retaliate. The Americans move forward with the executive order on reverse CFIUS, Chinese will retaliate. Congress, which will come out with legislation. It's the one thing congressional members can agree on is China, and they will come out with legislation that is a more restrictive reverse CFIUS, and the Chinese will react. We've seen how the Chinese behave towards other countries.
Yeah.
So you've got to be careful, because actually just last week, the US State Department came out with a travel advisory warning for American citizens going to China. And China this time includes Hong Kong, by the way. So you've got to be careful. Yeah. And we think it's uninvestable. And in fact, the data is beginning to prove it. 5 days up to April 26th, $3.17 billion of foreign investor money pulled out via the Hong Kong Stock Connect. This will continue. And that's why we think at Malmgren Glenson, we think the dollar renminbi using the offshore renminbi is headed to north of 734, which was the high late last year, and can go a lot higher.
Let me just, Marco, give you a quick word to respond to that quickly, if you can.
Well, I think the currency is going to continue to slide, but I have a much more mundane explanation for that. They are not willing to use fiscal policy. They're over-reliant on quantitative and monetary policy tools. So that's why renminbi is going to continue to go down. But I think 5 days of data is not enough. I mean, I speak with institutional clients around the world, Southeast Asia, Middle East. The rest of the world just does not see the world the same way as the West does. And that means that China will remain investable. It depends on where you're sitting as an investor.
Well, again, maybe bad news for where our particular relations are headed. We'll leave it there, gentlemen. Thank you both. Marco Popich and Nicholas Glinsman on China. Coming up, Broadcom hitting a record high after striking a multi-billion-dollar deal with Apple. Has to do with China, by the way. AMD at a 52-week high as B of A boosts its price target on their AI ambitions. The analyst behind that call will join us next. And Lowe's lowering its full-year sales forecast as DIY goes MIA. We'll bring you the highlights from their results and look ahead to Toll Brothers and Palo Alto, both reporting after the bell. As we head to break, let's get a quick check on the markets. Tone improving somewhat. Dow still down only 21 points. S&P about 0.5%. NASDAQ a little more than that. Russells are positive by 0.5% today, by the way. And the 10-year yield, 3.72. We're back after this.
This is The Exchange on CNBC.
If you just set out to build an electric car, that's all it will ever be, an electric car. But the Polestar 2 is something more. Every detail designed to be quietly distinctive. Polestar 2, the way electric cars should be. Visit Polestar.com to test drive and order today.
Every day, businesses everywhere are asking.
Is it possible?
With Comcast Business, it is.
Is it possible to help keep our online platform safe from cyber threats?
So we can better protect our customer data?
Absolutely.
Can we provide healthcare virtually anywhere?
We can help with that.
Is it possible to use predictive monitoring to address operations issues?
We can help with that too. With global secure networking from Comcast Business, it's not just possible, it's happening.
False or misleading search results can negatively impact your life. A bad online reputation can put you at significant risk of losing job opportunities or new customers. Reputation Defender helps clean up your search results, wiping away negative first impressions, allowing truthful, positive content to rise to the top. Don't you deserve to have more control over how you're represented online? Get your free reputation report card at reputationdefender.com or call 1-877-866-8555.
This is a crate from KiwiCo. Each crate has an awesome science, art, or engineering project inside.
I think my brain's getting bigger.
Learning has never been so fun or so convenient. Get your first month free at trykiwico.com.
I had a client once who was a respiratory care nurse during the COVID-19 pandemic. BetterHelp quite literally provided her what she needed at the most pivotal time in her life.
If you have employees, you need to check out the ERC program, Chef Wonderful. Why, Mr. Wonderful? Because it's cash flow that you don't have to pay back. Good to know. This guy's so smart and so handsome. Go to wondertrust.com to see if you're eligible.
Mark?
All right. I think I got it right here. Looks good. Looks good. Copy that.
As Microsoft unveils more AI features at its developers conference today, Google CEO Sundar Pichai is out with another warning, writing in the Financial Times that building AI responsibly is the only race that really matters. And in terms of those building AI, B of A today is singling out AMD as a market share winner. That stock already up nearly 70% year to date and hitting a 52-week high today. Bank of America sees another 11% upside from here. The analyst behind that note, Vivek Arya, joins me now. Vivek, welcome. It's good to see you.
Thanks, Kelly. Likewise.
You know, I don't mean for this to sound the way it's going to sound, but what's 11% after a 70% run, you know?
Sure, Kelly. So first, I think let's start with the good news, which is that we are in very early stages of outfitting cloud data centers with the picks and shovels that are required to handle these large language models. I think we are just in the first 1 or 2 years of what could be a decade transformation of these data centers. And the core part of that will be accelerators. We think that market is just under $20 billion this year, and that can get to $60 to $80 billion over the next 4 to 5 years. So that's the good news. Now, the tricky part is that the silicon required for those accelerators, that market is dominated by NVIDIA, 70-75% market share, followed by Broadcom, which is actually the least spoken about name in AI, but we think one of the more interesting ones with another 10-15% share. So that just leaves the remaining 10-15% of the market in this very long tail that is Intel, AMD, Marvell, a dozen plus startups. So part of the note was acknowledging that, yes, AMD has the potential to go after this very large market and raising the price target to reflect that. But we have a neutral rating on AMD, which acknowledges the second part, that it'll be tricky for AMD to carve a niche when you have these two really large incumbents, NVIDIA and Broadcom, in that market.
That's really interesting, especially to put NVIDIA and Broadcom in the same breath when one commands a much higher multiple than the other. Broadcom, you are a buy. Price target 800 on this Apple deal news?
Yeah, I think what this Apple deal news has done is it has removed one overhang from Broadcom stock. Early this year, there were some media reports that Apple could look to insource some of these specific components. Apple is Broadcom's largest customer, 20% of sales last year. So any insourcing attempt by Apple could have been a problem for Broadcom. But I think what this deal does is it removes that overhang for the next few years. And as I mentioned before, this will help investors focus on what really matters in terms of Broadcom's growth over the next few years. And one of the most underappreciated parts of Broadcom, which is its presence in AI. So Broadcom today is number one in the cloud switches that are complementary to what NVIDIA does when it comes to the outfitting of these AI data centers. And then Broadcom is number two after NVIDIA when it comes to helping some of these cloud customers, especially Google, Meta, develop in-house custom chips that can address a lot of their AI needs. So I think the good news here is it removes the overhang from Broadcom stock, which was related to the risk of Apple insourcing, and lets investors focus on what's really important for Broadcom, which is its potential as an underappreciated AI beneficiary.
Sure, although the way the stock's behaving lately, it is becoming more appreciated. But on the valuation, all that, I totally take your point.
16 times forward PE multiple for a company that is generating 50% free cash flow margins and has raised its dividends at a 25% compounded rate the last few years.
Why not give it?
The valuation is extremely compelling.
So why shouldn't the market give it a 70 times forward multiple or whatever it's giving NVIDIA right now?
Yeah, I think because it's a lot more diversified. So AI is only 15-20% of what they do. Apple is another 20%. And I think one reason for the overhang of the stock was this Apple insourcing. But now that risk is out of the way, I think it does help investors refocus.
Yeah.
Look, it's a lot more diversified name. There's a lot of software aspects which are lower growth for Broadcom. But I think so. It's I would classify it more as a large cap value stock with this underappreciated growth driver, whereas NVIDIA is more of a large cap growth stock.
We have to go. Just a word about Intel. I mean, anything there that you are excited about, or is that story just a difficult one?
Yeah, I think Intel, we remain cautious. Of course, they are also exposed to the same large rising tide. But what we have seen, Kelly, time and time again, is that semiconductors is a game of incumbency. Market shares only change when the incumbent messes up. Intel messed up many years ago, which helped AMD gain share in CPUs. But now when you look at this new market of AI, NVIDIA is not messing up. Broadcom is not messing up. And I think that just makes it very difficult for other players to gain a foothold.
Well said. Vivek, thanks for your time today. It's good to see you.
Thank you, Kelly.
Vivek Arya with Bank of America. Still ahead, much more on the AI space, including which industries are now the fastest growing in tech. And here's a hint, they've seen a flurry of deals recently. We'll tell you more when the exchange comes back. Dow's down 84 points. Stay with us.
Is this your dream of retirement? How about this sweet deal? I like fishing. Or is this a little more your style? Retiring well isn't a guarantee, it's a goal. It's easy when markets are going up. But what about when they're not? That's why you need this.
Call for Fisher's Retirement Survival Kit, featuring your guide to surviving market volatility, our stock market outlook, plus the Fisher investment difference. 3 indispensable guides, yours free for calling 1-800-213-5317.
Fisher Investments' disciplined approach will help see you through the market's ups and downs and give you the confidence you need to reach a comfortable retirement. And our fees are structured so we do better when our clients do better.
Call now for your free retirement survival kit. 1-800-213-5317.
See if your dream retirement is on track. If your retirement portfolio is $500,000 or more, give us a call.
Call 1-800-213-5317.
We empower those who act. Those who see the correlation between upswings and downswings. Those who manage risk by meeting each obstacle with a perfectly executed strategy, a measured approach, the right tools, driving accuracy. CME Group, where risk meets opportunity.
My plane has a mechanical problem. I'll try to get there as soon as I can.
Breakfast looks delicious, as always. Having a chauffeur car plane side helps keep me on schedule. Hi, Jeff.
With all the plane shortages, did you have trouble finding one?
I never have any trouble. I simply pick a plane, pay, and I'm ready to badge it to my destination.
Are there any taxis around? I'm really late for my meeting.
Do we have a deal? Missed you at the meeting today. Badge it and don't miss out on the most important moments of your life.
Call for a complimentary flight.
We're proud to be a part of the fabric of the game. Peter Millar, official outfitter of the U.S. Open.
Good afternoon and welcome back to The Exchange. I'm Tyler Matheson with your CNBC News update at this hour. A new report from the Illinois Attorney General found a long history of sex abuse in Catholic churches across the state. Investigators found that 451 clergy sexually abused nearly 2,000 children. Between 1950 and 2019, this is far more than the 103 individuals the church named when the state began its review in 2018. A Russian court extended American journalist Evan Gershkovich's pretrial detention by about 3 months. Russia detained the Wall Street Journal reporter on espionage charges back in March, which both he and his employer deny. If convicted, he could face up to 20 years in a Russian prison. Last month, the U.S. government designated the journalist as wrongfully detained. Senior Biden officials are pushing to send U.S. troops to a rugged area between Colombia and Panama to curb drug smuggling, human trafficking, and migration. They would focus on a stretch of land known as the Darien Gap. Thousands of people attempt to cross the gap every year by relying on smugglers to get them through the harsh terrain. Kelly, back to you. See you in a half hour.
Thank you, Tyler Matheson. Coming up, Lowe's Toll Brothers in Palo Alto. We've got the numbers and narratives to know for those two names reporting. That's coming up next in Earnings Exchange, while Lowe's hangs on to a 1.5% gain. Stay with us.
Lily, welcome to our third Barkery.
Oh, I can tell business is going through the woo.
But seriously, we need a reliable way to help keep everyone connected from wherever we go.
Well, at AT&T, we'll help you find the right wireless plan for you, so you can stay connected to all your drivers and stores on America's most reliable 5G network.
That sounds just perfect.
Terrierific.
I Labrador you.
Round of applause.
AT&T 5G is fast, reliable, and secure for your business.
We're the Nigerian brothers. John's been a professional trader for over 37 years, and Pete is one of the country's top 100 traders. On TV, we report on how we follow the smart money from Wall Street's elite, who have the massive resources to get market information before the rest of us. Their unusual option activity tells us what they're starting to trade. Our strategy uncovers why they're trading it and how to follow along for the biggest return. It works on stocks and options. It's the #1 way we choose our trades. Many of you ask, how can you do it too? So we laid out our strategy in our newest book, revealing things we've never revealed. And today we're giving some copies away for free. All you have to do is cover shipping.
Go to followthesmartmoney.com now to get your free book. Learn the #1 way John and Pete choose their stock and options trades. Go to followthesmartmoney.com now. That's followthesmartmoney.com.
False or misleading search results can negatively impact your life. A bad online reputation can put you at significant risk of losing job opportunities or new customers. Reputation Defender helps clean up your search results, wiping away negative first impressions, allowing truthful, positive content to rise to the top. Don't you deserve to have more control over how you're represented online? Visit ReputationDefender.com or call 1-877-866-8555 for your free consultation.
I'm Mr. Wonderful, and I'm Chef Wonderful. I recently introduced the ERC program to Chef Wonderful here, which is a program created towards small businesses like mine for retaining their employees during the pandemic. Well done, and most of this money is still available. If there's one thing Wonderfuls never do, it's leave money on the table. Chihuahua, this guy is smart. Go to wondertrust.com now to see if you're eligible for this cash. Nice hat.
Strategy at the market's crucial moments.
We are now in the closing bell market zones. It's still the big NASDAQ stocks here to break down these crucial moments of the trading day.
Commercial-free coverage. Sponsored by E-Trade from Morgan Stanley. Trade commission-free today with no account minimums.
Welcome back to the Exchange. Debt ceiling drama getting a lot of attention. Dow's at session lows right now, but we've also got a bunch of earnings reports with a read on the most important part of the economy, the consumer. Let's start with Lowe's. They reported an earnings beat offset by declines in same-store sales and gross margins. Higher lumber deflation and a drop in discretionary sales took it down revenue and their same-store sales guidance. We turn to Gina Sanchez for our trades today. She's Chantico Global CEO and a CNBC contributor. Gina, it's good to see you. So let's start with the one who's already reported, which is Lowe's. Do we learn anything? What's your take? What would you do with the stock here?
Honestly, we learned stuff that we already know, which is that consumer discretionary is starting to pull back, and Lowe's is feeling it. We already sort of saw that with Home Depot, so we knew that going into this, and so I don't think anybody's surprised by this. Lowe's is a cheaper trade to Home Depot, partially because they were, really doing a lot of catch-up during the pandemic, and quite frankly, the outlook for Lowe's is a little better. So comparatively speaking, it's a cheaper opportunity for a little better growth. So, the story is that the consumer is going to continue to pull back, and unfortunately, those DIY projects, you have to do the math. Are you willing to put the money in if we have higher interest rates? You're going to have a harder time selling your home. So I think a lot of people are doing that calculus, and Lowe's is feeling it.
Yeah, for sure. Although the stock is hanging on to about a 2% gain today, it's still green year to date. Let's move on to Palo Alto Networks, which reports after the bell today. Their cybersecurity stock up 40% this year. People looking for commentary on billings growth, profitability, macro headwinds, AI. You're still bullish. And what has been driving this levitation lately?
So, look, you are also seeing some slowdown there. We're bullish because we think there's a long secular story here as use of the cloud grows, and as that story grows, the need for cybersecurity is going to continue to grow. And one thing we know is we've already seen some of their competitors reporting, and they're showing that people are still spending on cybersecurity. This is really important, but you're also hearing from the company that, in fact, it's getting harder and harder to close sales. It's taking longer. They're getting shorter duration contracts, and so all of that is going to stack up to maybe a little slower growth, but from 40% a little slower is still a lot of growth. And so from what we see a long secular growth story here that we want to continue. It's expensive here. That's the one thing you have to remember. But look, they are continuing to do everything that you need. They're getting, they're continuing their government sales. They're continuing to get all of the certifications and requirements and recommendations that they need in order to do that. So the story has a durable element to it.
All right, then let's move on to the home builders. Talk some Toll Brothers, which is also out this afternoon, up nearly 30% this year, even though, maybe because of higher rates in a way. We're looking for updates on new home orders, weather issues on the West Coast, any more builder commentary, bullish builder commentary. Stocks down 1.5% today, up 27% this year. What do you do with that?
So, Toll Brothers is actually still cheap. This is an interesting one because, they had, they basically, a lot of people were throwing out a lot of the home builders because interest rates were going up. And so as interest rates were going up, the assumption was, it's going to be harder and harder to sell your home. And they were right. But there is still a massive shortage of houses. And so as we're starting to look past, the Fed finally starting to take the foot off the gas pedal, as it were, you're starting to see an increase in demand. You started to see it in January and February. That's continuing through. And so Toll Brothers just needs things to look a little less bad. Now, the debt ceiling talks are not doing anything to help that. So, that is something that you do have to watch with respect to interest rates. But as long as we get a little bit of better news out of the interest rate story, some stabilization, higher home prices are actually a good thing for Toll Brothers, and there's still a massive shortage. So the supply-demand dynamics are still in their favor. And we've forgotten that over the last year, and we're going to start to see that really start to ramp up as we go into at least a stabilizing interest rate market.
So you'd stick with the stock?
Yeah, absolutely.
All right. Home builders, too, hanging on to those gains. Gina, thanks. We appreciate it today. Gina Sanchez. Still ahead, the number of companies using AI has grown 1,310% in just the past 6 months. That's according to a new report. It also highlights which areas are seeing the fastest growth. Today's Tech Check on that is straight ahead. But before we head to break, let's get some show and tell, where we show you a chart and tell the story. And United Airlines is actually on pace for its best month since January. Since the pandemic, Denver has surpassed Chicago O'Hare as the carrier's largest hub. Now they're adding even more capacity in Denver ahead of what's expected to be their busiest Memorial Day ever. But will demand hold up despite worries about a recession? Here's what CEO Scott Kirby told our Phil LeBeau earlier on Squawk Box.
Now, demand is really strong right now. The consumer is strong. You know, we've had this month 6 of our 10 biggest booking days in history. The other 4 record days were in March before Silicon Valley Bank. Demand is really good. Bookings are strong. It's going to be a busy summer.
This thing, it's making me get an ice bath again.
What do you mean? These straps are mind-blowing. They collect hundreds of data points like HRV and REM sleep, so you know all you need for recovery.
And you are?
I'm an investor in Invesco QQQ, a fund that gives me access to NASDAQ 100 innovations like wearable training optimization tech.
How long you...
I'm done.
Become an agent of innovation with Invesco QQQ.
I'm okay.
Before investing, carefully read and consider fund objectives, risk, charges, expenses, and more in prospectus at Invesco.com.
You need new replacement windows, but you're just not sure if they're in the budget this year, right? I'm Brian Gary here with Ted Coons from Renewal by Andersen, and he's here to talk about how to make window replacement more affordable.
Well, first, Brian, you don't have to do them all. You could just replace your worst windows first. Or another way to make them affordable is to change the style of window. For example, you could do a gliding window instead of a casement. We have a lot of ways to make window projects really affordable.
Compared to other window companies, you have a completely different business model.
Yeah, with other companies, there's just too many people involved in the process. There's the manufacturer, the seller, and then the installer, and then the customer. And if you call with a problem, that's when they say, oh, well, we're the manufacturer. You have to call the installer for that problem, or vice versa. We're the full-service replacement window division of Andersen. With us, there's no passing the buck. At Renewal by Andersen, we sell, build, install, and warrant our windows and patio doors. So if there's ever an issue, we take full responsibility for it.
Why don't you sell vinyl windows?
Well, a lot of vinyl products just don't hold up well in the elements. You know, like a vinyl fence. When it's first installed, it looks great, but with expansion and contraction, it discolors and cracks. For that same reason, a lot of vinyl windows just won't last. Our window material is a composite that combines the best of vinyl and wood. Well, Fibrex is low maintenance like vinyl, but stronger than vinyl. And it's beautiful like wood, but doesn't require the upkeep of wood.
Before May 31st, buy one window, patio door, or entry door and get the next one 40% off. That's 40% off with a minimum purchase of 4. Plus, save an extra $150 on your entire project with no money down, no monthly payments, and no interest for 1 year. This offer ends May 31st. For a free appointment with Renewal by Andersen, call 1-800-918-0808.
Thuma. Defined by simplicity. Meticulously crafted to be enjoyed for years to come. Thoughtful bedrooms for modern living.
My dream is to talk to people, real people, about stocks. We created a club to do it.
Join Jim Cramer and the CNBC Investing Club. Scan this code or go to cnbc.com/investing club for an exclusive offer now.
Welcome back. As the AI gold rush continues, there are certain areas within tech that are growing faster than others. Deirdre Bosa here with more in today's Tech Check. Deirdre?
So, Kelly, generative AI, it is exploding among consumers. Same story in the enterprise. So, Databricks, the data management startup in a Silicon Valley darling, did a deep dive on how it's more than 9,000 customers are using data and generative AI. Here's CEO Ali Ghodsi.
Every organization we talk to say that they have a mandate from the CEO, from the board. They need to do something with generative AI. So everybody's doing something. But having said that, the obvious ones are customer support, automating that. That's top of mind for everyone.
He says that the number of companies using large language models grew by nearly 1,000% in just the 4 months following ChatGPT's release. But there is an important distinction he calls out between open source and closed source models. That is, companies that are simply plugging ChatGPT into their businesses versus companies that are building their own models on an open source platform using their own proprietary data. He says that those are the ones that are going to win in enterprise.
We think in the next 5 years, in every industry, in every vertical, the winning companies will be data and AI companies that have built their own models, that they have proprietary data sets that come with them. Those are the ones that are going to win.
So he says that companies, they're now starting to realize just how valuable their data sets are. And as such, you could see more of them lock those down, keep them away from Google or other aggregators, or demand big fees for the privilege of seeing them. So, Kelly, as this platform shift occurs, data continues to be the oil or the gold, whatever you want to call it, but the most valuable thing amidst this change.
So do companies have to work, what is it called when you kind of clean your data or kind of get it ready for AI? I mean, I know a lot of people are probably doing this already, but they probably have to step up those efforts.
Yeah, that's what a company like a Databricks or a Snowflake helps companies do. And so they're learning that they should create their own models within their own organizations. So in that sense, too, I talked to Ali about how companies that already have a lot of this stuff are going to win. And it's going to be harder for some of the incumbents to win in this space because they don't have that data to rely on. But it also makes you think, Kelly, a conversation we have often, if this is just going to end up with the Microsofts, the Amazons, the Apples that are the aggregators that are collecting data on the back end. So, in this whole shift that's happening, who's going to serve the enterprise? Who's going to serve the consumer? Is it going to be big tech versus the incumbents once again?
Yeah, totally. Deirdre, thank you. We appreciate it. Deirdre Bosa in Tech Check. Speaking of which, don't miss a special AI edition of Power Lunch this Friday at 2 p.m. Eastern. We've got an all-star lineup of guests from every industry impacted by the AI debate. Friday, 2 p.m. Don't miss it. Still ahead here, Pfizer higher once again in today's session after the company said yesterday its Ozempic competitor drug may be as effective for weight loss. Former FTC Commissioner Dr. Scott Gottlieb is here to weigh in on that. Plus, we'll ask him about some other surprising applications of Ozempic. And throughout May, CNBC is celebrating Asian American and Pacific Islander heritage with stories of some of their influential business leaders. Here is Kinsey Capital Partners founder Suzanne Yu.
I feel very fortunate to have grown up an American, but also with a deep appreciation for my Korean roots. When I started my career in finance, I didn't look like everyone else and found I was often misunderstood and underestimated. But I learned to take a seat at the table and contribute by finding my voice and using it. I have found strength in the Asian American community, which has given me support and confidence, especially as I went off to launch my own company. Each of us has our own superpower, and it's up to you to use that power to create success on your own terms.
Tech Check is sponsored by Comcast Business, powering possibilities.
Every day, businesses everywhere are asking,
is it possible?
With Comcast Business, it is.
Is it possible to use predictive monitoring to address operations issues?
We can help with that.
Can we provide healthcare virtually anywhere?
We can help with that too.
Is it possible to survey foot traffic across all of our locations?
Yeah, absolutely. With global secure networking from Comcast Business, it's not just possible, it's happening.
If you have diabetes, getting on Dexcom is the single most important thing you can do. It eliminates painful finger sticks, helps lower A1C, and is covered by Medicare.
Before using the Dexcom G7, I was really frustrated. All of that finger pricking, my A1C was still stuck.
My diabetes was out of control.
Dexcom G7 sends your glucose numbers to your phone or Dexcom receiver without painful finger sticks. The arrow shows the direction your glucose is heading, up, down, or steady. And because Dexcom G7 is the most accurate CGM, you can make better decisions about food, medication, and activity in the moment.
After using the Dexcom G7, my A1C has never been lower. I lead line dancing 3 times a week, and I'm just living a great life now.
It's so easy to use. Dexcom G7 has given me confidence and control that everything I need is right there on my phone.
Dexcom is the #1 recommended CGM brand. Call now to get started on Dexcom G7.
When people get real negative, they're closed off to new ideas. You always have to realize where you are versus the crowd. The crowd being where you don't want to be, because when everybody's betting on the same thing, there's rarely money to be made. Watch or listen live on the CNBC app.
Mark? All right. I think I got it right here. Looks good. Looks good. Copy that.
I'm Kevin O'Leary, and this is my bonsai garden. The only reason I have time to indulge in such a tedious yet zen hobby is because my companies have already received money from the Employee Retention Credit Program. But just like these fussy little shrubs, how you doing, Maxie? Filing for that money is a lot more complicated than it looks. If you own a business with employees, you need to look into this program. Go to wondertrust.com to see if your company qualifies. He says he's thirsty.
Do you have a box of videotapes, film reels, or photos that are degrading?
Legacy Box professionally converts them to DVDs, thumb drive, or the cloud.
Legacy Box is simple and safe, with over 1 million satisfied customers.
Visit legacybox.com.
Welcome back to The Exchange. Shares of Pfizer higher again in today's session, up 2.5%. Yesterday, they said their oral weight loss drug may be as effective as the injectable Ozempic for weight loss. And there are reports that Ozempic may also curb other addictive behaviors like smoking and drinking. Here to weigh in on all of it, we welcome former FDA Commissioner and CNBC contributor Dr. Scott Gottlieb. Thanks for your time and welcome.
Thanks a lot.
I mean, how do we make sense of this brand new world of weight loss drugs that maybe this time are really going to work? They're already seeing widespread adoption, and the Ozempic thing is really kind of freaky. Why would it stop people's other addictive behaviors?
Yeah, look, I'm not sure it does. There's some speculation that it could act on certain pathways in the brain that decreases pleasure from certain addictive behaviors. I think that's speculative at this point. Right now, we only have studies in animal models that were addicted to alcohol, that sought out alcohol, seemed to diminish their craving for alcohol when they were prescribed these drugs. We don't really have human data, so I think that that's speculative right now, and it's not clear whether or not the impact it's having on pleasure-seeking behavior is just from its effects on weight loss. The sense of satiety in diminishing people's craving for food is also having other impacts on other cravings. But we're clearly in the early innings of these drugs. Right now, only 5 million prescriptions were written last year. Many of those were for diabetic patients. And so we're going to see utilization grow from here, given how effective these drugs are in promoting weight loss. To give you sort of a basis of comparison, about 20% of the public's on statins. I don't think we'll get anywhere near that level that are prescribed these GLP-1 drugs, but about 40% of the population is probably indicated for them based on weight alone. And I wouldn't be surprised in the next 5 years if we get to the high single digits of Americans that are prescribed these drugs, assuming that the data continues to show that they're safe and effective for these intended uses.
Yeah, I mean, so many different questions to ask. You know, what are the scientific questions about what are the breakthroughs here? Obviously, the biggest possible headwind in all of this would be unanticipated side effects that could still be yet to be discovered. You're on the board of Pfizer. Is their oral weight loss drug a real rival to the successful products already on the market?
Well, look, the company certainly hopes it's going to be competitive. The data that came out in the Journal of the American Medical Association was released late last year at a medical meeting. There's 2 drugs that Pfizer is developing, another formulation that's an oral once-a-day pill, and in the data that was released yesterday, the company has said previously that they're going to take one of these 2 forward. These are mid-stage clinical trials, so I think it's hard to read across from these trials at the data from some of the other drugs that are more advanced. But there's going to be multiple entrants in this space, and I think as you see more entrants come in, prices should start to come down as well. Right now, these drugs are expensive. The ones that are on the market cost anywhere from $900 to about $1,300 a month. So that's prohibitive for a lot of people, and you're seeing health plans put in place restrictions on access to these medicines for the weight loss indication. But as more competition enters, you see different formulations, oral formulations, as well as IV injectable formulations. Prices hopefully will come down and make these more accessible to more Americans who could benefit from them.
Why did everybody suddenly discover this all at the same time in slightly different versions?
Yeah, I think it really was the data that came out around Mounjaro, the Lilly drug, which looks to be very effective at promoting weight loss in patients who aren't diabetic, as well as the data from Wegovy, the Novo Nordisk drug. So once you saw those very big weight gains in definitive clinical trials, which is relatively recent, patients who didn't have diabetes that were just using these drugs to promote weight loss, who were obese, had BMIs above 30 or above 27 if they had multiple risk factors related to weight gain. That really instigated, I think, wider utilization, because as a public health tool, if you could promote substantial weight loss, 15% weight reductions, which is what we saw with Novo Nordisk, 16% with Mounjaro, Lilly's drug, in a late-stage clinical trial involving 900 patients. Seeing that magnitude of weight reduction for a clinician treating a patient who's obese, who has risk factors related to the obesity, that's really profound. You're going to have a big public health impact from that.
Yeah, I mean, we obviously know the cost is a lot to bear, but so is the cost of not treating some of these conditions. What do you think is going to be the harder road?
Right.
Getting it more broadly approved by private insurance or by Medicare, for instance?
I think, well, Medicare, the private plans really administer the utilization of these drugs through the Part D program. I think a lot of health plans right now are putting in place restrictions on access to these drugs, even for patients who are overweight, requiring them to try to pursue other means of weight loss before they move on to these drugs, just given the sheer cost. And employers are doing that as well. I would hope that as the data continues to show that this kind of weight loss is promoting long-term health gains, that in the long run can be cost savings to the healthcare system as a whole and to health insurers, as you said. And I would hope that as more entrants come into the market and we start to see more price competition, they're going to be more accessible to patients, assuming that the data continues to show that they're safe and effective for these uses. Remember, these are old drugs. These aren't new drugs. They've been on the market for a long period of time in daily formulations for diabetes. So we do have more and more experience with these drugs. Now, we don't have as much experience at these doses, the higher doses that are being used for weight loss, and in patients who don't have diabetes. So there's still a lot to learn. But we do have a long experience with the basic molecular entity that's being used in these drugs.
That's an interesting point. So basically people are taking successful diabetes drugs, but with higher doses, and then for people who don't already have the condition. And that's effectively what's happening here?
Right. The drugs that are being used, or these drugs being used in the weight loss indication, are being delivered at higher doses. And so it's at the higher doses that you're seeing these profound weight losses in these clinical trials. In diabetes, when they're used in type 2 diabetes, they're generally used in lower doses. But you do see meaningful weight loss in those trials as well. 10% or more weight loss in the clinical trials looking at type 2 diabetics who use these drugs primarily for glucose control, but also found they promoted weight loss. And as we know, if you're a diabetic patient and you lose weight, that's also going to help with your glucose control.
No, it all sounds in a way so profound that you'd think the shares should be up even more. And granted, Lilly and some of the early movers are. Pfizer with a nice 2-day gain for the least. We'll leave it there. Dr. Scott Gottlieb, thanks for your time today. We appreciate it. That does it for The Exchange. Coming up next on Power Lunch, Peloton announcing the start of a new chapter today. They are relaunching the brand from an in-home bike company to a fitness brand for all. Can it turn around the struggling stock? We will debate that. Tyler's getting ready. I'll join him on the other side of this break.
With Gold Bond, you can age on your own terms. Retinol Overnight means the smoothing benefits of retinol are now for your whole body. Plus, fast-working crepe corrector diminishes wrinkled skin in just 2 days. Gold Bond, championing your skin.
Connecting the opportunity is just part of the hustle.
Opportunity is using data to create a competitive advantage.
It's raising capital to help companies change the world.
It's making complicated financial concepts seem simple.
Opportunity is making the dream of home ownership a reality.
Writing new rules and redefining the game.
And driving the world forward to a greener energy future.
Opportunity is setting a goal.
And charting a course to get there.
Sometimes the only thing standing between you and opportunity is someone who can make the connection.
At ICE, we connect people to opportunity.
New projects means new project managers. You need to hire.
I need Indeed.
Indeed you do. When you sponsor a job, you immediately get your short list of quality candidates whose resumes on Indeed match your job criteria. Visit Indeed.com/hire and get started today.
Good luck.
TD Ameritrade, this is Anna.
Hi, Anna. This position is all over the place.
Please, help.
Hey, Professor, subscriptions are down, but that's only an estimated 15% of their valuation. Do you think the market is overreacting?
How do you know that?
The company profile tool in Thinkorswim.
Yes, I love you.
Please ignore that. TD Ameritrade, award-winning customer service that has your back.
Good afternoon, everybody. Welcome to Power Lunch alongside Kelly Evans. I'm Tyler Matheson. Glad to have you with us. Coming up, the strength of the consumer retail earnings reports creating a bit of a worrisome picture. But former Fed Chair Ben Bernanke says a soft landing in the economy is still very possible. Plus, the view from the C-suite, CNBC gathering business leaders for a CEO summit out in California. We'll talk to the CEO of Crocs about all the issues everybody is talking about: debt ceiling, economy, dealing with China, and trade, and more. Kelly.
Looking forward to that. Hi, everybody. First, let's get a check on the markets, which have turned a little bit more negative in the last 30, 45 minutes or so, but the Dow's down still less than 100 points. The S&P is down 0.75% right now at 4162, and the NASDAQ a little bit worse than that. It's quiet on the regional bank front, though. PacWest jumping, Western Alliance higher. We see PacWest up 12%. Comerica, Zion's in the green. Western Alliance is now slightly lower, I should say. And we're also seeing continued gains in some momentum names. Think Palantir, Carvana, and Upstart, which had been on a monster move, but is actually now down 2.5%. Carvana up 7%, Palantir a similar amount. And if we flip and show you the gains so far in May, some pretty impressive returns and lots of earnings movers in retail to mention as well. Here's, of course, the month-to-date gains. As we mentioned, Upstart has nearly doubled. Incredible stuff. On the retail front, though, a little bit different story. Let's get over to Courtney Reagan, where Lowe's investors are shrugging off a dour forecast, Court.
Yeah, that's right, Kelly. So shares of Lowe's actually slightly higher here, and that's perhaps because it was a bit expected after we heard from competitor Home Depot and their results. Lowe's did lower their expectations for the full year for earnings, revenues, and same-store sales, but it did beat the street's first quarter estimates for earnings and revenue. Like Home Depot, though, Lowe's was hit by lumber deflation, bad spring weather, and lower discretionary purchasing, leading to disappointing comparable sales for the quarter. Now, Dick's Sporting Goods beating on earnings and revenues, missing slightly on the same-store sales growth. The sporting goods retailer reaffirming its full-year forecast and looking for margin improvement. Executive Chairman Ed Stack tells me he's cautiously optimistic for the balance of the year. Dick's Sporting Goods shares, though, losing momentum here, down more than 1%. BJ's Wholesale also reaffirms full-year guidance, counting on continued strength in grocery and improvement in general merchandise, particularly apparel and toys as we move through the balance of the year. Investors, though, not convinced. Shares down more than 7%. BJ's first quarter revenue was light. Comparable sales also much lower than expected. Earnings did come in line. Tyler and Kelly?
So what conclusions, if any, can we draw, Courtney, about the overall state of the consumer? When you look at Lowe's and Home Depot, I suppose you can say they are particular kinds of retailers, particular cases. They were both affected by lumber deflation, which could affect their revenues.
Yeah, that's true. But I think there also is some weakness generally in the home category. Even TJX, which of course has Marshalls and TJ Maxx, but also Home Goods, that segment was down pretty sharply. We even heard Walmart and Target call out home as a soft area. So I think we all did our homes. We did what we needed to do during the pandemic. That part was done. Also some pull forward, I think, in some sporting goods equipment, some outdoor things. That's what Dick said as well. Again, makes sense. When we bought all of that during the pandemic, how many kayaks does one family really need? And of course, we do see some weakness in apparel and some discretionary spending. And I think there's some question, again, is that because we went out and spent so much when we did finally reemerge? Or is that because we're feeling a little tighter with a possible recession? I think there's a lot of question marks there, so a lot of cautiousness for the rest of the year.
Or how many trips could my wife Jo make to Home Goods? Not enough. Never enough.
Never enough. And don't question her when she comes home.
I do not.
Tyler.
I do. I sit in the car. All right, Court.
All right.
Thanks.
Thank you.
Meanwhile, lots of opinions on the state of the economy and what the Fed needs to do to engineer a soft landing. One opinion from a former Fed head seems to carry a little more weight. Let's bring in Steve Leisman with more on Ben Bernanke's thoughts. Steve?
Yeah, Kelly, thanks. Two of the world's top economists in a paper that looks at the sources of the pandemic-era inflation conclude it's possible to escape without a massive rise in unemployment, though unclear how probable that is. Former Fed Chair Ben Bernanke, he joined with former IMF chief economist Olivier Blanchard. They conclude in a Brookings paper presented this morning that supply shocks combined with government stimulus, loose monetary policy, and a consumer preference for goods, that's what caused the inflation outbreak. We kind of knew that. It was not, at least initially, driven by tight labor markets, but they say that's changing now and does require higher interest rates. Quote, The portion of inflation which traces its origins to overheating of labor markets can only be reversed by policy actions, they say. The more interesting idea, how much does unemployment have to rise to conquer inflation? The two have at least one optimistic scenario in which job openings decline without a big rise in unemployment. The paper says, for reasons not fully understood, the job worker matching process had become less efficient. If that shift were to be fully reversed, that is back to the way it was before the pandemic, it could bring down inflation over time without a significant increase in unemployment, an immaculate disinflation. Alternatively, if you have these high job openings, unemployment may have to rise higher and stay there to loosen up the labor market. In a conference on the paper this afternoon at Brookings, I asked Bernanke about this. He said it's unclear what's going to happen, but, quote, so far so good for the immaculate disinflation, folks. Kelly?
Steve, stick around. Because in addition to all those concerns about the consumer and the Fed and the economy, you've got the debt ceiling drama that doesn't seem close to a conclusion. How is it all impacting markets? Let's ask Phil Orlando. He's Chief Equity Market Strategist with Federated Hermes. Good to see you, Phil. And how concerned are you on a scale of 1 to Bernanke?
Kelly, thank you very much for having me back. I'm concerned. There's a lot of things out there. Certainly the debt ceiling is near the top of our list. And here's the market sitting up at the 4,200 level. So you wonder, stocks have had a phenomenal run here. They're up 20, 21% since their mid-October bottom. To some degree, they may be overbought. And you've got a number of concerns like the debt ceiling, like the slowing consumer. And you wonder what's going to give. And we're watching as intently as anyone.
You say that you expect this year to look in the stock market like a barbell with a good start and a good finish. Why a good finish? And then that would suggest that between now and the end of the year, let's say mid-October to the end of the year, between now and then, sort of muddling through or maybe down if the economy shows signs of going into recession. Why do you think we'll end on an up note?
So counterintuitive that we have negative GDP prints forecast for the third and the fourth quarter. And we're also concerned that the debt ceiling situation that's dragging on right now might resemble what we saw in the summer of 2011. President Obama and a Republican Congress. The stock market, remember, dropped about 10 or 15% of the first couple of weeks of August. And in the entire third quarter of 2011, the stock market was down about 20%. Now, cooler heads prevailed. We successfully resolved the problem, lifted the debt ceiling. Stocks rallied by 17% in the fourth quarter of 2011. We could be looking at a similar situation here. In addition, we're forecasting negative GDP prints in the third and the fourth quarter. The Federal Reserve, we think, has probably hiked rates for the last time in the May 3rd meeting. We think they go on pause on June 14th. We think they pause until sometime next year. So if we get negative GDP prints in the third and fourth quarter, the Fed probably comes in sometime during the fourth quarter of this year and says, you know what, if the economy is trending towards recession, we'll probably cut interest rates at some point next year. The equity market is a forward-looking discounting mechanism, probably rallies on that ahead of the cuts, and that's how we end up with a barbell-shaped year.
Although, Steve, the Fed has done everything it can to convince markets they won't be cutting this year.
No, not this year, but, Phil's idea of cuts next year is not an out-of-sample forecast. The Fed has cuts actually built in, and the market does as well. So we're just arguing over, the calendar that year that it happens in. I don't think, though, I guess I would push back a little bit on Phil because I keep asking Fed officials this question. What would you do if inflation remains high and the economy were in recession? And they're not so quick to say they would cut. That's a big difference. It's a bit like, flying or doing acrobatics without a net in this case. That would make things different. But the idea, guys, in the Bernanke paper with Blanchard, that maybe we can get out of this with a soft landing without a big rise in the unemployment rate, it's a potential big deal. I wish they were more definitive, like, hey, it's going to happen. But what it requires, in part, is going back to some of the things that were the way they were before the pandemic. And I don't think those are crazy ideas. The idea that the job matching process has become inefficient and we just have to become as efficient as we were before the pandemic, That doesn't seem crazy to me. So I think there are some reasons for optimism. There are some reasons, if you follow at least Goldman Sachs, Alan Sinai is another economist who says, hey, we might be able to get out of this without a recession. So there's not, I guess, not total doom and gloom on the horizon from my perspective.
Phil, react to that, and particularly in the context of your call that we're going to have negative GDP prints in the next 2 quarters, which is technically the definition of a recession.
Well, but we had 2 negative prints last year, and because the domestic private final sales were still positive, we were not in a recession. One of the things that concerns us right now is the April retail sales had a nice rebound. It was the first sequential improvement in retail sales in 3 months, and only the second increase in 6 months. But because of the rotating nature of Passover and Easter, we like to look at the mashup of March and April sales. They were only up 2% year on year this year versus 8.5% in April last year. So as we look ahead to the other 2 important retail seasons coming up, back to school and Christmas, if those numbers are similarly low to mid single digit, and because the consumer accounts for 70% of GDP, we could be looking at a marginally negative 3rd and 4th quarter. And that's disconcerting. Now, vis-a-vis the Federal Reserve, remember their March SEP is forecasting the rate of unemployment to go up to 4.5% by the end of this year. We're at 3.4% right now. If that's right, if the rate of unemployment goes up by a full percentage point over the next 8 months, over the course of history, whenever that's happened, the economy has gone into recession. There's a new SEP coming out on June 14th. Let's see if the Fed changes its forecast and sort of pulls back from that 4.5% number.
All right, we will find out. Phil Orlando, Steve Leisman, thanks. Scott.
Thank you.
Appreciate it. All right, let's see how all the stuff we just talked about the economy, the Fed, the debt ceiling, is playing out in the bond markets. We know the 2-year yield getting back to March highs. Rick Santelli standing by at CBOE. React and take us forward, Rick.
You know, all I need to tell you is that we had a 21-day cash management bill T-bill auction today. You know what the yield was? 6.2%. Holy cannoli. Now that is a big yield. And if you look at 2 years as reference, they're on pace for the highest yield close again since the second week of March. And 30-year bond yields. Did you notice this morning they crossed 4% intraday? Now, they've done that a few times, but we haven't closed above 4%, going all the way back, yes, you guessed it, to November of last year. Finally, one thing we want to point out, when it comes to T-bills, what's going to happen after we get a debt ceiling? Let's go talk to a trader. Paul. How's it going, big guy?
Hey, Rick. How you doing?
All right, debt ceiling is all anybody seems to want to talk about. Give me your rendition of that story.
Well, you know, you're talking about that auction. The market's definitely paying attention to the debt ceiling, but you can see down here, VIX isn't elevated. You know, it's not really busy yet. People are not really pricing in the worst-case scenario right now.
You know, what I find is that everybody's upset about it. No matter what your political persuasion is, everybody's upset. I hear things like they need to grow up. And if you're going to start using economic sanctions because you're the world's superpower, the reserve currency, all of this stuff isn't helping.
Well, it's not, but I'm going to leave it to you to scold the people that are running the show right now. That's not really...
Do you think they're actually going to get it done on time and on budget? Or are we going to have this little omnibus window where everybody's pulling their eyelashes out?
Well, it's hard to know what is on time, Rick. There's a lot of different projections of when the X date is. So that's actually interesting down here. That's the one place where people are really able to take advantage of these short-dated options to trade a lot of calendars and make sure their risk is...
Yes, tailor it exactly. And as for June 1st, I am sure Treasury Secretary Janet Yellen's a sharp one. She probably has a couple of days, maybe a week in her pocket. Think that'll make a difference? Final thought.
Yeah, I mean, she's been on the other side of this in her past life, so I'm sure she's going to do her best to make sure we don't see a catastrophe.
There's one job I'm glad I don't have. Paul, thank you for being our guest today. Kelly, back to you.
Great stuff, guys. Thank you. Coming up, Microsoft stepping on the gas to keep its lead in the AI race. The company announcing concrete ways to use all of these innovative tools. We have those details coming up, plus a quick power check before we go to break. Moderna leading the S&P 500 as the company is trying to transition to the post-COVID world. Headlines of a new wave sweeping through China are boosting the stock 10% today. On the other side of the biotech coin is Edex Labs. It's the worst performer in the S&P 500 today with almost a 6% drop. We're back after this.
The Bond Report is brought to you by PIMCO, a global leader in active fixed income.
Good morning with Dulcolax. Good morning. Yeah. Try Dulcolax Chewy Fruit Bites for fast and gentle constipation relief in as little as 30 minutes, making your good morning even better with Dulcolax.
Opportunities can be hard to find, like catching lightning in a bottle. In uncertain times, it's tempting to retreat or simply wait and see. At CME Group, we empower those who act. We deliver tools to help manage risk and capture opportunities in every market climate, across every major asset class, to seize each possibility at precisely the right moment. CME Group, opportunity is everywhere.
Got the rings?
Hello? You guys don't look that bad.
Yeah, thank you.
Thanks, man.
Luxury that lets you feel infinitely you.
Weeknights from Wall Street to K Street and Main Street. Get the stories behind the numbers.
Last Call is really about spotting tomorrow's opportunities tonight.
Brian Sullivan hosts Last Call, weeknights 7 Eastern, CNBC.
When people get real negative, they're closed off to new ideas. You always have to realize where you are versus the crowd. The crowd being where you don't want to be, because when everybody's betting on the same thing, there's rarely money to be made. Watch or listen live on the CNBC app.
I'm Mr. Wonderful, and I'm Chef Wonderful. What does ERC stand for, Chef Wonderful? The Employee Retention Credit. What else does it stand for? Cash flow. This guy's so smart and handsome. Go to wondertrust.com to see if you're eligible.
Yo, dude, you need some help?
Don't worry about me.
Yo, there's no shame.
No shame? You don't know my family, man.
It's okay to ask for help. Find a licensed therapist at BetterHelp.com.
Do you have a box of videotapes, film reels, or photos that are degrading? Legacy Box professionally converts them to DVDs, thumb drive, or the cloud. Legacy Box is simple and safe, with over 1 million satisfied customers. Visit LegacyBox.com.
So, you got your first Cubicle crate? Welcome to the club. These crates aren't just amazing STEAM projects. They're full of awesome moments like this, and this, and this. Get your first month free at trycubico.com.
Welcome back to Power Lunch. Microsoft taking another step forward in the AI race, today detailing plans on how it intends to use chatbots to help its customers. Steve Kovac is here with the details. Oh, goody, chatbots.
Yes, more AI, believe it or not. So Microsoft announcing a slew of new AI features and products today as part of its annual Build Developers Conference. Of course, everything was AI colored. Big announcement today, Bing will be the default search engine in the ChatGPT app. Now, this is one of the most important things Microsoft wants to do with AI, expand its search market share against Google. Though few signs of progress there since announcing the AI-powered Bing just a few months ago. But incorporating into ChatGPT puts Bing front and center in one of the hottest apps right now. Just last week, it came out on the iPhone and is sitting at the top of the App Store. Also announcing plugins for Bing Chat, rather. Think of these as AI apps that tap into AI's capabilities. Companies like Spotify, Kayak, Instacart, they're all already on board. And then Windows, it's also getting Microsoft's AI Copilot features. This is coming to Windows 11 very soon. Now, overall, if you're keeping score in the AI race between Microsoft and Google, Microsoft is proving it's still ahead when it comes to actually shipping products. Though Google did tease several upcoming AI projects at its own developers conference a few weeks ago, guys.
So Bing uses ChatGPT.
We put some ChatGPT in your Bing and some Bing in your ChatGPT.
Is that what it is? And ChatGPT, they're going to have Bing in there. So it's
all together. And what they're calling these plugins. So basically the way I think is the easiest to think about it is they're AI apps. So these third parties, including Bing, can tie into this OpenAI technology that's partnered with Microsoft and OpenAI.
I'm a first grader at this. What do I use Bing for, and what do I use ChatGPT for? In other words, one is purely a search engine. The other is an AI-infused, what, search engine?
Exactly. The way they're pitching, so for the chatbot part of it, it's basically, think of it as a tool to help you do something. I need to write an essay. I need to come up with ideas for a kid's birthday party. I need to go on a trip. Help me come up with ideas for that. Also, sometimes, if you've probably used ChatGPT before, it doesn't always give you results directly from the web. So you might want to say, okay, what does the rest of the internet have to say about this? I heard from ChatGPT. Well, Bing is going to now be the default search engine for that. In theory, Google can build itself into this too, but right now Bing is going to be the default because of that relationship with Microsoft.
Okay.
You also read a little bit of the kind of competitive landscape into Sundar Pichai's very vocal, I mean, he was on 60 Minutes, now he's got the FT op-ed about, building rules for AI. Just talk to us a little bit about that. And is it in some ways his attempt to say, okay, we might not have been first, but we're going to be, we're going to get everyone's stamp of approval?
You could read into it that way, but he's also mimicking a lot of the messaging that we heard from Sam Altman on Capitol Hill last week, that we've heard from Satya Nadella, CEO of Microsoft. They're all asking for regulation. Whether or not they believe they want it, I don't know if that's true. They are, but what is true, they're plowing ahead. I know Senator Ted Cruz was on Squawk Box today, and he's one of the people who are going to be making the decisions how to regulate these things. He effectively says, we don't know. I talked to him off camera for a little bit, and he was like, this is out of our hands, and no one knows what they're doing right now. And that was very blunt from the senator.
I also think of Section 230. I mean, we always talk about, what we did or didn't do with social media. Well, even the legislation at the heart of the rise of the internet and social media continues to be, controversial today.
Right.
So it just feels to me like they should wait to be very sure what kind of legislation they want before moving ahead with it. I understand people say you can't wait, but there's a bigger danger in doing this wrong, I would think, than in not doing it all.
Yeah, and exactly. It's also a chicken and egg problem because we don't know what this technology is going to be capable of a year from now, let alone 10 years from now. So how do you regulate something you can't foresee? At the same time, these companies are plowing ahead. That's why you hear some people, let's pause, pump the brakes for a second, figure out where we're going first, and then figure out the path forward. But that's not what's happening.
No, we like to keep that foot on the accelerator.
Exactly.
100 miles,
Ready, fire, aim is what they're doing.
Thank you, Steve.
Thanks.
Our Steve Kovac. Quick programming note, don't miss our Power Lunch special report, all things AI, a deep dive on everything you need to know. It's coming up this Friday, May 26th, 2 p.m. Eastern Time. Don't miss it.
Watch and learn. I will be learning a lot. As we head to break, CNBC celebrates Asian American and Pacific Islander heritage throughout this month of May, sharing stories of business leaders in their community. Here is Shizu Okusa, Apothecary founder and CEO.
What makes me proud of being an Asian American founder is my parents. They immigrated here in the 1980s with nothing. They were farmers, and here I am today, having raised over $13 million of venture capital on my second company, Apothecary, filmed for Shark Tank, and I am just getting started.
Is this your dream of retirement? How about this sweet deal? I like fishing. Or is this a little more your style? Retiring well isn't a guarantee, it's a goal. It's easy when markets are going up. But what about when they're not? That's why you need this.
Call for Fisher's Retirement Survival Kit, featuring your guide to surviving market volatility, our stock market outlook, plus the Fisher investment difference. 3 indispensable guides, yours free for calling 1-800-213-5317.
Fisher Investments' disciplined approach will help see you through the market's ups and downs and give you the confidence you need to reach a comfortable retirement. And our fees are structured so we do better when our clients do better.
Call now for your free retirement survival kit. 1-800-213-5317.
See if your dream retirement is on track. If your retirement portfolio is $500,000 or more, give us a call.
Call 1-800-213-5317.
Yes. Hon, the WeatherTech's here.
WeatherTech is the ultimate protection for your vehicle. Laser measured floor liners, no drill mud flaps, cargo liner, bump step, seat protector, and cup phone.
What about my car?
WeatherTech.
Don't worry,
With Home Chef, you're not just home cooking, you're home acing it. Our convenient options are ready in as little as 15 minutes and way quicker than takeout. When it comes to making dinner, fill in the blanks with Home Chef. Delicious, meet simple.
Get 18 free meals when you sign up at homechef.com.
Your next best investment starts with CNBC Pro, the ultimate investing playbook. Scan this code or go to cnbc.com/pro for an exclusive offer now.
Welcome back to Power Lunch, everybody. Stocks falling now to session lows, off 260 points, about 0.75%. Let's get a check on the energy markets as trading closes for the day. And Pippa's here to join us.
Yeah. Oil is higher, extending yesterday's moderate rally, and part of that is thanks to comments from Saudi Arabia's energy minister. Speaking earlier in Doha, he was asked about speculators and short sellers in the oil market, and he said that I would keep advising them that they will be ouching. They did ouch in April, before adding, I would just tell them, watch out. So, of course, actions speak louder than words, and we might not see any follow-through, but I think the market is taking these comments a little bit more seriously than usual, given that OPEC Plus meeting is coming up in a week and a half, and Saudi Arabia has been known to announce surprise movements.
Pippa, I've been on Twitter. And Twitter is telling me that maybe people are getting really bearish about the Permian all of a sudden, and that what's really going on with some of this OPEC squeeze is their sense that maybe we couldn't step in and kind of fill the supply gap if they wanted to pull back. And all of it sounds kind of bullish crude for me, which is maybe why it explains why that's in the green on a day when everything else looks a lot, uglier.
Yeah, and I mean, we've seen well productivity come down, and the Permian's been such a kind of, symbol of American energy. And even with that deal yesterday with Chevron expanding into both Delaware and Colorado, and, beefing up their operations in other basins, I think there are some worries that there's so much hope on the Permian, and it still is very productive, but well productivity has come down. And so if Twitter is saying that,
then it must be right.
Yeah, then it must
Scott
be right.
Sheffield has talked about it too, so I know there's like some legit thought process here. But yeah, if that's changing, it could kind of come at the worst time too for a weaker U.S. economy, weaker consumer, stronger energy prices.
Yeah, and Saudi Arabia knows that it's sitting in a very good position right now because they do have more spend capacity. They can ramp things up, ramp things down. They're in a pretty good position right now.
All right, Pippa, thank you very much. Pippa Stevens. Let's get to Leslie Picker now for a CNBC News update. Leslie.
Thank you, Tyler. The family of a Colorado man shot and killed last year by a deputy will receive a $19 million settlement. That is the largest of its kind in the state's history. An attorney for Christian Glass's family says the 22-year-old was likely having a mental health crisis when he called 911 after his SUV got stuck. Glass appeared to be holding a knife when he was shot 5 times after refusing to get out of his vehicle. The U.S. Embassy in Moscow called the extension of a Wall Street journalist reporter's detention in Russia deeply concerning. A Russian judge extended Evan Gershkovich's pretrial detention by 3 months today. The embassy says Russia's espionage charges against the reporter are baseless and says Moscow unjustifiably denied its request for a consular visit to Gershkovich last week. NBC News has learned Florida Governor Ron DeSantis will announce he is running for president during a discussion with Twitter CEO Elon Musk. It will come as Musk and DeSantis host an event on Twitter Spaces, the site's platform for audio chats, on Wednesday at 7 p.m. Eastern Time. Kelly, back over to you.
Wow, that's a biggie.
So it's an audio chat.
Or maybe is there a video component to it?
I don't know. She just said an audio. It's there.
True.
Twitter Spaces is for audio chats, but an interesting choice of interviewers.
Well, yes. And also for Musk to, let's just call it sort of endorse or appear with DeSantis. You just go back and look at the kind of colorful history he's had with Trump, where at times they've been nemesis, then at other times they've supported one another. Of course, he basically signaled his openness to bringing Trump back on Twitter when he bought it a year or so ago. I believe Trump never did that. He just kind of stayed on his own social media site. But this is a pretty big statement to appear with his chief rival, basically, Ron DeSantis.
Very interesting.
So it should be a spicy, Trump's not on Twitter, but social media will be a buzz. Top executives are convening at CNBC's CEO Council Summit, discussing topics from markets to geopolitics. Yesterday, Nike CEO John Donahoe warned about the perils of a potential decoupling from China, a big market for them, despite tensions in the Pacific. Take a listen.
I think decoupling would be disastrous economically between the U.S. and China, or China and the European Union. If you really look at the trade flows both ways. They play a mutually valuable role. And so, again, we believe in global trade, and we'll continue to try to do everything we can to support that.
And coming up, we'll hear from another retail executive on our CEO Council about doing business with China, about the consumer, and more. Crocs CEO Andrew Rees joins us live. Power Lunch will be right back. Dow's down 220.
CNBC News Update is sponsored by Morgan Stanley.
When you think of golf, probably not what you picture.
It's time we change that.
And when you think of the future of finance, picture
me.
And me. And me.
And me.
Because everyone deserves a shot at success.
Confident about which used car to buy?
Nope.
Why not ask the most confident person you know?
My old high school coach.
Just say, show me the Carfax value. You'll get the most accurate price based on the vehicle's accident history. Shop at the all-new Carfax.com.
Tommy John has been dedicated to elevating underwear for over a decade. Now, we're proud to reveal our most premium men's underwear yet. This is Apollo. All new, ultra breathable, rigorously tested for durability, and enhanced with exclusive dry release tech. We've upgraded the softness and the level of comfort, so don't be surprised if your confidence is upgraded too. Experience high-end for your rear end.
Go to TommyJohn.com and get 30% off site-wide.
With Allegra, allergies don't hold us back. Allegra starts working 2 times faster than Claritin. And unlike Zyrtec, it won't make us drowsy, so you can live your greatness. And Allegra Hives works from the inside to relieve itching and reduce hives for 24 hours.
CNBC. Live ambitiously. An overtime exclusive with the CEO of Adobe. Where is software and generative AI headed? Outlook for the tech sector. Closing bell overtime 4 Eastern.
Why is everyone talking about Navage and nasal irrigation?
I am one who suffers from chronic sinus infection.
You need to clean that crap out of your nose.
Navage is simple. Your nose is the body's air filter, but it's not perfect. Navage is a drug-free way to help flush out allergens, mucus, and germs using powered suction. Join nearly 3 million Navage users so you can breathe better, sleep deeper, snore less, and stay healthier.
I love this thing.
It's nice to breathe.
Navage. Clean nose, healthy life.
So, you got your first KiwiCo crate? Green box! Welcome to the club. These crates aren't just amazing STEAM projects. They're full of awesome moments like this, and this, and this. Get your first month free at trykiwico.com.
I'm Mr. Wonderful, and I'm Chef Wonderful. What does ERC stand for, Chef Wonderful? The Employee Retention Credit. What else does it stand for? Cash flow. This guy's so smart and handsome. Go to wondertrust.com to see if you're eligible.
Welcome back to Power Lunch. CNBC's inaugural CEO Council Summit in full swing out in Santa Barbara, California. It comes at a time when business leaders are faced with a host of challenges ranging from rising interest rates to inflation and often getting dragged into difficult social issues. There's also a lot of uncertainty with the debt ceiling, recession fears, and how those things weigh on consumers. Joining us now to discuss all of the above from the CEO Council Summit is Andrew Rees. He is the CEO of Crocs. Andrew, welcome. Good to have you with us. We just went to commercial break hearing from John Donahoe of Nike, and he was talking about how it would be sort of bad business and bad policy to decouple from China. China is your third largest sort of cluster of stores. I presume you do some production out of China. Talk to me about your relation with China and how you feel, how you are trying to thread the needle of doing business there in an economy and in a system that is not always comfortable to deal with.
Look, I completely agree with John. I think if the U.S. was to decouple from China in any way, shape, or form, it would be extremely problematic for many, many businesses in the world, right? There's a lot of mutual dependency, as you just said in your introduction. We like Nike, manufacture in China as well as also sell into China. So the country, forms kind of both ends of our supply chain. I would say from a manufacturing base, we've been doing a lot of migration out of China. So it's a much smaller portion of our manufacturing base, but it's an incredible consumer market, right? In terms of the global footwear market, the Chinese market is the second biggest market in the world after the U.S. marketplace, and frankly, a very large gap between them and the third biggest market. So it's super important to us. And, what we try and do is really focus on the Chinese consumer. How do we meet the Chinese consumers' needs? How do we appeal to them in a productive way? And then just recently, we've gotten great traction with our personalization engine. You may know that as Jibbitz, where we add the Jibbitz into the shoes, and the consumer can express their own points of view about all sorts of different things, and typically, fun and interesting ways. And that's gotten a great deal of traction in China recently.
You just mentioned something that triggered something. I mean, the Jibbitz are things where you can express your own point of view. Do you in any way control what those consumers can say in their point of view? In other words, if some Jibbit was in some way offensive or misogynistic or racist or whatever, do you control that?
We do not control that, right? So we don't encourage that either. Our tagline and really our brand ethos that we see both in our consumers, but also in our employees and how we interact with the world in terms of our kind of social responsibility is come as you are. So we're really, we want to encourage people to be themselves and to express the views and the feelings that they have. We do not make Jibbitz that we think are in bad taste, etc. So we avoid that. But we definitely encourage consumers to come as they are. And I think that's an incredibly powerful platform in today's world, and a global platform at that.
As we're talking about this, we talk about how companies sometimes can get drawn into socially controversial topics. Obviously, case number one may be what's going on between Disney and the state of Florida right now. As you look at your portfolio of products and you look at all of the issues that may come across your desk as CEO, including social issues, environmental responsibility, sustainability, income inequality, et cetera, how do you choose which issues you might engage with in and which you would pass on?
Yeah, look, this is an incredibly complex world. As I kind of grew up in the business world and getting ready to be, potentially getting the diverse experiences enable you to be a CEO, you kind of worry about how do I generate revenue? How do I control costs? How do I support margins? How do I make money? None of those topics are in that, are in that education process that you go through. So you're right. It's very complex. It's fraught with dangers. And I think, we actually was just having some discussions here at the council about how do you do that? And I told another CEO what I do is I have a representative group of people. I think I have a diverse set of points of view, and I try and make sure I engage them and hear lots of different points of view about things. I think as a company our size, we want to focus on what's important to our consumers. We're not trying to push agendas that are, I think, created by the company. We're trying to represent and do the best job for our consumers. And I think if we remain focused on the consumer, hopefully we can navigate a course, which is we represent them really well. We provide them products that they love and adore and continue to buy. And we probably try and stay a little bit below the radar screen of maybe some of these larger topics.
How do you?
I think when companies engage. Go ahead, sorry.
No, that's a very comprehensive answer, and I sympathize with the predicament that CEOs like you have to deal with, because obviously you're very much a consumer-facing company, and people can get really bent out of shape if you take a stand on something and they don't agree with you. And I remember, what was it Michael Jordan said? Yeah. Hey, Republicans buy Nikes too. So you can't choose which side you're going to be on. Let's talk a little bit about where you see the consumer right now and their level of health. Obviously, Crocs are an affordable brand. They ain't Yeezys, which is probably a good thing. But talk to me about where you see the consumer right now.
Yeah. I think before I kind of dive into that, what I would actually say is that we have actually two affordable brands. So the Crocs company, we own Crocs, which everybody knows and knows exactly what it is, sells at $50, right? Typically the classic Croc. We also own a new brand we bought about just over a year ago called Hey Dude, which also sells at a very affordable price, usually around $60, $65. So I think that's a tremendous asset for us. What we see in kind of the consumer world today is there's some tier of consumers that are getting forced to make choices. I believe, and you can kind of see that in some of the broad-based retail results we've had in the last couple of weeks. I think Walmart's seeing some trade down, Target suffering a little bit, Home Depot's seeing some slowing in spending on people's homes. I think the consumer is forced into making choices. And if you talk to some of the bankers and some of the economists that are here at this conference, they said, well, that is exactly the point. That is the point of the rising interest rates, is to put the brakes on the economy without destroying the economy. So I think we're starting to see that in our world, in the footwear world, and we're seeing some winners and losers. Personally, we think we succeed in that environment as a company because of the democratic price point we sell at and the very, very broad consumer basis that we have for both of our brands. So, but I think you can certainly starting to see that emerging.
Andrew, thank you very much for a very interesting conversation. We appreciate it.
Thank you so much.
Andrew Reese of Crocs.
Still ahead, pedaling to new pastures. Peloton announcing a new brand refresh, including a pivot from members-only focus to fitness for all. But with shares already cut in half over the past year, will that be enough to salvage its image? Power Lunch is back with that question.
Lily, welcome to our third Barkery.
Oh, I can tell business is going through the woo.
But seriously, we need a reliable way to help keep everyone connected from wherever we go.
Well, at AT&T, we'll help you find the right wireless plan for you, so you can stay connected to all your drivers and stores on America's most reliable 5G network.
That sounds just perfect.
Terrierific.
I Labrador you.
Round of applause.
AT&T 5G is fast, reliable, and secure for your business.
Two Whopper Juniors for just $5. 6 options, so much to offer. Barbecue, bacon, cheese to name a few. Only $5 and you get to pick two. BK, have it your way.
A vacation starts with how you get there. A private jet experience from One Flight's Badget. You've got to see this. Plug in your itinerary, search from over 5,000 planes, pay, and you're on your way. Nothing better than a personalized meal on board.
It should be a beautiful day in the Bahamas, Mr. Hirschbach. We should be landing in about 20 minutes.
A great vacation always starts with your flight experience.
Call for a complimentary flight.
When you're a small business owner, there's no such thing as 9 to 5. Days are longer, and business hours, well, they're anything but predictable, especially when you have clients like ours. When I considered payroll providers for my business, I looked for a solution that fit into my busy schedule. Sure Payroll makes running payroll fast and easy, so I can spend extra time with these guys.
Visit surepayroll.com/switch and get up to 6 months free. And find out what makes us different, because small business is our business.
We need a small business loan fast.
I got this.
Loan Falcon!
There's a better way to get a fast small business loan. Go to OnDeck.com, and if approved, get your funds as soon as the same day. Your loan is on deck.
With Gold Bond, you can age on your own terms.
Retinol Overnight means the smoothing benefits of retinol are now for your whole body. Plus, fast-working crepe corrector diminishes wrinkled skin in just 2 days. Gold Bond, championing your skin.
This is ready to go online. Any questions?
Yeah, I got one. How about the best network imaginable? Let's invent that.
We don't have time for lag or buffering. Who doesn't want internet that helps AI do your homework even faster?
Come again? Sorry, what was that?
The next generation 10G network only from Xfinity.
Welcome back. Peloton announcing the start of a new chapter today, relaunching the brand from an in-home bike company to a fitness brand for all. CNBC.com reporting along with the new mantra, Peloton will be introducing a new tiered pricing structure for its app, including a free option for users and a new feature called Peloton Gym. Peloton shares are down 8% in 2023 and, of course, so fell almost half. the previous year. To discuss, let's welcome in the writer behind this piece, retail reporter Gabrielle Fonrouge. Welcome.
Thanks so much for having me.
So juicy. I mean, we all follow the Peloton saga trying to figure out what we would do, right? I mean, in the same situation. I don't know about this move. What is their attempt? What is their intent here?
You know, Peloton has long been reserved for a very specific type of person, and they've always marketed the company in that way. This, in their eyes, is going to open up a whole new total addressable market for them. They're hoping to get new customers that previously they weren't speaking to.
It's strength, it's bar, it's stretching, it's all kinds of things. Let me ask you this question. If I am the owner of a Peloton bike, which I am, and I subscribe to their monthly plan at $44.95, I believe that's the price right now. They are now going to have Peloton App Plus at $24 a month that seems like it's going to be, quote, frictionless with unlimited access to Peloton's vast library. The tier includes all of the app's offerings and unlocks access to thousands of equipment-based cardio classes. Why would I continue to pay $44.95 if I can get the same thing for $24? And if they are actually offering essentially what I get for $44 for $24, and I don't get it, I'm going to cancel. You tell them that.
I mean, you make an excellent point because that's totally true. You can pay $44 a month with the bike and have all of that, but now you can pay $24 a month and still be able to do those awesome classes that everybody loves, the cycling classes, the tread classes. And, you know, so customers who have shelled out for the bike already, you're kind of out of luck. But
great.
New customers are going to be able to take advantage.
No, listen, it's never a great idea to alienate your existing customer base.
No. I'm thinking of Tesla. I bought a Tesla. Then he cuts the price.
Exactly.
This is Matheson.
The
I
curse
buy
of
at the peak
Matheson.
every time.
So what they should do, though, is really make sure that the people who loved the bike and feel part of the community are not alienated by this move, which we don't even know if it will work. I mean, you could say $24 is a bargain, but maybe it's not. Maybe that still prices out a lot of people.
You know, absolutely. And this kind of space sees a lot of churn as is. And I spoke with some Peloton users for this story, and a lot of them were like, you know, Peloton was like a club, and now everybody can get into the club.
Yeah.
You know, the brand isn't, I asked them, I was like, are you concerned about brand dilution? And they said, look, this is how Peloton has always been, and now Peloton inside is now Peloton on the outside.
And what's the idea that you can take the Peloton classes to the gym on your phone? In other words, you would take your phone into the gym and follow my favorite instructor. Look, I love the product. It's a fantastic product. You can take your favorite instructor and do the workout there in the gym. Is that the idea?
Yes, that's exactly the idea. You know, before Peloton was always seen as anti-gym. Gym was an existential threat to their business. But they realized that's holding them back. I mean, the shares speak for themselves. The revenue speaks for themselves. The company is not what it once was. So they need to kind of bring other people in, find more use cases for this. So with the gym app, or with the gym function in the app, you can set up a custom workout. You can be at the gym. You know, a lot of people don't know what to do with the gym.
Yeah.
They're there, they're overwhelmed. So the app will give you a custom workout that you can follow along while you're there.
Very interesting. All right.
I don't know.
It's a new day for Peloton. I guess we'll see how it works
Gabrielle,
out.
thank you very much. Appreciate it.
My pleasure. Thank you.
Speaking of Peloton, Ndamukong Suh's House of Kings not getting any help from those shares in this year's stock draft. His team is currently in last place. Those are his picks, UNH and Peloton. Peloton down about 15% since that draft. Meanwhile, Tori Dunlop and the Financial Feminist have a commanding lead thanks to first-round pick AMD, which is up more than 25% since the draft. Doesn't hurt they have Microsoft, too.
Yeah. All right, coming up, chips, cars, and communications. We're going to trade Broadcom, AutoZone, and Zoom in a fresh 3-stock lunch. We'll be right back.
I love shopping The RealReal. Gucci,
Louis Vuitton,
Prada,
Hermes,
Dior,
Rolex,
Burberry, Saint Laurent.
Luxury brands up to 90% off retail.
Thousands of new arrivals daily.
The RealReal.
Shop now and get 20% off at therealreal.com. Terms apply.
AG1 by Athletic Greens gives you the daily nutrients that form the foundation for your health routine. It's made with the highest quality ingredients, put through the strictest quality testing standards, so everybody can own their health. Start your journey at athleticgreens.com.
We planned well for retirement, but I wish we had more cash.
You think those two have any idea?
That they can sell their life insurance policy for cash, so they're basically sitting on a gold mine? I don't think they have a clue.
That's crazy.
Well, not everyone knows Coventry's helped thousands of people sell their policies for cash, even term policies.
I can't believe they're just sitting up there.
sitting on all this cash.
If you own a life insurance policy of $100,000 or more, you can sell all or part of it to Coventry, even a term policy, for cash or a combination of cash and coverage with no future premiums.
Someone needs to tell them that they're sitting on a gold mine and you have no idea. Hey guys, you're sitting on a gold mine. Come on,
Do you hear that?
I don't hear anything anymore.
Find out if you're sitting on a gold mine. Call Coventry Direct today at 800-571-7900 or visit CoventryDirect.com.
My dream is to talk to people, real people, about stocks. We created a club to do it.
Join Jim Cramer and the CNBC Investing Club. Scan this code or go to cnbc.com/investing club for an exclusive offer now.
Mark?
All right. I think I got it right here. Looks good. Looks good. Copy that.
Hi, I'm Mr. Wonderful. If you own a business and have employees, you need to check out the ERC program at WonderTrust.com. There's money waiting for you. I did, which is why I have time to tend to my precious little trees. He's such a good boy.
Bonobos presents A Course in Style with Justin Rose. Justin Rose, champion golfer with a champion swing. How does he do it? Well, let's take a closer look. Is it his flawless form, elite balance, consistent accuracy? Yes, and also those pants. Give me a little more of those pants, will you? Style, comfort, a great fit. These babies can do it all.
Wherever your tour takes you.
All right, folks, it's time for today's three-stock lunch. We focus on three big movers from today. We've got your Broadcom, we've got your AutoZone, we've got your Zoom. First up, shares of Broadcom. Shares are up after Apple announced a multi-year, multi-billion-dollar deal with the technology and advanced manufacturing company. Today, here with that trade and more, Victoria Green, Chief Investment Officer at G Squared Private Wealth. Victoria, thank you for joining us. Good to see you again. Let's start with Broadcom. Like it, love it, loathe it.
I love this stock. You've got to love the news that their biggest customer, 20% of their revenues, about $7 billion in annual revenues, has re-upped what had been seen as a more contentious situation. So it gave an affirmation that the stock is going to be able to grow. Just broke out of those 2021s, heading a new high. Bank of America upgrading its price target to 800. I just really like the momentum this stock has. I do think it could leg up there to the 750, 800.
Ooh, all right. Feeling good about it,
Bold
Victoria.
call.
What about AutoZone? This stock's such an interesting one. It and O'Reilly have been amazing performers, but now it's taking a 7.5% chop after that earnings report. And have the fundamentals changed for you? Would you bail on it?
Yeah, this is a bail for me. You have to read through, and for them, the biggest driver is their margins are going to contract because their DIY retail versus the commercial is changing. DIY retail is now only 73% of revenues and starting to slip a little bit, and their commercial has lower margins, so they're under margin pressure. The stock got expensive. You do have that support right here, right around like 2040 for the 200-day moving average, but if you miss that, you're down to 2,300, and I just think the stock is just ripe for a pullback because if you have slowing margins and slowing revenue growth, then it just puts pressure on an expensive stock that had been on the tear.
Well, Zoom's story is Zoom, fall down, go boom, right? I mean, what do you think of this one?
I can't touch it. I know it went boom from 600 to 60 basically, but I do actually think where 60 is where they're going to retest. They had to throw out the AI, which I think is like, remember when everybody was throwing out ESG and kind of greenwashing because it was a buzzword? This earnings season, AI has been the buzzword. And I just think they're going to be under pressure. Look, they're struggling to have growth. They're going to have increased costs. They're trying to expand their products. And so their margins are going to come under pressure. Yes, maybe some of the worst is behind them and they have a lower bar, but you just think they've got so many headwinds to actually achieve growth. And so I think that 60 low is reasonable maybe, but just too much downside pressure, and their chart is so ugly. Yeah. I mean, just like a bad hockey stick ugly. I just can't touch it right here.
That was about $6 below current prices. Victoria, please apply this analysis to the broader market. Can you explain the stock market today? Because we are down 100. We've been, it's been so resilient, then suddenly we're down 250. I mean, good luck finding a real headline.
It is. I think it's just nervousness about the debt deal. You know, there seems to be a lot of contention between the two sides that seem to be growing a little further apart. You know, now they're calling into question, is it really June 1? And that's not necessarily the news you want to have come out there. But I think just broader, there's a lot of nervousness that the fundamentals are really not looking that great. So it was trading more on sentiment and technicals, and a little bit this melt up has been a lot of FOMO, right? Everybody's saying, well, the bottom must be in. And at this point, we haven't been able to cross 4,200. So maybe that bear market's still intact.
A quick final comment. Why is the NASDAQ suddenly underperforming, especially because the mentality has been the chase is on, just grab NVIDIA and go?
Grab NVIDIA and go. Yeah, anything AI. No, I think right now they got a little expensive. So I think potentially you're seeing some profit taking, some people trying to hedge this potential tail end risk coming June 1st. And without news, I think you could see a little bit more of a meltdown because people may say, hey, these stocks are up 80, 90, 100%. We've had so many gains. Maybe I want to protect these gains just a little bit.
Absolutely. Victoria, thanks today. We appreciate it. Victoria Green.
Thanks, guys.
All right, still to come, Italy's got a pasta problem and a mortgage giant trying to make buyers' dreams come true. That and much more when Power Lunch returns.
With Allegra, allergies don't hold us back. Allegra starts working 2 times faster than Claritin. And unlike Zyrtec, it won't make us drowsy. Allegra gives you the fastest, non-drowsy 24-hour allergy relief so you can live your greatness.
Time to slip in. Alrighty up. Get this paper. Looking good, dog.
Hey, Snoop, how do you do all this stuff?
Skechers, baby. Shoes made for all walks of life.
A bunch of dead guys made up work way back when.
It's our turn now, we'll make it up again. We'll build freelance teams with more agility.
The old way of working is deader than me.
We'll scale up and we'll scale down.
Before you're 6 feet underground. This is how we work.
With Verizon, you can now get a private 5G network, so you can do more than connect your business. You can make it even smarter. Now ports can know where every piece of cargo is and where it's going.
Right on time.
Robots can predict breakdowns and order their own replacement parts.
Nice work.
And retailers can get ahead of the fashion trend of the day with a new line tomorrow. With a Verizon private 5G network, you can get more agility and security, giving you more control of your business. We call this enterprise intelligence from the network America relies on.
Private market alternatives help you outperform the traditional portfolio by up to 40%. Meet Yield Street, the leading private market investment platform with 10 highly vetted asset classes. Diversify with alternatives. Open an account at yieldstreet.com.
You're doing everything you can to get your blood pressure in check, and now you have SuperBeets Heart Chews on your side too. In a leading clinical study, SuperBeets Heart Chews polyphenol compound was shown nearly 2 times as effective at promoting normal blood pressure as a healthy lifestyle alone. Just 2 delicious chews a day support nitric oxide production, healthy blood pressure, blood flow, and heart-healthy energy. Support your healthy blood pressure with SuperBeets Heart Chews. Get a free 30-day supply and free shipping at superbeetschews.com.
Welcome back. But a little under 3 minutes left in the show. A bunch more stories you need to know. So let's not waste any time. Clock is ticking, and Rocket Mortgage is letting buyers put as little as 1% down on a new home. The new program is aimed at low and moderate income buyers and will also waive mortgage insurance. The catch, strict qualifications, including high